Good morning, my friend. How are you?
Is it are we racing?
Yes.
We do
I'm excited.
There's the count into the show, and then you race to say something first.
Yes, we got to, because I know you like to take the pause, look at everyone.
Well, because it's
maybe even do one of these.
It's
like
6:30. It's 6:30 on Monday.
That's right.
And it's guess what? It's even earlier in some parts of the country, and I don't know if people want, if they are listening live, the 5 people, including my girlfriend. If they want to be yelled at first thing in the morning.
Hey, you know what? I've been up and trading for 2 hours. Let's get going.
So that's their problem.
Oh, not their problem. I'm just bringing the joy.
I love it.
You want to bring,
I love it.
your.
I want to bring the calm. I want to bring the.
You want to bring your Michigan, whatever you call it. I mean.
Sure. What's going on? How was your weekend? I haven't talked to you. I didn't talk to you yesterday.
No.
So what happened?
Which was weird.
Yeah, that's my bad.
What did we do? Not much, actually. Huge fight with my neighbor with a different story.
Is this the one that just built a house?
No, he's actually turned out to be okay. It's the old man next to me who wants to redo the driveway that we all share and everything. And I think he's trying to figure out how he gets a free driveway of his own out of this.
Okay.
On everybody else's.
Because they're going to do the mutual part of it,
right.
The part that you all drive on, but then he also wants his personal driveway.
Yes.
Okay.
And is being very cagey about, I'll just let you know what you owe me. And I'm like, no, it doesn't work that way. I'm sorry. It just doesn't work that way.
Dude, honestly, it's funny that you bring that up because I am starting to grow up in a lot of ways. And some of these conversations with people do become more and more real. Like, it's not to the extent that you're having conversations, but some of this stuff, I'm like, okay, I'm trying to take this in as kind of way possible and not really like get like heated talking with this person about something that is kind of meaningless. But in the back of my mind, I'm like, this guy though might sue me or something. Like there's like stuff as you get older and as you start to make, this year you've promised me I'm going to start making some money. You start making some money, and the conversations do become real of like, you're either someone's trying to steamroll you, or if you are trying to support your position. I'm starting to get worried that someone's going to try to like sue me or something bad. Maybe it's because I watched There Will Be Blood last night again that I'm like worried.
Oh, I got the Mountainhead.
Oh, did you watch it?
Oh my God, it's by the people who did Succession.
Yeah.
It's insane.
The trailer looked, I was like, I don't know if I need to watch this.
It's freaking exhausting.
It's not good. You don't sound like you had a good time.
I didn't, just because.
Is it a movie? It's a movie?
It's a movie.
Okay.
I think you have to be in the right mood and not be juggling. You and I are working on some projects. Huge ones like this integration,
maybe that's
stuff
what
like that.
is kind of in the back of my mind.
When they start bing-bonging around, and it just goes, it's insane. It's just like, I just don't need to have more craziness right now at this point in my life.
It's funny that you just said the colloquialism in the U.S. and maybe other places is ping-ponging around.
Yeah.
You said bing-bonging around, which is funny only because in high school, some friends of mine who were 2 years older than me had a T-shirt company called Bing Bing Bong.
Oh, I like that.
Which was actually pretty funny. They graduated. Me and 2 of my friends bought that company from them. I don't think we ever paid for it, but we got a T-shirt press.
Transacting in a truly Beverly way. You just go over and burn down their house, and now you own the company.
Another example of, maybe it's in the back of my mind, the stuff at work here that now is like kind of jiggering my mind where I'm like having these conversations. This is what happened. I've been selling off some of my records because too many records, and also like
you're going to end up being in a second floor apartment anymore. You're going to be in a first floor when the 5,000 pounds of records you have takes out the floor.
So I'm selling a handful of them, and like I don't want to be inappropriate or make people feel a type of way. Some of them are worth like $2,000, some even more. And the conversations and also mailing them can get very, to borrow a term from you, cagey with people of like, oh, you didn't ship it the way that I wanted, or like, oh, you know, like it showed up here and it's supposed to be there. And it's like, dude, like I packaged the thing up like I have at this point over 100 times. I put it in the mail with the same people, UPS or, you know, whoever, every single time. And like some people are just like cagier than others. And yeah, this one guy, he's like, oh, well, you know, the FedEx, they brought it here and the wind must have taken it and blah, blah, blah. And I was like, that's your problem. Like, that's not my problem. And guess what? The money's in my account.
The wind,
it's not going back.
Wind took it.
Like, it's a whole thing. But in the back of my mind, I'm like, okay, well, it's a $1,500 record. I don't want to say only, but I'm like, worst case scenario, I guess I have to give this money back. But I'm also like, is this guy gonna maybe like try to sue me or like what the hell happens here?
I don't think you're going to get sued by any. Is he out of state?
No chance. I think there's no chance. But it is some of these things I am starting to think. Whereas like 5 years ago, I would have been like, you know, screw this guy. I'm just going to like delete his email.
The amount of people that are trying to play angles within the.
But I think that's the thing with your neighbor or this guy or at work, whatever. There's always like
everybody's working an angle.
Like, oh, maybe I can get this guy to say he'll give me $200 off, like something else or something free, and it's like, no, dude, money's in my account. I put the thing in the mail. FedEx sent you a picture of it in your front lawn or whatever, and I guess it blew away or something. I'm done communicating with you. That's the end of that. But yeah, Callie's out of town.
Oh wow! So it's wild times over at the Caperna house.
Last night,
you got the pole back up and everything.
Cooked myself a steak. Fired up. There Will Be Blood.
Again, that's just.
It's amazing.
I saw that on again, and I couldn't sit through it.
It's on Paramount Plus now.
Yeah.
Man, this time around, it seems like he really uses that kid to get the money.
Yeah.
Like it. But it didn't dawn on me because there's like the moments of like, oh, he and the kid are like kind of having a fun time. And it's like, oh, I think he likes the kid a lot. And then obviously there's like the last scene. He's insane. But like even from the start, every time I watch it, there's like kind of a new lens. And maybe I'm baby crazy. I don't know what it is. But I was like, oh, man, like pretty much from the start, he uses this kid to start his company and like garner all of this like kind of respect or like what would you call it? Trust.
He
people
built trust with people. You know, I'm a dad, you're a dad. We're going to build schools. The whole thing.
Like you're all religious. Like this is a family operation. Like this whole thing, and then he just kind of discards the kid. It was pretty. It's still really good. You're not going to believe it. It's still.
That's maybe the best movie. That's an exhausting one though too. I'll always tune in at the end because when he kills the guy with the bowling ball.
That's your favorite part.
It's not favorite, but it's just so dramatic. So
it's crazy.
Yeah.
The music is so.
And let's talk about this whole thing of getting paid at some point. What I said is,
you said this.
I would have a discussion with you around the timeline when we might possibly consider.
Okay.
So
this is the
component.
Discussion before the or we're on the discussion now.
Broad strokes.
Okay.
Yeah. Again, all right. We want to make it good, so we don't want to rush it.
When I finally start getting paid, we want to make it good.
We want to make it good.
All right.
For those 2 years before you start collecting Social Security.
Well, let's talk about some other.
Well, this
money
looks a little different.
Around.
What's going on here?
Let's jump into the Tasty Trade platform here, Pete, to start, because I hear from you and some other little birdies that there's something new.
Very excited. We've been talking about this for a long time. Tasty FX is now in the Tasty Trade platform, which is really exciting. So it has been a labor of love and blood, sweat, and tears for us to get the products into the platform. When we talk about diversified set of occurrences, we are a Tasty product indifferent. We will take products and use them, and we should feel comfortable using everything. FX is a different type of exposure. It's an uncorrelated exposure, which is great. It's funny. I've gone to so many shows with Tom, and we go around the room, and you ask her, "Hey, what's your largest exposure?" Well, I got a lot in tech, or I've got a lot. I've got a lot
Palantir.
Index. Yeah, or I bought Palantir at 12 cents.
And now it's all I own.
But in essence, what everybody has a ton of, is dollar exposure, because everything you trade is priced in dollars. So when you look at that next level of diversified exposure to product, FX is a natural part of that diversified portfolio of non-correlated events. So it's very exciting. And if you are new to this, what's great is you can open an FX account. It's as simple as, again, opening an FX account. You answer a couple of questions and you should go pretty much straight through. It's going to navigate you through the on web. This is how you're going to basically flip-flop from Tasty Trade to Tasty FX. So there we are.
And can every account open this Tasty
Great
FX
question.
account,
So-
or who is allowed to go from Tasty Trade to Tasty FX?
Phase one, we are supporting individual margin accounts. So again, if you have a joint account, if you have a margin account along with these other accounts, you're eligible. Right now, joint accounts, entity accounts are coming in phase two. We're already working on that portion of it. It's just a different account type. Now, in this instance, just to be clear, Tasty FX is a separate entity, and you're doing business with Tasty FX. Now, we're affiliated companies, obviously Tasty FX and Tasty Trade, both owned by IG Group. But we've created a very simplified way for you to open your Tasty FX account, have it immediately linked to your Tasty Trade account, and be able to start trading and fund from your Tasty Trade account, which is great. So if you switch over to Tasty FX, you'll bring up the platform. And guys, for those of you who have watched or have Tasty FX accounts now, and you'll see that a lot of this looks similar, but a little bit different. Now, we've taken the key features of our existing platform and embedded them into the Tasty Trade platform in what I think is a very elegant way. So it's very simple to use. And it really runs across the top. You have your Forex account number, funds, P&L, margin available. And it's these 6 buttons across the left rail: positions, trade, orders, your watch list, history if you've done anything, and then your statements. So let's go up to the trade. Let's go up to the watch list, Frankie. So you can see any of the pairs we're interested in trading here. And there's over 80 FX pairs. All the dollar majors are used to sterling, yen, euro, Aussie, Swiss, things like Kiwi that we haven't been able to trade before at Tasty Trade. Non-dollar pairs, euro yen, euro sterling, sterling yen. In one of my previous lives here, we did currency pairs using futures, and we constructed non-dollar currency pairs and futures. Now, they're tough to do. You're taking two differently sized products and having to weight them and then double margin them. It's a little bit of a challenge to do this in the futures world. Here, you can do it as a single trade, which is great. So if I'm finding interest in product, whether it's the majors or any of these major non-dollar pairs, and when I say non-dollar, euro sterling, what you're looking at there is the relationship of the euro FX market to the sterling market. No dollar component. You're not having to reweight or do anything. It's a pure exposure, easiest exposure to get. Now, these are leveraged products, so you get leverage and capital efficiency on all these FX pairs. With leverage comes risk. You can lose as much as you put in. But leverage for us is capital efficiency. So I can do more with less. What's great is, and if you go up to Euro, Frank, let's just go to Euro US. If you're interested, bring up a trade ticket. You've got the chart there. There are over 80 different technical studies you can take a look at to use, all the drawing tools you'd want to. Now, to put a lot sizing here is one of the great things I love about Spot FX. In the world of futures, you do have standard size contracts. It's about 125,000 euros. You've got a micro Euro FX contract, which is 12,500 euros. Here, you can go down to 1,000 units of currency at 0.01 lot. So when you look at that, order construction, order ticket here, you're going to go really, and we'll just do a market order. You choose the side of the market you want to buy. and Frank shows on the buy side. Clicked on the buy side. His size, the amount of exposure. So he's basically doing $1,000 worth of Euro FX. It's approximately $1,141 in notional US dollars, corresponding to, again, 1,000 units of euros times the euro price. You see the resulting margin requirement down there is $22.83. So lets you get small, which is great. Now that 0.01, you can customize from 0.01 up to, 1 lot, 5 lots, 50 lots. You can do whatever you want. So there's all kinds of ways you can start to scale in. It's a great way to be able to start to engage with product in a very measured way. Doing your micro lot, again, each pip the market moves. And in FX, a pip is going from like 114.13 to 114.14. That's 1 pip. In this instance, it's 10 cents per pip. So smaller moving, absolutely. Margin required. These are margined at 50 to 1, 2% leverage. Not all pairs are margined the same way. Some are at 3%, some are at 5%. Depends on the pair. But that's all, again, everything's given to you. And to place the trade, it's as simple as Frank's going to buy a micro lot, shoot that off, and his deal is confirmed. It's shown on the chart. There's my position. I'm long 0.01 lots right there. You can go to the positions page and see it there too. And if you want to close it, we've got one-click close. So it immediately fires off a market order and you're out of the market. There you go. You lost 3 cents. That's terrible.
Could have been worse.
Yes. So it's as simple as that. Now, you could put in a limit order. You could put in a limit order with stop loss and a take profit. We have something called the quick ticket. And we'll talk about that next time, the quick ticket. But if you are the true scalper looking to get in and out, it is a wonderfully quick way. It's kind of analogous to a little bit on Tasty Trade, when you're in the active trader tab and you take the safety off. It just lets you, and again, when you submit quick orders, you're basically setting market orders, you're going to accept partial fills, and it will remember your last trade size. But it's true one-click trading in and out of product at any size you want. So, and again, it's as simple as choosing the side you want to be on. And when you click that buy button, there you go. It's as simple as that. So Frank's building up a little bit of a long position here, and then he can close along the bottom. You can close your long position in a simple way, or do it one order at a time.
So let's talk. You want to talk about markets? You've been talking a lot.
Sorry.
We could just talk. No, it's been great walkthrough. And now I mean, there's so much to talk about here. I know that you'll be talking about it more, and Glenn and so many people across the network and everything else. It's super exciting. But in these last couple of minutes, let's just jump into the markets. Let's see what's moving, because we're seeing some dollar selling. And if you're looking at Forex,
how about that sterling solidly above 135?
It's some pretty crazy moves here. Whether you've looked at this stuff in the past, you've been kind of looking at it, or you've never looked at it, you're getting some pretty extreme prices here. I've got the 15-minute chart. I'm going to take a look at the daily, because you have 135 bid pretty heavily here in the pound market, and 136 is going to be your high for the pound that we actually haven't reached, going all the way back to 2022, the start of 2022. So some pretty extreme dollar selling. Right,
and what Frank just showed us how easily you can scale up and down the position here. Yeah, the unrelenting selling of the dollar is really interesting here. A little bit different here. We continue to talk about this theme, getting right back up to the highs here. Euro not quite there, but kind of on the march a little bit.
I mean, 114 is pretty good, but they obviously got up close to 116, so still 100 pips or so away from those highs. What also is really interesting to me, Pete, this is one that people don't necessarily, it's not the first one that everybody looks at, but this Swiss franc strength has been kind of under the radar, and 82 cents. We've been here before. We've actually spent a handful of trading days below 82 cents, but this is a real historic extreme for this pair that we haven't been in going back. Oh man.
Yeah.
You got to go pretty far back here. I'm into 2018, 2019, which of course isn't to say like, oh, it's got to bounce from here. But we're looking at some pretty extreme price action here. Dollar getting pounded.
Dollar getting pounded across the board. Dollar yen too. We're seeing that across all the currencies. Kiwi back above 60 cents. Aussie holding on to a lot of its rally. So dollar yen again. Let's just go back to dollar yen.
Sure.
Dollar yen, couple of tries off that 140 low. 148, we couldn't quite hold on to it. 146, couldn't quite hold on to it. And the sellers are reemerging now. And this is irrespective of up or down in U.S. equities. U.S. rates, long rates did touch 5%. They're slightly below it, but we're seeing U.S. rates a little bit lower today. And what's great is, from trading FX here, you want to get back into the world of futures and stocks, it's just a toggle away. So, yeah, there's a lot going on in FX right now. It'll be interesting to see. So Monday morning early, we're seeing dollar selling emerge. We saw a little bit of it Friday, month end. They bought it up a little bit. They bought dollars up a little bit last night early, Sunday night, but selling emerged once London came in. And it'll be interesting to see. We've ended the month, starting a new month. Got non-farm payrolls on Friday. Not a lot between that and a couple of central bank announcements, but nothing major between that and the non-farm payrolls. But the strength of currencies against the dollar, and it really is a dollar story.
Yeah.
But you can look at things like, we looked at euro and we looked at sterling. Let's look at euro sterling.
Oh, that's where you want. I wanted to go just really quick, just because you're seeing some big moves in this Aussie CAD. This has been a long time favorite of yours.
Yes.
I know we've for years and years have looked at Aussie futures and
Right.
CAD futures and pairing them up together, but just some crazy action in there. But let's finish by taking a look at that euro sterling market, because this has been a pretty big move the last couple trading days.
Right. And what this is showing you is that huge outperformance of the euro. Initially, we started to rally. Now, they gave back a lot of that ground, but this is the first time we're seeing euro actually start to outperform. Again, this downward sloping thing, what this tells me is that sterling has been outperforming the euro currency. So when you look at that quote, this is a pretty dramatic move down from 87 to 84 in terms of, again, we've removed the dollar component. We've gone to the next level of, is there liquidity? Absolutely. The market is tick and a half wide. That's more than tradable. And guys, we'll spend a lot more time talking about this. There are no commissions in FX. It's the width of the spread that is your cost of doing business. So,
and just on your point of how diversified the action can be in some of these non-dollar cross pairs, remember April until now has been pretty much nonstop euro rallying, pound rallying, everybody rallying against this U.S. dollar. And you saw this
Right.
euro. Remember, that was the strongest piece that first week or so of April, and the euro's given back all of that ground against the pound. Whereas if you jump over to this euro dollar market and just keep this in mind, same time frame here, euro is trading at its highs against dollar, but is trading near its lows on the year against sterling. And so it's really just a fun piece where you're looking at stocks so often, Pete, and it's like, well, NASDAQ is up 200, and it's hard to find maybe outside of an earnings play or something like that, something that's down 3% or 5%, something that you want to trade a different way. Here, there's always something that's kind of zigging when everything else is zagging. It's very rare that, all the currencies are up and against the U.S. dollar, and all the non-dollar crosses are just unchanged. There's always some intricacies, and that's why I brought up the Aussie CAD piece, and I brought up this piece.
Those are two of our favorites.
You're seeing some of those non-dollar crosses bounce a little bit, whereas if you were just looking at the U.S. dollar the last week or two, you're just like, oh, U.S. dollar is getting hit again. There's some two-sided action in plenty of these non-dollar crosses. It's some fun stuff, but
absolutely,
I think that'll probably do it.
We'll be spending a little bit more time getting into all of that.
For sure.
Exciting stuff. It's great to have a new product. Over 80 FX pairs. Now, we're not going to be taking you for a drive through Turkish lira.
Why not? I don't. I talked Turkish lira last week.
There you go.
But yeah, it's
a little bit wider. It's amazing. There is a core group of guys that
some people want to trade it, but
there's an interesting
you
carry.
can at least look at it.
There's an interesting carry to it, and we'll talk more what carry means as we go forward. There's a little bit
so much
to
fun
walk
stuff.
through.
So
but
much fun
cool stuff. And again, anytime I can get my hands on more product, and especially size it to a way I can start to figure out how it works, that's powerful.
Fun.
So exciting stuff.
Cool. Well, let's throw it to Tom, Tony, and Vanetta coming up next. Stay tuned, everybody. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola. Happy June. Happy June to everyone.
Yeah.
50 degrees and sunny today, Sosnoff, so far.
It's going to be 80.
It's going to be 86.
It's going to travel 30 degrees this morning. That is correct. You are correct. Can't wait.
Well, it was
Summer's finally here.
Back. Welcome back. How was Atlanta?
Great.
Great.
Tom's not sure. Tom's.
Hey, Beth, Vanetta's really low.
Are you okay, girl?
Can you crank up her volume, please? I can't hear her.
Yes, we can. Tom.
Here, Vanetta, while they're doing that, I'll tell you what happened in Vanetta, in Atlanta. We had a little bit of a problem.
Oh no, what
the
happened?
the line was so long to talk to the bat that I had to make them all gather around so I can get to more people at one time, while the two people that were talking to Tom were getting his undivided attention. That was the problem. That was the problem in Atlanta.
I saw your aunt. Your aunt.
Oh, my aunt was there?
Yes, she was.
She has a job. What was she doing there?
She was back at work by 11.
Back at work by 11.
Morning off. That's right.
She loves you guys. I don't understand why. I was like, you should be on my side, Aunt San.
She was at work by
Can
11.
we get back to the lines now that you deflected, Sosnoff? Oh, here we go.
Oh, I made this. Looks good. Look at that spread.
Yeah, but you didn't highlight how long my lines were. I was so well received in Atlanta. It was so good. All the people there were phenomenal. It was a great show, and well, my peeps came out in force. I'll say that much.
Oh,
there's my little guy.
Here.
Yeah,
Whose child is that? Shouldn't that child be in school? It's not called At School by 11. It's called
Summertime.
Oh, that's cute.
Summertime.
Yeah.
Not all schools. Chicago public schools are still in session.
Yeah, Vinny's got finals today. Vinny's got biology today. Gonna be a tough one.
Yeah.
Mm-hmm.
How was the trading?
It was good.
Trading went well. Luckily for Sadnov, I listened to what he was thinking and not what he was saying, and I was able to get some good trades on. So that was good. It worked out nice.
Yeah, we made some 40 some odd trades. We made
41 exactly. We showed Sosnoff where the trade counter was on the platform. Sosnoff learned that there's a trade counter on our platform now.
We actually scalped some money. We actually made some money. We traded everything, like you can imagine.
Okay.
Yeah, we could have gone for another couple hours actually, but we could have probably done it all day. It was fun.
Yeah. Went very well.
How was the Lebanese restaurant in Atlanta?
Oh, I would say it was good. I mean, I wouldn't say it was great, but I'd say it was very nice.
Look at Bat's face.
It was much like Sosnoff's day. The appetizers were really, really good. I thought they were excellent. The beginning of the day was excellent. By the end of the day, after it all digests on him a little bit, and he gets a little tired, his gout starts kicking in. The meal, the main course, was less than desirable. So he starts out strong, finishes weak. That's how his day usually is. If you tune in at Tasty Live at 2:30, you can see I have to do most of the talking because Tom is pretty much dead by then. It was the same thing with the restaurant. The meals weren't, the main course wasn't that great.
It was a very nice restaurant. I thought it was, food was good suburban Lebanese.
Did you get Waffle House?
No, we didn't make it. Unfortunately, we didn't.
What the hell, man? You have one job when you go to Atlanta, and that's to get into a fight at the Waffle House.
We were at the venue really early, so to set up. So we
the Waffle House is open 24 hours.
Yeah, I know. No, we didn't make it. Yeah, we had bad airport food. Other than that,
oh my God, it's rare that I won't eat a meal it could not eat this meal. It was horrible.
Hartsfield is not my favorite airport. I will just leave it at that.
It's okay. The tram is annoying, but other than that, it's okay.
But whatever that diner is, that Southern diner in there, don't go, people. Don't go. Trust me, don't go. At least don't have the meatloaf.
Oh, wait, what was the diner?
No, it was nothing. It was just a crappy airport diner.
Ugh.
We were out of time. We only had like 15 minutes.
Yeah.
Yeah. It was a tight
Well,
schedule.
I did see every single angle of you falling asleep in different locations. I was like, why are the Twitter comments going crazy right now? And it's literally just hundreds of pictures of Tom sleeping. And so I just closed my laptop and I was like, I've worked enough for today.
I mean, we were
People put birds on top of his head.
It got out of control, and I was just like,
It was so good.
I saw those guys messing, but I didn't care.
It was like I could write like a Dr. Seuss book. He falls asleep in the car. He falls asleep in the train. He falls asleep on the plane. He falls. It's so.
I know.
Good.
Oh my goodness.
The only place he doesn't fall asleep is in the hotel because I stopped. A friend of mine drove up from Miami, or not Miami, from Florida to come to the show on his way to North Carolina. Don't ask me, but that's how he was doing it. And he came to see us, so I went out and had a beer with him afterwards. So I texted Tom around 10 o'clock at night, and I said, "Hey, what time do you want to meet downstairs?" Crickets. About 1:30 in the morning, I hear my phone go ding. It's Sosnoff telling me 6:45. 1:30 in the morning. What did you go out to that that bar? What's it called? Tail in Maine or something like that? What's it called? Where'd you go?
Where we were staying, they had a milkshake.
Magic City.
They had a milkshake bar, and so I went to the milkshake bar.
Ooh.
Yeah, you would like it.
You and most of the team went. Yeah, sure.
Yeah. We went to the milkshake bar.
My body's a temple. I didn't go.
Yeah, it was delicious.
Wait, so you
Wait a minute,
do they do the
how about
thing
this?
where they like put all the syrup like on the edge of the cup and then they dip it and then they put the
You could do that if you want, but I went old. I just went. I didn't want all that.
Wait. What kind of milkshake do you think he had? You'll never guess.
pistachio.
Coffee.
You've never had coffee.
Allegedly.
I like
That's
coffee
the
ice
second
cream.
time he's had a coffee milkshake, allegedly, in his lifetime. So he goes to this milkshake bar. You can get anything you want. They got 1,000 flavors, 1,000 things. He goes and gets coffee. I think he's been lying to us all these years.
No, I wanted the
Wait,
coffee.
did you like it?
Yeah, it was good. It wasn't the best I've ever had, but it was good.
Does everything have to be the best? Seriously, you're like a 12-year-old. It has to be the best. You know, honestly, it's unbelievable. Whatever. So
Well,
anyway,
you
coffee milkshake.
You got the first show in the books, and that's all that matters. Do you want to say thank you to the entire team? Because it takes a lot to do these shows.
Nah, not really.
Okay. Oh, okay.
We bet them. They didn't sleep out on the street. They had a room.
Yeah, they got.
but they had a room.
They got all
If
they
you
could.
would like to see us on the road, you can go to tastylive.com/events, and we may be coming to a city or country near you. We would love to see you out on the road. Tom and Tony are on the road. Mike, Nick, Katie, and Ryan Grace are out on the road. Dr. Jim is out on the road. Just come see us.
Next show, London.
Got a lot of great feedback, a lot of nice emails from the people. So thank them all for coming out. I really do appreciate it.
It was a really good show. Next show, London.
Mm-hmm.
After London, Milan, and then we're back in the U.S. And first show back in the U.S. is Denver in July. But we will be London in just 3 weeks, a little less than 3 weeks.
That's crazy.
Yep, London 3 weeks.
Very nice.
Milan literally in 3 weeks.
And then it's the start of your hot girl summer.
Then it's the start of hot girl summer. Well, yesterday in the city it was a little bit cold, but I was in the suburbs playing golf, and it was 70 something degrees.
Wait, where did you go play golf?
In Wheaton.
In Wheaton?
It's basically Iowa.
Basically, it is Iowa.
Yeah.
It's far.
Who got the nod?
It's a typical
this motley crew.
But
it was so motley. They didn't even they bypassed me. They went under me. But go ahead.
I mean, it was Yeah, it was basically, it was motley, but I hit the ball pretty good, so I was pretty happy.
Okay.
Couldn't putt
That's all
worth a damn.
it cares. It's a world that evolves around Sosnoff.
Couldn't putt
You don't want
worth
to
a
be
damn.
outside the circle of trust.
Yeah, my putting was bad, though. I was really upset with myself.
I mean, but Bat, you'd already spent all weekend with him. Like, you didn't want to spend more time with him.
Oh, no. He had asked me numerous times over the weekend if I would go, and
I never asked him once.
That's a lie. You know what? You can tell it to the judge, dude. You can tell it to the judge. You didn't ask me. This is what you would say. Yeah, we have 3 for our golf game on Sunday at 7:30 in Wheaton. If anybody wanted to play, Bat, we only have 3.
Yes.
That's what you would say to me. That's okay. That's okay. Now, I couldn't go on with you on Sunday. I had to bring Vinny to go get a crew cut. He got a cut and dye.
Oh, he doesn't have his perm anymore?
He doesn't have his flow. He's completely high and tight, and it's blonde. He looks like Tito Ortiz, which is an MMA fighter, an old MMA fighter, without the muscles or athleticism. He looks like him.
He went blonde.
See, that's hard because if the colorist doesn't know how to tone that and like it's the wrong level, like, and it doesn't go with his complexion, like it's a big old mess, honey.
It gets very brassy. It gets very brassy.
Yeah.
They all did it, him and 5 of his friends. What can I tell you? I've never been able to do it in my life. But he did it. They love it.
I mean, I guess.
I think they look very silly, but that's just me.
It's hair. It grows back. It'll be, whatever, I guess. I don't know.
One kid we found out has some good set of ears. Not gonna lie, he's got some ears that work real like Sosnoff's ears, pretty much.
But see, here's how you know they didn't think this through, because aren't they all gonna have to get their driver's license photos soon? I was like, honey, like you. Okay, whatever.
Yes. That's good. Is what it is.
It is what it is.
He'll have that until he's 60, almost 63. Because I have my same one from when I was about 19, so it's the same. Now you can use the same picture. It's fine. I look the same.
Fine. Hey, congratulations! The NBA Finals are set. It is the Indiana Pacers versus the Oklahoma Thunder. Pacers beat the Knicks in 6 games, advancing to the NBA Finals last night. I guess I don't know. What are your thoughts on the finals?
Well, actually, it wasn't last night. It was Saturday.
Okay, well then Saturday night.
Yeah. I think the 2 best teams are in.
I know poor Chris Vecchio was taking a lot of heat on X or Twitter, or whatever you call it these days, for his Knicks. Like, people putting up banners, we beat a wounded Celtics team in the second round. They were putting up a banner, like that kind of thing. They were making it really bad for him. He was getting a little sassy on Twitter, but he took it in stride.
Indiana deserved to. They beat the Knicks. I mean, they crushed them in that game. So it was there.
What is your prediction for the finals? Who wins and in how many games?
Well, Oklahoma is a huge favorite. OKC.
They are?
Yeah, they're a huge favorite. But I think Indiana's going to give them a little bit of a run. I think Indiana's got an. I would say they're probably a 3-1 or 4-1 underdog is my guess. 3-1 probably. Because they don't have. I don't know what the actual odds are, but on a flyer, I'd take Indiana. I like their game. They're fast. They're fun to watch.
Pacers in 7?
I don't know. Could be.
Is that your call?
I mean, it could be. It could be. I think I like Indiana, but they're a big underdog.
Okay, Bat, you taking the chalk?
Yeah, I mean, when you get into the playoffs like this, usually, as you can see in the show, the true talent shines pretty easily most games. So I mean,
Oklahoma City is really good, and SGA, he's legit MVP this year. They're a good team.
Who?
Their star, Shane Gildas-Alexander.
I was like the Small Government Association. I was like, what?
They just say SGA. It's kind of like,
okay. Cool.
PCA in Chicago.
Who?
Chicago. All they talk about is Pete Crow Armstrong, PCA. The fans chant. You don't know? Well, he's a young kid. He's 23. He's playing great. He's having an MVP-like season, and he's, and Cubs fans love the kid. And he's really good.
Reminds me a lot of TSS, but not SHR or BAT. Although you did have SLP.
He's a little faster. He's a little faster than I was at 23.
Yeah. By a step.
By a step.
That's not hard.
By a step or two. Yeah.
Half a step, maybe a step.
A little faster. A little faster.
Shenanigans all around you, boomers.
But I like acronyms. I like PCA, SGA. I like that.
Okay, those aren't acronyms. Those are just their initials.
I know, but
there's a difference, right?
Yeah,
okay.
A little
See,
bit.
this is hard. So you're so pedantic when I was like, oh, you're like, no, you're wrong. But then when I correct you about something that's actually legitimate, you're like, oh, it doesn't matter.
Yeah, but they're just, it's more of an acronym.
No, it's not. It's not.
Mm-hmm.
We got a great show for you today. It's a magnificent Monday. I have not worked a 5-day week in 2 weeks, so pray for me, y'all.
Believe me, we've been talking about it.
Right? No, we got a great show for you today at the top of the 8 o'clock hour. We're going to options jive. Kai's going to come in and forecast the week. He's going to just give his overview of everything that's going on market-wise. That's going to be at 8 o'clock. Then 8:40, we have the Skinny on Options abstract application, convexity and conviction in a zero DTE world. That is a big block of text to read without caffeine, but I did it. What does that mean, convexity and conviction in a zero DTE world?
I have no idea. Maybe
okay,
Tony.
Great.
Maybe Tony knows. I don't know.
No. Don't ask me.
And then 9 o'clock for market measures, why weekly options are tricky. It's tricky to rock a rhyme that's right on time. It's tricky. It's tricky. Why are weekly options tricky?
Why are they tricky? Because they disappear really fast.
Oh, like a man. Okay.
Something like that.
And then live from the trade desk, 9:30, big boy Scott Sheridan, counting down all the top trending tickers over at Tasty Trade. Did Scott get the nod to go golf with you?
No, he didn't get the nod.
Oh, wow. Damn.
He's a public course snob.
Well, he does have membership has its privileges.
Wow, Sosnoff, you are really digging that hole today. Unbelievable.
Anyway, that is our run of show for today. You guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story, breaking news,
across the wire.
leading story, top story, just in.
Today's headlines.
This just in. Breaking news.
All right, everybody. Today is a magnificent Monday. It's June the 2nd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Rabbit, are you ready for the news?
Ready for the news.
Any earnings for today, Mr. Bat?
You could take a look at DG if you're really interested. You probably won't find too much unless you have a directional bias. Dollar General, Sosnoff.
Yeah, I don't like trading that stock. Really hard to trade. Unless you're going to do it just directionally, that's it.
I agree.
Hey, kicking off the week, and I think Kyle will touch on this from a bit, the S&P 500 ended Friday with a weekly gain, and we are now less than 4% from its February all-time high. We are looking at a rebounding market, but there's a couple things on the horizon this week that you should take note of. We're going to get our employment situation that's going to come out on Friday. Jobs numbers are softening, and corporate profits are at the lowest level that they've been since 2020. But again, employment situation is going to come out Friday. We don't know what's in it. And the big, beautiful tax bill heads to the Senate, where it faces a contentious situation on if it's going to get passed or not. And that is what is on tap for the week. What is the implied move for stocks this week that you are seeing?
$97.
Ooh.
Down almost 30%, 25 to 30% from last week.
Interesting.
Yeah, it's closer to 99 this morning, but sure, you're close enough. I'll give you
last
that.
week was about 127. We talked about this last night on the Sunday night show, but it's 25 or 30% lower than it was last week. So the expectations are for a less volatile week.
In other news, Fed Governor Waller sees a path to multiple interest rate cuts this year. Inflation pressure from tariffs will be transitory, the Fed governor says. I just wanted to sort of get into a larger discussion about treasuries as we start the week.
Well, this Fed governor, whoever he is, may think that's the case, but bonds are not saying that that's the case. So... I mean, these guys.
Okay, what are bonds saying? What are they telling you?
They're 112.11, down 13 ticks. I mean, they're off of their lows of 110-ish.
They're off their lows, but they're clearly on the low end of the range. I mean, we're long bonds.
They're off their highs for the last 4 or 5 weeks, close to 115, 16, something like that.
I mean, they're definitely on the low end of the range, and so they're not suggesting that there's any interest rate cut coming anytime soon. We're sitting here long bonds, and I mean, it's worked because we're just playing the long game. But if you're trying to trade them,
we've been buying dips, but you've been active too. You've been selling the rallies too.
Yeah, buying dips, selling rallies. Same thing.
You've been trading them.
Yeah, just trading them. Exactly.
Well, what do you think of this headline? Investors are piling into big short treasury bets alongside Warren Buffett. It's estimated that Warren Buffett's Berkshire Hathaway now owns 5% of the short-term T-bill market, and ultra-short bond ETFs have been among the most popular ETFs with investors in 2025.
I do not understand that comment. Investors are piling to short treasury bets alongside Warren Buffett. Then you just said he's long 5% of the market.
He owns 5% of the short-term T-bill market.
But what are they short? Then what are they piling?
Right, yeah. The short-term, the shorter dated. The 3 months.
Investors, that's a stupid headline then. Investors piling into big short-term. It's not short treasury bets, it's short-term treasury bets.
Right. It's actually the opposite. Don't listen to what they're saying. Listen to what they're thinking.
I did not write the headline.
I mean, it's actually the opposite of what this headline says.
Mm-hmm.
Okay.
So
that's why it's all irrelevant and bullshit, Sab. Every headline, all this stuff, it means absolutely nothing.
So investors are piling.
AI wrote it, so.
Investors are piling big into long treasury bets.
Investors don't know what they're doing, nor do they know what Warren Buffett's doing, nor do they care. This is just some journalist, right?
Yeah,
what are your feelings on bond ETFs, though?
Well, first of all,
this means he's sitting with a lot of cash and has missed the market's rally, is what this means.
Let's be real about this. A, he's sitting on a lot of cash. B, this person who wrote this has no idea what his position is, and C, they can't even understand what long or short means. So how could I give them any credibility for this stupid headline? So I completely think this is worthless. Let's move on.
All right, moving on. Hey, how about this? European stocks are staging a world-beating rally as the trade war backfires. 5 months into the year, 8 of the world's 10 best-performing stock markets are in Europe.
Yeah, well, there's no question that this idiotic
the Pan-European Stock 600 index is beating the S&P 500 by a record 18 percentage points in dollars. The German DAX is doing very well. I was just surprised by this.
The unforeseen consequence, which is maybe a consequence, whatever you want to say, but of us starting this trade war was that all the other markets exploded and ours didn't. So, another another validation.
Well, we maintained our high.
Another
level
validation
also.
of how stupid an economic move this was, and how just pure idiocy.
We're a skosh off of all.
But you can't defend
highs.
it.
I mean,
you can't defend it. You've been strengthened and empowered the rest of the world while hurting our markets. There's no question about it.
well,
Can
the
we
rest of
talk
the world,
about currencies?
we would look at this as the rest of the world last year did not participate in any rally, and if we had talked about this, we would be a little bit more bullish on Europe and less bullish, if not bearish, a little bit on our own markets. Our own markets have gone sideways, and Europe and the rest of the markets have gone higher. You would say that was a good move
for them.
What are you guys doing in currencies this morning? Can we talk about currencies, please?
The dollar's getting killed again. The currencies are really strong this morning.
Okay.
Currencies are euro is a skosh off of their highs. Correct. Yeah. He's
euro,
yes.
Euro, British pound, Japanese. They're all the dollar's getting hit this morning.
Here's something interesting. As I mentioned earlier, that big, beautiful tax bill makes its way to the Senate. But Wall Street analysts are cautioning that a tax that targets foreign investors that is in the U.S. budget bill could end up weighing on demand for U.S. treasuries and the dollar. Basically, it would impose a progressive tax burden of up to 20% on foreign investors' passive income, such as dividends and royalties. That levy would be paid by the entities such as sovereign funds and companies with business in the U.S., as well as individuals that just want to trade and invest in the U.S. And it doesn't seem that enough people are talking about this, but this would not be good for. Why would we dissuade investment in America?
Well, obviously we shouldn't. But that's not what we should be talking about. We should be talking about the fact that this, quote, big, beautiful asinine tax bill is actually a legislative support of the greatest transfer of wealth from poor people to rich people, and it should be voted against on every single
democracy
level.
is what is it? What's happened to democracy again? No, actually, this week's Cherry Bomb, you didn't even write anything political, Sadnov. Did you get hit on the head, or did somebody hijack your
because
Cherry Bomb?
I wanted to write about digital assets because I think there's too much noise and there's too much fluff right now.
Hey, you guys stop fighting. This is gonna ruin mom talk. Hey, I'm keeping it moving here. I know side of my bread's buttered on. Hey, JP Morgan CEO Jamie Dimon is backing taxing U.S. carried interest, and he also warns of bond market trouble. On Friday, he said the U.S. should be taxing carried interest, joining the criticism of a loophole that enables private market investors to benefit from lower taxes. What are your thoughts?
I mean, it's long been on the table to tax carried interest. I'll let those guys fight it out. I think the warning of bond market trouble,
he said he's warning of a crack in the bond market, citing the government's overspending and quantitative easing.
Yeah, I mean, that's a little bit master of the obvious by Jamie Dimon, but Jamie's always finding, something negative with everything. So I think that's pretty much par for the course for him. The carried interest argument.
Yeah, he's not an optimist like you are.
That's right. The carried interest argument's gone back, it's a decade older. I mean, 2 decades old discussion on this. We'll see what happens. I don't know.
Bat, what's JP Morgan doing this morning?
If Tom will let me say it, JP Morgan is trading 263, 261, 262. You know what? A lot hasn't traded. I'll say it's basically unchanged, maybe down $1.
Okay. Hey, getting to commodities just a little bit. Oil prices jumped last night after OPEC Plus agrees to another sharp production hike. Crude prices are expected to fall in the long term as Saudi Arabia and other big oil producers move to regain market share. What are you doing in that light, sweet crude?
But
that is your big mover with gold. But this is almost a 5% move in oil to the upside. That's almost a $3 move to 63.73. The high end of its range, we haven't seen since April when the equity market was imploding.
can I just say this is another headline that makes absolutely no sense? That oil prices jump after OPEC agrees to another sharp production hike.
Right. It should be the opposite. But I said in the long term it would fall.
I know, but I'm just showing
you tried.
I'm just showing you how they can say, so if oil was down $2 this morning instead of up $2 or down $2.50 instead of up $2.50, they could use the exact same headline again.
Well, no, they'd be right then.
I understand that, but that's my whole point. That's how ridiculous these headlines are. And these editors are just like, they're brain dead. Like, I don't know where these come from. Oil prices decline after OPEC agrees to another sharp production hike. Oil prices rise after, like, either way, how could they be wrong it doesn't make any sense?
Okay. Are you okay?
I'm just saying, like, these headlines, who writes these?
Okay, but do you have a crude oil position?
Win, tails you lose.
I have a crude oil position. We're flat in there. We're flat. We rolled up some puts this morning, but premium still came in a little bit.
All right. Hey, a potential watershed effort to launch U.S. crypto exchange traded funds that offer staking rewards is throwing up regulatory doubts. Even after the funds said they had received initial SEC registration approval, issuers Rex Financial and Osprey funds are targeting to launch ETFs tracking Ethereum and Solana that offer staking exposure, but U.S. regulators are now raising concerns that the vehicles may not legally qualify as ETFs under federal securities law. Who's right?
I don't know. This is going to be, they've got to battle this one out in court. I don't know. The SEC has long been against this. I mean, I know they're trying to do it in an ETF. So that's the argument. That's going to be the argument. I mean, for us, we would ultimately like to see as many products as possible. This would be a buyer beware type thing. But, sure. I mean,
What are digital assets doing this morning?
If you take a look at, if you consider digital assets, Bitcoin, it's under 105. If you remember from last week, I was quoting it closer to 110, flirting with its all-time highs of 112 and change. So 105 is kind of on the low end of the range, probably the lowest end that we've seen since the beginning of May for Bitcoin. So 105, it's down small, about $500 this morning.
How is MicroStrategy after that blistering takedown by Tom in the cherry bomb?
MSTR 367 on the offer would bring it down around $2.
See, you did
also
that, Tom.
On the lower end of its recent range.
Yeah, I don't think I did it, but I'm blown away by how these companies can raise money without paying interest on the money they raise, and without having a stated conversion rate. I just don't understand it. I don't know how one person can give a dime to that. I just don't get it.
Hey, the same technology giants that helped drag the S&P 500 to the brink of a bear market in April are giving the recovery in U.S. equity some legs. What a turnaround month May was. Tesla is up 56% since the benchmark bottomed out on April 8th, while NVIDIA and Microsoft have gained 40 and 30% respectively. The Mag 7 is outperforming the S&P 500 over the past 8 weeks. What do you do with this knowledge?
Well, you know what you do with this. You probably follow the bat into that double diagonal for option trades today, and you were able to take it off on Thursday for a nice little win. But don't worry, every Tuesday and Thursday, I got more option trades today. Tomorrow's your big day. But right now, Tesla down around $5 or so, just off of its highs, recent highs of around 370, 341 and a half on the bid.
Tom, for you, which of the Mag 7 are you really liking right now? What's giving you trouble?
Of the Mag 7, if I had to buy one, I would buy Apple here. In fact, under 200, I kind of like, I think Apple is like, like I'd like to be long Apple and short Microsoft. I think that's the most interesting play. I also think Nvidia, if it opens a little bit lower this morning, depends where it opens today, but Nvidia on the opening today is interesting to me from the long side. Apple's interesting to me from the long side. I think Microsoft and Meta are the two most interesting shorts, and I'm pretty neutral on Tesla, Amazon, and Google at these prices.
Okay.
So I'm bullish on 2, bearish on 2, and neutral on 3.
In a scathing indictment, the CEO of Anthropic has a blunt and scary warning for the U.S. government and for all of us. AI could wipe out half of all entry-level white-collar jobs and spike unemployment to 10 to 20% in the next 1 to 5 years, he said in an interview. This is Dario Amodei. He's the CEO of Anthropic. He says AI companies and the government need to stop sugarcoating what's coming. The mass elimination of jobs across technology, finance, law, consulting, and other white-collar professions. That's not good.
You know what? This is the same.
He's talking smack. He's talking his own book. I mean, he's so full of crap. It's like there's been a lot of dumb things said by CEOs. That's among the dumbest thing I've ever heard. That's really idiotic.
Yeah.
Well, conversely, Anthropic, the company which he runs, hit $3 billion in annualized revenue on business demand for AI. What say you now?
It's like he goes out and says, my ice company is going to sell a lot of ice.
Yeah, I mean, there's no question that there's no question that there's demand for AI, but I actually see it creating more jobs, and so I think it's let's see what happens.
I hate the sky is falling business attitude.
Yeah, I do too.
Companies will.
I do too. I hate it, and I hate somebody in that position saying that. It's such garbage.
You can read his whole statement on Axios. You can.
I don't
find
want
it,
to.
Whatever. Okay, I was putting it out there.
Make them do it, Meta. Make them do it.
Speaking of AI, Meta plans to automate many of its product risk assessments. When Instagram or WhatsApp or Facebook makes a new update, it's subjected to internal review, right? They're like, okay, hey, is this update going to affect the privacy of our users, of our consumers? So now Meta is like, we're getting rid of all that. We're just going to have AI figure out if this is evil or not. What could go wrong?
Nothing can go wrong. Nothing can go wrong.
Nothing can go wrong. Well, do you have a Meta position? What's Meta doing this morning?
Meta IB rank of 14, been going sideways.
I don't have a Meta position. If I did, I'd want to be shorted.
It's down about $3 this morning.
You do want to be long Apple, so just a little binary note here, a little mini binary event. Apple's WWDC is happening June 9th. It starts June 9th, but it's going to be make or break for Apple Intelligence. I'm on the next story here, Beth, because Apple is way behind in AI. It said that they are making their own large language model to compete with the Geminis and the Chat GPTs, but right now their main concern is that it hallucinates a lot. But Apple has been a laggard in the AI space. It did save them when the whole DeepSeek thing came out because they were not as impacted by AI. But now people, shareholders, whatever, are like, hey, you promised us this Apple Intelligence. It's not really that great. It's not even shipping with your phones. Like, Apple's in a big old mess. They're not expected to really announce any advancements in AI. And again, their big conference is next week. So I'm just putting that out there. I know you want to be long Apple in your heart.
Yes,
I think it's just an interesting spot to buy it here under 200. I haven't bought it yet. Here, I'll put my money where my mouth is and buy it pre-market.
Oh yeah.
Yeah, you did it, Joe.
I like goading him into trades.
Me too.
Well, I'm not filled yet.
All right. Well, just give it time. Give it a second. Hey, Hims is announcing the telehealth platform Hims and Hers will cut 4% of its workforce as it adjusts to a U.S. ban on manufacturing mass copies of the weight loss drug Wegovy. I don't know if you were here last week, but I think Jamal said there's going to be like a 4X leverage ETF that just trades Hims or something. I was like, that's a choice. What are you doing in Hims?
I don't have a position.
Okay.
But should you have a position, Sadnov? Hims has an IB rank of 39. Taking a look at the markets, they're good, not great, about 15 to 20 cents wide in here. But it is a $56 stock, basically unchanged this morning. That's on the higher end of its range. I mean, it's a tradable product, something we don't look at, but we probably should look at it.
I've had a few positions on there. I found it to be kind of annoying to trade it. Not as good as you'd think.
Okay.
In a hilarious federal lawsuit filed Tuesday in Illinois, Chicago-based Mondelez says Aldi is infringing on their trademark by creating packaging that deceives and confuses customers. So Aldi offers peanut butter cream cookies that look just like a Nutter Butter package. They offer these chocolate chip cookies that look very similar to Chips Ahoy, and of course the chocolate and cream cookies in packaging that looks like Oreo. And Mondelez is like, yo, cut that shit out.
I mean, there are some similarities there.
Some similarities.
I mean, this is a lot. I mean, this is not as similar as the dogs are quacking and you had to get a cease and desist. I mean, but
no, it went dun 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 dun, and then it went dun 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 dun.
Okay. See, there was that pause.
Yeah, see, that's different. Anyway. Good luck, Aldi, fighting this, but it's going to court.
You know what? You can't throw shade on Aldi. I've had success at finding decent stuff at Aldi.
I'm not throwing shade at Aldi. They are being sued. I'm not throwing shade.
Yeah, I know. I'm just saying.
I'm not suing Aldi. Not finally, but in very, very exciting news. If you're new here, my name's Vanetta, and I am Tasty Live's Taylor Swift correspondent. And I have breaking, imminent, just seismic Taylor Swift news. I don't know if you were aware, but on Friday, we are calling it Swiftie Independence Day. Taylor Swift finally owns all of her old music. She paid around $350 million to buy her masters back from a publishing group. Shamrock was the name of the publishing group. So her original versions of songs can be reunited with Taylor's version. We are not really getting Rep TV, but there are vault tracks, which I'm very excited about. But I cried when the announcement came out. Yes, I did.
My God.
But it means the world. Like, if you're an artist or you're anyone that creates your own thing, to lose ownership of that has to be so devastating. And the way that it happened, you can watch the documentary Miss Americana on Netflix. It's great. But I'm just congratulations. And the way she did this was through the massive revenue of the Eras tour. So basically, I helped her buy her masters back. I'm an investor, and I would proudly give all of my money to this blonde lady from Pennsylvania.
When an artist sells some of their stuff,
she never sold her stuff. She never had the right. Don't you argue with me about this, because me and all the other Swifties will come for you. No, other artists, yes, like Justin Bieber sold his catalog for $200 million. Other artists and musical groups they have sold their rights. Her music and rights were taken from her.
No, it was part of her contract. Her contract stated that when she signed it with Big Machine, or whatever the original
label, Big Machine Records, yes.
Label was, she didn't retain ownership of the masters that she did. She didn't retain it. That was a contract she signed.
Okay, so yeah, and at 15 years old, then that's super crystal clear.
No. Hold on. And that meant that she had not one, but 2, 3, or 4, or 6 attorneys, because she was 15 years old and could not sign it by herself. And her parents said that this is what we want to do. Now,
I don't know why you were taking the side of Scooter and Scott, but you're trash.
I'm not taking the side of anybody. I'm
she
taking
got
the
her
sign.
master's back.
Listen,
That's all
I
that
signed
matters.
my life away to Sosnoff 15 years ago, and I stood up and I stayed here and became the flunky. That was what I signed on to do, and I am a flunky. I don't say I'm the master.
You can trade UMG, Universal Music Group. She belongs to UMG.
Hey! You can buy your freedom. Okay, you can just you can write a check to me right now, and I'll cut you loose.
And
you buy me. Nobody buys Mo Green. I buy you.
I'll sell you. I'll sell you your soul.
devastating-
I will sell you your soul back. No problem.
I buy you.
Okay. In the most devastating of economic indicators, I am so sad to report that summer rentals in the Hamptons are down 30%.
Sodloff, don't sign yet to sign, to get your summer place. Wait a little bit. Seems like they're going a little lower.
No, but all joking aside, this has to be bad, right?
Yeah, now they're down to $175,000 a month for the
week.
summer.
For the week.
Yeah.
I don't know. Brokers who focus on ultra high end rentals are seeing an even bigger drop, saying that rental business at the upper tier is down between 50 and 75%.
Yes, which brings them back to 2023 numbers.
Some renters may be holding out for better deals or waiting to book, but brokers privately say there are other factors at play. So I don't know. Could be a harbinger of things to come. And hey, history has officially been made. The Colorado Rockies officially become the first team to ever reach 50 losses before winning 10 games. I love that it at least takes some of the spotlight off of our White Sox.
Yeah, I bet the White Sox are very happy about this.
So, but brutal. I mean, but it happens. Like, things are what they are. But anyway, congratulations, Colorado Rockies, I guess. Finally, today for my viral video of the day. I'm missing the part of my brain that tells me stunts and stuff is a bad idea. Like, I don't get scared, right? Like in that way. Like spiders, absolutely. Jumping off of and out of things doesn't scare me. But how do you put this together? And I might have a new life goal. Check this out. So he's parachuting into a rooftop tent on a moving vehicle, and this is how many attempts it took. Like, why? But also, this is awesome.
Hold on.
Don't try this at home, ladies and gentlemen.
What did he actually do?
So there's a pop-up tent on top of the caravan. Beth will play it, and he was trying to parachute into it. But obviously it's moving, so it's not going to line up the first try.
Sodloff doesn't have his glasses on. He can't see. There you go. He got it.
Impressive.
It is very impressive. That's a lot of physics that is involved there. So
very
anyway,
stupid too, but yes.
Anyway, this has not been as much fun as doing the show with Liz and Jenny, but here we are. Bat, what's coming up next?
We're going to take a quick 90-second break and come back with more Tasty Live after this with Confirm and Send.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&Ps, I don't know if they're down 2050. That's doesn't tell you the whole story. They were down around 25 handles lower than that last night. NASDAQ down around 100 and change, now about mid-price for its most recent move. Russell down 110 and the Dow down 100. Basically unchanged, a little bit lower on the overall market, not near their lows. Volatility up 30 cents, Sadnov, to 2037. You guys talked about it last night. We talked about it a little bit this morning. Expected move in the E-mini S&Ps, relatively light for all the news that's going on here. You can see here 98, 97, 100-point expected move on the E-mini S&Ps for the week. We'll see if that holds. Bonds down 13, Bitcoin down 500 at the low end of its range. Oil at the higher end of its most recent range. Big move, 4.5% off of its highs by only 20 some odd cents. Recent highs only by 20 some odd cents today. Oil, gold up $66. We're doing this again, Sadnov. Gold up 2% to 33.81. Silver up a little over 2%, 76 cents to 33.70 and change. You can see silver has underperformed relative to gold over the last couple of weeks, but they're both on their highs. Nat gas up 21 cents just because it's 50 degrees in Chicago and Bat has to keep his heat on his pool. They figured they would give it to me real good, up another 6% in nat gas. Sadnov, for earnings, really all we have is DG, and I don't think you're going to look too much at that. That's Dollar General. That's all I got.
I am not going to look at DG at all, actually.
I didn't think so.
I don't like trading it personally. I am a little bit caught behind the gold move today, but that's about it pre-market. After
you sell premium, anytime you have a 2% move in something one way or the other, you're going to have a little bit of a work to do.
Yeah, a little bit caught in the gold move. I've nibbled a little tiny bit this morning. I bought some Apple and I bought some Nvidia because I talked about it on air and I needed some deltas. So I bought
gold. Expected move for the week is only $75. So
I know,
already up $65 now. That's why you're having a little bit of a
gold.
Problem
expected
there.
Moves don't matter because it seems that we beat the expected move for the week every single day. This is Confirm and Send. We're a little behind, so let's go. Monday, June 2nd. Let's see what we got today. Emails that came into us over the weekend. I seem to remember that summer months in the market tend to be more range bound. Does Tasty have any studies showing if a strangle and or straddles in the indices would work better in certain seasons than others, or is it really random?
You know what? I don't know. I mean, I do know from the research that we've done and found that it's basically random. But you can go back and test all that. You can do that right on our platform, right in Tasty Live. Check it all out. Do it yourself. Don't take my word for it. But I can tell you the results are basically random. Now, if you go in a shorter time frame, you might find a little bit something different. But if you're looking over a longer period of time, it's basically random. The volatility is so perfectly priced.
Yeah,
There's no edge here. Go ahead.
Yeah, no, I was going to say we've had some wild months over the year. We've had some wild summers over the years, and we've had some dead summers. I would say that, and we've also
just like we've had some wild Januaries and some wild
exactly. Right. I mean, the concept is it really random? The answer is yes, it really is random. I mean, we've done a bunch of studies showing that there's really not any kind of there's no takeaway with respect to certain months of the year having more downside or upside or being slower or busier. You know, I think there's maybe, you know, a certain expiration day that has, you know, like June expiration day, for example, has a tendency to be higher. But I don't think there's much else to it. I would say that seasonality in the listed option world, stock world, doesn't really work.
Yeah,
it's very random, and our research backs that up. And you can search our site for seasonality because there's plenty of articles, plenty of research we've done on that. Let's go next slide.
Yep.
My instinct is that I should always have a short SPX position on because if the market crashes, the portfolio correlations will converge, IV will go up, but I will still have losses. So I feel like always having on a short 16 delta call on SPX is logical. Does that make sense to do?
I don't know what makes sense for the future, but I could tell you where the market is today, this would not have made a lot of sense over the last, couple of years. I don't know what time frame you want to make. And if you started in April, it was horrific. If you started in March, you had a winner. I mean, you got to go with what you think the market's going to do and go from there. Not like try to protect this. And a naked call is not going to protect you from a crash, in my opinion.
What I wrote back to this person was, listen, if you want to try it, the SPX, like Tony said, the SPX, if you'd done this for the last 15 years, it would have been a pretty big drag. And the SPX is a pretty big contract. So if you want to try this, maybe just try it with a SPY call, which is 1/10 the size. One or two SPY calls, if you want to give it a shot. I would say that I'm comfortable with this if I feel like the market's overbought. So if you feel like the market's overbought here, yeah, sure, I'm comfortable with this. If you feel like when I think the market's oversold, I'm definitely not comfortable with this approach. So it really depends on your own idea of where the market is. Is it at the top of the range, at the bottom of the range, middle of the range? I'm okay if it's middle or top of the range. I'm usually not okay if I think we're at the bottom of the range. And I would use SPY just so you don't have to deal with, it's just a smaller product. Let's go next slide. With futures options, especially with regards to sizing, do you have any suggestions or guidelines on how I can compare the size of a future-based option with an equity-based option so I can understand the impact?
Size of futures-based options, the equity-based options, so that I can understand the impact. I don't think I would change much, but you do have to realize that they use span margining for futures options, and the options buying power is subject to change. The closer it gets to expiration or the closer the option gets to at the money, something that starts with a limited amount of capital, you may say that, that's a small percentage of my 1% to 3% that I might use for this strategy, can grow to be significantly more than that. So, yeah, unless you use a defined risk, I would definitely look into what the span margining could be on that option.
So this is a tough question because if you looked at like ES versus SPX, you would say the ES is half the size of SPX. But if you looked at, for example, bonds versus TLT, bonds are, 11 times the size of TLT, or GC is 10 times the size of GLD, or things like that. So there's a lot of nuances with futures options. They're generally pretty big compared to listed options. Here's what we would say in an email, we would say reduce the size of your futures options positions by 30% if you want to compare.
I was going to say even more than that, son. If you go to 1 to 3% on any position, I would say 1%. Like, you know what I mean? Like just.
Well, the rule of thumb that I write when I'm responding to people on emails is 30% less for futures options and 30% less for portfolio margin. If you're comparing apples to apples, just so line things up. So that would be my standard answer. Like Tony said, you can go even higher than that if you want to.
Yeah.
Let's go next slide. I was looking at putting on a call zebra in ABC going out 48 days. When I strip out the extrinsic value and arrive at 100 deltas, it says that my theta is negative 21. Does this mean that I'm losing $21 a day? That if I hold this trade, each day that I hold this trade, if the price was not to move?
I mean, in a very broad base, it's costing you $21 a day to put on that synthetic stock position. I don't know your time frame for this or anything else, and that will change with the stock movement. If the stock this is a call zebra, which means it's bullish delta. Call zebra is basically buying 2 in the money calls, selling 1 at the money call, which gives you 100 long deltas. If the stock goes higher, that theta will go from negative 21 to 0. It won't cost you anything to hold that trade pretty quickly. Again, I don't know the strikes here to simulate what you were doing. If you were setting it up right, is $21 a day a lot? Typically, I found it to be less than that when I'm looking at zebras, but I don't know what strikes you're using.
Yeah, well, you also.
But remember, you're
hold on.
using.
To be fair with you, this stock, I changed this email to ABC because I don't like to talk about specific stocks, but this was an expensive stock. So the $21 a day is
relatively cheap then. I mean, everything is subjective. Yeah. Yes.
So you have to understand the theta number, when you do a zebra, the theta number is just cost to carry. All this is just a math model. So it's just cost to carry. So the answer is, if you had bought the stock, it would have cost about $21 a day to carry it.
Or you wouldn't be able to afford the stock at all. Like, you could be doing a zebra here that, it could cost $50,000 or $70,000 to buy the stock, where it could cost $2,000, $3,000 or $5,000 or $200 to buy the stock on a zebra. So you have no idea.
Yeah. You have to think of that theta number, though, as the cost to carry. So it's no different than if you went out and you bought the stock or had to put up the money to do the trade. Yeah. It's like the same thing. So, you do effectively, that's the cost of carrying trade. Wouldn't say you're losing it, but that's your cost to play the game.
Right. Yep.
Let's go to the next slide. But your numbers are right. This person writes, I have a portfolio margin account. I also manage a $75,000 Reg T account. Each account is long a combination of an index ETF and BOX, BOXX, the bond income ETF. That's not really that important for this email. My question is, if I'm selling a 45-day to expiration 10 delta SPY naked puts in both these accounts, what % of option buying power should I limit the total sales to? I figure I would risk a higher percentage of buying power in the Reg T account.
This is a defined risk trade. I don't ramp up my size because of the style of the account, I don't think I look at it like that. So enough. You?
Okay. So my answer to this person was that they wrote, I figure I would risk a higher percentage of buying power in a Reg T. That is exactly correct. You will risk a higher percentage. But what my answer to this person was,
it's going to use the same amount of buying power because it's defined risk trade in each one, correct?
My response to this person was, if you really only want to have a short puts and long a bond income ETF in a portfolio, that if I was doing Reg T, the max, because they asked what's the max. The max I would go to in a Reg T account is 50 to 60%, and the max I would go into a portfolio margin account is about 30% less. So let's call it, between 40 and 45%. So I would do between 50 and 60 kind of max if it was if I was doing a Reg T account with just short puts and box, and if I was doing it in portfolio margin, like I said, about 30% less than that, so around 40, could be 37, 40, 45, in that range.
Mm-hmm.
Let's go to the last slide. As the use of algorithm trading grows, I'm interested in your thoughts about the impact this might have on the zero DT trades and or the changes to the 30 delta, $30 wide, 25% profit trade. Does increased algo trading provide an opportunity to lean into exaggerated intraday moves and play for contrarian moves back to the opening day's range? Does the prominence of algo trading extend the hold time in zero DT trades? And I can tell you right now that the genesis of this email was that there was an article yesterday or over the weekend. I believe it was either Bloomberg or the Wall Street Journal that targeted this topic. I don't remember exactly what publication it was, but
these emails are great. You must have taken these from your A-list emailers.
Yeah, these were A-list.
These are awesome.
These were A-list emails last night. Yes,
absolutely. You should go to this list more often, Sadnov, because these are thought-provoking. There's a lot. This is like the Series 7 test here, Sadnov. I mean, this is
okay. We're right out of time here. So get to your answer.
We got Kai next, okay? I know who's coming up. I got it. Remember, this is all, again, a soundbite for algo trading, which I think is completely BS. So for me, I would discount and look at this as a non-event. It has nothing to do with extending your hold time. Zero-day trades all come down to managing early. That's the key to zero-day trades, in my opinion.
I've watched a lot of algo trading throughout my entire career. I even tried to do it at different points in my career, not that effectively, but we did do it. From program trading to, high frequency trading to everything else. And so I'm fairly familiar with this topic. I'll just leave it this. So my answer to this question is we've always been very closely intertwined with algo trading at some kind of capacity. People are, a big part of the volume that's generated every single day is from various kinds of bots doing various kinds of different types of trades. I'm not that convinced. Like, I'm very similar to Tony, and I'm not that convinced that even if there's exaggerated volume, or if there's an increase in volume, that the exaggerated intraday moves are necessarily driven by algo trading. Whether or not it's algo or something else, intraday, the markets, I don't see any difference in the way the markets move today in the way they've always moved. I mean, we're trading with an 18%, 19% volatility. That's a little bit on the high end of the range, which would explain to me the additional intraday, the exaggerated intraday moves. We're just coming off of relatively high volatility. But I don't see much difference, Tony, in the 0-day moves today than I saw 25 years ago.
I agree. Fine. Yeah. I listen, you're getting the movement because the products you're trading is so much bigger.
Yeah, I mean, really there's a lot of validation to that. I mean, we used to, when the index was trading for 300, you would have moves.
It's trading for 3,000 now.
I mean, it's trading 6,000 now.
Yeah,
you know,
right.
So are we getting moves that are 20 times the moves that they used to be? Yeah, but we're 20 times bigger.
Mm-hmm.
I think a lot has to do with the size of the index, and a lot has to do with the fact that you know. Let me tell you something. We never have 0 days throughout the years, but we had expiration days, and the expiration days, which were essentially the same as 0 days, were just as crazy, if not crazier, than anything you're seeing today. So, no, I'm going to argue not really. Doesn't bother me.
Awesome. Let's take a quick 90-second break and come back. We got more Tasty Live with Kai next.
If you missed the live show, here's our cherry on top weekly recap.
How was Nashville? Did you go hiking? You were going to do a bike, you were going to go fishing, and you were going to visit an apiary.
I spent the most time of anything lying in a mineral pool.
Oh, gross.
There was a guy running the fishing area, whatever. He hands me a
fishing area.
He hands me a fishing pole, you know, and he goes, you're all set up. He goes, want me to show you how to use it? I go, I don't need any help. I got this. I get down there. I do this. The whole thing got tangled up.
Mom, phone. I need help. Get the guy over here.
Wave the guy down. Go, hey, need a little help. He goes, let me get you another rod. Now let me show you how to do it. I made the obligatory stop at Buc-ee's.
Oh, how was Buc-ee's?
It's 6 hours away from here. I'm talking it up the whole way down. Telling Corinne, this is, life-changing.
Did you go into the bathroom?
No.
You didn't go into the bathroom. You can go to the dirty shell down the street, or you can go to this beautiful, clean mecca of a place. Relieve yourself.
I'm not sure what place you were looking at, but I almost got run over in a stampede at that place.
Oh, you got to move
I like how
quickly
you're clutching your pearls.
It is not a beautiful mecca. Okay.
It's a beautiful mecca. When you're on the road for
it is an absolute up for grabs show with 1,000 people running around grabbing stuff, eating stuff.
That is like crack for me.
There's like barbecue sauce flying all over the place. That place is not a beautiful mecca of anything.
Who do you think the best dressed on-air personality is of all the Tasty people?
I probably guess I got to go Ilya.
Ryan Grace, easily.
Oh, yeah, Ryan Grace, 100%.
He's very preppy looking. It doesn't do anything for me.
Oh, who's the guy who's God on the research team? He's got to be in that top 3 too.
Oh, Gad? Yeah, Gad's up there. Yeah.
He throws on a leather jacket, man. He comes in there looking like Eddie Murphy off Raw or something like that.
Oh, yeah,
He's got incredible confidence, and good on him.
So, Dr. Jim, throw him out. He's horrible.
Jim wears children's clothes. It's easy for him to dress.
This is
easy.
Like Granimals.
Yeah.
You can throw me outside. No, don't worry about it.
Yeah, I'm throwing you out because you got
yeah.
old man Italian clothes. Yeah, I don't. That doesn't do it for me.
Tony looks like if you saw him at a bar, he'll offer to pay your cell phone bill.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's Option Jive.
That's right, Thomas. It is Option Jive with my man Kai. Kai, welcome to the show.
How are you doing?
Amazing. Thanks for asking. What do you got for us?
As usual, the research corner summarized from last week. We have some interesting things. So last week, I would say it was a relatively quiet week compared to the news that announced. So the major theme is implied volatility dropped across all the major assets. This is exactly the opposite from the week before. We saw all the implied volatility, the IVR increase the week before. So And the second one is the treasury yields decreased for 30, 10, 5, 2. So the bonds rallied a little bit, but I saw the market today. Everything just reversed. Right?
Yep.
Yeah, so the key events last week, definitely the biggest one, Trump delete EU tariffs, and NVIDIA is one of the biggest earnings announced in the past month, and also the core challenge Trump's authority on the tariff. But the interesting thing is even some of the news are pretty, could be pretty big ones, but the market just did its own thing. It reacts a little bit, but eventually it just came back to the original point for multiple days. I think on Monday and on, I don't remember the other day, but pretty much we have a relatively quiet week last week.
That's because they knew we were traveling and we were going to go to, we were going to go to Atlanta. So the market said, hey, we'll just relax here for a little bit. We'll give those guys a break.
That's great. That's great.
Yeah.
All right, so last week's index performance, we can see the week before all red, 2.5% to 3.5% to the downside, but last week was all up, 1.2% to all the way to 2% for S&P. So it's not a big movement compared to what we've seen in the past 2 months, but it's there.
Nice.
Yeah, expected move for last week. Interestingly, this is one of the few weeks that we saw the realized movement for SPX is actually inside the expect move. Expect move was 2.2%, 2.1 actually. So last week is 1.9%. The VIX started 20.5, and at the end of Friday, the VIX dropped to 18.5.
So you're saying the VIX?
1.7.
So the VIX is dropping, you're saying?
Yeah, all the implied volatility in IVR drops from equities, bonds, and futures. We can see from the next slide, everything dropped. So this week, the expect move 1.7%. So let's see. It's 101 points in SPX. Yeah, so this is the IVR for all major assets. Nothing to say, just everything just decreased.
Got it.
Yeah. Everything.
Yeah. Yeah, so not too many things to talk about. So I just put one VIX slice in the next one. So again, just try to emphasize the long-term median. VIX is 17, roughly 17 in the past 20 years. Right now, we're trading 18.5. So it's not extremely high. It's definitely not low. This is just like the normal time we should sell our premium, 18.5. Nothing's wrong. We actually see more number of occurrences occurred or generated within this range, and more premium you can actually collect or keep over the long term. Yeah, definitely not as rich as when a VIX trading in 30, but this is actually the main time every premium seller should trade.
Yeah, you're looking at VIX here, not /VX, correct?
No, this is VIX, yeah.
Got it.
Yeah. Okay, so next slide is the top 5 and bottom 5 performers. Last week we have Alta because we have earnings up 12%. We have PLTR is up 7% at the market highs again. CVS, WBD, and Boeing. So these are the upside move. HPQ down 12% is the worst one. Best Buy down 8%. I think it had earnings last week,
yes,
right?
It had earnings last week, yes.
Mm-hmm. Yeah, okay. And Coin, Uber, and Intel. These are the bottom 5. Did you trade any of these earnings?
All I traded for earnings, well, PLTR didn't have earnings last week. No. So I didn't trade any of the ones that were up. On the ones that were down, I didn't trade any of those either. Last week for earnings, we actually had a really good Friday. What was it again, Tony? It was
we can go to the next slide. We have the earnings.
Yeah, it was Marvell and
Costco.
And Costco. They were both big winners. But that's all we traded for earnings I can remember at the end of last week. Yeah.
Oh, you're lucky. Because see, this slides I show the big movers from last week's important earnings. So you actually avoid trading all of these big movers. So some large movers is PDD on Tuesday. Okta Tuesday. What is that? The ANF up 17%. AI and also Alta and Gap. These are big movers, and you didn't trade any of these.
I mean, we traded Salesforce, which was a winner. We traded NVIDIA, which was a big winner. We traded Costco, which was a winner. And
we traded a lot of these directional too.
And we traded
and
Marvell.
well outside the expected move.
You don't have Marvell up there, right? Oh yeah, you do. Which was a big winner. We didn't trade. Yeah, we didn't trade the other. We didn't trade Foot Locker, Best Buy, Kohl's, Dell, Gap, Ulta.
A lot of those don't have the markets that we look for. I think liquidity and Ivy rank saved us from having these moves. We didn't trade. What really came down to it.
We didn't trade OKTA. No, none of those.
Understood. Yeah, sure. Okay, so this is the last time we're going to summarize this season's earnings. So far we have roughly 3,500 companies announced the earnings. Winners and losers, as usual, 51-49 or 50-50, very close. And this season we have slightly positive returns, 0.5%. Probably because of all these tariff, and the company tried to do a lot of things before that happening.
Got it.
Yeah. So this week's earnings, a couple interesting one, not extremely important, but a couple. The next slide, we have, definitely Thursday, right? We have Broadcom, AVGO, we have DocuSign, we have Lulu. These are definitely one of your favorite ones, right? And also Dollar Tree, Dollar General. I saw you guys sometimes trade it.
We don't trade. We won't trade earnings in Dollar Tree or Dollar General. They're
okay.
I find them fairly liquid. Sometimes we trade them because they've been on their butts. So as they're interesting from a directional play, just to sell puts. But I don't. We have a pretty big position on in Broadcom, APGO, and we have no DocuSign position right now. Even though I love the company DocuSign, we have a very small Lulu position on. Even though I hate the company.
Why is that Lulu? Why you hate Lulu again? You hate the stock or you hate the company?
I hate their founder. I think he's a racist pig.
Oh.
Is that why? Wait a minute. Is that why last night you said I was a Lulu fanboy, Sosnoff?
I said you were a Lulu fanboy because they asked me if I had any Lulu clothes, and I said no. But Tony's a Lulu fanboy.
What are you gonna throw stones at me for?
Because you like their pants. You wear them all the time. Like
8 years ago, I had a couple of pairs.
You have a pair. You wear them all the time. I always see you in your Lulu pants. That's your go-to.
No. Sosnoff, there are so many different brands
now. Don't try to weasel your way out of this. That's your go-to pants.
BYLT is my favorite pant right now, Sosnoff. I've been wearing them for the last few years.
No.
You got to get with the times, Sosnoff. You're stuck in Nordstrom Rack world where everything is 10 years old. You got to get with it, man.
You're a Lulu boy. You have to face it.
Premium store.
You're a Lulu boy.
I'm happy to say the truth, but that is not the truth.
You are a Lulu boy from day one.
No, your memory is stuck in 2015. Nope. I'm sorry, Sosnoff. I'm sorry. I'd love to help you.
I will point it out. Next time you wear those pants, I will point it out on air.
You can point it out every day. You can see them. I'll wear them tomorrow again. You got it wrong, my friend. You got it wrong. You haven't evolved in 15 years. That's why you're still selling 60-cent calls. Kai, thank you so much for your time. I really appreciate it. We're going to take a quick 90-second break and come back with the opening bell next. We'll be back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more. Stay still, okay? Can you stop moving? You make everybody like dizzy that has to follow along. I'm sitting here still like a statue, and you're sitting there like a pigeon trying to find me to poop on. Just relax. Just stay right there. Don't move.
I'm light.
You open your eyes. They're like two piss holes in the snow. Open your eyes, and then you can just move from side to side to see the screen, if you can see the screens, but you can't do.
Float like a butter.
A lot for you to absorb.
I float like a butterfly. Float like a butterfly. Sting like a bee. You know how it works. Like to move around.
You guys have a long
My name is
travel
Muhammad
schedule.
Ali.
I float like a butterfly. Just remember that.
Yeah,
Not
you float like
static.
a butterfly. I watched you walk the 8 steps from our hotel room from the milkshake bar, and I saw everybody else in front of you by about 3 blocks, and then you all the way back, all the way in the end there, dragging your hind
I was
leg.
talking to somebody.
Yeah. You can't talk and walk at the same time. Most hot girls can't do that. Ooh, Sadloff, there we are. Saved by the bell, my friend. That is correct. There you go. On the move again. Even the S&P's down 14, but that's the highest I've seen them since this morning's show. Even the S&P is down 14 and change. The Russell, which has been the weakest of the group as of late, just turned positive, up 450. And the NASDAQ only down 51. That's the highest I've seen it so far this morning. Dow down 130 and change. Volatility, which was up just a moment ago, you can see here, flirted with 21, got up to 20.85, is back to 2010, Sadov, only up 3 cents. Basically unchanged with the overall market here being a little bit of a mixed bag of tricks. Man, with all the news going on this weekend, I did not see this, meaning an unchanged market. Bonds down 10, Bitcoin down around 600. Those are about the same as before. Oil still up $2.50. It's a 4% move. It was up 5% just a moment ago. Gold a little bit off its highs by about $5 or $6. Still up $62. Big move, almost 2% there. Same thing with silver, a little bit more actually, up 3%. Your gold-silver ratio has to be helping you a little bit today, I would think. I got to do the math in there. Net gas up 7.
Dude, what are you talking about? Gold-silver ratio is getting killed today.
Well, I was just looking at silver up 3%, gold up 2%, but I know gold is a little bit.
No.
Yeah. I was trying to paint the picture, but I guess the picture I'm painting is not good.
You're not helping things. Yes, you're not helping things. But I thought you might like to talk about the fact, because I usually don't trade stock pre-market, but I did buy a couple tranches of Apple and a couple tranches of Nvidia, and I already scalped out of them. And I thought that was interesting. Man. I thought that was interesting. That you might be mildly amused or impressed with that pre-market scalp.
Nobody can take a dollar like you pre-market on them. How does it feel to start off strong and then have to finish so weak by the end of the day?
Well, I bought Apple down $1 and sold it up. I bought Nvidia down down 50 cents and sold it up over $1. So they're pretty good trades for the opening.
Yes, pretty good trades for the open. I will give you that. You're 100% correct.
Listen, there wasn't a lot else going on pre-market today.
You could have bought the market, Sadloff. I mean, even
I did. I bought Nvidia and Apple. What else do you want? I said there's two stocks that I like, and I actually went out and bought them. I don't know what you. I don't know what you want from me.
What else can I do here, folks? What else can I do?
I don't know what else you want from me. S&Ps were down 20, and I stepped in and bought them. I don't know what you want from me.
I hear you, Sosnoff. Am I supposed to say, "Oh, great one"? Oh, great one. Is that what I'm supposed to do?
Yeah,
Tell me what I'm supposed to do.
Kind of.
Okay.
Stocks that are a little weird this morning. AVGO on a. What the
Why
hell?
is it weird?
Well, I guess it's not weird. AVGO up $5 or something like that. But Google.
I mean, it's a $240 stock. I mean, it's weird because it continues its rally. It's Broadcom, right?
Google heading the other direction.
Google's had a little bit of a rally as of late, hasn't it? Yeah, it has had a rally of late. Last 2 days, it's kind of sold off a little bit.
Yeah, last 2 days.
Look at the NASDAQ up 33, Sosnoff.
NASDAQ and Russell. NASDAQ and Russell both up, and it does not surprise me that much. Let's take a look and see what else we got.
Really?
No, it doesn't, because I thought certain stocks in the NASDAQ, to me, I just thought they got, Apple was one of them, Nvidia was the other. I thought they got cheap. Looking around.
The NASDAQ looked like crap this morning when it was down 200. I mean.
Was it down? It was 100. It was down 100, not 200.
Well, it's trading just about 21.4. It got down to 21.163. I don't know, whatever math you want to do, it's okay by me.
Let's take a look here. I definitely don't like the tape action in the miners. That's not good for the good kids.
You mean they're all higher because gold is higher?
Yeah, but the miners haven't really been acting as well. They are today.
Yeah, like a GDX or something like that.
Yeah,
Is that what you're talking about?
Exactly.
Yeah, GDX up $2. That's a big 4% move here, making new highs or flirting with new highs.
Yeah,
highs it hasn't seen since April when the market was imploding. South. Now the market's not imploding and gold is going higher. Is there no stopping gold? Where is Spider-Man when you need him?
Gold is a little strange to me that it's this strong, and silver is this weak. It just is a little strange to me.
Relative to each other, even
yeah, relative to each other, right? The market rallying up here doesn't really surprise me as much. But
really, with democracy being ruined the way it is,
hey, you can ruin democracy all you want. That doesn't affect the market.
Okay.
Let's take a look. Yeah, I thought S&Ps
with inflation going lower, you thought the market would continue going higher?
Yeah, usually when inflation goes lower, the market goes higher. But I felt like the S&Ps were not going to hold a down move. I felt like that rally on Friday was too big, was too strong, from down 60 to up 10 at the end of the day. I thought the overnight move wouldn't hold, but I thought they'd at least give it an hour or two. They didn't even give it an hour or two. Now, I don't know.
Now it's only a matter of time. So
now I'm a little more nervous. Now I'm a little more nervous because they rallied too fast. Let's see what else we got here. By the way, Intel.
Well, even the S&Ps are just a skosh off of their highs. Nasdaq is doing the same. Russell's making new highs, although it is just off its highs now by about $3, and Dow's down 100.
If you're looking for a stock that I'm surprised is back on its lows, and by the way, wow, this move in Costco is unbelievable. If you're looking for a stock that's on its lows, I'm really surprised Intel's back under $20. And I think it may be time. Let me see the IV rank in there.
Oh my God, please leave poor Intel alone. There's so many things to do in the world. Why do you have to pick on Intel to get
I'm not
long?
picking on
Why?
Intel. I'm not picking on Intel, just looking for some long deltas. Just a couple here, there, everywhere. 19 puts are trading.
Intel's correlation is 0.63. I'll give you that. So it has a relatively high-ish correlation to the market, but why?
I'll tell you one thing: you can't even sell the puts a penny above the. Oh, there you go. Finally got some.
Selling the 19 puts in July for 99 cents.
I'd like to sell them for $1.
99 Luft balloons.
I'd like to sell them for $1, but I can't get filled. Let's try to do this. Anyway. Yeah, we're pretty.
You got a special guest. You got Pete Molmack coming on at 9:30, Saznoff, in just about an hour.
Well, we're gonna trade some. We just launched Spot FX on the Tasty Trade platform for the first time. So there's a new tab. So Pete's been working on it with their developers for quite some time. So we're gonna show everybody how it works. I just
live at 9:30. You, Mr. Scott Sheridan, and Pete Molmack. I don't see the Bats name on that list.
Yeah, kind of. Three's a company. Three's a company. Four is a crowd. So you got bumped.
I'll be okay. I'll be okay. You know what? Why don't you guys use my account to do it with? Okay, so that you guys can just have fun with my money. Go ahead.
Why don't you tell me what you want to do in the currencies?
Why don't you tell me what you like, Spider?
Why don't you tell me what you would do in the currencies if you had a blank slate right now?
If I had which I do have a blank slate right now, Sadnoff, because we just got the account funded and up and running.
I know. So tell me what you would do.
Can I look, or do I have to just do it off the top of my head? I mean, I guess I would. The dollar's been a little bit weaker, so I would want. See, I'm conflicted here, Sadnoff, because I'm a little bit bullish on the market, so I want the dollar to go stronger. But I know it's been at the higher end of its range, so I would like to pick pairs trades without the dollar in it and go from there. And I'm not versed in that right now. Like, I don't know where those pairs are.
So that answer that you just gave was just a bunch of nothing, a mush.
No, I would like to pick pairs trades without the dollar in it. I would like to pick foreign currency versus foreign currency, but I have not looked at them to see what range they are in, meaning what's at the higher end of their range, what's on the lower end of it, like maybe pound versus euro or Swiss franc versus euro, that kind of thing.
Okay.
I don't have it off the top of my head. I want to do pairs trades without the dollar in it. I know you have a different opinion of the dollar than me, so I'm going to try to stay agnostic, as you would say, to the dollar.
Okay. I'm going to let you weasel your way out of this. Fine.
Why? What would you pick?
What would I pick? Well, I'm going to go with the one I've been playing from the long side. From the start. I'm going to go long Japanese yen versus anything. So I'm going to go long Japanese yen versus dollar.
I would take the opposite of that trade because I feel that the Japanese yen is probably the worst currency that you could ever get long.
Okay.
It's had its move. You got lucky. You held it for a year. You took 6 months, 8 months of issues. You've had 3-4 months of profit. I think the trade is done. Anything against the dollar is a mistake here, in my opinion.
Well, it's worked for 6 straight months, and I'm sticking with the position. And all I have in there is short puts. So I'll buy some cash.
Well, you can't do that in FX. It's not a short puts. It's currency versus currency. Do I have to teach you what FX is?
No, I know. So I'm going to buy it. But anyway, I'm done with you. Let's go on to Dr. Jim.
Dr. Jim, speaking about a currency on the rise, that's right. We're talking about my friend Dr. Jim. Nothing says Monday like this man. Dr. Jim next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not, just trust us and do this, which is a very dangerous thing in the financial world. But, learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Nothing says Monday like this, man. That's right. I'm talking about Dr. Jim and the Skinny on Options Abstract Applications. What's up, Doctor?
Man, what's going on? I'll tell you what else. Nothing says At Work by 11 better than Dr. Jim, too. So how did the show go on Friday? And I heard nothing but good things about it. Tell me about it.
It was fun. It was a good show. I mean,
everybody learned something in the audience. I believe they had a takeaway. Sosnoff even had a takeaway. He learned that the Tasty Trade platform has a today's trades counter on the platform. He learned that live in front of the audience. The audience laughed that he didn't know where it was, but it was kind of cute and fun, and we laughed and we cried. I hope he doesn't make that mistake again, but I fear he will.
That's okay. Tony learned where the columns were on the platform.
Did Tony learn how to buy? Did Tony learn how to buy and sell options?
No, I got that right. I did.
Yeah.
I learned what right side and left side meant. If I'm looking at it my way or Sosnoff's way, it's what I have to. Yeah, since Sosnoff was facing the screen, his right became my left. It was a whole thing. But I know
it was
now.
a thing.
I know now.
It was a thing. No, I got it.
Yeah.
I got it 100%.
Yeah, and then I also learned the futures tab. We have a futures tab now.
Let me tell you something. I should have done.
Hold on. No. Wait. You were teaching Tom about the Tasty FX tab before this very show. And this is exciting times.
This is an exciting time.
You know, initially I was going to pull somebody out of the crowd to run the platform, and it would have been it would have been so much easier, so much nicer.
Sosnoff, if you're watching the show and you've watched it for years, you'll notice that Sosnoff is being a little bit meaner to me today than most days. That's because I didn't put out when I was in Atlanta. I abstained, and I said he was not getting any this weekend, so he's being a little bit meaner to me.
Well, you know, the nice thing about a test pancake, right, is now you can make those changes, Tom. Like for the next one, the next one is when? Is it Denver?
London. We're going to London. I'm going to pull somebody out of the audience in London. I'm going to sit back.
There you go.
I'm going to sit back.
Yeah.
I'm going to relax.
Get one of Rich's friends, get one of, Rich's boys to come up there and run the platform. It'll be no problem. No problem at all.
Yeah, get one of Dick's boys to get up there and do the platform.
No problem. I'm telling you, no problem at all.
And hey, guys, don't forget. I think this might be because London is in June, right?
June 20th.
3 weeks less.
June 20th, right? Okay, so right after London, let's not forget, we've got a live options crash course on July 13th in Boston, Tom. So you got to get all your friends and all your family. I need bodies in the seats, Tom. I need bodies in the seats. July 13th, Boston, totally free. Options crash course live. There it is. Look at that. Look at that guy. Man, that's a strapping young man if I've ever seen one there.
Hey, you're going to have to get a haircut so people know that they're going to bait and switch. They're going to be looking for Dr. Jim and they're going to get you.
No, I can't do it, man. I was messing with the ponytail yesterday.
Oh, no.
Dude, top knot.
I was just messing around.
Top knot.
Well, I was just experimenting, right? And I was helping, Penelope was helping, Amelia was helping, and we were doing some things. And I mean, I can do a little bit back there, but it's not
Pride
enough.
Month. You got to do a top knot. Sosnoff's got to do a top knot. Show some solidarity. You
got to do a top knot.
You know what's funny though? So Tom, I've been thinking about your hair. I've been thinking about your hair a lot this weekend. And the one thing that you struggle with is your hair is so straight, right? Like for me, I got waves, I got layers. You've just got the curtains, man. You're going straight down. I don't know how you deal with that. You know?
Well, I'm not sure what you got going on there. I had to think about this a little bit. I caught
you off guard. There you go. Okay.
Yeah, I don't want to get into a hair discussion It's like,
okay, well, I'm your guy. Listen, I'm your guy. Just if you need somebody, I'm your guy. I got tips, I got insights, I got products that we can get into your hair. Like, don't you worry, man. I got you covered.
all right, beautiful.
There you go. You guys ready for some finance this morning?
Let's do it.
Sure.
Man, let's go. All right, Bet, get us going here on the intro or the title slide. Today we're going to talk about some convexity and conviction in a zero DTE world. Tom, I feel like if you're going to engage with convexity, you've got to have some conviction. Would you agree with that?
I'm not sure what you mean by convexity and conviction here. I would love to know more.
Well,
okay, well, let's do it.
I'm sorry, wait a minute.
Man, that's a lot of ice. That's a lot of
ice in front of the mic, everybody. He had a 90-second break. It wasn't enough time for him to pour his ice then. He's going to do it for you now. A little
Don't
ASMR.
blame me for the ice. I've been over-iced. I've been overserved ice this morning. Beth has been
I gotta tell you something.
You're
Dr. Jim.
welcome.
Sadnov is fresh off a 0-day trade that he made on Friday, and he was profitable in Atlanta on it.
Excuse
that
me.
don't usually happen.
Two zero DT trades in front of the whole audience.
Okay, so this is great. So I'm curious, the zero DTEs, because this is going to be a perfect segue into today. Were they long trades or short trades? I'm sorry. Were they long option trades or short option trades?
No, they were both
Short premium.
They were both. One was a short iron condor. One was a short strangle.
So both short premium. Okay. So look at you, man. Kind of cheating death a little bit. I like it. I like it a lot. Not so much with the iron condor, but.
And one was to be fair, one was pre-market, right, Tony? The ES was pre-market, and the SPX was 5 minutes after the market opened.
Well, nothing could be pre-market if the options are open. Then the market is open. It was pre the stock market opening at 9:30 Eastern time. Yes.
Yeah. Okay. All right. Well, interesting. I think you kind of dodged the Reaper there with some short premium. I like it. All right. So Beth, hit us on the intro slide, and let's do it. So few financial products have exploded onto the scene quite like zero DT options have over the last couple of years. And these strategies offer us unique risk return profiles that differ from our typical, in of 45 out of 21 type of trades. But with that gimme in the form of flexibility comes a pretty formidable gotcha in the form of convexity, Tom. So I was thinking about, obviously zero DT options have exploded onto the scene. Like it was hard for me to think about other financial products or other moments in the market's history that maybe had this much, chutzpah. I think, and I'd be curious to get y'all's take on this, decimalization. So this was in the late 90s or early 2000s, I think, right? When they moved from teenies, right? It was teenies to decimalization. Is that correct?
Well,
that was a huge thing. Was that not a huge thing? That was a huge thing.
We moved from fractions to decimalization. Yes, it was a huge thing.
So it was teenies, fractions, decimalization?
Well, there were a lot. When you say there were we had 16ths, eighths, quarters. There were different fractions for different prices.
Yes, of course. Oh, okay.
You have to remember the bonds and notes today still use fractions.
Of course.
Yeah.
Of course. Yes. So whenever the final jump was made, though, to decimalization, which obviously is where we still are today, was that not a big moment in the history of the market?
Well, it was a huge moment because it allowed the marketplace to. I think it was one of the springboards that allowed the marketplace to kind of really grow because fractions, believe it or not, fractions scare people. They're just not. They just people don't like to trade in fractions.
Well, it's also a lot. It's not even about fear. It's about the expense of the trade, though, too. When the market can only be a fraction wide, that's significantly wider than a 1 penny market in SPY or a 1 penny market in Apple.
Of course. We went from the smallest tick being, $6 to the smallest tick being $1, or the smallest tick being six pennies.
$6.25, by the way.
Yeah, $6.25.
Yeah, it was the 16th, right? Yeah.
Yeah.
Yeah, to being a penny. So So you went from $6.25 to $1. Yes, it was a much smaller take.
So do you think that zero DTE trades or zero DTE options are having a similar effect today in terms of the kind of the barricades that they're taking down in the marketplace?
Well, I think the zero DT trades have opened up trading to a lot. They've attracted kind of more people and a new breed of trader.
Okay. And do you think that's good or bad?
Well, of course I think it's good. Anything that brings people into the business is good. Yeah, I think it's huge.
Yeah. Okay. So, yeah, I mean, and that's exactly the point here. This has been, in my opinion, I mean, I don't have nearly the experience that you guys have, but thinking about the last just 20 years or 20, because decimalization happened, was it 2000 or was it late 90s?
I don't know. Tony might remember. I don't remember.
I think it was early 2000s.
And I actually tried to look it up, and I didn't get a good answer for the year. I believe it was around 2000 or 2001.
I think it was before. I don't remember us launching Thinkorswim with fractions. So I think we had decimalized prior to 2000. But again,
it was implemented for all options and equities April 9th, 2001. The phase-in period began in August of 2000.
Okay, that makes sense because that's right about when we launched, and I don't think we launched with fractions at all because fractions made it much more difficult to post prices. So we launched with decimalization, but the zero DTs didn't come on the scene until much later. We presented the concept for zero DTs to the CBOE, and I think it was in 2005 or 2006, but I don't remember exactly. But, I made the first presentation, TP and I worked on it, and then the CBO introduced it, we worked with their new product committee, and then they introduced it 6 months later in the SPX only, and only for certain, they started with weeklies and only for certain, certain series.
Yeah, the more trade, what they considered to be the higher traded one, right?
Yeah,
more active.
That's really interesting because when I think about zero DTEs, I think about these really only being kind of, for lack of a better word, relevant the last few years.
But started in 2022.
Yeah, right. And so, wow. So 2005, 2006.
I mean, I think we presented it around 2000.
So you pitched it and it got shut down?
No, it never got shut down. I mean, they debated it for a while and then they introduced it in the SPX because they liked the idea.
Okay. Well, yeah, but I think that the last few years is when it's really caught in fire. The last few years. Okay. So
I think it took 7 or 8 years for them to really catch on. Yeah.
Yeah. Okay. So zero DTEs. Okay. Beth, hit us on the next slide. So what we need to understand is when you are trading a zero DTE option, whether you're buying premium or selling premium, like you said on Friday with, at Work by 11, excuse me, you did a couple of short premium trades, Iron Condor, short strangle, and it worked out. And obviously that's great. That's all well and good. I know that, even the Tasty research team has done some recent research on strangles and win percentages and, chances of big losses and things like that, which is amazing. But regardless of which side of the trade you might be on in terms of buying premium versus selling premium, you still have to understand where you're at in the world of convexity. And that's what I wanted to focus on here this morning. So if you think about gamma over time, right, which is something we talk about all the time, I mean, this is the thing that actually informed the whole idea of managing at 21 days to go. It was the gamma risk that naturally increases as you get closer and closer to expiration. And looking at the research and measuring the empirical results and all the findings over the years, we all just kind of realized, like, hey, wait a minute, it doesn't make a lot of sense to hold close to expiration. So thus, 21 days to go, rolling closing was born. And that's kind of why we manage our trades in a 45 out of 21 on kind of a typical trade. But when you get into a zero DTE world where you're actually engaging with the market, you're engaging with the strategy at essentially its maximum point of convexity, you have to understand now that there's going to be extreme gamma risk in that position. Now, of course, it matters what type of strategy you choose. If you choose a defined risk strategy, that's naturally going to have, muted gamma exposure because it's defined risk. But still, just by the very fact that you're entering at the very end of the option's life is just naturally going to expose you to a lot more directional risk. And so it's very different from what we normally do. And the way I look at this, it really gives you a way to diversify your risk return profile in some very unique ways where you can customize exactly what you want to do, where maybe most of what you do is in a 45 out of 21, but then you're kind of splashing around, right? Then you're kind of, you're out there on a Friday, you're at work by 11, you're seeing Tom Sosnoff, lose a little bit of money. You're thinking, I could probably do better than that. So then you go in at a zero DTE, and then it kind of gives you a different feel. What do you guys think as far as zero DTE in terms of how it blends with the rest of your portfolio?
Honestly, our zero DTE positions are really small, and we don't really look at them as part of the rest of the portfolio. Let me give you an example. If we do a zero DTE trade, first of all, we're looking at it usually for like an hour. And so when we do a regular trade, like that's like a 45-day expiration trade, we look at that as part of our portfolio. When we do a zero DTE trade, we don't think of it as part of our portfolio. We just think of it as a very short-term trade. That's one thing. The other thing is with zero DTE, we're not necessarily as volatility conscious because we know we're not holding the trade overnight, so it doesn't have the same volatility concerns. And so I don't really think that we do look at zero DTE trades in the context of portfolio trades at all. I mean, I'm not speaking for Tony. He can say whatever he wants, but that's that's what I think.
You're on. Yeah, you're on.
What do you think, Tony?
No, I think Saz has it right. I think that's exactly right. I mean, 0 days are almost like scalping. I guess I would put it that way.
Yeah, fine. I agree.
That's actually exactly what I was thinking in my mind. It's kind of like you've got your short premium, like you've got your breadwinners, you've got your, the tried and true. And then if you're scalping and doing things like that, the zero DT is going to kind of fit into that bucket. Yeah, okay, excellent. All right, so Beth, hit us on the next slide, though. So here's the main thing, though, and this is what I want people to really take away, the gamma, gimmies, and gotchas. So again, one of the things I like to say on From Theory to Practice all the time is you have to know what you're signing up for. Like, you have to be very clear, what am I signing up for? Like, do I really understand the pathway that I'm about to go down through the forest? Do I understand the gimmies, the gotchas, the pitfalls, the obstacles, etc.? Well, that's kind of what we're going to talk about here this morning when it comes to zero DT options. If you buy a zero DT option, you're going to have positive gamma, even if you buy a spread. If you sell zero DT options, you could have negative gamma. Like, even if you sell the spread. Again, spreads, it's a lot more muted, but the spirit of what I'm saying is still obviously there. When you buy a zero DT option, or when you buy really any option, you obviously have limited losses, unlimited potential, right? So you have this asymmetric relationship between risk and return, and that's going to work in your favor. So the extreme convexity that you're picking up at the very end of an option's life is actually going to work in your favor because your losses are limited by nature. If you sell options, though, you're on the other side of all of this. So now all of a sudden, you're exposed to unlimited losses, like with your strangle that you did on Friday. Obviously, that's unlimited risk. Like, we know that very well. Whether it's in at 45 or in at 0, it doesn't matter. It's an unlimited risk trade, which is totally fine. Like, we do that all the time. There's nothing wrong with that. Inherently, it's an extremely effective strategy. But again, you just have to know what you're signing up for. In a zero DTE world, not only do you have unlimited risk, but you're at the top, the maximum point of convexity. So if there is a move that goes against you, if you do happen to catch the wrong end of the stick, which happens to you often, Tom, you have to understand, kind of what could potentially go wrong on this strategy. And so the asymmetric risk and return is working against you with the short premium position. And so, when it comes to the negative gamma exposure at maximum convexity, that's not exactly the best combination that could ever be, kind of put together. And so just when I think about zero D, this is not a you should do them or you shouldn't do them type of thing. This is just a, hey, this is what you're up against. Like this is what you're voluntarily engaging with. The maximum point of convexity, in terms of the time left in the strategy, especially if you do something that's under unlimited risk, you have to understand what you are indeed signing up for. And I would say, and this kind of, I'll be curious to get, you guys' take on this, because if you start to think about putting zero DTE into the bucket of scalping, if you look at my green box there at the very bottom, I think in a zero DTE world, this is where actually doing some naked long premium could actually make some sense. And I mean just a long call or a long put. Now, if I was going to do it, I'd probably want to go pretty deep in the money. I'd probably want to try to minimize the extrinsic value exposure and have, a lot of delta. I don't want to probably do something that's out of the money. I would probably want to do something that maybe is 80 delta or higher. But still, I mean, from a capital efficiency standpoint, if you're taking a directional shot, I don't know. I think it can make some sense, especially if you want to take advantage of the convexity in the market.
Now, you're 100% correct, Dr. Jim. I mean, if you're just looking at it as a directional bias for a relatively inexpensive way to get 100 deltas for a very short period of time with very tight markets, there's probably no better product. If that's the small caveat that you're going to put towards it. Yeah, I agree with you. No real difference than futures, although now you can get much smaller futures, meaning, macro, smaller than E-minis. You can go to the micros. You can get a lot smaller. You get to 100 delta. Doing the same thing in SPX, it would be about the same. So yeah, you're right.
Yeah. Exactly. I think even the buying power, I think if you matched notional for notional, you'll actually get better buying power efficiency using the zero DT options deep in the money relative to the futures.
Sure.
And so that can just be another thing to think about. I don't think it may not be a huge difference, but again, if you're really trying to optimize your portfolio allocation, it's something to think about.
Yeah, and if you're doing it late in the day, it's a relatively smaller priced product. You don't even have to go deep in the money. You could almost go at the money with very little extrinsic value to it, depending on the time frame of the day. You could go out of the money and take that shot on those very small priced options that really only $2-3 out of the money, and they're trading for under $1, and we get moves that sometimes are larger than that in a small period of time. I get the allure. Throwing everything else out, probability of success, blah, blah, blah. I get the allure, and you're 100% correct.
Tom, do you have anything to add to that? I mean, it's tough to add to you're 100% correct, but you want to take a shot?
Well, we've done a fair amount of research on this topic, okay? And so I don't want to I don't want to bring facts into your subjective viewpoints here. But
my subjective viewpoint of convexity over time. Yes, please go on.
But in the end, we've actually researched this.
I think my waves are bothering you. I think you're seeing these waves and you're like, man, why don't I have those waves? How do I get some of those waves? I think it's got you a little rattled this morning.
I mean, they are a little disturbing. I'll give you that. Here's the thing, Jim. We've actually done a lot of research on this, and in the end, there is not a tremendous amount of difference between either one of these two sides as far as results go. But it does matter. There's a lot of nuances. I don't want to make it as simple as this, because there's a lot of nuances with zero DT trading, meaning we have found that if you participate in the early part of the day, like Tony and I generally prefer to do, you end up with you tend to end up, if you participate early, with more opportunity from the short side of options early in the day. Late in the day, the opportunity kind of swings to the long side. And so there are different points in the day when it's a little bit more optimal if you wanted to be long premium at all and play it directionally, where it's a little more optimal to take your long shot, with long options, as opposed to your short shot. I mean, I'm going to argue that if you're going to trade 0 DTEs, directional or non-directional, and you're going to do it early in the morning, then you better be short. You better be short premium. It's very hard to make money being long premium early in the day. Late in the day, after the markets had maybe a little bit more of a chance to, pick a direction or set itself up a little bit, okay, fine. If you want to take a shot. The results in the end, based on our research, and Jacob and the team have done a literal ton of research on this, like hundreds of hours. In the end, the difference, very small either way.
Don't disrespect my man, Dr. Jim, by throwing out Jacob on here and making him look like he is not equal to or above Jacob in any way.
No. But there's a difference. Dr. Jim is more theoretical. Jacob is more data-based analytical. That's all. There's a difference between the two of them.
Okay, so I'm going to take the other side of that completely, 1,000,000%, but I'm not even going to go down that road because I don't even need to. I mean, the facts speak for themselves, right? I mean, you can go back and you can look, and you weren't even there. You were on Jacob's team, right? When me and the artist formerly known as Anton took you and Jacob down on mean reverting price. I mean, it was embarrassing, man. Like, it was embarrassing.
Yeah,
I had to hold back. I had to throttle it down towards the end of the segment. I'm like, this is bad. I'm like, I may not have a job. I may have the Willie Mays Hayes pink slip in my locker if I keep going. I got to slow this thing down.
I actually
formerly known.
I actually don't remember that. But I mean,
of course you don't. I would block it out too.
No. I don't have. Man. Let me say, I don't have the same memory of that as you do. I remember you and your boy kind of whimpering into the corner and trying to figure out how you were going to regroup afterwards. No,
like you've seen Rocky IV, right? Like you've seen the beginning of Rocky IV when Apollo Creed is fighting the Russian.
Yeah.
And, I mean, it's bad, man. Like from the start, it's so bad. His coach is in the corner like, let's end it. And Apollo was like, no, let's keep going. Dude, that was you. You were like, let's keep going. And you took yourself right down to your own death.
I know.
It was bad, man.
No.
And people can look for themselves.
I feel pretty comfortable. I'm a good debater. I feel pretty comfortable. I think we're good.
It's not even.
You're a master debater.
No,
I feel pretty good. I feel pretty good. We were good.
Anyway, people can go. They can find it in the archives. People should search Tasty Live, mean reverting price. They'll find me. They'll find Jacob. They'll find you. Find Anton. They can check it out, right? And they can decide for themselves. And I'm just saying that the haymaker that I threw at the very end, it sealed it. It was over. It was done. You couldn't come back from that.
Oh,
but I will just say this: what you just said about short premium. But it makes sense, right? Like, just think about it logically. If I'm selling premium, right? I'm selling time. I'm selling extrinsic value. It's going to make total sense that if I want to give myself the best chance to be successful on that, I've got to do it in the morning. If I'm selling premium at 1 o'clock, it's like, man, I don't know how much premium is going to be left to sell without taking incredible risk. And so it makes a lot of sense. I mean, some amazing work by the team. And so, but I mean, it also lines up logically. And so, anyway, if you would ever like a rematch, I'll bring my facts. I'll bring my waves.
Oh,
they'll all be there. So you just let me know.
It sounds like a challenge.
I mean, I don't know, man. All I'm saying, it was just, it was bad. All right, I gotta go spruce up my waves. Are we done here? I think we're done.
I think we're done here. I think we are, but I appreciated your help. We're gonna take a quick 90-second break and come back. We got a market measure next.
Hey, Jim, just don't do this, okay? Whatever you do, don't do that.
I've been doing that. So I was sitting at church yesterday, and I was just sitting there listening to the sermon, and all of a sudden I started doing one of these jobs. And again, I was mostly thinking about your hair this weekend, and I'm like, what am I doing, man? What am I doing? Oh yeah, no, I did a little lift. But again, I don't know why you're doing it because you don't have the waves. I'm pumping up the waves. You're not pumping anything up. It's very similar to that mean reverting price discussion. Yeah,
I got shrinkage. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a market measure.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with a market measure. Even the S&P is down 24, kind of holding steady. Not too much going on. Volatility basically unchanged, up 8 cents. Bonds down 16, 112.09.
Yeah, we're having a pretty good day, except for you know what's doing good today? UNH. I don't know if you've looked at it at all.
Yeah, UNH is one position I still have on, up $9. Although we did roll in July, taking a little bit away from my directional bias, but doing well today. IV ranked at 41. Sound, if you remember, that was like 140 about 3 weeks ago.
I'm very aware, sir. UNH is doing good. You know what's doing bad today? Gold. Yuck.
Yeah,
gold.
I got off that train a long time ago.
Yeah, gold's doing bad. Silver's doing good. Silver's having a big move. Our gold-silver spread. Silver's not saving us, but narrowing the damage. But gold a little bit out of control today, up $87. I'm going to have to I'm going to have to be a little aggressive here and roll up for the. I'm rolling up now for the probably. Let's call it the
20th time.
Well, let's see. 1, 2, 3, 4. That was my 5th roll this morning of puts higher. So never a great sign. Looking elsewhere.
Never a dull moment in gold.
No, never a dull moment. Looking elsewhere around. Yeah, worst performing stocks are GLD, of course. Best performing is UNH, and let's move on. Don't forget, we're running late here, so we got to move because we're going to do some FX stuff. But remember that Tony and I, our next stop on our live trading show is going to be in London. So we have 2 shows in Europe. London on June 20th, which is less than 3 weeks away, and Milan exactly 3 weeks away, June 23rd. There, we have space available in both places, and we'll be at Earth in London on June 20th. You can sign up, same site, tastylive.com/events, and then we'll be at Fabrique in Milan on Monday night, June 23rd. Both those shows, those are the only shows that start at, doors open at 5 o'clock local time, and the show starts at 6 o'clock, which will be noon here in Chicago. And so it'll be on Triple Witching and then the next day after. So it should be so much fun in Milan and also in London. Can't wait to see all you guys, and we're going to be over there. And the Bat and I will take some pictures of us riding on a double-decker bus, holding each other's shopping bags from all our shopping and taking a nice boat ride down the river and doing the whole shebang. I mean, I will show Bat where I interned as a child and take him on a tour.
You did it as a child. You did it as a child now.
As a young adult. As a young adult, I'll take him on a tour of the British Parliament and Big Ben, and I'm not good at Buckingham Palace, but everything else I can show you around. Anyway, we're gonna have some fun in London and also in Milan with Dylan and Rich, and Rich will be in London as well. So it should be good. We're also good news. We're going to broadcast Tasty Live from our London studios. We were going to do it for 2 days, but unfortunately, June 19th we're closed.
Market's closed, for Juneteenth. Yep.
Yeah, we were going to broadcast. We didn't even realize it. So on June 18th, we're going to broadcast, assuming our flight's on time, we're going to broadcast from our London studios on June 18th. So we'll have some fun broadcasting out of London. And then we will, on June 19th, there'll be no show at all. And June 20th, we'll be doing the live show. But if you want to wake up at 1:30 in the morning, we will be broadcasting with Rich and Angie early in the morning.
I'll be up. Come on up. Yeah,
let's go. 1:30 local time. S&Ps have been all over the place. They were just down. They were unchanged up. Then they were down over 40. And now they're down 12.
12. Yep.
Crazy, huh?
Yep.
I don't know what to make of all this, but let's just take a quick look here. Yeah, I don't know what to make of it. I've been adjusting a bunch of positions, bought back a couple of futures. I'm not sure there's a hell of a lot here, but we're definitely having some fun. All right, let's do it.
I'm ready.
So this market measure today is actually continuing down the path of where Dr. Jim just went. He was talking about kind of the short-term options. He was doing the zeros, and this is a discussion on the weeklies. Why weekly options are tricky. Why do you think weekly options are tricky, Bat?
I just think I don't know in what direction they're going here, but I would say the movement of them, would be the trickiest thing, meaning the outside the expected move kind of thing. The volatility, contraction, expansion is going to be exaggerated, meaning compressed over a 45-day period into a week that you might be used to. So I would think that would be the two problems.
Issues. When you speed up time, just like Tony said, it gets a little bit harder to manage things. And that's kind of case in point here.
Yeah, I think you'll notice how big small really is, especially when you get shorter dated. Also, what might be suitable for 45 days, it might not be suitable for a week or 1 day kind of trade.
So, why weekly options are so tricky? Let's take a look, Beth. And Beth, when you get a chance, I'm out of ice.
You got it, Tom.
Really?
Right on top of that.
He is nothing if not consistent.
On paper, weekly or even shorter duration options can provide superior potential daily returns on capital than longer cycle ones. Sure. You take more risk, you can make more money. It's that simple in this business. The rich daily theta and the largest loss makes them extremely attractive. So what we did here is talk about a 1 standard deviation strangle. And you can see here on buying power per trade, it's exactly the same, but the theta is double. The return on capital is almost double. The largest loss is less. And you can still make some decent money. Let's go to the next slide. So how's the weekly options long-term performance compared to our go-to 45-day to expiration strategies? Mr. Batista, if you had to choose one of the two, would you take the 45-day strategy over the weekly returns? What would you do performance-wise?
Well, I hope it's a 45-day strategy because that's where my bread and butter is. So I'm going to go with that. I'm going with the homer, Sosnoff.
I like your call. Let's go next slide, Beth. So we're looking at 10 years worth of data. We're looking at 45 days and 5 days. All right, that's it. Simple, straightforward. Let's go next slide. The weekly options had a hard time catching up with the performance of longer term options. The main reason, their greater volatility. The green line is the 45-day return. The blue line is the 5-day held to expiration. So right there, okay, that's pretty clean. All right, there's no, I'm not even sugarcoating this, whatever it is. This is why we do the 45 days. But, and with the 21-day to expiration roll versus the 5-day hold to expiration. Anybody that questions that, we just show them this slide. Let's go next slide. So since managing early can help to reduce the volatility of many strategies, can we apply that to weekly options? What do you think, Beck? Okay. Can we or not?
I think you should be able to apply something. I don't know. Obviously, can't do it for beta, but I would imagine you'd be able to apply some of that. Yeah.
Of course, we can try applying it. Yeah. It's not going to work exactly the same way. It might not. It might not have the same kind of results, but it's not going to hurt you. Remember, the default is always managing earlier. It'll never hurt you. See, managing early will just never ever hurt you. So we're going to go to the next slide and take a look how the results for managing the weeklies early. So not only was the performance was not improved by managing early, but the volatility increased. This is because the gamma risk was too high to control for extremely short-term options. So this actually surprised me, this slide, because I just said the exact opposite. Because for me, but this is crazy because it's almost impossible to manage. See, I think there's a difference here, which I think the research team needs to add one more factor to this, which is managing when you have a profit. Managing early doesn't necessarily mean anything, but managing at a certain profit does mean something. So I think what's missed here is that the weeklies managed did not outperform the weeklies held to expiration because the weeklies managed did not manage at a specific profit level. They just managed at a time frame. It's all about profit levels. That's why you see early on that they're much closer. And then later on, when you let them go all the way to expiration, you see the two branch apart. It's all about managing for profits.
Totally makes sense.
Yeah, Tony and I had this perfect example on Friday when we did the live show in Atlanta. We did two 0DT trades. We took them off a half hour into the show. And next thing you know, they were both profitable. We're sitting there, we're laughing. Okay, nice trade. By the time we got to the airport, both trades were getting killed.
Yes,
because the S&Ps had dropped 60 handles.
Yeah.
By the time we landed, both trades were back to being profitable.
Yep, that's correct.
Why do you want to put yourself through that? You know what I mean? just close it, take the profit, and move on. Let's go to the next slide. And you saw we showed no emotion with that. We're just like, fine, let's move on. When you compare the cumulative growth of all the portfolios in a $200,000 account, we saw that the 45-day options outperformed significantly the rest of the portfolio. Whether you hold the weeklies to expiration or you manage the weeklies, the 45 days managed to 21 days destroyed everything else. Let's go to the last slide, Beth. So the takeaways, the weekly options bear tremendous risk due to their extremely short duration, making them hard to manage. Yes, because if you manage based only on time, it's kind of tough. If you manage based on profits, I think it makes a lot more sense. And then managing early becomes less effective for short duration options because of their increasing gamma risk and P&L volatility. This is what we've known all along. You take more risk, you make more money. For some people, they much prefer that. For others, they prefer, and I'm one of those others, I prefer the 45-day cycle.
Very good, sir. Very good. You know what? Let's take a quick 90-second break. We can get to special guests, Mr. Pete Momat and Mr. Scott Sheridan, immediately following these messages. We got an FX special for you. Please stay tuned.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading. Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Yeah, Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you?
I didn't.
Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
tastylive's godfather of options, Tom Sosnoff, is grabbing his
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Don't worry, I'll just do everything because. Hello, everybody. We're back, and I'm here with Pete Momat. Thank God you're here, Pete.
Oh, thank you, Tom.
Because I need somebody to buffer Scott.
Oh my
Scott Sheridan in the house. Look at that.
Oh my God. It's only Monday.
It's only Monday. We got rid of Tony though.
I don't know. We did Sunday night together, and
yeah, I was going to ask how your weekend was, but since you're not being nice to me, I don't care. So I'm just going to say
I was working for you.
Yeah, I know.
I was
you
out
weren't. That
traveling.
was Friday. That's not the weekend.
Oh, the weekend?
Yeah.
I played golf yesterday.
Yeah, I know. Yeah. Can you please give me $20 that you owe Steve? I came in to collect. I said, how'd it go? He said, collectively, we were all horrible. He said, I think we averaged 150 each.
I shot like in the mid 80s.
front nine, mid 80s.
And I missed.
You shot in the mid. Steve said, okay, I'm not saying anything. Okay, that's nice, Tom. I'm happy you shot in the mid 80s.
I hit the ball good.
I'm really happy for you.
I hit the ball really good yesterday.
That's not what Steve said. I'm not going to go into details. I'm not that kind of person.
That's probably what he said.
Should we bring in Slappy?
Would you please bring him in? That's one. So while she's getting him, I saw Nikki Glasser.
So he told you to get my $20?
Yeah. He said you owe him $20.
I do owe him $20.
He said, could you please go collect because he won't pay me.
Well, why wouldn't he come in and ask for the money?
Because he's afraid of you.
Oh, he's not afraid of me.
It's true, he's not. But he just wanted me to get it. But more importantly, he said you all shot 150.
No.
But somehow you shot mid-80s.
Oh, I think I shot 80. I shot probably about 88.
Probably about 88. That's like somebody going to Vegas and coming home and saying, I broke even.
He played good too yesterday.
He said he was a horrible.
On the front nine. Back nine, he was good.
Oh, my God. Okay.
You think we played horrible yesterday? I thought we played good yesterday.
He says he shot mid-80s.
Which side?
I shot a 43 on the front.
Where do you want me to sit or stand?
No, we don't want you anywhere. You send him in for the money.
Yeah, and here's $20.
You get the money?
He's giving
No, you get the money.
He's throwing it at you.
Yeah.
You shot mid-80s. Steve said you shot 150.
I shot a 43 on the front. Okay, and I missed 3 putts.
Okay,
So I will be fair. You did play the best of all of us. You hit the ball pretty solid.
I hit the ball good.
No chance you shot in the 80s.
I kept score.
But he got $20.
43, 45.
Hold on a second.
You just said about 88.
This is 20.
Yeah.
This has happened twice in 35 years.
You know what?
So you guys
if you
know.
ask him to sign it,
Yeah, but I had to carry the son-in-law. It was a little. It was a,
He was a little.
Yeah, I mean, it wasn't these. It was like it was 3 friends and a stranger.
Got it.
But I didn't ask for strokes. Okay, and I didn't have to. I had to listen to their bullshit and all their crying the whole time. And we were up most of the day until the end.
And was that your partner, Steve?
Then
I
Steve.
don't even know what to say.
Then Steve started to make a few putts, and then all of a sudden, you know. Oh, you had a good back nine.
I think I shot 50, maybe.
No,
Okay.
on the back nine.
I did. I didn't make. I made 2 pars.
Here,
and the
once
rest were
Tom
doubles.
hits the green, it's good.
Yeah.
Yeah, it's good.
Oh, yeah.
Once he hits the green, it's good. So
I made 2 pars, and the rest were doubles and triples for sure. So there's no.
All right, you stink. Get out of here. You sick.
Thank you for the money, though.
you're welcome. I got 20. I got 20 for you. So Nikki Glasser was at the Chicago Theater.
Oh, yeah, how was she?
Solid B plus.
So I figured.
Solid B plus. She was good. I was expecting a little more, but she was good. She's got to be wicked smart. She never stopped. I mean, it's amazing. Most comedians will stop.
Well, she's a pro.
Just goes.
The problem with Nikki Glaser is first of all she's been around a long time. I don't know how old she is. She's got to be mid-40s, something like
41.
that. 41. She's been around a long time, but she peaked at the Tom Brady. She peaked at Tom Brady's roast.
Easy there.
No, she peaked at Tom Brady's roast, and I don't think she could ever. I think it was the greatest 10 minutes that any comedian's ever done. Like she blew away Don Rickles, like Lisa Lampanelli, all the roasters. She blew them all away. Did the best roast I've ever seen, and I don't think anybody can ever top that.
How long did she go for?
It was hour. She went an hour and a half. It was late for me. I went to the 10 o'clock show. That's bedtime.
Yeah.
So I was the
10 o'clock show's late.
10 o'clock didn't start till 10:15. We got out of there at midnight.
She did an hour?
She did over an hour.
Wow.
That's a really long time for
hour 15. Yeah. She did because there were 2 warm-ups. So she might have done an hour 20, hour 30.
That's really long for a comedian.
She was good. I mean, I still, not amazing, but she was good. Yeah. Worth going to see.
She's not Bill Burr.
Not Bill Burr.
No. But her 10-minute stand-up, or Tom Brady's 12 minutes, was the best ever. Show me a better one ever.
I guess I'm not a roast person. So like that's not my thing. Like just ripping on somebody. It's kind of like watching Tony with you. Gets a little uncomfortable.
Oh my God. Okay. Her roast stuff was.
What was the last show you went to?
Comedian?
Yeah.
That's a really good question.
Don Rickles when he was young?
Could have been.
Yeah.
We did see, oh my God, he died right after we saw him.
Sam Kinison.
Sam Kinison.
Oh.
We saw
I went to the comedy show at Bad Coffee a couple weeks ago. There was 8 comedians there.
You said they were good.
That counts.
Good. They were locals, but they were 8 locals comedians.
The 2 guys that warmed up for her were great.
Yeah.
They were really good. I mean, it's got to be.
Were they Chicago comedians?
No, one was from Brooklyn and one, I don't remember where the other guy was from. But that just has to be such a hard space to break into.
It's hard. It's not only it's hard. It's just, I mean.
It's a grind.
It's a grind.
And it's got to, just to get there, though.
And to be a comedian, you have to be a bartender, a barista, I mean, you just.
Yeah, it's really hard.
You make $50 a night for being a headliner.
What do you think she?
She gets big money.
What do you think she gets? Lila asked me. She gave him the show. She said, "What do you think she gets?"
She's at the Chicago Theater.
Yeah, I have my number. What do you think she gets? I don't know. I'm just guessing what she gets.
I'm saying I'm guessing Chicago theater,
250,
probably 100 plus.
A show? Or for 4 shows?
Oh, she did 4 shows?
Yeah.
2 nights?
Yeah.
She probably got 150 to 200.
Total?
Total.
Oh, way more. Way more.
Not a chance.
Way more.
They're comedians.
Way more. You're living in Don Rickles times. I go online to see what it would be for her to come perform. I'm a 150 bid.
Oh, for her to come perform?
Yeah.
Say no, way more than that.
Well, then why would she do
Because
4?
It's different when you come to perform. When you say, like, try to go hire a band. If you want band to come play at your house, it'll be $2 to $5 or $10 million. If you want to go at a concert, they may make $500,000. It's different. It's PR for them.
You're wrong. I'm sorry. Well, I'm going to Google this. Beth, could we please look at this and see what she made? I say she made over $500,000 for the 4 shows.
You're out of your mind.
I think you're right.
I think you're right, Scott.
Thank you. You're
You're
living
out of your-
seriously. Like, you think that you can go like get dinner for 2 for $40? That's over.
They're comedians. You think that you're out of your mind.
She's one of the top comedians.
She is the top comedian.
Okay, you think Bill Burr? You think Sebastian Maniscalco when they sell out United Center? You think they're making 50 grand?
Nikki Glazer's selling out the United Center, but I don't think
You're wrong. But anyway, we have other things to talk about.
Okay. Oh my God.
Well, it's difficult to pinpoint exactly how much Nikki Glazer makes per show. The information available suggests she is likely paid a considerable amount for hosting events like the Golden Globes. For example,
that is different.
Yeah, how much?
hosting the Grammys can yield around $20,000. Tony was much less. Again,
Oscars.
You're living in a dream world.
Host budgets of
Guys
15.
But this is different because that's marketing. Same thing for Super Bowl halftime. They paid to go beat the Super Bowl.
Hey, I'm agreeing with you on all that stuff, but they make less than you think.
Okay.
But if you want to hire her for your birthday party,
you'll go.
Oh yeah, then you want to hire her to roast you for your birthday party?
She got $400,000 for hosting the Golden Globes. I think it's close. I think Scott's.
No, I just told you I don't like I'm not a roast. It's just I don't like when people are getting ripped on. That's not my thing.
Brady's roast is the best. I still think it's the best.
I don't know why
Good
he agreed
roast.
to do that. I watched it.
$40 million.
He got paid $40 million for that?
Yes.
Oh, then I would agree to that.
I was going to say.
If someone, I'd take less, but
We're gonna show up and say,
you can say what you can say.
He just got divorced and they gave him $40 million.
Well, he doesn't need the $40 million, but you can say whatever you want to say about me for a fraction of that. Okay.
So here we go. Minimum fee range, $150,000 to $300,000 a night.
Yeah. Well, shocking. A night.
If
a night.
You got a birthday coming up, right?
A night.
I know that's a fee if you want to hire her.
So you think she does it less for 5,000 people that are paying?
Yes.
Why would you think that?
Because that's just the way it works.
Okay. I need somebody who's in this business to send an email to let us know what it really is.
Okay.
Wow. All right. Let's get to the most important part of this section, which is Pete.
Thank you, Scott.
You're
I
welcome.
appreciate
Pete
that.
has a great story to tell us right now. Tom, would you like to know what that story is?
Oh my God, I've been waiting all day for this.
See?
Oh, I bet you. The excitement
You must
is.
have had a bad dinner last night. You clearly
I
wanted something. You were,
had a rush
you were either supposed to go somewhere and it didn't happen, or you ordered something and you're disappointed with your choice. Which one?
No, I did the show last night.
But that was 5 o'clock. You go to dinner. I know 5:30 is a little late, but you can still do it.
But I didn't.
All right.
Just got back from golf. I was tired. No.
Okay.
No, I didn't go out.
He ate quickly, got stuff on his shirt.
Right.
He wasn't happy. So
There you go.
it
All right.
kind of set off a tone for the entire
Take
first
it away.
call.
Take it
Seems like
away.
it's that tone is carrying through here. So excited. A number of years, big product launch on Tasty Trade, Tasty FX. You now have access to 80 FX spot FX pairs, which is really exciting. So we have been working on this for the last 6 months, getting this integration into the platform. It's going to give you access when we talk about next level diversification, the idea of being able to trade things not correlated to your equities or ETF world. What's great about these products is they are margined, they're leveraged, which makes them capitally efficient. Again, you can make quickly as well as lose quickly. So, but I want to walk through really quickly. If we can jump over to the platform, Beth, just if you're trading on Tasty Trade, it's as simple, and this is a web-based platform. It'll be a rail on desktop, but if you don't have FX and you drag down to it, you will be served a link that will basically take you to the manage page. The manage page.
Here, let's go to the other screen because you have it already. So go to the other.
No, I have to go.
No, this one.
Right
There we
here.
go. Thank you.
Yeah. So what you'll get served up is the link to open your TastyFX account. Now, we've made this incredibly easy. You agree to share some information. With TastyFX, you are opening up a TastyFX account, but it's all done within platform here. The linking is here. There's no separate logon or anything. You'll go through that, and about 85% of the people go straight through. It's really simple. And then you'll be asked to deposit money. And again, the depositing of money is a little bit, you can pull money out of your Tasty Trade account and move it over to FX, and then move it from FX back to Tasty Trade, all through the Tasty Trade ecosystem, which is great. So it's as simple as just choosing an amount where you want to move from and to, and moving that money over. Now, it works a little bit differently than it does in futures or in crypto, where it's swept back and forth. This sits a little bit differently, but during the day, it should work pretty much like any other transfer you do. And during the day when you're moving money, those funds should be recognized in and out almost instantaneously, about 20 seconds, and the funds then hit your position. So the platform itself is built around really 6 tabs: your positions tab, your trade page, any working orders you might have, a watch list, history of what you've done, and then your statements, which you can pull up online here. And across the top, you have your available funds. Those are the funds you moved into TastyFX, any P&L, margin available, and equity in the position. So when we look at it, there are over 80 FX pairs here, which is great. And you can trade the dollar majors, which we've done in the world of futures: sterling, yen, euro, Aussie, Swiss, Canada, New Zealand dollar, something we don't have on futures, which you can trade, but also non-dollar pairs: euro yen, euro sterling, sterling yen. There's over 8 now. We're not going to spend a lot of time talking about things like Turkish lira, but if you want to trade it, it's here. But order execution is pretty straightforward. You click on a pair you may want to trade, like sterling, brings up the trading ticket, the chart. You can see this is existing position I have running. We've got over 20 years of history here, over 80 studies on the platform, all easy to do. 2 kinds of trading. You can create a standard ticket or the quick ticket, and I'll walk through that really quickly. If you wanted to sell, now you choose what you want to do here when you construct the ticket. So you click on sell. That means I want to start a sell order. You actually choose your size here, and the size, one of the great things about when you add a new product is the ability to be able to size it, to start small. Now, you can take this down to what we call a micro lot, or it's basically 1,000 sterling. Notional on that is $1,300. Margin on that, $67. So you could start trading euro. A micro lot is about $24. 50-to-1 leverage in euro. Most other pairs are either 3% or 5% leverage. Choose the size you want to trade, and you have infinite amounts of different sizes. So you're not compelled to just trade a full size or a micro. You can really get granular with this. You can add a stop loss, take profit, and it's as simple as choosing the direction. I'm going to do a market order here, going ahead, placing the trade, and there it is. Deal's confirmed, and here's my aggregate position here. So walking through.
Hey, what I don't understand, Pete, and when you do size, like it says size is by, why does the size go by, what does size mean exactly when it says US dollar?
Right. So the size, if you go in and you just put a size of 1 in there,
yeah,
that's what we consider one lot, and that's 100,000 sterling.
That's 100. So 1 is 100,000 sterling.
Right. So
how do you get a less than that if you want to trade less than that?
Yeah, if you want to trade small, here we'll just go to euro right here. And again, the platform defaults, you can just use the down arrow, and it'll take you to the micro lot size, 0.01. What 0.01 is, 1,000 euros.
Got it.
So if you wanted to sell euro here, and you took it down to 0.01, you can see the margin, which is highlighted down here, is $22. Each pip move, and in FX, a pip is the world of what we're used to calling a tick. It's moving from 114.36 to to 114.37. What does that equal in terms of dollar amount? It says right there on the platform, 10 cents per pip. So,
but can you convert this so that I can see it in the same terms as the future, so I know what the euro, what I'm actually trading? Like this is, well, let's see. Oh no, it is 114. I see it. No, I take it back. I see it. It's 1.1.
So if you're trading a full lot, it's $10 per pip.
$10 per pip, exactly. So where futures are, again, a full big future is $12.50 per pip.
So if I trade where it's one,
it's close to a future.
Yep.
I'm sorry, if I trade 1/10, it's 1/10 the size. It's 10,000.
Right. That's exactly right. If you go to 0.1 is what we call a mini lot. That's again about 10,000 of notional euro. That margins out at about $228.
I got this. Okay. So I got to sell that there, place trade here.
Before you do this, did you get approved? Did you open an account?
I think so.
We walked through that remotely last night.
Good.
Maybe that after the rush dinner probably wasn't the best time to do it.
So my question for you, will I see my working orders on my Tasty Trade platform?
You're on your Tasty Trade platform. You'll see your working orders.
Will I see them in my under working orders?
No. You will see everything lives in phase one of our, and again, this will be a multiple phase process. I'm looking forward to everybody. Again,
Okay.
We will continue to build this out. But your Forex positions, your Forex P&L all sits within the Tasty FX world right now.
So where do I see my positions? Right here.
So if you click on the positions tab, you should see your positions right there.
I got it. So, okay.
Again, if you
So what we need to do is to ultimately integrate this so you can see your working orders in the Tasty platform, and then also so it's all under one money transfer.
Absolutely, and we are actively working on phase 2 and phase 3, so we're excited about doing that. And
When you say money transfer, this operates the FX world. This is not us. The FX world is different than futures and crypto. Futures and crypto, we know what your buying power is. We let you make a trade, and then we do the sweep from Apex to StoneX or to Zero Hash. With FX, the money has to be there before the trade is made. So there's a difference, and that's a regulatory rule. That's not an us rule.
That's absolutely right.
That's a regulatory rule. So that's why we don't show you the buying power and just let you make the trade and then move the money over. The money actually has to be there. But the rails that we're using for this are basically instantaneous. So if you go to make the transfer, you're going to see that money. You should see the money sub-minute.
Yeah.
Got it.
You know, sub-minute, you should see the money there. Now, the big difference with FX is that, I think Pete lightly touched on this, there's no auto sweep back when you close. So crypto and futures, if you close, the money comes back. Here, the money stays. Now,
So if I want to close this trade, I have to go to my FX account.
You have to go to your FX account.
Okay.
So correct me if I'm wrong, but there's no money transfers on Sundays, correct? We won't move you in if we know it?
The money will come from Tasty FX to Tasty Trade.
No, if you wanted to fund your Tasty FX account on Sunday night, can you do it, or you got to wait till Monday morning?
You got to wait till Monday morning at 6 a.m. You can queue it up.
Right.
But it actually won't hit the books.
So if somebody thought they wanted to trade potentially Sunday night, they need to have money in there, so fund it. You need to make the move on Friday.
Right, on Friday afternoon by
And when's the 3 o'clock Central?
3 o'clock is when what we call the window closes.
Central.
Right, Central Time. Yeah. And again, you're facilitating trade with Tasty FX. We are the business that's doing that. If you jump over to Euro Sterling, Tom, Euro GB.
I did Euro. I did Euro USD.
Touch on. There's no commissions, just like crypto.
Right, no commissions
There's no
whatsoever.
commissions.
Your cost is the bid-ask spread.
Correct.
So ideally, you want the tightest bid-ask spread. We have, when you go through the majors, Tasty FX has between 15 and 25% tighter spreads than anybody else out there, OTCFX. So Euro Sterling, a little bit different. Now, what's great I like about some of these bigger dollar pairs, and this after Euro is one of the largest traded pairs, different set of extremes, easy to construct. Years ago when we used to do futures together, I walked you through some of these non-dollar pairs, they're called, and building them with futures is sometimes cumbersome, difficult, and you're left with tailways. Here you can easily put a position together and size it up to what you want. So Euro Sterling's had a decent pullback here, which tells me Euro is underperforming Sterling a little bit. If you're looking for something a little contrarian, it's another way you can play the market.
Yes. So I'm watching this thing right now.
Okay.
Got my first FX position on.
Pete,
all right.
When he's yelling at you later today.
God damn you, Momet. No.
All right. Well, good. Thank you.
Thank you, guys. Appreciate it.
I'm up $1.
Look at you.
Lunch on Tom.
Oh, no. Now I'm down $1. It's all over the place.
I'll buy lunch then.
Oh, okay. Thank you. So, yeah, I did Euro USD, but what do you like here?
Actually, I like Euro Sterling right here. And I still
Euro Sterling.
Euro
so
Sterling.
you would be selling Euro, buying Sterling?
I'd be buying Euro, selling Sterling.
I can't buy Euro here.
But you're selling Sterling. Oh, my God.
Sterling. You don't think 135.5 Sterling's rich?
No, I think 114 Euro is richer than 135 Sterling.
Really?
Yeah.
All right, then you'd be trading the other side of it.
No, I understand it, Mr. Sheridan. With a sarcastic laugh. Okay. I have a lot of Sterling positions on right now, and I'm not even selling them out. So, no. I want to buy Japanese yen, sell Euro.
Oh, well, then go to Euro yen.
There you go.
Hold on, where do I go to the watch list? Euro yen?
Yeah.
How do I find that?
You need a clerk. You need a clerk. You need a clerk is what you need.
Is it one of the ones listed here?
It is. It is. When you go down, it's about the 8th one down. EUR JPY. Euro yen.
You are.
After Euro.
Popular new.
Popular non-USD.
Got it. Got it.
It's
This
one.
actually is the second largest traded global cross in the world.
Euro yen.
Euro yen.
And the biggest is dollar euro.
Yeah. Which really
Euro yen is set. That's crazy.
Yeah, I know. It really surprised me too. But over the last 5 years, it has been. So, okay, whatever you're doing. So if you think Euro is rich versus the yen,
yeah,
you're selling Euro yen. And rather than building it out of two positions, you just go to the source and put it on here. So you select sell.
Can you give some information about where if viewers want to get more information about how to do this?
Right. On the Tasty Trade Learn Center, it's a great course. Lots of content coming on to the Tasty Trade website. So there is a lot of information that's coming out there, and we will continue to build out. We've got we do the show every morning at 6:30. That if you want to learn more about FX, you could certainly watch the archives on that. We're going to be doing more during the day with everyone trading FX.
So what you're doing is always the first one.
Yes.
Okay. So like if you're selling it, it's you're selling whatever
Selling
the first,
euro, buying yen.
Yes.
If you buy euro, sell yen.
Right.
Yeah. So if I have euro yen, and I hit sell, I'm selling euro, buying yen.
Yep.
Okay, I'm
It's
filled.
that easy. One transaction, you got it all done.
Okay, I'm filled.
There he goes.
And for support, if somebody calls our trade desk, 888-247.
Oh God, don't call the trade desk. Ask for support for this.
1962. There's a selection on the wheel to go over to the team.
Right, to the
FX
FX
team.
support team. Yep. The FX support specialist.
And if
So
I
we
want
got you
to,
covered.
if I want to close this position, I just hit quick close.
You hit one click close and it's done.
That's a market order.
Yeah.
Oh, let's see. Click close. Position close. That's fast.
Yeah.
All right, I made money. Not enough to pay for lunch yet, but I just wanted to test. I just wanted to
Now
test.
that I'm happy.
Right? You made Tom happy. Look at this. He started off a little cranky.
Yeah,
look, he's smiling.
Look at that.
Look at that smile.
Yeah.
That's beautiful. Okay, well, while he's doing that, I'm going to say thank you. We've run a little bit over. Beth, team, sorry for that. Liz and Jenny coming up next. And as Tony would say, peace.
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. And you know what? I don't even know what day of the week it is, but it is Monday.
Oh my gosh. I can't believe you're sitting there and doing the show today. I thought for sure it would have been me, myself, and I doing the show after you hosted 250 people yesterday for... I don't know how many hours that party went on, but it went on for a long
Well, all
long
I'm saying
time.
is I put an end time on it, and the end time was not looked at as if it meant anything.
That party went over 4 hours past the end time.
Oh, yeah, for sure.
That was written on the invitation.
And on a Sunday, on a school night. That's why I wanted to do it, so it would be a little bit more tame, but it wasn't. No, it was good. It was really easy to do the show. I'm just a little bit tired, but it's a lot of running around. And I'm telling you, Jenny, you should, I might want to do it every weekend. My step counts leading up to this and at the party, because I was walking around all day.
I know. Well, the party was amazing. Food was delicious. Everything went off very smoothly. It was great. The house looked beautiful. But I was telling people, like, it was end time. It was like invitation end time. I was telling people, Liz and I are working tomorrow. We're doing the show tomorrow. I'm going because party's almost over. And I left, but nobody else did.
You're like, so long, farewell. No, it was good. It was a good time was had by all. But yeah, the teenagers behaved themselves surprisingly. They were really good. And at the end, I mean, half the teenagers were helping me clean up. It was great. It was wonderful.
Yeah, everyone was very well behaved. Nothing crazy, no shenanigans, not at all.
No shenanigans. Because you know what I did? This is my genius move. And maybe you guys can use this if you need to. I took the two kids that I trust the absolute least, the ones that are the biggest troublemakers out of the bunch. And I pulled them both aside separately. And I was like, listen, I trust you. And they're like, you trust me? I was like, I trust you. I'm putting you in charge. And so every time I'd walk by him, I would be like, how's it going? How's it going? He's like, it's good. It's good. I got it under control, Mrs. Jerky.
Oh my gosh, that's so funny.
It was
so
a great move. I was like, it was reverse psychology, but that's what I did. So it was fun.
That's so funny.
And then what else I did? At the end, I took all the food because then all the teenagers, they were just like multiplying at the end. You think it's over and then it just kept getting bigger and bigger and bigger. And I took all the food and just put it outside by them. And then it just all went.
And it all disappeared.
Yeah.
And you know what else I did to help thwart the teenage drinking? I went up to all the kids with Logan, who is 21 now. And I said, like, oh, this is my son, Logan. This is his first party that he could drink at because he just turned 21.
Good job.
And they all kind of looked at me. So I don't want to see any kids drinking here. Excellent. I don't want any. So yeah, I think the party was very under control. Very under control.
It was until you left. And then that's when I was like, what is going on? And JD comes running inside. He's like, I've got them all in the fenced in area. That's what he wanted. He wanted them all corralled in the fence because they were all over.
Oh, yeah, all over the place. Yeah. Oh, man. Well,
now
it's over. Now what are you going to do with all your free time?
Now we survive. I don't know, but I don't think I'm ever going to Costco again. That's all I do know because I spent too much time there. Spent way too much time.
I'm curious, like how many... Do you have a lot of waters and beers and everything left over from all of your Costco hauls?
You're not going to believe this. We ran out of water.
And how many cases of water did you buy?
8. I would say 8.5 because one of the cases was the double bottles, so 9.
But yeah, and the cases were not like 24. They were bigger cases. They're like
the 30, like the ones from Costco.
So that
like I said, they were pretty good. The teenagers were well behaved because I am not the one who's condoning this, and they knew that. So they were pretty well behaved.
How many waters do you think are in a case? 36?
36 or 42. I don't know. No, I got the one with 80. So that's why I said a half. The one is like the double bottles that are like this, those little ones that has 80 in it.
So 80 times 8 is 640.
Well, some of them were the bigger waters. We probably went through.
Yeah, in the beginning they were all the bigger waters.
Yeah, we probably went through like 500. That's why I brought those like little bottles down too. Maybe like 500 bottles of water.
All I know is every time I saw your husband, he was dumping more water bottles into the tub.
When you think about it, if 250 people are there, that's not that many waters. It's what, like a couple each?
I don't know. I probably took you out for half a bin because my daughter, I had thought like Lily will drive home and she's like, I have a headache, Mom. I can't drive home. I was like, okay, throw this wine away and chug a handful of waters. I got so many hours before I have to leave this party. Before it ends, before the end time.
Before the end time. No, yeah, the water is, like I said, we don't have anything left. I mean, we have beer left, surprisingly, but I had a lot.
Did the keg go, John's question was, did the keg go dry?
So the ironic part is the keg is, John's been to my house. John, our producer, has been to my house. Yeah. He's drinking from the keg. The keg is in my bar. So the bar... You had to go back behind the bar to get keg beer. So I had beer everywhere else too. Because I have so many fridges.
And people could just like grab it from the pool.
So people were grabbing. So I don't think the keg is dry. But that doesn't mean that that adults weren't participating.
I just can't believe you threw a party for that many people at your house. Like I could never do it. What you did, I could never do, Liz. I mean, that is so, just even making the amount of fruit salad that you had to make, I couldn't do that.
Well, JD says if I have to take one more grape off a vine, because it would take, you have to be like.
That's funny. I could never do it. I can't handle like such big groups. You know, my wedding, I cut it off at 175. My brother's wedding that was in our backyard, cut it off at 100 people. Like I can't, I don't know how you serve 250 people.
It wasn't bad. I mean, it was fun. Okay, but moving on because we're 14
we gotta
minutes
move on. We're gonna move on.
You know what? On to bigger and better. Do you know what is exciting news today, Jenny? And the boys just before us did a full tutorial on it.
The exciting news. Oh, there it is. FX marks the spot. You can now trade FX on the Tasty platform. It's after people get a good look at this art card, and then we can go to the platform and I could show you. There's a tab now on the platform.
Yeah, this is exciting. Now, keep in mind, this is like first day with a new set of hands. So we're going to learn this as we go. But I do want to I know Pete was just on. I saw Pete on with Tom and Scott giving them a tutorial. We should maybe have somebody walk us through things again, too, now that we can actually do it.
Right. Okay, let's pop into the platform if that's okay, John. We definitely do need to, because there's this tab right here, but you click this and then it says open a Forex account. So we're gonna get that taken care of, and we're gonna have hopefully, I will show you, Liz, here if Tasty Live website actually has an FX, Tasty FX tab on top, and I'm hoping we could either get this handsome guy on.
Oh, look at that guy!
or we bring Black or Glenn, like any or Pete, Gary. Any of those guys. Gary.
Only if you call him Gary the whole time.
So, for more info, check out the Tasty FX tab at the Tasty Live site. So super exciting, big news! I can't wait to start trading it.
I can't wait either. It's another thing to have, and especially, and you know what I loved about when Glenn came on? It's something to do when the volatility is dried up, right? So instead of being calendars, we can go look at these FX pairs. It's going to be fun.
Yeah, definitely. Okay, so while we're in the platform, we'll do a couple things. We have just maybe 2 trades to close. Let's see. We sold puts in, Campbell Soup. Our Campbell Soup puts 69% in just 6 days.
That is fantastic. Look at that Campbell Soup.
I'll close those puts, just 15, 20. It looks like these are quoted in nickels. I'll see if I could get it for 17 cents. I might have to penny it up a little bit. Filled. Okay, excellent. I will push that out on the follow page. Activity here. Ooh, we were a GTC filled.
I love your excitement.
Snow, we had a put spread that we sold in Snow and that GTC filled. So we'll push that out to the follow page, and our Campbell Soup trade out to the follow page.
Wonderful. And then the other thing I was going to say too, we did say this, and I was just trying to go find the name, but this is the person on Twitter. It's the Groove Moves on X. We're doing the whole show on Broken Wing Butterfly selection.
Oh, today. Yes. Today we've got.
So I just wanted to, like, if they're watching right now, I don't want you to think we forgot about you. Sorry about that.
No,
we are for sure doing this. I have your email up. We're looking at strike selections on Broken Wing Butterflies. And this is something that we talked about. It was a caller who called in last Friday when we were on the morning show.
Now, this is my yellow Post-it note. It just says, Peter, Broken Wing Butterflies, Monday.
Peter, Broken Wing Butterflies, Monday. And then he followed up. He's looking for how you choose your strikes. So we're going to walk through. We're going to walk through all that.
Okay. We are going to get to that. I was going to earlier close these core weave puts, but they're only 39% now. Core weave was up $8. Now it's only up $5.50. But I will put in a GTC because this might have hit if we had that GTC in.
Might have, yeah.
Wait, let me put in the 50%. Close profit 50%. And buying power hasn't changed yet, so maybe Scott felt like
that was pretty funny.
All right, so that's working. So before we get to Broken Wing Butterflies, I do want to show the cutest picture. Look at these UK, all blue. Everything was blue.
You could have been in this. You understood the assignment. Jenny came in a royal blue jumpsuit. I was very proud of you. I was proud to call you my co-host. I was like, there she is.
Yeah, I would have fit right in. There were quite a few people in blue. Quite a few. I almost thought we should have tried to get a picture of everyone in blue. But
oh yeah, that would have been a good idea. I didn't get many pictures. This is before the party started. It's one of my only pictures.
Yeah, you guys look great. And like you don't realize from this picture, because everyone in your family is tall, just how tall JD is and how tall Annabelle is. Like she looked so tall yesterday.
She's taller than me, which is crazy. Dan tells me I'm officially the shortest member of our family, and it drives me crazy every time. It's true.
Oh man!
she's awesome.
So grad party done and dusted, and everyone lived.
Done.
Everybody.
That's what it should say, and everyone lived.
Everyone lived. No one's in jail. Like it's everything went off without a hitch.
I was texting you for a minute, but nobody's in jail. We're all good. Okay.
Okay, and Bob on Fire coming with today's earnings, Dollar General and SIG. So nothing.
Do you know
too
what?
crazy.
Well, we could use some of those maybe for broken wing butterflies too. Just.
Oh, sure. Yeah. We'll take a look.
Now, Peter was looking, he was looking in SPY, and that's where he's putting him as SPY. And his question was, he's been $5, $10. And we could use SPY because it's easier with the single strikes. So I just wanted to put a pin in that.
Okay. So yeah, we'll look at that. Okay. That makes more sense. Now that you say he's in SPY, when I think he had a comment about someone saying they were too narrow.
Too narrow.
Yeah. Because the SPY is a big product and it's hard to pinpoint like a $5 wide.
Mm-hmm. On where you're going to put it. That's right. Yeah.
And I was just going to get through these tweets and then we could dive into the butterflies and then we can go back to Twitter after, if that's okay with you.
Sounds good. Oh, there Ajit comes in. Love it.
Yeah, Ajit, I know. It was so great to actually talk to on Friday. So Ajit's in, and we will never we will always say his name.
I was excited because I knew I could say it when I saw him on Twitter. I didn't even read what his tweet was, but I was like, Ajit.
I know. That's why I wanted to get to Twitter just so we could go to Ajit and say his name the right way. Okay, so and he's great. He sends this information for us, names with high IVR, and great. We love to see it. And maybe we could look for one of these too to look for a butterfly, broken butterfly. You'll hear people say like butterflies trade cheap when vol is higher.
You'll hear us say that.
Well,
I don't know if anybody else does.
You know what? What it reminds me of? Slimmy. Like Slimmy used to, when vol was very high, you could get cheap butterflies, and when vol was very high, he would buy cheap butterflies and then
butterfly. Yeah.
Yeah, and then wait for vol to come in, and then the prices would expand. And so, like, if you bought it for 20 cents and sold it for 40 cents, or I just remember him looking for cheap butterflies when vol was high. And we can show that. We'll show like something with high vol versus something with low vol, and the pricing of the butterflies. Okay, so anything good on here? This is SIG. That's what they have earnings. SIG, Signet Jewelers. I know what that was.
We'll come back. We'll come back to that. We'll come back to that because I want to make sure we get
DocuSign, my old nemesis.
No, they have earnings this week. This week,
okay,
but not today.
But broken butterflies are not a bad earnings trade. So
no, they're not. They're not.
And then Eric comes in with he's doing the SPX trade today. Oh, and Monday. We forgot. I knew we'd forget.
Do it now. It's fine. It's 10:22.
What did you remember what the right one was to do on Monday?
$25 wide, right? $25 wide.
I don't know. I don't remember.
No. Let's just do we're doing the $10 one. We're going to do the $10 wide.
But there was there was some holy grail of SPX 0 DTEs on a Monday. And I told you when we had the study, when we finally get a Monday, we're going to have forgotten this.
And it did. But there's so many different studies. Let's do the Ironfly $10 wide. Spoos are down 5 and a 575 because the drawdown's so little.
I know. But I wish I would have loaded up in my account.
I did this on Friday, and it didn't. Okay, how do I say this? It wasn't a winner, but I lost like $30. Do you know what I mean?
Yeah, right. So it wasn't a winner, but you didn't lose the full amount. And I hate this when it's like you see a decay. First it was 860, but I sold it for 855. Let's see what happened with ours on Friday. SPX, because I think we did it. Yeah, we got out of ours.
Yeah.
So far you can see sold one for 835, bought it back for 755. Then sold it for 885, bought it back for 8. Today we sold it for 850. And we've been just taking 10%, and you were probably looking for 25%, and maybe that's why you didn't get out.
But I didn't, like I said, I let it go because I didn't get out for the whatever percentage, and I lost $30. It was fine. Do you know what I mean?
I'm just gonna put it for 10% because I'm telling you, I like these more than the Jajun trade.
Oh, I agree. The drawdown's a lot less.
Yeah. And so there we've got 3 winners in a row. And I know the one we didn't take that. What did we take? 80. I don't.
It's okay.
Yeah, it's all right. Because what did we make here? $85 on this one. $80. Yeah, we're taking 10%.
Yeah, we're taking 10%, and it's pretty easy to do.
Okay, and so that's just. I know I went through it quickly because I didn't want it to start decaying as I was waiting to put it in, but just selling the at the money straddle and then buying wings $10 wide.
Technically, it's a butterfly.
Yeah. Mm-hmm. That's step 1 of our butterfly lesson.
do you know what is so funny? We have that in. What I was going to say, I was looking at the website. Can you do me a favor?
Yeah.
Do you still have the website up?
Yeah, sure.
Can you go to on demand and go to the Liz and Jenny? Let me go so I can see it. Okay. Then go to on demand and then go to strategy workshop, not strategy series. Go to workshop.
Okay.
I'm doing this for Peter, and then scroll down a little bit. I need to read the names. Go to the butterfly one.
Oh,
this one's
butterfly.
Funny. There we go. And just the first 3 seconds, and then stop it because you don't need to see the video. There you go.
Shh. Be very, very quiet. We're hunting butterflies.
That's it. Then you can get out of this.
I gotta stop it.
Get out of this.
I'm trying.
Recipe we didn't see, but
funny.
I saw that the other day. I was like, you gotta be kidding me. This is awesome. Okay, so that's for you, Peter. We're hunting broken wing butterflies right now.
Okay, so SPY, here, how about this, Liz? Here's what we're going to do. I'm going to go to SPY, and you're going to pull up a kind of butterfly that you would do, and then I'm going to pull up the type of butterfly I would do with an explanation of why.
Okay, so let's give now we're coming from a couple assumptions, right? So we're going broken wing butterfly. Now my question about a broken wing butterfly, and this is for you, Peter, what you have to ask yourself is, are you bullish, bearish, or neutral? Because you need to know. Because you can set up a put broken wing butterfly that is bearish. You can set up a put broken wing butterfly that is bullish. If you collect a lot, it's bullish. If you collect nothing, it's bearish. Keep in mind that with the puts, and same thing with the calls. So I think that's where it gets confusing is the strike selection, but you have to ask yourself, am I directional or neutral?
Right. So, okay, let's say, Liz, let's start bullish. Let's say you're bullish, and let's put on a bullish butterfly and broken wing butterfly. Or does he want broken wing butterfly?
It's broken wing butterflies, but you can do a call broken wing butterfly that's bullish where you take in no credit, or you can do a put broken wing butterfly where you're taking in a lot of credit. So let's go from the assumption. We'll just make some assumptions with all of our stuff. I like them a little bit nearer term, but let's stick with the 46 days. Fair?
And I was going to say, like, I would actually compare the 18-day to the 46-day because I do, if I'm going to do a butterfly.
If I'm doing a butterfly, because butterflies don't open up until the end. So a lot of times if I'm doing a butterfly, I do keep them nearer term. So let's just stick with our rules. Let's go to the 18-day.
I would go the 18-day. You would go the 18-day. So let's just stick with the 18-day. Okay. So yeah, fire it up, set it up. How would you?
Like if you want a bullish broken wing butterfly, let's put your short strike at the 600.
Okay.
So sell 2 600s. I don't know the prices of these. So
yeah, and she picked the 600. And we've talked about this with TP. This is expiration. It's a round number. It's there's a lot of open interest there. Sometimes he'll look for where is the most open interest, and that's actually weirdly at this 596 level.
It is weirdly at the 596 level. So these are just tips that you don't have to do this. But to Jenny's point, my eye line will go to round numbers, but so does a lot of the population. But to your point, looks like it's at the 595 level. But I just saw a K next to it. And I said, let's start at 600 because this is bullish, right? So we said bullish, so that's why I pushed it away from the 595 too.
Okay. We're
you're selling
two of
those, and then so taking about $6. Can you buy one 595? Just buy it where. But one.
So yeah, sure. Got to buy one. So buy one 595, sell 2 600s. Here you're taking in $1.30 credit. there's a ratio spread, but uses $10,000. If you want to define your risk, you got to turn it into a broken wing butterfly.
So if you made it a regular butterfly, you'd just be buying the 600. How much is the 600? Because the broken wing is if
you buy the 605.
If this is a bullish trade, what I'm trying to do is move that break the wing to the point where I'm not collecting any credit, but I'm not paying for it. So break the wing to the point where I'm not collecting any credit. So take away that 605. Keep moving it until you get credit.
There you go.
There you go. That's how I would do it.
So, and here's an interesting thing, and this is where you have to ask yourself, okay, the strikes don't go dollar wide anymore. They're $3 wide. So I go from 607 to 610. Here at the 607, I'm paying 19 cents for it. And my risk is 219. At the 610, I take in a credit, but my risk is 471. In my mind, sometimes I'll say, you know what? I'll pay that 20 cents for this. And I know there's the death by debit.
No, but this is 18 cents. If you're bullish, I would be paying that 18 cents.
Yeah, if I'm bullish, what I don't want to happen is I'm bullish and it goes up, SPY goes up and I lose $473. That's what I don't want to happen. So if I'm bullish, I might tighten this up and pay a little bit.
No, and then the other thing you can do, like I said, I went to the 600 level. You could do the same thing at the 605 with your short if you really wanted to be bullish. Because if you look at that 605 level, Jenny, there's a lot of open interest there too, a decent amount where there's a K next to it. So that's shifting it up. So that's what I said. You almost are picking a strike and a selection. So can you do it at the 605 level too? It's going to be different strikes because you're $3 wide in one.
Sure. So let me just move all this up.
Yeah, if you move it, it's going to look
weird. So you want the short at the 605. I couldn't just shift it because 600, 605, and let's see. I'm still taking a credit there.
Still taking a credit
here.
There you go. 615.
615. So $500 in risk, but higher. The risk is higher. Your break even at 610. Now,
keep in mind that goes from 610 to 615, so it's deceivingly farther away from the expected move.
Right. So these are like bullish variations of a broken wing butterfly.
Of call broken wing butterflies. You can do a bullish put. Okay.
Now, if someone told me I want a broken wing butterfly and I'm bullish, I might just look at the puts and say.
I might look at the puts too.
Okay, they're bullish, so I can, and here I'm not going to make it as wide or keep it, and I'm going to keep it kind of close, because I'm looking for a credit more than anything. I'm not looking for it to land in the middle of my broken wing butterfly. I'm looking for the credit. So here I'm taking in $1.57, and if stock goes up, if SPY goes up, I keep $1.57. But if it goes down, well, could stand to make a little more if it ends in the middle of that butterfly.
So, and that's just it. I think the question you have to ask yourself with broken wing butterflies is, what direction do I want? Where do I want to place my short strike? And how much risk do I want to take? So if you are bullish and you're putting a put broken wing butterfly in, you need to make sure you're taking in a credit. Because if you make this not taking in a credit, like we did on the call side, you are now bearish.
And it's tricky. I rarely ever do it. I rarely ever do this like, oh, I'm bullish and I'm going to put in a downside put broken wing butterfly, because all I'm playing for then is the credit. And if I look at $1.57, there are easier ways to get $1.57.
100%, but we're using SPY. Like, this isn't something that I would typically put in. But what I would do here to the downside is, if I were bearish, I would put in one where I'm not taking in a credit.
If you're bearish, then sure. Yeah, the same way we set it up on the calls, pick your center strike. And again, this expiration, maybe look for.
Oh, look at that 3,000, whatever that 570 is. I know it's pretty far down, but look at.
I know, I saw that, but that is pretty far down.
Or you could go with the 575.
Or even this 580 here.
Yeah.
So, and then again, and see how wide you can make it, how wide you can make this and not really pay for it is basically the name of the game.
There you go. That's not bad. That's a good bearish trade.
No. Now, did you say it mentioned like $5 wide? Someone said they're too narrow.
So he did say, I'm going to go back and read it real quick while we're in here. He wants to, how I decide on strikes. He asked the question and Nick commented that the spreads were too tight. I'm guessing it has more to do with the fact he had a $5 long spread and a $10 short spread. So, that's broken wing butterflies along the short.
Right.
And then he said that Tony mentions he buys around the 15 delta on the videos.
Okay.
So
Now,
I don't look, to be honest with you, I'm not looking at deltas. Now I know you have to have parameters around stuff, and sometimes the deltas will be the same. But Jenny and I look at credits when I'm doing this. I'm looking at the credits and the debits on both, depending on what I want to do. And there will be times when I was like, let's put a broken wing butterfly on. And then you're just like, I'm not getting enough because I'm directionally the opposite.
right. And so you see, like, we both kind of prefer, if you're bullish, make it as wide as you can without really paying for it. Or paying much for it. Same thing with if you're bearish, put it to the downside, make it as wide as you can without paying much for it. So I know when he says he's 5 by 10, his risk side is double, but I don't like that if it's in the direction, if you're bullish and it's to the call side and you're $5 long on your long spread and $10 wide on your short spread. I don't ever want to be bullish and lose that much to the upside if the market goes up. Like, you don't want to be right and lose.
You don't want to be, you don't want to be directionally correct and lose. That's a real kick in the teeth.
Yeah. So let's look at earnings. I know. Okay. So DocuSign was on the list for earnings. I'm going to pull it up. They have earnings this week. $88. Let's see what DocuSign's been doing. I don't know. I think I puked out all my DocuSign around here. 60. Sayonara, DocuSign. So anyway, let's say, maybe I think DocuSign is going to go down on earnings. It's like how we would probably put our short around the expected move. And here, I know if I'm not taking any credit in, I have to tighten this up. And how am I ever going to buy something if I'm only taking in 12 cents? Then I have to tighten it up even more or move everything higher. So you just have to kind of play with the strikes.
And I get his question, because I think he's looking at it from the $5 wide, $10 wide perspective. And that makes sense because you're doubling it, but it doesn't have to be like that. We kind of say the common sense side. I like what you're doing as well, Jenny, because you're legging into it. So you're moving things and legging. It's not like, okay, I'm going to do 85, 80, 70. Because you can, if you're just looking at it from that strike perspective, you can put it in that way. Sure, there's no warning. No one's going to stop you, but that's just not how we would set it up.
No, you have to see what you're taking, the credit you're taking in. So here you've got, and then this is the situation, like I said, you hate to have an assumption and say, oh, well, maybe I'll put on a bearish trade, and maybe if it's within the expected move, this hits and makes some money. But if it goes too far down, well, then I lose. But that's kind of like the risk on earnings. I don't think it has to.
I like that risk on earnings. That's the risk I'm playing for on earnings. If you put this on, this is saying that you think DocuSign's going to go down to around about its expected move, a little bit underneath its expected move, which has been happening to a lot of the stocks lately. I don't mind if you put this in.
Now, often when you put in a butterfly, and I'm just curious to see 84, 81. So what is that? $3 wide, and then 78. Oftentimes when the vol is high because of earnings, you can have no risk but your debit and put a butterfly on because it's cheap. And that's to the point of, like, when vol's high, butterflies are cheaper. Like, here's a $3 wide by $3 wide, $88 product with 117 implied volatility. If we found something with a lower volatility, let's see if I could find something.
Well, and I just want to be, I like what you're saying here, and I will do this, Jenny, because I look at this and be like, okay, I'd rather take the $36 in risk than the $400 in risk, 100%. But this is something that I occasionally do. This isn't something, because otherwise, if this is your move, like if this is your go-to move, you're going to be throwing more money away than not. But occasionally, if I'm doing this and you don't want the risk of the downside, I have no problem with it. Do you know what I mean? So, but it's not a trade that you do every day, because death by debit, this will rack up if you are debit for a butterfly.
And we are more prone and more likely to do trades like this and take the risk. And we do. I was just trying to show how, like, when vol's high, butterflies can be cheap versus when vol's low, they're expensive.
Find an $8 stock with a low vol. Go to the watch list.
Let's see.
But
watch list, tasty default, price. Here, XLU.
Oh,
$82.
That's going to be great.
XLU, and we did it just $3 wide. So Well, this isn't even gonna.
That's what I'm saying. It does. This isn't. You're not even gonna get it. You can't even go $3 wide because it would be the 82.79. But here, Jenny, just put the 82.79 and see what sell 2 of those, buy something else.
47 cents. No, here. 47 cents versus 36. So it's like $3 wide by $3 wide, but here's a product with a 17 ball and instead of 117 ball. And it's more expensive.
In this case scenario, you're just buying the 82. I pay 50.
Funny.
But I understand the confusion with broken wing butterfly selections, and I'm sure this was confusing what we said. But I just think if you know how you're putting them together, keep in mind you just got to make sure you're playing with your credits, debits, and what your risk is. So the risk in the broken wing butterfly is the wing you break. And he was talking about how if it moves in his direction, he had wound up taking so say you put on that put broken wing butterfly and it went up. He actually took the short put and moved, or the bottom long put and moved it up and created a butterfly. And you can do that.
So if you have it to the upside, if you've got the calls on and the stock goes down, then you can turn that broken wing butterfly into a butterfly. If you have the put broken wing butterfly on and the stock goes up, then you can turn that put broken wing butterfly into a butterfly. And so you can do that if you're getting movement. And so if that's your plan, then maybe I would go with the longer term. I would go with the 40-something day. Like if I'm in SPY.
He's always in the 47-day. And with those moves, keep in mind, you're either taking it off. And I love that Tony Batista is the one that said this to me. I was like, but you have a free butterfly. He's like, no, you're basically giving up the profit that you have. Whatever small it is, that's the profit that you're giving up for the chance. So it is not a free butterfly.
So let's see how he sets them up 5 by 10. So if I'm 5 here, 80, 75, and then 10 here, 75, 65, he's got you. So if your goal is to turn it into a butterfly, then you have to get a chunk of a credit. You have to get enough of a credit so that your roll from the 65 to the 70, you'll be able to make that roll with the credit you took in if you're trying to turn this into free butterfly.
Yeah.
And
that's a pretty high butterfly, but yeah, you got to because it's dollar wide strikes.
But my concern with 46 days to go is what are the chances you're gonna be able to pinpoint where SPY is gonna be in 46 days? That's hard.
It's hard
to do.
It really is
to do. Now when SPY is at the top of its range, which it's getting near it again, we used to put on upside broken wing butterflies in SPX. We used to do that trade quite a bit.
Let's take a look at it. Let's take a look at what we do in SPX.
And the vol would be low because if you're at the top of the range, vol is low. Now we're near the top of the range, ranks 18. I mean, vol's, yeah, it's. You're looking at 19. Where did the VIX open today? 1950 or something? I don't know.
I didn't look at it today. Yeah, there you go.
Or where? Let's see. What was the open? Open 1980. I had some leftover long VIX calls, the 19s. At least I got 80 cents back on those suckers.
Congratulations on wealth.
Sometimes I'll throw that in just for protection of if I have a lot of long deltas or come in with a lot on the weekend just in case.
Yeah.
Like buy them Friday wherever they settle. They were AM settlement wherever they settle this morning. They settle. Okay, so back to SPX. Broken wing butterflies, and this we look at as more of we could sell a call spread or we could do an upside broken wing butterfly. Either way, we're playing for the credit.
So yeah, that's all you're playing for here is the credit. So but it gives you peace of mind because we're going to try to make it as wide as we can and still take a credit.
Yeah. Now here, I think would we go to the regular expiration, July 18th?
I don't know. I don't want that long of a.
I know. So then June 8th, the 18 day.
Yeah, get out of that AM settlement.
Yeah, I did. Never again. That's never going to get us again, Liz.
Never again.
Okay. So let's say I sell, how high do I want to go? Sometimes we'll eyeball it.
But sometimes I'll put my shorts at the expected move.
And I'm curious to see, so the high, the high here was, 61.47. And what's the expected move? 60.70.
Yeah, so it's not near the high. And you can't eyeball it to the high. But I would do the expected move for the 18-day cycle. Maybe keep your short at the 60.65, because whatever there's an open interest in.
60.65, and
maybe buy the 50? No, 40?
I think I don't think we can make them as wide. I don't think we can make them that wide.
Yeah, just $10 wide, and then buy the 60.90.
Here's the 60.80 that gives us 85-cent credit, or the 60.85 gives us $1.80. So it's the question is, do we want to risk 4.30 or do we want to risk 8.20?
I want to risk 4.30.
And if we wanted, we could take in more credit if we made this narrower. So instead of $10 wide on the long, it could be $5 wide, and then we're taking in $2. But then our risk went up to 7.90. So if I tighten everything up, then we're taking in more credit, $1 instead of 80 cents. But you can.
This is the age-old debate. Then aren't you better off just selling a call spread for $1?
Unless we're going to if we put it on if we're going to just sell a call spread, then I'd go out to July, 45 days. If we're going to maybe hope that we keep this on and it could end up in the middle of this, then we stick with the 18-day and make it,
Let's ship this. Let's keep an eye on it. Well, I mean, we're risking $430 for the chance of making 400 and wait, what do we have? Our max profit is $1,000. I mean, we're not playing for that.
No, we're playing for the 80 cents, but we'll leave this on. Honestly, with only risking 430, it's not so painful. We could leave this on. We could be right in the middle of here and we'll say, hey, it all cash settles. Just leave it.
Diamond hands.
85-cent credit. Let's see if I can get it. So I don't think there's to Liz's point, you got to buy this delta. You got to sell this delta. You got to make the strikes $5 wide by $10 wide. It's to kind of shift it around and see what risk you're comfortable with, if the credit's worth it. If you are not playing for the credit, you make it as wide as you can, but keep an eye on that risk. Make sure the risk reward ratio makes sense.
Well, and that's just it. I don't think, there's so many, we have loose mechanics for everything. It's, a third of the width of the strikes on this. You got to make sure you're in this. A lot of times you're starting with a certain delta. I mean, I know that Tony probably picked a delta in his head and that's a good starting point. You have to come up with something sometimes to start with. But I really look at the credits and it really depends on my assumption, what I'm doing.
No, I think it's, people want the delta. They want a playbook, like a handbook of buy this delta, sell this delta. But I think there's not a right or wrong.
No, there really isn't. There really isn't. But I think we've sufficiently beat the butterflies.
10:47, show's almost over. I hope everyone learned something about butterflies and broken butterflies today.
But let's put on some earnings trades. Did we put anything in DocuSign? We didn't yet. We looked at the butterfly.
Well, the DocuSign is tomorrow. Today, the only thing was Dollar General, maybe. Let me go back to DG. Let's go back to. I'm going to go top down to make sure we get to everyone. Oh, look at Eric. I mean, he's crazy, the amount of trades. Is this all today? This is all today, June 2nd.
Yeah, well, he says, I way overmanaged today, but closed both tranches, collected $805 after fees. Nice.
Yeah. Nice, Eric. But that's a lot.
You know what? You know what I love about this, Eric? You're done and dusted.
Yeah, here's his 805. Got 805 for the day. Good. Call it a day. Well, go out to lunch.
Yeah. Don't spend $800, but go out to lunch.
Oh, and Jack Tucker, 2 tranches plus 1 more at 10:24 and rolling put side because it's Monday. Everyone's getting in because it's Monday.
Oh, yeah. Everybody's doubling down on these Jack Tucker style.
Everyone's in them except I think we don't have them because we just remembered it during our show, and I'm not in my own account. Are you in yours?
No, I mean, I was looking at it, but I don't. I'm not. I didn't put it in.
Okay, here we go. Dollar General, and that was the jeweler, Signet Jewelers.
Okay.
Okay.
Ooh, we got Lulu up this week. Lulu, AVGO, MongoDB, and CrowdStrike.
I just panicked and looked at my phone because there's a day this week that Lily's supposed to go get her state champion ring, and I'm worried that might be today and now. I don't know.
Right now?
I don't. It was like a
today and now.
It was like after a practice, like they have morning practice from
the dancers
7
and then
to
they
10.
gotta go.
Yeah, it was literally like 10 a.m. on a weekday. They couldn't get all the parents to agree on a day, so she was like, "Forget it. They're all gonna get them after a practice."
I mean, that makes sense.
But I just hope it wasn't today and now, because I could hear her sitting downstairs watching Gilmore Girls.
Today and now.
Today and now. I think it's today and now. All right, Dollar General. We'll take a look. DG.
I mean, we really don't trade those things. Dollar General.
If, why does this keep happening to me?
Dougly? DGL. What are you doing?
What is going on with Dollar General? This is, I'm telling you, I am not typing in the LY. I'm not.
I don't believe you.
I typed in DG.
LY.
All right, here we go. Let's, in honor of the butterflies, put on a Brookwing butterfly for Dollar General earnings.
Let's do it.
Look at the last one. That was a doozy.
Ooh.
Went from 125 to 84.
Lightning strike twice.
All right, yeah, let's do it to the downside. Put our short at the expected move. Let's see if we can make it $2 wide. 86 cents. And then $2 by, I'm going to go like this. I'm going to buy it as if I'm doing the butterfly. The butterfly is 29 cents.
Oh, okay. I'll just do the butterfly.
10 cents. 6 cent credit. 6 cent credit. But the problem is today's a Monday and we have to leave this for the whole week.
Just buy the butterfly. Ooh, what'd you get filled on? SPX. Okay, good.
We're out of SPX.
Oh, we're out!
Or no, is that the butterfly? Oh. I don't know.
It's not Jajun. Jajun was the greatest thing because we would yell Jajun.
I know. No, all we have is that we got into that Brookwing butterfly. Okay, so back. Oh, now I lost my Dollar General trade. DG.
LY.
Yeah, 14 cent credit, but then we're like stuck sitting on this for the week because it's Monday. But sure.
Yeah, I mean, in essence only to wrap up our complete broken wing butterfly discussion.
I'm going to show you on the analysis page what this looks like. Here we go. So basically, we're taking a small credit, 15 cent credit. We're not playing for that. We're playing for Dollar General to go down to about its expected move and leave this on and have it close at 89 on Friday. Then we could make $215.
So this is a crazy high probability trade, even though it's in the 4-day options. You notice there's no P50, but that's all you're playing for. And that's why we say death by debit, because if it goes up, great, whatever. We walk away and we didn't lose anything. We actually we're $15 richer. If it goes down and it hits its expected move, you have the ability to make more. These aren't bad trades when you look at it from the analysis page.
No, but I think, like you said, you can't pay for them because then you're going to be paying for them.
No, I mean, if you're going to do it once or twice, or you're putting it on as protection or something to that effect, fine. But that can't be like, I'm going to trade all butterflies and pay for them. Because that will just take you out because 9 times out of 10, when you look at this, it's a high pop trade because of that 15 cent credit, right? I mean, because.
Ooh, filled. And did I get price improved? Oh, let me get all this stuff pushed out.
Okay.
So have I pushed anything out other than
I pushed you did 2 things.
Snow and Campbell's soup.
Yeah, so do SPX, and DG.
All right, so SPX today's trade for the 850, and then the Brookwing butterfly for 85 cents, and then the Dollar General trade. So we're in Dollar General.
Yeah, we're in Dollar General. We're in. That's an exciting trade to be in.
And let's see what we have. How is this going? Now that we have so much, we can't tell what our 0 day is making or losing.
Oh yeah, but you have a GTC in.
Oh, here, 760.
Yeah.
We're trying to buy it back for 760. It's right where we put it on, pretty much.
Yeah.
Okay. And that's it. Now, Core Weave, now we're up to 40%. 40% in 4 days. Should we close that?
I think we should.
Yeah, Vol's coming in because now it's only at 450 and we're up 40%. Vol's coming in.
Now, and that's an 18-day cycle, right? Can we open up those options too? I mean, I want to close this, but let's look at those options.
Or maybe we move it out in time. Maybe we move it out in time.
That's a great return on capital in Core Weave. And you're not even near the brown bar. Like, you're so far out of the way of the expected move for the cycle.
Well, I wonder how much the $1,000 put came in. Do you remember what put it was for $1,000?
The 100. No, it wasn't the 100.
Oh, was it the 80?
It was the 80, I think.
Was it? Is it on Twitter?
We're not going to be able to find it.
Like a needle in a haystack? I think I'll find it. Well, it wasn't that old. The core weave.
No, but it wasn't Friday.
Core weave, scramble everything. Core weave 180, strangle. June strangle for 470.
Oh, it was the 80.
No, but that was June. That was June. Maybe I won't find it, but I wonder if that's yeah, here. It was from Golf Tennis Guitar Song. Core weave, $1,000 credit for the short July 18th expiration, 92.5 put. 92.5 put. So in July. Let's see how 92. Oh, it's still $1,000.
Yeah.
Huh.
I think we're getting the movement we want, not the volatility. Can we take a look at the chart? Because we went down to the 78 in the 18-day.
So this was like maybe this day we put on, or this day, like we were up here and then after a show it dropped, but then popped up a little bit and it's up again today.
It's probably just right where it was when we put it on. So I would take our wave off.
I was going to say, I felt bad, like, oh geez, we only made, and that's the one thing about going out in time, we only made $100 on this. If we would have sold that put for 1,000, we could have made 500. I thought maybe that came in as well, but
it didn't.
It didn't. So do we want to buy this back and go out to July?
I don't care if you roll it up in the June cycle. We could go out to July though.
We can get $5 on the 80.
Not bad.
No. Let's do it.
Ship it. And then I think we're out of time. So it's already 10.
Oh yeah. Okay. So let me see. I'm going to 385 final offer. Otherwise we'll look at this another day. That's not getting filled.
I mean, it's kind of wide markets. Am I looking at that right?
Yeah, the markets are a little bit wide.
And Scott did not take away our buying power.
No, he didn't change it.
Can you check which one were you yelling at him about?
IBIT. Let's see if IBIT's any better. IBIT 59 puts. IBIT 59 puts.
No.
Come on. I can sell the 80 put. I can sell the 92 put in CoreWeave for $800, but I'm going to sell the 59 put in IBIT for $2,338. Come on, Scott.
Makes no sense. And wait, and just do me a favor, because IBIT 17 million shares have traded. How many shares of CoreWeave have traded?
I think it's hot. Probably a lot. 18 million.
I mean, they're not too far off, right?
Right. I want to get filled on this roll because I don't want, all we have left to make in ours is $100, and I want more to make if this thing keeps going up.
Okay.
80 put, $5.
Push that out. I'll push this through, and then we're going to conclude this show, Jenny Andrews, because you got to go get a state ring.
I have to go look at my calendar. All right, Liz, you made it. You survived the party. I don't even know, what are you going to do with all your free time now?
Well, now I'm like nervous. I'm going to be like pacing my kitchen because today's housing day. We got to get now we got to get into housing. Today's the day, baby. Oh, and on top of the fact that Annabelle's also having her rehearsal here, so I've got 40 kids coming over in my basement again today.
Oh my gosh, good luck. And I'm gonna scroll the top to make sure I got to everybody, that I didn't miss anyone. No, I think I did it. I think we got to everyone.
Did it? You did it. Did you push that one through?
The core weave, yes.
Core weave, got it. Done and dusted. We're all pushed.
All right. Well, hopefully your kitchen floor isn't sticky.
Oh, it probably is, but it's okay. All right. Everybody have a wonderful afternoon, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see y'all tomorrow.
Tomorrow, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, our special guest for the day, Mr. Glenn from Tasty FX. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. Get spent with my buddies Mike and Glenn. Glenn, good morning. Happy FX launch. I know it was last week, but today is like
happy day. Yeah, everybody's talking about it. Now we're allowed to. Now we're going full blast FX in the Tasty Trade platform. But you know that's second tier news to your birthday. Happy birthday, Nick.
Glenn.
When was it? Saturday.
Thank you. Saturday. Nice. Saturday. 35.
Oh. Sorry. Just joking. I'm joking. I'm
fair.
Joking.
Halfway to 70.
Listen.
That is also true.
Mike does that for his birthday. He just doubles it and say it's halfway to that.
Halfway to X. And then people are like, why? Why'd you do that? Yeah. Because it's funny to me.
It's fun. Okay. Yeah. Is it funny to Nick, though?
No, it's not. I hate it. I despise it.
The comedy, you know? But yes, 35 and thriving.
You spent it with all your boys, right?
Yes. Spent it with my buddies. I was disconnected. I saw a little bit of what was happening on Friday. little bit of two-sided action. You had a rally, and then we sold off into the close.
Yeah.
Thursday,
They tried to rally, and then they said no.
they said no,
It was
no,
like
no.
flat at the end of the day.
Yeah. And then Thursday was a little bit of a sell-off, too. So maybe I'm a contrarian indicator for the market now that you and Tom are certainly. Which Tom will be out Friday of this week, everybody?
Check.
So
Noted.
just keep that noted that, you might have some turbulence 10 this week. Who knows?
Yeah.
But yes.
But yes.
Good to be back. I appreciate everybody in the chat saying happy birthday, welcoming me back.
Yeah.
Love this place.
If you go to Twitter, you'll see the picture I posted of you, which is fitting for
Yes.
the aging process, because it was you getting out of the chair as Tom with
Yes.
the beret and everything.
Full 70.
Yeah.
Yes.
A glimpse into the future, if you will.
Still mobile.
Yeah.
Arms still look good at 70, so that's all you can ask for.
Who, his?
No, yours. If that was
Oh. Yeah.
70.
Yeah.
70.
Yeah, if I could
70
keep
is the new
this.
35. Yeah.
That's what
We're
the
going with
streets
it.
are saying.
Unbelievable.
So yes, Tasty FX, bright shiny new toy in the platform. You can head over to tastytrade.com/forex. I've got the link pinned to the top of the YouTube chat.
Beautiful.
You can click that little guy there, and yeah, FX does mark the spot, especially this week.
Turns out.
New fiscal year, new product within the product. I mean,
yes.
How else could we kick off June?
Synergy.
Yeah.
Man,
That's-
all systems firing.
Synergy is my favorite word. It might
Everybody
be
getting
one.
closer.
It is one of his favorite words.
Really?
But I will say I did just make a trade while I was playing around with it just before the show. So very nice interface. I'm excited to show that off as well. If you haven't signed up yet, it is kind of a separate account. So you got to go through a little bit of an account opening process. It's all plugged in on the back end. The team did an amazing job. Kind of similar to what you see in functionality to like the crypto via zero hash, as well as like futures. There is a little bit of a nuance with sweeping of the cash. It does stay in the FX account, but from a trading perspective, you can do it all in one place, which is great, which is really nice. And I know that this is just, V1
Oh, yeah.
of the launch. It's just getting it out and getting it into people's hands, and more will be coming down the line.
Absolutely. It'll continue to get smoother and more seamless.
Yes.
Yeah, it should have, the tasty look and feel to all the charts and the trading tickets. There are a couple nuances with the trade ticket and some other things, how, like you called out, how money gets moved. It's transferred from your Tasty Trade account to your distinct in-platform Tasty FX account, back and forth. During the day, those transfers will be pretty much instant. So you'll be able to see that on both sides right away. But if you have a lot of questions on the Tasty Trade help and support site, we've put together a whole suite of articles on Tasty FX, how to use it, how to get started on the Tasty Trade platform. So check those out. If it's poorly written, I didn't write them.
Oh.
If it's well written,
maybe you did write
Maybe I did write them.
It depends. If you found them valuable, it was Glenn that did all that. If not, we'll blame Frankie.
Exactly.
And that's Frankie Caberna, not Frankie Walsh
No,
in the
no.
chat.
I wouldn't dare blame Frankie Walsh for anything.
You throw Frankie Walsh under the bus, you
end up under a bus.
you're creating enemies, and you don't want those enemies.
All of a sudden, you become the coyote in his backyard.
Yeah, he's hunting you.
Feverishly hunting.
Yes.
Oh, boy.
But yes, also going to be launching some demos tomorrow. First one tomorrow, tastytrade.com/demos. You can sign up for that, totally free. So that'll be a good intro to how the platform works, the whole 9 yards.
Yes.
Answering every question. Yeah, that'll be a good time. Me and Christian Molmat.
Awesome.
Going at it.
Beautiful.
Awesome. The young guns, no 35-year-olds in there.
No.
The young guns.
allowed.
20s.
Not allowed.
Not allowed.
Yeah, we have a sign on the door.
Yeah.
Sign on the door. No.
Parents, stay out.
Yeah. Are you halfway to 70? Get out of here.
Unbelievable.
All right. Beautiful. Markets are
Chop fest.
Man.
Absolutely it's a little bit of a churn. We've got E-minis basically unchanged right now. They did have a little bit of weakness in the morning session. We got as low as 58.67. It's been about a 50, 60 point intraday range. They look to be down about 20 or 30 in the overnight session. It's been kind of a chop fest here this morning with the NASDAQ, the outperformer of the group. It's up 47. You got, NVIDIA, which was much higher after earnings, sold off. It's a little bit higher today, so it's getting a little bit of catching a little bit of a bid. On the other side, you got Tesla down a handful. Apple has been red to green to red, back and forth. Amazon as well in that same boat. So it's definitely a mixed bag here in the market as a whole. Dow down 162 and the Russell down 1. So again, just a kind of a churn back and forth here in the major indices. The biggest movers of the day: oil up $2 to 62.69. It got as high as 63.64 in the overnight session. Gold and silver have both been wild. Gold's up $86 to 3,400 and change. You've got silver up $1.56, almost 5% here, near the high of the session, 34.59. Both the metals kind of skyrocketing here. Bonds going lower, so giving up the little bit of a rally that we saw last week, as well as volatility kind of remaining bid. It was a little bit higher this morning, 2085, about 80 ticks higher from where we're trading now, but it seems to have been kind of bottoming out here at 20. We'll see if we get the move in either direction at some point this week. Bitcoin giving it up a little bit. It got as high as 112 in the early session of last week. It's now at 104 and change. Spot's down 100, but has been a little bit weaker, moving a negative correlation to what the market really has been doing over the last couple days. Ethereum up 43 cents. The VIX itself just under 19. So very much a churn type day today in the market. Going to just my couple of trades I did today and this morning, just because I was gone. So just to recap some of those. So this morning I did a couple of cleanup trades, close out the 6J position that Thomas got us in. That was a nice little winner in just a handful of days there. Enphase Energy, I took off some risk there, just buying a call to cap the upside risk on the ratio that I put on in the middle of last week. Rolled up a put in Palantir, bought in some risk on CCJ, closed out of an IBIT call spread, in the money call spread for a tiny profit or a scratch. The Silver Zebra that we've been holding on to, I think that was a Katie trade. I closed out of that one. That was a nice little trade. I closed out of an Iron Condor in Tesla. Did some cleanup in my Johnny Trader account with my silver position in PanW, and rolled out FCX, closed out of Enphase, rolled my SoFi position. We're at that perfect spot of like 18 days to go till expiration, and June expiration, July at that 46 mark. So rolled a couple positions, closed stuff that worked, closed stuff that's at a scratch or volatility came in, etc. So clean up.
Man, you went to work.
Yeah.
I was gone for a couple days, so I had to
those transaction buttons.
Had to catch up. I had to, get the itch,
Yeah, I did a lot less this morning.
You did some.
I did do some stuff. I closed out of the HG futures position. That was the copper bullish trade.
Mm-hmm.
That was a $160 winner. That was nice. Tesla Iron Condor, we were at 21 days last week, but I was right in the middle of the range, so I didn't have a reason to really close it. I had 50 points of wiggle room on either side, and then we got a nice crush today. So just closed that for a $100 winner. And then GLD had a call diagonal spread from last week, 303, 313, long July, short June, closed out for $200.
That's a beaut.
Yeah. So took off some winners, removed some risk, and now we're ready for some tasty FX action.
Yes. And if you got other trade ideas, throw them in the chat. I could take some as well. But yeah, Tasty FX. On the left side of the platform, you'll see the new little tab there.
Yeah, you got to call out Nat Gas, though. You missed that one. That one's soaring.
Woo!
Top of my radar in terms of daily price moves. You guys touch that at all or no? It's
Up 25 cents here, 7 and change. That's why they call it the Widowmaker.
I actually do.
Scares you?
I do have a butterfly in there that I removed the risk in. So I had the 3-4, 3-3-5, 3-3
on the put side.
symmetrical put butterfly. So yeah, so this move doesn't hurt me because I already took the risk off. But yeah, this is why it's a crazy product. 7% move, just why?
I will say Natty Gas is one of those underlyings where I feel like I'm just always on the wrong side of the trade.
Yeah.
I think I've actually done like some of our little social videos and talked about it. I follow Thomas. If Thomas is our like,
he's the Oculus.
That's your guy.
He's our
Futures
insider.
Oculus, yeah.
He's our futures insider. So I follow him if he has, a trade in there. I don't trade it on my own because I just cannot. Like I want to sell this right now, and if I sell,
It's hot out. Why did you play natural gas?
this doesn't make any sense.
That's what I'm saying.
So I would sell.
I don't have any answers for you. Yeah, but
it's tough.
There are some other stocks that are making some interesting moves. So Ford and GM are both down 5%. If anyone has any intel on that in the YouTube chat, let us know. But interesting to see them both tanking a little bit. DraftKings down 6%, getting hammered with some Illinois taxation updates. Where
As if we don't have enough.
yeah, they're taxing everything that's fun.
Yes. Yes.
Zins.
Oh, man.
Tax hike.
Unbelievable.
DraftKings tax hike. Like, what are you supposed to do? Read books? Come on.
Read books. What does that mean?
Oh man.
I'm gonna sell a put in DraftKings right now.
There you go. That's what
We're not gonna let. We're not gonna
stop
let
us from doing that.
No,
Yeah.
they can't.
Come on.
Yeah. Broadcom earnings this week. Lululemon earnings. The dollars, Dollar Tree, Dollar General. Oracle's next week. But yeah, handful of earnings this week. I think AVGO is going to be the most interesting one for us.
Yeah.
The rest of them probably skip.
AVGO, the classic V bottom.
Yeah.
140 to 240.
Yeah.
2 months.
Yeah.
Gotta love it.
Up 100 points. Just
Simple.
Straight line up.
Simple.
Sometimes it really is that simple.
Yes.
You see something that's at the lows and you take a little bullish stance, and then all of a sudden,
yes,
you're either winning or losing. That's how this works.
You could scratch sometimes.
True.
Occasionally.
True.
If you don't get greedy. DXY. $ DXY. You can see the dollar index on the platform. It's at lows, which means there must be lots of opportunities.
Yeah, I mean,
in the
you're waking
FX
up,
space.
You're waking up to what looks to be a good week for FX markets. Waking up to a lot of dollar selling. So if you're looking at DXY, just a little tidbit about that. That is a dollar index that I think is around 50%, if not more,
of the
euro dollar exposure.
Yes.
Got some Japanese yen in there, a sprinkle of Swiss franc, and a dash of sterling British pound. But if you want to get granular, you just flip over to the Tasty FX environment, and you can see all of these dollar pairs, what their exchange rate is. And then you'll see I watched the net change percentage there because over time, these markets, they're all exchange rates, but they can, go to one side. Well, like you have a pound dollar that's at 1.35, and then you have an Australian dollar that's at 0.64. Hard to kind of contextualize all those per pip moves, so I look to the percentage to see what the outperformers are today, and we're getting a lot of dollar selling, especially against that Japanese yen. But we're seeing some historical price extremes. Euro dollar, look no further. We're at 1 month highs there, above 114. We saw a bunch of dollar selling overnight around the London Open, probably just on the heels of China U.S. trade talks, and then settled in right before U.S. market open, and then soft PMI data we got. If you want to switch over to an hourly chart here, you can just go up to the top left of the chart, hit daily, and then go over to the hourly or the 15-minute. You'll see that spike that we just had was on the heels of that soft PMI data. So a lot of the data that affects these markets for the U.S. comes out at 7:30 Central Standard Time, 8:30 Eastern Time, and so we saw some volatility there. But now staying in inside the range that we've observed this morning. Pound dollar also interesting, while not at its. It was higher last week, but still the general air where we are is highs dating back to 2022. So that we've seen a lot of dollar weakness in that market. And Australian dollar, always interesting. That one is one of the more volatile major pairs, popular U.S. dollar pairs. So that's always one to watch. Has a lot of risk on sentiment. Also has some historic correlation to metals. Metals up a ton today. But not exactly causing this Australian dollar to rip. And we've got a good slate today. We've got Jerome Powell talking at 1 Eastern Time today.
Jay Powell.
Right after his meeting with President Trump.
Oh yes, I've seen speculation.
Yeah, we'll
that he's
see.
gonna-
The outside.
You're fired.
Yeah, the outside move is Powell resigns. I haven't seen any. That would be very surprising.
Yeah, I don't think that's going to happen.
I don't even know if you're allowed to do that. Are you?
Oh.
No clue. Is that one of those jobs you just
Yeah,
can't
you're
ever
stuck
leave?
with. Yeah, you
purple
can't.
tie never comes off.
No,
You can't leave.
Let's hope not. Man, if he comes out in not a purple tie, that's a scary sight too.
That can be tough. On the watch list here, so I have this up for everybody looking at this. I have the TCFX page. First tab you'll have is a watch list. It's grouped by a bunch of different buckets here. So you have like popular USD trades. So this is against the dollar. These are non-USD. One of the interesting things with Forex trading is that, with futures, it's dollar denominated. So if you're long the yen and you're short the euro, they're offsetting by the dollar. So you're long that pair of long Japanese yen, short euro. So these products, you can trade those pairs directly. It kind of removes the denominator of the US dollar, which is very, very interesting. When you're on the watch list here, just like you can with equities, by clicking the bid or the ask, it'll bring you to the actual trade ticket for these. So walk me through, and I'm gonna put this order in too to you can't do advice. I'm gonna short the pound. Pound very high, US dollar at lows. We're gonna put on a trade here. So when you go through this trade, and I got here from the watch list, you click the sell button. You get here. What's the difference between our standard and quick, I guess?
There you go. Yeah. So standard is probably where you want to start. That lets you select, everything from the size to if you're putting in a limit order, the price, lets you review everything before clicking place trade. This quick ticket is really for intraday scalping. Once you've set your price, if you're in this quick mode, simply selecting the sell or the buy it's a one-click trade.
Okay.
So that will allow you to get into those positions very quickly, and then it'll also show you your aggregated positions right there at the bottom, and allow you to then close all longs, reverse your sentiment, and take the other side of the trade. Just gives you a very visual. Yeah. So now
So I'm in. I'm in with one. So this is this is kind of cool because I could just click this and it'll just get them off. So I'm out.
Now you're out. Now
I just traded and I'm out in 1 second.
Very quick.
I don't think I made any money on it.
I just blinked. I don't think you did.
Yeah, but it's okay because
Yeah.
we're playing around with the system here.
Exactly. And so those are market orders. Those are all market orders. And that allows you to scale into and out of positions very quickly, which when you're trading around a binary event, like a Fed decision or any of these key U.S. data releases, can be very valuable because, as we know, those algo moves can go very quickly. And so to get in and out of those is crucial. But the standard ticket, if you want to pop over to that, we can walk through everything we've got here. So right now we're going to start with, market order, but you could change it to a limit order, and that would just allow you to set your price level that you want to get in.
And you could set multiple of those, right? So you could do like a different, so the size is, so one here is $100,000 notional. Is that for all of the pairs?
Yeah, so one lot is 100,000 units of the first currency.
Okay.
So in this market, that would be 100,000 British pounds.
Yes.
But that makes it easy because it's actually, then everything is quoted in US dollars. So
Sure.
when you're looking at your movement, it's all dollars per pip. Whereas if it were USD GBP, then the contract would be $100,000, but it would be quoted in pounds. So
Yes.
that's where it gets a little tricky. But
Okay.
this one, yep.
So so with the size of this, obviously, you can see what it's telling you how much it's going to move per pip.
So yeah, so what I would do
Which is nice.
first is select your buy or sell. You can select either one regardless of what you're doing because that'll cause under the size your notional to appear. So while this is the same, the ticket needs a price in there to quote that off of. So selecting either side will allow you to see your dollars per pip, so per tick of movement, what that position size would fluctuate, and then the notional that you're controlling. And now this is a little zoomed in, but if you scroll down in that trade ticket, that'll also show you your margin there at the bottom. So what that position size would command in terms of buying power.
So 0.1 is going to be $10,000 notional. Well, 13,000 because it's converting to pounds. If
Exactly.
you're short, so it's going to be pounds.
Yep. And then this
At
is
whatever the price level is.
This is an order, and so it allows you to select where you want to get in, your price level, how long you want to have that order in for, and then some if-then orders. And then that place limit order would be where you put that in. But let's go back to a market order.
Okay.
A little simpler.
Okay, let me put this one in because I moved the price so that it's actually above the.
Awesome.
It's trading above.
Yeah.
So if I'm on, so when I see my orders, so I have that in there, orders. You can cancel these orders and remove them just right from here. So when you're on the order ticket or the order page, you can simply just click it and it's gone.
Yeah.
It's a one-click.
Exactly. And if you want to put in another order as an example, you can actually do that from the chart as well.
Okay, so from the trade chart.
Exactly. So if you put on just a limit order that won't trigger as long as nothing crazy happens in the next 30 seconds.
Let's hope not. So I can put this in just to put this above.
And the nice thing about the size, if you click that down arrow, if you're just trying to trade the smallest possible increment, you can just click the down arrow until it shows you 0.01.
Yep.
You don't have to keep typing in 0.01.
And yeah, this pair, so the margin requirements differ by Forex pair. So this Forex pair is at a 5%, whereas a euro dollar is at 2%.
Okay.
And Australian dollar is 3%. And the full list of that we have on the Tasty Trade Help site.
Cool.
Of all the margin requirements.
And that doesn't change all that much.
No, not I'd say in 3 years.
Okay.
They've changed.
Cool.
But yeah, if you want to put that order in, just as an example here, zoom in on your chart here. Yep, just a little scroll. Then you can select that little GTC. Yep, and then you can delete it right from there, and you can move it.
Okay, so I can move that.
You enter new trades from the chart or just exiting, closing?
Just exiting and managing. So if you had a position on, you can close it from there. If you have stop loss and take profit orders attached,
You can move them.
and it'll show you a nice little risk reward ratio there. But you can do that both from the chart and from the orders tab, like you called out earlier.
And that's kind of cool because I can put another order in here, right? So if I put in a sell, I'll have I now have my two orders in here. So you can put multiple orders in and you can move them from the chart as well. It's pretty cool.
Yeah, no, super cool. But yeah, you just have to be aware that each of those orders is independent. And if you go crazy and have, both sides of it on, depending on what gets dinged where, just being aligned with what your position will actually look like, because you can't be long and short this one market simultaneously.
Okay, and then when you get, so going back to, let's get filled on this. We'll just do this at, how do I do this? So if I clear this, so let's just do a market order.
Yep.
Just to get filled on one of these. So do I need to put a stop loss in here? No.
No, just select your direction. Yep.
Okay, so the sell buy you gotta select here. So we're gonna get in here. So I have that position along with this Euro one that I was messing around with before.
Oh man, that one's flying.
I know, $6. Look at this. So if I put in another order here, let's say to sell here, I'll have different line items in my position. So they're by trade, correct?
Yes, but if they're the same trade size, then they're aggregated, and you'll be subject to the FIFO rules where it's first in, first out.
Okay.
If you make them a distinct position size, then you can actually manage those independently.
So I just put one in that was, how do we, so you call one lot is 100,000.
Correct. So this would be a micro lot.
A micro lot. Okay, so anything below that is really just considered a micro lot.
Yeah, and then a mini lot would be 0.1. So
okay.
You could say you have a mini lot of euro dollar on.
A mini.
Yeah, and 6 micro lots.
Okay, but 6. Okay, micro lots. There you go. All right. So from here, you can do all sorts of management of this position. So you can click a one-click close, which is market orders, but the spreads are very tight. So the market orders isn't really a huge issue here.
Right, and so you can go back to the watch list tab, and we call this out specifically with that spread column. And that is updated live. And so, for your pound dollar, the spread is fluctuating between 1.6 right now. 1 is 1 pip.
Okay.
And that is around the minimum spread for that.
And what's that in dollar terms? In terms of
so that depends on your position size. So for you, 1 micro lot, that would just be 10 cents.
Okay, so you're talking about with a full lot position, it would be $10?
Correct.
So it's a $10 spread on a $100,000 notional value. It's very, very small.
And there's no commission on any of these trades for entry or exit, just because of the way that tastyfx is compensated through IG Group, able to offer those $0 commissions. So that spread is really the only thing you have to monitor when entering a position.
Sweet.
Beautiful.
So I assume if you're using limit orders, you can, let's say where the British pound's trading now, you want to have a long order below the market and a short order above the market. You can have both of those resting at the same time.
Correct.
Okay. Yeah. And then, so this is easy.
Because that's interesting because you can't really do that with futures because you can't be long and short at the same time. Here,
Here you can't as well.
Okay.
But it would be if one gets hit before the other.
Yeah.
It would either liquidate from your existing position or put on a new position.
Yeah.
Got
So
it.
if you're hit with the short, if the active trade and then it drops, your long order would remove the other to flatten the position.
Exactly. So a lot of flexibility here, but yeah, again, you don't want to put in more orders that would get too confusing as to subject yourself to what actually gets hit first in terms of your bias and what direction you actually want to have. So that's why, if you're really monitoring this closely, it's very popular to have just that quick ticket on, and that shows your aggregated positions right there if you're trying to get in and out of everything very quickly. But yeah, that's walking through the standard trade ticket. And then, yeah, your charting features, really cool stuff with position management. Also, you have 30, 40 years of data there. Candles can be
That's pretty wild.
From monthly to minute, maybe even we have 10 seconds. I'm not sure. That gets a little, oh, there you go. Yeah, 1 second.
1 second.
Yeah, that gets a little choppy.
Yeah. Price action before we were born.
Yeah.
It's wild.
Kind of fun.
Well, before we were.
Yeah.
Okay.
He's the oldest, okay? It might not look like it. He's the oldest, all right? So don't give me that.
There's only so much organic chicken you can eat to keep yourself looking young, but we will continue to age, yes.
Yeah. You better watch yourself there,
I'm sorry,
Glenn. You want to come on the show again,
I
you
know,
better start being nicer, okay?
I do. I apologize.
Can we, so this was an easy one against the US dollar. Can we look at something more tricky and just see how it looks? Like, can we do the opposite?
So so those popular non-US dollar pairs, what's nice about how these are ordered is there are 80 currency pairs offered, but if you scroll all the way down, you'll notice that these spreads get a lot wider for some of these more illiquid markets.
Yeah.
And so staying to kind of the popular non-dollar pairs are still very widely traded symbols across the world. So like that euro pound, a lot of these yen pairs are very popular. So those spreads are very tight, just as tight as some of these US dollar pairs. Because I know it can feel like this is really getting into the weeds here, but these are still very popular markets worldwide. So yeah, this euro pound market, very interesting as of late, getting a nice bid from the euro this morning.
What about this Aussie Canadian dollar?
Yeah, that's a fun one too. Two commodity currencies, traditional commodity currencies stacked against each other. You get some nice ranges here. A big bid for the Australian dollar today, perhaps on that metals move. Canadian dollars, it's hard to get a read on that lately because it moves in quiet times pretty in tandem with a U.S. dollar. Its historic oil correlation has kind of been breaking down in recent years. So, but yeah, the trade ticket is the same, but you'll see that the notional and the per pip here is in Canadian dollars.
Okay.
And so if you were to put this in,
I like that you can there's so much flexibility with sizing.
Yeah. And
Kinda
so,
fun.
yeah. And so if you scroll down to your margin, this is where it gets simple again, is it'll quote the margin in US dollars and Canadian dollars. So you know what your actual account is being margined there around $100 and your resulting position, and it'll show that way in the positions tab as well.
Yeah. And then you can, so something nice about this to kind of standardize it for US dollar based humans out there. Instead of like taking profit at GBP profit or Canadian dollar profit, you can just take it at pips away.
Exactly.
That would probably simplify it for everyone out there. Like if you know,
for sure,
you're taking 10 pips or 5 pips or whatever, and you don't have to think about the transaction.
Right. Really. And that brings up a good point. I did come not completely empty-handed. pulled together some fast stats for you guys, just because I know you're newer to these markets.
Wonderful.
But if you go back to like a euro dollar or some of these dollar pairs, the major pairs, if you're wondering, how many pips it moves in a day, pulled some 3-month standard deviations for the daily range.
Ooh.
So based on closed data, what a daily range you can expect. So for the euro dollar, we're looking at around 70 pips.
Euro USD.
Correct.
Okay.
For the British pound US dollar,
70 pips, which is what? So a pip is how many dollars? Is $1?
well, that depends on your position size. So a pip is your minimum tick, and that is the 4th decimal place.
Okay.
All pairs except yen. Yen is weird.
Okay.
Yen
Yeah,
is-
that goes out.
Yeah, that goes out
A lot.
Yen
There's a lot
is-
of numbers there.
Yeah, so because of the actual nominal exchange rate, pips in yen are to the 2nd decimal place. So you can remember that just with any quote here will have to the 10th of a pip.
Okay.
And regardless of your size, underneath your sizing, it'll show you the monetary change per pip.
Correct.
So if you have one, it's $10 per pip. If you bring that down to the smallest, it's 10 cents per pip.
Exactly. And so over the past 3 months, you can expect euro dollar and pound dollar to move around 70 pips in a day. Your US dollar Japanese yen is sitting at around 114 pips in a day. So that's a bigger mover. Your US dollar Canadian dollar and your Australian dollar US dollar are both around 55 pips, but on a percentage basis, that's right up there with the Japanese yen. I think I did something on Forex Focus that theoretically, because of the margin requirements between dollar yen is 5% and Australian dollar is 3%, you're able to put on a bigger position size in that Australian dollar. So all things equal, it kind of has a very similar dollar movement in a day, yen and Australian dollar with those ranges. Swiss franc, traditionally a safe haven, less volatile pair, has been moving a lot, 70 pips for that one as well. So those are your majors, your popular dollar pairs based on recent data.
Okay.
Sweet.
So I think that one's very important for new traders coming in and kind of what expectations around stop losses, around take profit levels, just what's realistic in your time frame within a day, because these things can run over a long period of time. And while they are historically mean reverting, that does not mean it has to happen in a week, a month, a year. Time horizon on these.
Yeah. Yeah, I would just, if you're new to this and you're just getting a feel for how everything's moving, you can go with 0.01. That's the smallest size, and that's manageable for.
Yeah. So if I wanted to close this euro position, I'm up a half a pre-COVID Chipotle burrito.
There you go.
Oh.
So
pre-COVID.
Pre-COVID, okay? Don't get your hopes up there, Chad. I see chat's actually mentioning that I could take them to Taco Bell. I don't even think I could get you to Taco Bell here. Maybe like
This is without guac,
they don't have the dollar.
right?
Yeah, no guac.
Yes, no. Like that's not even worth it then.
No.
It's like gotta have the guac.
So if
08.
So I just one click close this. In the orders, okay, so it won't be in your orders. In the history, what am I looking at here? You can change this. Well, obviously 7 days doesn't really matter for me here. What are all the things that I'm looking at here?
Yeah, so these are your closed positions as well as your deposits, any withdrawals you have.
Okay.
This will also, right now you open and close 2 positions there. Those are both showing your amount, profit and loss, your opening and closing levels.
Okay.
But then something else that will show here is your overnight financing charges, your either debit or credit. So if you were to hold positions overnight, there is an overnight funding piece to this.
Yes.
Where those
there's a carry.
Exactly, because you're buying one currency and financing it with the other currency. So one of the factors there is the interest rate differential in those overnight rates. And so for things with currencies with a very wide interest rate differential, U.S. at 4.5% and Japanese yen, for example, at 0.5%, when you actually do that overnight funding, if you are long that market, you're holding U.S. dollars at 4.5%, you're financing that with 0.5%, that overnight rate is actually positive. So in theory.
And you get that is a credit.
Exactly.
So
that'll be a line item here in your history.
Okay.
Hold that past 4 p.m. Central.
Yeah. And so that's on, the lots that we're trading. It's you're talking about fractions of a penny on $1,000. But when you're trading this in a bigger notional size, you can get into a bigger carry trade. Obviously, you have to keep in mind that the margining here, you get a lot of leverage
100%.
here. So there's no free money trade here.
Right.
Obviously, because you still have risk in that. But it is, that is an aspect of FX trading, which is very interesting.
Yeah, something to consider if you are deciding whether to hold a position overnight or not.
Okay.
Because these markets during the week don't close. So as we saw from Sunday night open, it opened semi-flat, and then once London came in overnight, a lot of these European currencies really took off, and so. If you're leaving a position on, that's on the whole time. So stop losses, take profits, all those conditional orders, very important for trade management, leaving those positions on overnight.
This is a good question that Andrew in the chat kind of asking what the difference between, sterling USD versus USD sterling, which is British pound. The ordering is which one you're long. So if you're long pounds, it's going to be the first one in the sequence.
Correct. If you're buying pound US dollar, then you are long the pound, selling the US dollar. Whereas if you're selling that, you anticipate the second currency to appreciate.
Yes.
Value.
So if I click here, the pound USD, I go to trade. And I go to buy this.
Right.
I would be buying USD.
Correct.
Selling pound.
Buying. If you're buying this, you are buying British pound, and you are selling US dollar.
It's against whatever the first one is against the second. So if you're buying this, you are long the British pound. But if you had USD over GBP and you shorted it, it would be the same trade.
It would be the same trade.
Right. Correct. Yes. But for ease, a lot of these markets, the majority are not quoted both ways. The exception to that is this euro pound. There actually is a synthetic contract for pound euro.
Okay.
And so there are some nuances there, but for the most part, there is just one contract per currency pair. So, good way to think about it.
I don't want to toot my own horn. I'm up $10 already.
I don't know how you're doing it.
It's unbelievable.
All these people in the
really,
YouTube chat saying they're hanging out with you tonight. You're buying stuff for them.
I got you guys.
One is upset that you are already booked with someone else. You're just you're the talk of the town right now.
Give me one that's at an extreme low that I can get long in.
Extreme low.
Give me something that's
U.S. dollar, Swiss franc is bouncing off of.
I need a search bar in here. You gotta give me a search bar so I can.
All right, I'll
wait,
guys.
Okay, non-U.S. or popular U.S.
Yep, popular U.S.
Which one's the Swiss franc?
It is CHF.
Okay.
Duh.
Oh man,
I'm just joking.
You better watch yourself,
I'm sorry.
young man. Okay.
Ooh, this is bigly low.
Yeah. So, but a tough one to, if you thought it was bigly low in the start of April, that's a tough one. This one really has been sliding. Gained a lot of momentum in May, but like much of this U.S. dollar, struggling to hold on to a lot of this momentum. So, Swiss franc, key factors there. Traditional safe haven currency. You see less kind of movement on Swiss news because it's supposed to be, less volatile, less of an impact on its currency strength, a big exporter. And so heavy risk off sentiment. When it isn't going to U.S. dollar, you see it play through oftentimes in this Swiss franc. So if you're risk on, perhaps you'd consider
buying U.S.
dollar against the Swiss franc. If you don't believe in this bullish dollar comeback, still short dollar, and think there might be some more uncertainty ahead.
Silver's up 5%. Speaking of potential uncertainty, silver and gold just ripping.
Yeah, unreal.
I like this. The notional value here, it's 40,000 and change, only using $150 in margin on this position.
You've given him a whole new world of things to learn about and look at.
Dazzling place.
24/7, just endless.
I know it's not good.
Yeah,
to be completely honest.
Well, they're taxing your Zins. This is your new
my gambling, food delivery, which I'm not a big food delivery guy.
Okay.
Yeah, but that's another
Dr.
thing.
Jim Schultz said I have to proactively apologize to his family for these markets being to him.
Crypto is there too. It's just.
Everything's moving 24/7. It's just the way of the world.
Yeah, I was checking crypto in the club on Friday night.
You in the club? Wow.
Yeah, well, I removed myself because the crypto notification was down 10%, so I packed it up.
Yeah.
But
it's okay.
Check, please.
For him.
Yeah.
Who's buying?
Good
Very
stuff. Sign up for the demo tomorrow if you want another full. This was a very in-depth run through.
Yes.
Thank you, Glenn. But if you want another one, if you have any questions, sign up for the demo. And that is tomorrow.
Oh yeah.
Yes.
Got a ton of other resources out there. We're building out in the Tasty Trade Learn Center. We've got some articles for getting started, trading Forex, how it works, what the key considerations are. Putting out more of those every week. We've got Tasty Trade Learn courses. We've got
newsletter too.
Yep, from TastyFX you can opt into.
Beautiful.
Just to see what's moving. Forex Focus daily. Thus early. Rest of the week is going to be me and Frankie Forex.
Ooh,
yeah.
Frankie Forex. I like that. That's got a ring to it.
Frankie Forex Jr.
Everyone's got a nickname.
Yeah, no, nicknames are essential.
Yeah.
I love it.
What are your guys' go-to nicknames? Nicky B?
Nicky Bat.
Some people call me Mikey Butts.
Yeah.
How do we feel about that?
I think it's fine. Okay. It's my social handle.
Okay.
Some people call me Mikey. Some people don't know that, and then they hear someone call me Mikey, and they're like, "What's this?" And I'm like, "You tell me."
I don't think it's that far off of a nickname.
Michael.
Whoa, Mikey.
Yeah, Mikey.
Who's this?
He's
Mikey. Your name is Michael.
Last time I checked. We got some good questions in the YouTube chat here.
I might have to learn all these. These are all new tickers for me.
I know. I apologize. I'm working on a little
like a cheat sheet or something.
Guide. Yeah. The good news is it's all combinations.
Yeah.
And a lot of these you absolutely could trade, but are very not as popular as we
need a description.
Learning the top 5 appear throughout.
This is what I need. Okay, Glenn, talk to the people.
Okay.
Talk to the powers that be.
I'll get my guys.
A description column that just writes it out. Right?
That would be a value add. I agree.
That would be a value add for me.
Fair.
Because then I could just go in and,
And I'm sorry about this Swiss franc thing. I looked it up for like 2 months. My first.
Yeah.
Looking at it.
I know.
It's not
Okay.
intuitive.
Yeah.
But yeah, generally it's the first two letters are the country code, and the third is the currency.
There you go. That actually makes sense.
Yeah. So NZD, New Zealand dollar. What other cool ones? If it ends with a K, it's some version of a krona, and that is more than likely a Scandinavian. So
Yeah, I was seeing you got a whole bucket of Scandinavian.
NOK. We had to put them somewhere,
Yeah. No, I like it. It's
NOK
interesting
is
that's how it's looked at.
Norwegian. We've got Swedish. We've got Danish.
All right, give me one.
Pesos down there. If you go if you scroll down to the next dollar bucket, I think it's emerging USD. That's where you definitely get wider spreads, but you get big swingers. If you want to look at that's been in the news more and more. Definitely in February, March when the
Tariff stuff.
First tariff iteration. We got
V1, tariff V1.
Get like history names for what, not a tranche.
Yeah.
Now you can start using tranche all around
Well,
here.
yeah, 'cause
you've got multiple tranches of.
Yeah, but mine are like
pound.
little baby tranches.
You don't have to tell people that.
I know, but they're little, they're little nothing.
Tranche is a tranche.
Yeah.
But yeah, if you want to see the craziest chart, if you go back to the watch list, scroll all the way down to emerging US dollar. Click on USD TRY. That's Turkish lira. Check this one out.
Wow. Okay.
Okay.
You don't want to be short that.
I don't know if that screams tradable, but this is actually a cool example. If you look at the top line there, where you see the symbol and you see the bid, the ask, the swap bid, and the swap ask, that is your indicative overnight funding.
Of the swap where?
So up top on the trade bar above the chart.
Okay. Yeah.
Where you see the spread, you see the swap bid and the swap ask. So you're actually getting paid to
100 pips.
Short.
Ish. The difference between.
Well, see, no, you're just selecting one. So if you were to short this market, you would be getting 390 pips overnight.
Okay.
And if you were long, you would be paying nearly 500 pips overnight.
Okay, got it.
And so, I mean, if you held on for any stretch of time being short this market, the actual position would override any carry that you're collecting.
And when does that carry go into effect? Like, am I going to have a carry cost on my positions that I've traded
So it's
and out?
Open positions after 4 p.m. Central Time.
Okay, cool. Very nice.
The roll period.
Last question here. Can you do any kind, it's obviously very directional. Outside of currency pairs, maybe you're long one, short another. Are there any other customized, more dynamic strategy setups? Or is it really just long one, short another, and then based on the relationship between one and another, that's your...
Yeah.
I think the sizing is probably...
The sizing is a big piece, but yeah, you kind of... And that's why I think it's nice that the offering here is kind of segregated from your other Tasty Trade positions, because you can just kind of get that overall currency portfolio right there together. So you know if you are engaged in a handful of these markets at a time, just how much dollar bullishness, dollar bearishness you have as it relates to those position sizes and long or short bias.
Yeah. I think the interesting part here is you obviously get a ton of leverage and you can almost like if you were to buy 100 shares of stock and you sold, 10 when it's up $1, another 10 when it's up to, like, it's nice to be able to really, with options, it's harder to do unless you have a larger size account. You could trade a 10 lot, 5 lot, whatever. Trade one lot, it's all or nothing. Here, you can get that kind of small position and you can actually, leg out, so to speak, on directional moves, which I think is really cool.
Yeah, that's the nice thing about this small size. Like going back to the question about having a long below the market and a short above, you could layer in, like, if your total size is one whole contract, you could do 0.2, 0.2, 0.2, 0.2, 0.2, and just have these layers where if it does drop, you get longer as it hits, and then if it doesn't, you maybe hit 1 or 2, and then it pops.
And back to your kind of more nuanced strategies is, if you have a very long-term directional bias in one of these markets, you could go to a highly correlated market for more intraday trading. So, you have in the euro dollar and the pound dollar, obviously, a high correlation of historically around 0.8. And so if you have, a long-term short euro dollar bias, for example, you have that position on, you don't want to change, you don't want to mess with that. You could move over to that pound dollar market for like a Fed announcement or any sort of intraday moves.
Sure.
Put those on and off without affecting your other dollar positions in your other markets.
Really good stuff.
Lovely.
Thanks for sitting down with me and
Thank you.
Talk through it. Yeah.
Thank you. I can see his brain shifting
Oh, he's in.
as we learn about how to place the orders, what the different order types are, et cetera, et cetera. But yeah, hopefully that was helpful for everyone. Again, if you want to sign up for the demo tomorrow, tastytrade.com/demos. I put a link in the YouTube chat. I also have a link at the top of the YouTube chat for the tastytrade.com/forex page.
Yes.
A lot of new pages.
A lot of new
Collect 'em
pages,
all.
but yeah, bounce around.
Yeah.
I mean, I hope one of them's helpful.
I think so.
Like
I think you did a good
shot.
job. I think you did a good job.
Thank you.
But yeah, that is it for us. If you want to check us out on Twitter, you can do that. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Glenn is at Glenn Freibarger, Barger.
Nailed it.
Yeah.
Got to do it.
Gotta do it. I gotta get Trader in there somehow.
Yeah.
Already too
It's
long.
too late. They're all taken. I took them all. Damn. Everyone that's on the network, I actually signed up for them myself so that if someone wants it, they can,
God, you're good.
Yeah. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
We are back. It is Monday, June 2nd, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, it's a quietish start to the week in stocks, but that's certainly not what the rest of the market is saying.
Yeah, things are moving. I mean, equity's up just a little bit here. A little surprising with the events over the weekend, but geopolitical risk coming back up. And, we got the jobs report later this week, so one really big event this week to end it.
At least we have that. Friday's non-farm payrolls report really caps off what's mostly a quiet week until then. I suppose you could point to the Broadcom Avgo earnings on Thursday after the close, but then that really just cues up a Thursday afternoon, Friday morning session that we really care about. Before then, though, Thomas, I mean, I think the juxtaposition between what you're seeing in equities versus basically everything else is drawing some interest here, in part because the news flow, if it's Russia, Ukraine, or U.S.-China trade war, Israel, Gaza, right? There's something in the news right now that's sparking certainly big shifts in commodities, which is why today, Thomas, I think we're going to focus on those atoms over bits. We're less concerned with what's happening digitally, and we're more concerned with what's happening in the tangible real world. Physical commodities are surging today. Oil was up over 5% earlier. It's come back in a bit. But the metals have sprung up, which is just delightful. Gold up over 2%, silver up over 4%, copper surging. Thomas, there was news over the weekend, of course, not just Ukraine attacking Russia, but that OPEC Plus would be giving us another big production increase, perhaps. It's a confusing weekend of headlines. But on the other side of all these headlines, before we get there, I would want to point out some of the shifts that we've seen in the GDP trackers here, Thomas. And they have perked up to say something. Oh, that's a bummer. That's not supposed to both be Atlanta Fed. One's supposed to be the New York Fed Nowcast. Why isn't that showing up the right way? Either way, take my word for it. The New York Fed Nowcast, which should be the right panel here, is 2.43%. But that pales in comparison to where the Atlanta Fed currently sits. With today's update, Thomas, second quarter GDP is tracking at 4.6%. Something seems off there, considering that the consensus forecasts still have a broad range of basically 0 to 3. But 4.6% is a completely different can of worms than talking about an economy that's potentially sputtering and leaning into a second consecutive quarter of contraction.
Yeah, definitely. It's a little surprising because we had ISM data this morning, right, for factory activity in the U.S. It remains in contraction. So definitely some convergence or divergence in the data there.
Do you think that this week's non-farm payrolls report, it's due out on Friday, do you think that's going to help clarify any of the growth situation that we currently find ourselves staring down with the tariffs on and off and snip, snap nature that they've been in? Do you think that this is a non-farm payrolls report this Friday that actually carries a lot of weight? Mm-hmm.
I think if it's good, it'll assuage a lot of the concerns. If people still have jobs, but some spending is softening and stuff, that just shows consumers are tightening their balance sheets a little bit, right? What you wouldn't want to see is, a decrease in jobs or coming way below expectations. That would probably confirm some of the fears in the economy, and I'm sure the market would have a negative reaction to it. Fed cut rate bets would go up as well, but for the wrong reason. So, Fed's Logan, I believe, was out either this morning or last night saying that policy looks like it's in a really good position for them just to wait. So there's, all the governors, the members, they're sending these signals that can continue to be what Powell has laid down, which is the wait and see game.
This is certainly catering to a wait and see game. If the Fed is going to act, they're going to act because they feel like there's recession coming. right? They're not concerned with the inflation bump. They're more concerned with the decline in real output. What decline in real output? It's actually 2.42% for the New York Fed Nowcast, now that the correct image is showing there. Thanks for your patience on that. So 2.42% and 4.6. If you want to split the baby and go somewhere in the middle, you're talking about growth that's careening towards somewhere north of 3%. That would be astounding. That would not give the Fed any reason to cut rates anytime soon. Forget June, July, maybe even no cut in September, Thomas. I mean, that's how consequential that data would be. This wouldn't provide the Fed any reason to act whatsoever. And I don't know if that's going to be I don't know if that's going to be a bad thing for markets. I think we're still very much in the mindset where if the Fed can't cut because we're not seeing recession materialize, that means we're climbing a wall of worry.
Yeah, and then the focus remains on tariffs. We've had another wild card show up over the weekend, a little back into the escalation phase. So I think that's where markets are going to keep their focus. And then, this NASDAQ level, 21,300, 21,400, it's been hard to break that all the way since the middle of May. So traders are kind of going to wait and see before we press the next leg higher.
Seasonality for June past 20 years has been basically mixed, up 55% of the time, 0.07% loss. The last 10 years, it's been a little bit better for stocks, at least from the S&P 500 standpoint, gaining around about 70% of the time, gain of north of about 1.2%. So today gets us off with a 0.17% start here. It's still an inside day. I think this is perhaps the most surprising chart. These are among the most surprising charts on our screens today. The fact that you have an S&P 500 that hasn't broken Friday's high or low despite gold surging 2.5%, silver surging 5%, oil up 3.6%. Those are the kind of moves that you'd see in commodities that one might think would dislodge equities here a bit, and they're not. So Thomas, I got to ask the question here. Are equities resilient, or are they just the kid in the back of the class who's going to get the message eventually?
I think they're resilient. I mean, we've seen these prices hold up all the way from this April rally. And we've had a couple significant down days, but nothing that's broken a technical barrier to where, this rally has really been threatened to a great degree. Of course, something like a bad jobs report could be a signal for capitulation, especially going into the weekend up here. So I don't know. I think we just continue to linger around here for a little bit. I'm not necessarily buying or selling right here. I think, the market's just sitting on its hands, so to say.
Market sitting on its hands. Volatility is sticking around pretty low levels, 17.6 IVR. We are back above the 1 week moving average, which we closed above on Friday, so not exactly losing ground here. Today, we are also likewise holding above the uptrend from the April and late May swing lows. I still think this looks like a bit of a flag up here. Maybe it's a double top carving out, but we don't have enough information to make that kind of estimation yet. And we're sitting in the middle of the range that we've been carving out since the post-US-China trade war detente announcement coming out of the weekend of the 12th. So what's the better play here right now? Do you lean long? Do you lean short? Are you directionally neutral? I think this is kind of a kill zone for traders right now. This is a great place to get chopped up. So my preference, if I'm looking at this with fresh eyes today, it's wait until the S&P gets close to 6K and see if there's a short opportunity up there, or wait to buy the dip back closer to 58.30, which consequently happens to be the swing lows that we had in October, November, January, and aligns very neatly with where our 1 month moving average is. So either get long closer to range support or sell closer to range resistance, but getting a directional bet on the board in a tight 250 point range, I just don't like either of the setups right now.
Yeah, it's not that appealing right now to take a directional move, in my opinion, either.
It begs the question, right? We had the weekend's news. If that really couldn't bring us down, then what will, perhaps, the next few days? The data flow on the earnings calendar and the macro calendar will be rather light here. An IVR of 18 is pretty low, Thomas, and we do have positive technical drift. even if we've seen stochastics and MACD pull back a bit here, you're seeing the momentum indicators cool off and digest without a corresponding correction in price. I know there are some people that call that divergence. I don't. I consider that to be a good thing. You want to see the indicators back off of their overbought readings without price losing ground. It's when you have that big V-shaped move where momentum crashes and prices go with it, you need to be concerned about, and that's just not the case here. I mean, for like the S&P 500, April, May swing low, NASDAQ is holding back above that trend line, holding closer to the top side of its range. I know it's not the sexiest trade right now, but I'm still leaning long deltas, looking for a move up into the yearly high. It feels like that's worth holding on to. Nothing has changed fundamentally or technically, but I wouldn't put that position back on today. I'd want a little bit more evidence because really you could justify simply being short against Thursday's high equally as well from this point.
Yeah, I mean, last week, the only thing I did in equities is I went long SMH, pretty much a play on the NVIDIA earnings. It gave me a little bit. I didn't get as much as I wanted, so took it off with pretty much a scratch. This week, I'm not playing equities, though. I'm going to wait, see how this jobs report does. If we broke to the upside, cleared this range, then that would change my mind. But yeah, I don't know if I'm going to buy down there at 58.30 or wherever you said. I think I'll wait.
It could be a flag. It could be a pennant. Either way, it's a neutral pattern here. The Russell continues to lag a bit, although there's something about this chart, Thomas. The fact that we're trying to break below the 1 month moving average. It's really been holding up here for the better part of the past, what we'll call it month and a half now, almost. We'll call it 5 weeks. We're not able to crack through it just quite yet. How do you feel about small caps versus mega cap tech right now, given what we've seen with rates, tariffs, volatility evolve in recent weeks?
Yeah, it's definitely lagged. It's not unexpected, in my opinion, especially with the tariffs. A lot of these companies are more susceptible to supply chains, smaller balance sheets. So the higher rates are going to work against them more. I don't know. I mean, it is resilient against that 1 month, but we're still kind of in this range between the May lows and the May highs right here. I think it's kind of the same. It's chopped up either way.
There has been a zone here, we could say, in the Russell, maybe 2000. We want to just round it off, 1985 maybe, up to 2130, we'll call it. It's about 150 points in the Russell. We're sitting at 2070 right now, which puts you in the midpoint of the trading range. We saw the low last week on the 23rd. We saw the high of that range last week on the 29th. Within 6 trading days, Thomas, we got both ends of it. So, look, we can put something directionally neutral on here in RTY. You could go out to your typical 46 days. We could look around the recent swing high, swing low, and we talk about the range being 1985 up to 2130. So if we wanted to play that, just go on the other side, by a few points, right? Get it full well and clear. You could do this. You could trade in and out of a short iron condor position that brackets the recent high low that we just saw between the 23rd and 30th of May. And that's just inside the 1 standard deviation move. So it's not like that's a totally unseemly proposition. If we wanted to go out to the 1 standard deviation move, you could get yourself something in the neighborhood of 63% probability of profit, basically a 3-to-1 risk to reward. It's not a terrible trade, but you have to understand the risk right now. We did see both ends tested last week, and they were tested last week on headlines, not on data. And the first few days of this week are all about the headlines. They're all about whatever tweets we're going to hear about this phone call between Xi and Trump, whether or not Trump chickens out because of the taco trade, or he has to show that he's not going to chicken out, right? Thanks to that intrepid reporting last week. Still so dumb, Thomas. Either way, though, I mean, this is the risk you're facing here. It's a tight range, and we've already seen both sides tested. So, yeah, you could put it on. This is just not my cup of tea.
Yeah, I think there's other places to deploy your capital than here.
Before we head off into the world of bonds and we check off a few other boxes here, I do think it's worth taking a look at some of the sector performance here today. We talk about it being an atoms over bits kind of day. Top of the heap is GDX, GDXJ. Gold miners are up 6 to 6.5% right now, depending upon where you're looking. On the other end, it's not exactly a bad mix, but you do see that discretionary is lagging. Financial sector ETF, that's lagging. Retail ETF, that's lagging. All the things at the top end, metals and mining, oil services, gas production, energy. It's a day where commodities are taking the limelight here. So for the sake of this conversation, Thomas, I do want to point to a tracking ETF that we've looked at in the past, DBC. There's a few of these that look at commodity prices and their impact, but this is a level with which, if we were to look back a little bit further in time, commodity prices at this point is probably not a place to be concerned. When we had our 2024, will the Fed be able to cut rates at all this year because prices are moving up? DBC broke out and started trading higher up into the mid-20s, just as a relative basis for understanding here. And when we get to our, May 1st, there is a 0.3% chance that the Fed hikes in 2024 by the end of the year. We had already put in the bulk of the move. This is a sharp expansion we've seen off the lows in April, but big picture, commodity prices overall are not in a place that would get the Fed to think that they need to start considering a hike. They're in a place where they would get the Fed to think we can't cut. But I hope that with today's action, we look to what's going on in commodities and bonds and everything else in a little bit here, Thomas, we're able to distinguish between an inflation scare and perhaps supply chain issues that are resulting from some headlines over the past 24 hours. There's a big differentiating factor. One is sustainable, one is not. And I don't think we should be trading for unsustainable reasons.
Yeah, definitely. I mean, and DVC is heavily weighted oil, and gold, and then the ags. But yeah, it's sending no warning signals to the Fed.
Right, and you could see for that weighting difference here, for what it's worth, DJP is more metals, less energy, and DJP here, a different commodity tracking ETF, is holding up at points where one may consider there be some concern, because we talk about the move in May last year. DJP is higher than where it was last May. So there's a lot of confounding narratives here. I think the DBC one is worthwhile because obviously we care more about energy input than the price of gold, silver, platinum, palladium in terms of broad commodity prices and their impact on the economy. But the commodity moves today are probably the most important thing happening. Equities, we'll leave them be right now. Thomas, bonds are twisting up around here today. We have that strong GDP revision for the tracker for 2Q, and we see at the long end of the curve, there's been a little bit of weakness here. In fact, twos, which were positive when I did put together that slide, they have now turned negative. So we do have a red day across the curve here. Thomas, we had some stellar auctions at the end of last week. Really, the auctions were quite good, to be clear, what we saw with the 2-year, 5-year, 7-year notes. This week, there aren't many of consequence. There's a bunch of bills. Next week, we're going to have 3s, 10s, and 30s. But what's your take here on notes and bonds? I found myself getting a little bit more optimistic last week. Today's frustrating.
Yeah, I mean, May was the first loss for the 10-year, I believe, of the year. So we've carved out this nice little uptrend that's lasted for a week and a half, 2 weeks. I think this is, I would be buying here if I wasn't already long ZN. I kind of like it falling to the 1 month moving average. You got this uptrend still in place. The yields are, they're at a point where they're reflecting the tax and spending bill, uncertainties around tariffs, but I think a lot of that's priced in now. I could see definitely yields going lower, so I'm going to stay long deltas in the ZN. I don't have a position in ZB, but I was looking at taking one this week perhaps. So we have a little bit of work to do to keep this uptrend in place, get back on track. But yeah, this is for me, this would be a buying opportunity.
June itself has not been a good month for the notes here, which we have up on the screen in the ZNU5 contract. Over the past 10 years, we've seen a loss of 0.05%, which smallest losing month of the year. Okay, so it's not exactly deeply red. The worst month of the year for bonds tends to be October over the past decade, or rather for notes over the past decade is October, down 1.06%. And literally, you have not seen a green October over the past decade. All right, for June, June is only green 30% of the time over the past decade. Over the past 20 years, it's only been green 25% of the time. Right, so things have been a little bit better recently, but not substantially. And the 20-year average for notes is minus 0.38% in the month of June. So this is not exactly the friendly time of year when we start to look into the longer end of the curve. And you could say something very similar here. Obviously, when you look over to Z, that's just B. We want ZB. When we take a look at ZB, Thomas, we talk about a similar setup, if perhaps marginally better. ZB on the 10-year basis is up by 0.65%, but 50% of the time it's a coin flip. On the 20-year basis, it's up 0.37% of the time, but again, only 50% of the time it's a coin flip. This is not exactly the warm part of the year for bonds is the point. Like, this is not the point of the year where you're really bulled up at the long end of the curve. Today, we're starting off with that here. And if only to go on with something else one more time. At the end of last week, we were talking about the scenario where ZB looks like it could be a potential bullish falling wedge. And we started to see some acceleration outside of that wedge with two bullish engulfing bars in back-to-back, right? 2 of the 3 sessions. That brought us up into the 1-month moving average, where Friday we were pinned with a doji candle on the daily time frame. Today, we're seeing rejection there. Thomas, if we want to shift our focus point here, or our field of attention, over to the most recent 3 candlestick pattern, we can forget the bottoming nature of the engulfing bars. I think we need to focus on the fact that this is looking like an evening star candlestick pattern after we reject our 1-month moving average, which already has a negative slope. This feels like the bond market is trying to give us a signal that short-term, the path of least resistance could be to the downside the next few days. It doesn't mean that the bottom is dead. It just means that it's not going to break out anytime soon.
Yeah, and sometimes with these triangle breakouts, sometimes you do see them break resistance and then come back and retest that resistance. Sometimes it turns to support. Sometimes you get failed breakout, and you continue moving lower. So we'll see how it plays out the next couple days.
When you think of the long end of the curve right now, what are your feelings on ZN versus ZB? Or you talk about if we're going to get a bounce. This is a bounce. This is the back test of that descending trend line. This is the retest of the uptrend off the lows from May 22nd, May 29th. So if we're going to find support, now would be a great time.
Yeah, it's got to be here. I like ZN a little bit better for a long. I don't know if the jobs report, if the jobs report does impact anything. I mean, if it shifts rate cut bets a lot, that's going to be ZN. If it's more traders see it as a sign of inflation growth, then, ZB might. I don't really know what's going to happen. I mean, the expectations are, where are they at the last time you've seen them?
For non-farm payrolls this week?
Yeah. For that,
yeah, it was around 130K.
140. Okay.
Yeah, maybe they've been revised up a little bit here. Let me just check the next 7 days. Yeah, I see on our calendar still 130K. And unemployment rate at 4.2%. The break-even rate for jobs growth right now is about 112,000 to keep the unemployment rate on hold. So this is a good report. It's not great. It's nothing to write home about, but 130K wouldn't be terrible.
Yeah, I mean, not bad.
Not recession.
I don't know. I mean, yeah, this downtrend or this uptrend is threatened right now a bit. I'll wait the next few days before taking his position ZB probably, but I'm going to hold on to my ZN long.
Feels like decision time is coming up. I had been leading directionally neutral in ZN. I did not want to put on a position on Friday. Friday was my roll day. Took it off the board, right? Do I want to put back on the position on a Friday? No. So the question is it worth putting that back on today? We go out to 53 days. We look around the yearly high low, and the low comes in at 108, and the highs are a little bit pushed higher at 114, so I don't think we need to go that high. But if we were to do a short iron condor around here, you could still size up something in the neighborhood of a 57% probability of profit, close enough to these levels, Thomas, where if you're just trading around the yearly high-low, you can find something to work with. I don't find this particular trade that appealing right now, given the technical turn. It looks like there could be a draft to the downside. And so putting something on directionally neutral when it looks like something directionally negative could be around the corner is not exactly what I like to do here. So I prefer to see how ZN and ZB round out today's session. This is not the price action one would want to see if we're expecting further moderation. Of course, the growth stuff, that's great. Higher growth expectations at the long end of the curve, that makes complete sense. But I think another day of waiting is worth it. It's taken off Friday. Plan to put it back on today, assuming we continue along our current course. We have not. So worth reassessing while we have the chips on the sideline.
Yeah, I agree. I think waiting on Iron Condor is probably the best thing right now.
The volatility's there, though. It's a 30.6 IVR, Thomas. It's a little bit richer than what you're seeing in equity markets right now. The equity index is obviously in the teens once more. So when you have that kind of low volatility in stocks, and even among individual equity names, you've seen names like NVIDIA, Apple, Tesla all come back in dramatically, right? It begs your attention elsewhere. Whereas for April, like, why would you trade anything other than stocks if you're going to sell vol? Vol's to the roof. Let's go to the fun part of the show, Thomas. Metals. Gold. Up to 33.97 right now. That's a 2.46% rally today. The riding the rails of that 1 month moving average recently was perhaps the tell as we swing up to a new relative high. We clear out the high that we established both last week and the week before. We're also breaking the downtrend here from the April and May swing highs. It's a 45.5 IVR, and unlike the declines in volatility that we had been tracking over the past week, today we see that volatility is perking up. We go from a low IVR of 32.8 on Friday to a high of 45.7 today. So volatility is expanding as price is breaking out. Thomas, that is exactly what the doctor ordered. Why do anything other than lean long gold still?
Yeah, I don't know. I'm still in my gold long haul. I know I said I think I mentioned on the show that I was going to get out. I never did. And today's completely turned around the trade for me. So I'm long the 3,400, 3,410 for the June 25. I'll probably roll it at this point soon to stay in my long position.
I like that very much. It looks like a flag or some sort of triangles forming here. But triangles after uptrends tend to be bullish continuation patterns. So if we look at the recent move off the lows, this looks like a triangle that's getting ready to break out. And consistent with what Ilya and I discussed on Friday, Thomas, we were discussing how when you see technical patterns, you usually get the breakout move in for a triangle in the final third of the consolidation. And if you don't start to break out in that final third, which is really where we are right now, you're not looking for a move into the vertex. It means that the interpretation is wrong, that they're just lines drawn on your screen. That's not exactly the formation that we're watching. Misidentified, if you will. But we're starting to break out today. Ilya and I did say on Friday that if this really is the correct interpretation, we have to break out this week. So this is all lining up very neatly. This is actually working out quite well. I'm going to keep my gold longs on here. I'm going to keep rolling them up. I'm looking for a move into 35. I think that is eminently feasible here this week, and I'll keep rolling thereafter. Copper, likewise, having a big day, Thomas, and this is a little bit more in the supply-demand wheelhouse. What's in the news over the weekend that's driving copper up 3.85%, which is off of its highs, to be fair?
Yeah, it's a little weird. I mean, the steel and the steel and aluminum tariffs were, put back on or doubled or whatever it is. So that brings some fear into the hard metals space, the industrial metals. Even though they're not directly impacted, the fears are coming back over that. And China had a weak report for a PMI reading for factory activity over the weekend. So, that's not fundamentally what you would expect to see with such a large copper consumer. coming. But again, or, the selling here around 4.9, all the way going back to late April, you saw that 4.9 to 5, the sellers came in. Same thing in May when we got at 4.9, sellers came in. And now we see it in the candle here too. We went above 4.9 this morning, sold it off. We're still positive on the day. It's a good up move, but it's not that convincing for me to buy just yet. So I'm not going to get long copper here. If anything, I'd probably get short. I don't know if I'm going to actually take that trade, but I think going back down into this 4.6, 4.7 range that we were trading in for the past 4 or 5 weeks, I think might happen. I think today is a one-off, headline-driven event. Some tariff fears coming in, but a weaker dollar helping as well. I'm not that convinced by this move.
In fairness, this is something that I've been hoping that would happen. My metal strategy has basically been long calls and gold, silver, short puts, and copper. So getting this to move to the upside today is welcomed, particularly at 23 days to expiration. Thomas, what you just said piques my interest because you said this is a rally that may not last. So at 23 days to expiration, do I really want to keep on a trade here that I'm 2 days from expiration, 2 days from my roll window, actually not expiration, 2 days from my roll window. And this is a market that is being whipped around by headlines out of the blue. This is the exact kind of environment where if I want to keep this position on, I should just get myself more time. There's no reason to be staring down the other side of the decay curve with a winning position in hand and let it go to waste. So let's just close this guy out here. It's a quick profit. Not quick. It's been 3 weeks we've been in here, but it's been working out. And if there is a pullback, like you say, I would be very willing to sell puts again in copper. The steel and aluminum tariffs draw into question the supply-demand dynamics that we've covered here, Thomas. You and I have done this extensively, actually, together, talking about the differences between copper and wheat and how they have both reacted to some of these tariff news. The United States just does not produce enough copper. We produce about 800,000 tons less than we consume. So if we're going to put tariffs on these things, we're jacking up the price without actually addressing the supply problem that we run into here domestically. We're actually making it more expensive for people to get their hands on copper. So good for the copper producers, right? But if you consume copper in any form or fashion, like you make cars, or say you do something more quaint, like building homes for people to live in, right? They got to have pipes. Well, the copper price just went through the roof. So now the input for building all those things just went up substantially. That's what the aluminum and steel tariffs actually do, because we have a lot more people, we have a lot more workers in this country that consume aluminum, steel, copper, yada, yada, as inputs into their final product. If it's building roads, bridges, tunnels, then we actually produce otherwise. So today, the tariff news obviously in play, wanting to get this off the books. This trade's worked out. We're 23 DTE. We're not going to wait till 21. We just got to pop into 5 or so, just short of that. It's been the top side of the trading range over the past 5 weeks. It's a good place to take off the short put spread. And if we dig back down to 4.6 or so, Thomas, it's been a reasonable floor with which to operate around. I'd prefer the risk to reward of selling a put down there, given the volatility profile, which, to get off my pedestal here now, you can look over to something like CEPR, 57.4. This is still juiced. So the trade's still there. We just have to find the proper entry point for it.
Yeah.
I do want to talk about silver today. We finally have a move through that big, bold red line, Thomas. It's been an area, for those that haven't been watching recently, let's just review what's been going on in silver, say, back to December. You've seen some sort of technical pattern form up against this region right around 33.5, 34, like clockwork. You get the key reversal here on the 12th. We've seen numerous morning star candlestick clusters or evening star candlestick clusters pressed right up against that band, 33.5 to 34. Just this year alone. We've struggled against it recently. Today, with our 5% gain, we have officially and formally popped through. This looks like it wants to go back to 35 plus. If we're thinking about the SIN5 contract, that means a move up into 36. at least. So maybe another $1.40 from here, which crazy to say considering we moved to $1.40 today. But Taz, I've been a long-term bull on silver. This is a chart that's finally coming together. If people haven't been pressing the longs, this is the time to do it. And I suppose last week was the tell. We talked about the IVRs dipping into the single digits in the teens, and price wasn't necessarily breaking down. Maybe it was a good chance to reload on the long side. I hope that people took advantage of that because I did not in the manner that I wanted to. Of course, the hindsight's 2020. I always don't own enough copper, gold, or silver when they're going up, and I always feel like I own too much when they're going down. So I don't suppose that's really insightful here. But silver is breaking out. Copper's breaking out. Gold's breaking out. They're doing what they should be doing, given my worldview at least, Thomas. I'm not sure about how they're doing according to yours, but I think it all makes sense.
Yeah, I mean, we've been waiting for silver to break out for quite a while with this high gold silver ratio we've had going all the way back to early April when the tariffs were really coming into play in the market. You had gold takeoff, you had silver lag. So for the gold silver ratio, we're breaking down now to the lowest. We've broken the floor from late April, and we're heading back into these early April levels when we first broke out in this gold silver ratio. So I think this trade could finally be in play right now where you're going to see this gold silver ratio break down a little bit. Not that I'm not bullish on gold with my position right now, but that's something that's potentially in play right here.
It is the start of June, so it's worth touching on some of the seasonality as well while we're here. Gold for the month of June, it's not a great month, down by 0.43%. It's only up 40% of the time. In terms of where it sits along the pecking order and totem pole, June has been the worst month for gold over the past 2 decades. It's also been the worst month of the year for silver over the past 2 decades, losing 2.46% on average, down 70% of the time. In fact, July is the month over the past 2 decades that produces the most consistent losses for silver. The next highest month is November that produces losses 60% of the time. So silver it's not a great month for gold or silver. That is something that gives me hesitation here, Thomas, despite the fact that I am leaning long in this bunch. It tells me that if we do see an extended rally here at the start of the month, it might be worth clipping those gains early, because if this market does kick back into its normal cadence of things, one headline, one bit of good news, one piece of understanding between the US and China that gets the trade negotiations back on track, right? And Trump doesn't chicken out, but he still gets a victory. Somewhere that you thought gold's going to pull back. Silver's going to pull back. We've seen this time and again over the past few weeks. So the seasonality is worth keeping in the back of our mind. The longs are working really well today. June is a garbage month for precious metals, and you need to just take that into consideration.
Yeah, didn't know that.
Worst month of the year. Worst month of the year. I think that we should turn our attention to energy, which commodities today, atoms over bits. Crude oil up 3.34%. Natural gas up nearly 7% still. Oil is off of its highs for the day. It was up closer to 5% earlier, and it was cutting into the top side of the range, close to 63, 64, which has been so instrumental here in recent weeks. Surprising headline over the weekend that maybe we're going to see OPEC Plus bump up their production again, Thomas. The last time we had a headline like that coming out of a weekend was here, May 5th. The market tanked, recovered. We put in that Morningstar candlestick bottoming pattern and ultimately continue our rally. Today gives us no such negative reaction out of the gate. And yet we do have that similar type of 3 candlestick bottoming pattern in play. What happened with oil and natural gas today? Is this Russia-Ukraine related? I'm sure you saw the headlines over the weekend and some of the pictures of the drone strikes.
Yeah, I think that's part of it. You had OPEC say another 411,000 barrels for July. They came out with that decision. I think the market, we could have gotten more than that. And the market seeing that it's a number that was expected for additional supply is also helping here. Of course, increased tensions between Russia and Ukraine definitely plays into the geopolitical risk premium for oil. Now you have Russia saying, and they've done this before where they said that they're going to be more inclined to use nuclear weapons now. But still, that's a headline that generates a lot of fear, right? Nuclear weapons usage. Another reason why we're seeing wheat make the move it had today. But definitely there. However, on these geopolitical events where oil perks up really quickly, you do get some appetite to sell it off quickly as well, especially as the headlines fade a little bit. If there's not immediate follow-up escalation by Russia, and I'm sure there'll be something, but I don't know. I have an iron condor on in crude oil. I'm going to keep it. The top's at 63.5, 64. So, I'm pretty close to closing this trade out here. It only has 14 days left, so I've been looking to get out. So the next little down move I get, I'll probably take it off for a little more profit. I could see us staying in this range, though. I don't really see, until these trade negotiations come off to a big degree. Once they do, maybe 70s in the picture again, especially with where the economy is heading with these GDP trackers and things like that. Another one's going to be the jobs report. If the jobs report is strong, some support for oil. If it's not, a little bit of selling.
I'm thinking about that Russia and Ukraine. I mean, people should look this up. It was obviously a remarkable set of attacks over the weekend. Apparently, 34% of Russia's long-range missile carriers were destroyed, including a whole bunch of the Tu-95 aircraft, which, for those among us who played too many video games growing up, we know that those aren't in production anymore. So it's not nothing. And then you have that headline today coming out of the UK that Keir Starmer, the British PM, says that the UK must be ready for war and announced a whole new slate of defense spending. It's a nice little bit of headlines there that they play off of each other. Maybe there's some geopolitical risk coming back into play, although the volatility certainly doesn't speak to it. IVR today at the low end, 43.44. At the low end on Friday, it was 48. So vol continues to compress despite this move to the upside. I still have my directionally neutral things in here. I'm looking for this pre-Liberation Day, post-Liberation Day range to hold. I don't see it not holding, even with today's news. Maybe World War III gets it going, Thomas, but, you only die once, so you always have to fade the World War III headlines. Natural gas here is up 7% now. You and I and Jamal perhaps have been watching this. It's on our watch list. Do you have a better sense here? Because it feels like we've been watching this for 2 weeks and it continues to coil and congest.
Yeah, I mean, I'm always watching natural gas. Last week I said I was going to sell the put spread when prices got down near 3.4. I did that. I sold the 56 days out, sold the 3.3, bought the 3.25. So, that position's working out for me. I think it was time. Bears did a lot of work last week, and we were near that, 3.4 support level that we've had for a while, down, under 3.4, but it was a comfortable time to buy it. That said, we're coming that upper trend line you got drawn on there, that's resistance. If we break out over that, we really need some warmer weather moving into the U.S., getting that cooling demand up. But at the same time, I got a call spread I've sold in a shorter dated contract, the end contract. It's all the way up at 4.25, 4.35. So I got plenty of room there. So I'm not taking it off yet, just on this 1 day pop. But I could see us being on the upside for just a little longer. If the weather improves, maybe we'll make some more ground. But at this point, if I didn't have a position, I'm not sure I would take one. But the ones I have on right now, I'm going to keep them on. I'm pretty comfortable with them.
Speaking of the weather, I was very upset last night that it was overcast because apparently you could see the aurora borealis out the window. And tonight you'll be able to do that again. So it's a clear sky. Yeah, if it's a clear sky, look up. And you got to, the time lapse on your phone, the iPhone can do this. At least mine can. It's a 15. Just set up the time lapse and walk away and come back like 30 seconds later, and there it's all there. It's pretty wild. Thomas, the dollar today. There kind of was a sell America hue to all of this morning. We talk about sell America, buy America being a thematic on-off switch. The dollar's up. You have gold down, but you also have stocks and bonds up. Vice versa, it would be dollar down, stocks down, bonds down, gold up. That's kind of what we see today, at least for most of the session. We've seen stocks meander back into positive territory, but bonds are now down across the curve. Gold's up. And the beloved US dollar is down versus everything except for now the Canadian dollar. Thomas, yields are higher and the US dollar is losing ground against the Japanese yen. That's a universe that makes no sense to me as someone who's come from the spot FX world, which I should say perhaps a hook. We have spot FX available on the platform now. We're going to talk a lot more about that in a little bit. But coming from the spot FX world, with foreign currency being my background, the interest rate differentials here should be supportive of the dollar. Is this a warning sign for risk appetite?
Yeah, I mean, this happens every once in a while, right? Where you get that divergence. I don't know. I think it's mainly being driven on the geopolitical events. You know, you got some safe flight going into the yen, things like that. But at the same time, it's hard to make sense of this move. I mean, I don't mind it because I'm long non-US dollars, long the yen, long the Australian dollar, long the Canadian dollar too, although that's not giving us anything today. I wanted to be long the euro last week. I think that this is good for the euro when there's these major escalations right now because a lot of parliamentaries and, you know, legislatures in Europe are currently trying to move through defense spending packages. So when something like this happens, that gives them a lot more ammo, political capital to move their bills forward and get more defense spending in the euro. Because they could say, look, what's happening right now, we need to increase defense spending now, sooner rather than later. So, yeah, I'm with you, though. This move is not making too much sense at face value.
In terms of seasonality, I mean, the dollar itself broadly, DXY, coin flip for July, higher by 0.09%, 50% of the time over the past decade. 0.04% lower, only higher 40% of the time over the past 20 years. So it's been better recently. June, July tend not to be good for the greenback. For the Japanese yen itself, we could talk about this 6J. For example, 6J typically loses a little bit of ground in June, off by 0.15%, only higher 35% of the time. Whereas the euro tends to be the big driver of the gains. The euro's up 0.38%, 65% of the time. So I suppose it's a good month to pick and choose your fighter if you're going to take on that dollar negative point of view, Thomas. The euro has done its legwork here recently. It put in that bullish engulfing bar the other day on Thursday when we tried to break below the uptrend from the February and May swing lows. That bullish engulfing bar did come in right up against that 1 month moving average. And we now find continuation up to the highest levels that we've seen since the end of April here. So a euro north of 113, a DXY that's sitting below 100 again, just can't get any traction above that swing area where we had the September lows carved out. This close down here today, Thomas, would be the second lowest close of the year for the US dollar. I tend to think of FX market as a canary in the coal mine. It's a $7 trillion a day turnover. Things just don't happen here. It takes a lot to move the needle. So the fact that the dollar is still hanging on to all of this weakness is one of the concerning things about what's happening with stocks. Makes me feel good about what's going on with gold and silver, but makes me leery about stocks resiliency here and makes me think they're just unfortunately, equities are once again the slow kid in class.
Yeah, I mean, the FX markets are quick to move on any headlines. And when they do, it's, you know, usually significant. So, yeah, equities and the dollar down, I don't know. It'll be interesting to see if we keep going lower. If we test this April low, that's going to be really interesting because if we break below that, it's probably going to be more further pain.
Central bank meetings are in focus this week. We talk so much about U.S. economic data, but on Wednesday, we're going to have the Bank of Canada rate decision. They are expected to keep rates on hold. The Canadian dollar did hit a fresh yearly high today. On Thursday, we're going to have the ECB rate decision. They are expected to cut rates, but it could be the last cut that we see in their cycle. And the fact that, you can get one of those situations that throws new traders for a loop, Thomas. The central bank cut rates, but the currency rallied. That's not what my textbook says. Well, the rate cut is priced in, and we're more concerned with what happens in the future. And the future looks like we may not get any more. So at least in the short term here, a BOC is probably going to be a little bit more concerned given the state of Canadian economic data and their dependency on the U.S. as a trade partner. Whereas the ECB is seeing all of the stimulus come down the pipeline from Germany. Even France is trying to do things. And that in and of itself perhaps nips in the bud this decline in inflation that they've seen over the past several months.
Yeah, I mean, I guess we should have brought that up, Canada, during when we were talking about oil, but they got a lot. I think up to 10% of oil production in Canada is shut in right now with these wildfires threatening facilities up there.
Yeah, the Canadian wildfires are bad. We've actually been getting smoke down here in the U.S. And I guess like Minnesota, Illinois, northern New York, right?
Yeah,
so it's
hazy here.
It's so eerie. I notice it too because when the sun comes in through the windows on the wildfire days, right, it has a real orange glow to it, like real eerie.
It's like 2 years ago, I think it happened really bad, but makes for good sunsets.
It does. And my house is on a hill. So when we get sun, we get the whole horizon. It's really nice. Thomas, we're winding up a little bit early here today. This is a week, of course, we talk about the central banks. We talk about Broadcom non-farm payrolls. Is there anything else on the horizon related to, say, like a WASDE report that we should be paying attention to here?
I think the WASDE report is next week. It's usually around the June 12th or 13th, usually around there in the second week. So I don't know, my focus is really on the NFP data. Otherwise, like you said, it's kind of on the lighter side.
It's kind of on the lighter side. We'll talk grains next week with you, Thomas, as we prep for that WASDE report. The WASDE report does come out on June 12th, so that's Thursday. You'll be back Wednesday the 4th and Wednesday the 11th, so we'll have plenty of time to prepare for it. I know you've had some interesting things going on in the soft ag as well, so worth discussing as the volatility there is, again, higher than it is in your equity markets on a relative basis. Calendar for tomorrow. Euro definitely in focus. Why? Inflation. ECB meeting Thursday. So this is a great precursor to that central bank meeting. Of course, we have JOLTS report in the morning as well here in the U.S. Job openings, layoffs, turnovers. That has been a market mover. Normalization, yeah. Pre-COVID, the amount of job openings typically seen in the country was closer to 5.5 million. At the high end, so we're still at 7.1. This could be one of those factors that's slowing down in the labor market, right? Companies, they're not firing people yet, but they're taking the job listings down off the board. JOLTS actually carries a good amount of weight for tomorrow. And then more Fed speeches, but Fed speeches these days just, quite frankly, don't matter unless they are Jerome Powell. Thomas, I'll give you the final closing word here on Futures Power Hour this Monday. Baba Booey? Okay. For Thomas Westwater, I've been Chris Vecchio. We'll see everyone later on tomorrow. Later on today, I'll be back with Overtime. Maybe Thomas is there. Good luck trading. Up next, Dr. Jim from Theory to Practice.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday Uncle Jay edition of what it is that we were trying to do. Guys, I don't know how we did it, but somehow we survived a very random, off the beaten path Uncle Jay commentary just about 1 hour ago. I didn't even know it was on the schedule until about 2 hours ago. And so we are thankfully here. We thankfully survived, although maybe this is Lost Season 5. Maybe this is Lost Season 6. I'm not really sure. Hopefully we can find out at some point here in the near future. But thank you guys for being here, and thank you for being a part of what it is that we do, because we couldn't do what we do, whether it is Lost Season 3 or Lost Season 6, which is a big difference. We couldn't do it without you. So thank you guys so much. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube, because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. You can celebrate if you're a bull or a bear. You can commiserate if you're a bull or a bear. Everybody is a winner here today on Monday, June 2nd, 2025. And of course, if you have any questions for me, drop them in the chat box and I will try to get to as many as I can right around the second half of the show. And oh, by the way, John, I don't know if you have the art card ready. I'm kind of dropping this on you kind of out of the blue. But coming up in about 5 weeks, we've got the Options Crash Course live in Boston, July 13th. So 5, maybe 6 weeks away now. July 13th, we're going to be in Boston for the Options Crash Course live. I cannot wait. It's going to be so much fun. And so I really hope you can make it out there. Like if you live nearby, so like Boston, New York, like Rhode Island, like Delaware, right? Like Vermont, or like maybe like, you know, like Eastern Pennsylvania, like Western Pennsylvania, like Eastern Chicago is probably close enough. Boston, July 13th, man, it's going to be so much fun. I cannot wait. And hopefully we'll learn a couple things. We might even get to learn a couple of things in the time that we spend together on July 13th. So you can register today right there at tastylive.com/events. It's totally free. It's going to be super fun, and I cannot wait. Options Crash Course live. So if you are a new trader, this is perfect for you. If you're an intermediate trader, this is perfect for you. And if you are an advanced trader, man, this couldn't be more perfect for you. So July 13th, Boston. Hopefully I will see you guys there. So all right, John, go ahead and bring us here into the market. Let's see if we have a market. Yeah, we still got a little something that's cooking there on the back burner. Got EMA S&Ps up 6 1/4. You got the risk-free instrument, also known as the NASDAQ futures, which is extremely high risk, extraordinarily high risk product, up 71 on the day. Got the boomers, a little bit of a slow start to the week, down 120. And then you've got the Russell 2000 futures index down a couple of points, down to 2065. And so you got bonds down a little bit. You got notes down a little bit. You got oils up a couple bucks. You got UB40s down. You got gold. Man, look at the shifties, man. Look at these shifties. Gold up 81 today. Wow. Now that is a move if I've ever seen one. So gold looking good indeed. Got silver, got the Hunt brothers, got silver up. Wow, look at silver. Silver up 5%. So gold, that's a good little move, up 2.5%. But look at silver on the old catch-up trade, up 5%. And so, man, I really thought the Hunt brothers mailed it in since they started slanging pizza slices with their little pizza shops. But, man, no, not yet. Not quite yet. Got silver up to 34.69. Wow, that's pretty high. If we look at the man, what was the high on silver? Like the last – hold on a second. Let me look at a daily chart for silver. Let's go back like – they got over 35, right? I think. Let's go back like a year on silver. Yeah, we might have to do the let's see here. If I go to silver, how do I do? Is it dollar sign? How do you guys were getting on to me about the continuous contracts. I don't look at these too often, obviously. Is it dollar sign SI? Is it dollar sign / SI? Is it dollar sign ampersand exclamation point SI? Oh, I did. Wow, I figured it out. Man, look at you guys. So I got to thank you guys for this because you guys, I tried to look at Russell, I think, last week, and you guys were like in the chat, like hammering me, just peppering me. And of course, I didn't see it because I only get to like 2 or 3 comments per show. But I saw it after the show. I will frequently scan the comments after the show because you guys always make me laugh. Like I'm coming at you guys with B- humor. Man, you're coming back at me with like a solid B. Like you guys are upticking me all day, and it always makes me laugh after the show. So I appreciate you guys. So if you put something in the chat and I don't get to it during the show, there's still a good chance I will look at it after the show because it always kind of makes me laugh. But you guys were helping me out with the continuous contracts. So it's $/ Okay, so that's all good to go. Look at silver. So this is wow. Look at silver. This is nuts, man. So if we go back to hold on a second. If we go back to October of last year. So silver got up to just over 35, right? So we just peaked down over 35, right? Then we just hunted all the stops that were up here for all my ICT fans out there, right? Took out all these stops that were right up there and then boom, just sent them lower, right? For the, for the algorithm, for the market maker model, for all the things, right? You got fair value gaps, inverted fair value gaps. They're all there, right? Obviously, it's so obvious. It's so easy. Like why are we even doing what we do? It's just so obvious. Anyway. They took them back up to over 35. This was in April now. So now we're, fast forward to April. So 6 months later. So, wow, they hit a high of 35.50. Man, that's pretty high. And so, wow. So now they're making a move again. They're breaking out for all the breakout bros that are trading these markets. This is the move you've been waiting for, right? This is what you train for. This is why you do all those extra sets of squats and lunges and glute ham raises when you don't want to do them. You're doing them for this. You're doing them so you can buy them right here, only to have to sit through silver going all the way down there. So silver up to 34. I don't know what's going to happen. Neither does anyone else. But silver up to 34.70, on its way to 35. The metals bros are happy. The Peter Shifties out there are happy. And so there you go. So, all right. So volatility is not really doing very much today. Volatility down 7 cents on the futures. Volatility spot is up actually a little bit, up 29 cents. And so not too much going on. The market was a little bit more active this morning. It has since kind of quieted down. And so I don't know what's going to happen later on. But we got a pretty busy week, right? Because, obviously at Uncle Jay today, which somehow we survived. By the skin of our teeth, we are here. Friday, I'm pretty confident. I'm about an 85 delta that it's this Friday. So this Friday at 8:30 a.m., there's a non-farm payrolls print. And guys, let me tell you something about this NFP print. Man, I've been looking at numbers for it's over 20 years now. Like I've been studying economic data. Like I've been studying the economic prints that the market has to deal with. I've never seen one that's more impactful, that's potentially more catastrophic than the NFP print that is coming down the chutes on Friday morning at 8:30 a.m. So you still have 4 days. You have 3.5 days left to get all of your affairs in order. Like I would get all the wills set. I would get your plot picked out. Like get all that stuff set and ready to go because you're not going to want to be trying to figure that out at 8:31 on Friday morning when the apocalypse does indeed arrive. So that's coming on Friday. And then I think before that we've got jolts, we've got durable goods, we've got a whole bunch of rigmarole. That's all made up anyway. But all right, let's go. Let's get into. There's your market commentary. That's not really going to help you, but it's on par. It's on par with what you would find, anywhere else. And so, man, I see you guys though in the chat. Look at you guys. Stefan's in the house, Ross in the house, Little Peanuts in the house, Emmett Morrison, Sam L's in the house. Man, I'm going to get to as many of you guys as I can. Rob Banks, Sergio in the house. Man, look at down 721 in the house. Man, let's get to all right, let's take a look at a few things that are going on here in the portfolio. So number one, we've got so we've got our oil strangle. I'll just kind of go top down and see how far that gets us, and then we'll get to about the halfway mark, and then I'll see where you guys are at. They're in the middle. So we've got our MCL strangle, which is it's doing pretty good, man. I mean, it's just kind of we just got it on a little low simmer on the back burner there, and that's all you really need. I mean, that's kind of what you're shooting for when it comes to selling strangles. 8 at 45, out at 21. I mean, we're not selling Tom Sosnoff 0 DT strangles. Like that's crazy, man. Like I know Happy Gilmore 2 is about to be out in like a month or two, but we're not quite into the Shooter McGavin status like a Tom Sosnoff, back at work by 11 type of deal is. So we're gonna stick to the tried and true, the kind of Betty Crocker approach, in at 45, out at around 21. So MCL, we're up about 40 cents on the trade, which again, 40 cents in the options world is $40 in the actual world. So that's not too bad. We'll sit tight now because there's no reason to get out of the trade. I mean, it's working really well. We're taking absolutely no heat on either side. I mean, you can see right here that my strikes, let me even mix up the colors here. We'll get the Diet Strawberry in the rotation. You've got the 54 put, and then you've got the 67 call. And so you've got the stock at 61. I mean, we couldn't really, we couldn't pick a better price. Maybe like a titch lower, but it's fine. Like it's totally fine. Got plenty of room on both sides. And so we sit tight, we let it cook, and then we can revisit this guy at a later point in time. So that is MCL. Now, MES, we have a little bit of a different situation going on. So MES, if you look at our strangle here, we're inside of 21 days to go. And Tom is actually back in the studio today. I know he took Friday off and he was just gallivanting around, the Mid-South there. But he's actually back today. And so we should probably keep it at least a little bit buttoned up. We're 17 days to go, so we're inside of 21. So we're breaking rules. We're bending rules. We're doing all kinds of crazy stuff. But I think here, if you look at our strikes, 5,400, 5,500, those are the strikes. Now, we've already adjusted this guy one time, and we've had this strangle on for a while. We had it on through all the tariff craziness and, all the really, really wild stuff in early April and things like that. So we ended up rolling the call down. Had we stuck with the original strikes, we would have been a really, really good spot, and this would probably have been a winning trade, I think, at some point over its life. But right now, we're 5,400 put, 5,500 call. I don't really want to roll the put up and either into a straddle or even go inverted. Because, and this is just my own personal rule. I mean, take it or leave it, right? I will not take it personally if you leave it, although, of course, you will be blocked from the YouTube chat. 5,400 put, 5,500 call. We've already been testing on the upside. We have already been testing on the downside. We rolled the call down. We did that. It was maybe a month ago or so. Now we're testing on the upside, obviously. Personally, when you start, like when what was once the untested side becomes the tested side and vice versa, I don't typically like to just chase my tail all over the place. I don't typically like to just, start rolling bull strikes to where, again, they're kind of wearing different hats. This is just my own personal philosophy. Again, take it for what it's worth. I don't have any hard stats to back it up. I don't have a market measures I can give you. I don't have an options jive on hand that I can point you to. But I just feel like a lot of times you end up just chasing your tail just all over the map. And I don't really want to do that. And so when I'm looking at this situation, I'm basically, thinking we're left with two options. Number one, we could just sit tight and do nothing, which is what we've been doing for a while now, which is fine. But number two is we could close the trade. We could just be done with the trade. Because, again, we're getting inside of 21 days to go. We're at 17 days to go. Is there a big difference between 21 and 17? Not really. Is there a big difference between 21 and 14? Not really. Not according to the decay curves and kind of, how the gamma actually changes, ceteris paribus, across those 7 days from 21 to 14. But still, when I'm looking at the situation and taking into account the simple fact that, you have MES. I mean, look at this thing, man. Let's get our Miami Dolphins teal in the mix. Go Dolphins. They're probably going to win the AFC East this year and have the number one seed for the playoffs, which they will need because if the temperature drops below 75, they can't play. They just can't do it. They can't throw. They can't catch. Can't tackle. Right. And so that would be a very good thing for all of my Miami Dolphin brethren that are watching the show today. So MES is at 59.19. So let's just call it 5,900 just to make it easy. We have a 5,500 call. Right. So I have a 5,500 call and you've got the stock at 5,900. I know it's a little higher than that, but it doesn't matter. This guy is 400. Let's grab another color just to get a little crazy today. This guy is 400 points. Well, that's an S. This guy is 400 points in the money. It is 400 points in the money. And yet we are actually only down, 160 points on the trade? I mean, don't get me wrong. It's not amazing. Like, don't get me wrong. I mean, this is not a victory lap. I mean, I'm kind of turning it into a victory lap, as only Dr. Jim can do. But when I look at this situation, no one takes a losing trade and turns it into a victory lap better than me. I can't do many things in the markets. I'm not a great trader, right? I'm probably very mediocre with my analysis. But man, I can take a losing trade and I can make us feel good about it in about 4 minutes. And I'm doing that right now. When I look at this MES strangle with 400 points in the money, to only be down 160 points, I'm like, that's not too bad. Like, that's not too bad at all. So I'm like, man, I don't know. I kind of think we just close this trade. Like, we've really benefited from the volatility contraction. I mean, the reason you might be wondering, how is that even possible? You might be wondering, Jim, I mean, walk us through how this even happens. Well, the big driver here is obviously not the delta impact, because the delta impact is what would be causing us to get hurt by, essentially 400 points. I mean, the big driver here is the fact that earlier when we put this strangle on, originally, volatility was much higher, much, much higher. And so now the volatility has come down so much that has really helped our position and helped to soften the blow against that delta impact. And of course, we've rolled this. We have rolled the untested side. We've rolled it out in time. So kind of extending the duration and picking up extrinsic value that way has been extremely helpful, right? It's been, extremely beneficial. And so for us here, I think just closing the trade is the way to do it, man. I really think that we just close the trade and, that's going to be that. And we call it a day. So I think right here, we're going to have to pour one out for this MES trade. But, there's more natty light ice where that came from. That's all I can say when it comes to that. So let's go ahead and let's close the trade. Let's see. Yeah, 439. Yeah, that's probably fine. We'll probably get filled. Oh, we're not getting filled. All right. So you got a little difficulty in the MES pits. MES is usually pretty liquid. ES is more liquid. ES is very, very liquid. MES, you're going to give up a little bit with the liquidity, but usually not too bad. MNQ is quite craptacular, which we've talked about many, many times before on the show. But for those of you that might be trading futures options, which I think gives you an amazing strategic alternative when it comes to buying power efficiency, market exposure. Like if you want to do like a short strangle in the S&P 500, it's going to be very hard to do that in SPY because you're going to need a ton of capital to do that. I mean, I can't do it with the 30,000 we're working with here. And so you would need, here, let's actually look at it. If I go to SPY, we can get to the rest of the positions. There's really not too much going on today that requires our immediate attention. But if I go to like 46 days to go in July, and I go to sell, let's just sell the Betty Crocker 16 Delta Strangle. Actually, let me sell like a 20 Delta Strangle. So I'll sell the 557 put, and then I sell, what is that going to be? The 616 call. So if I sell that, look at the buying power, $9,000, $9,200 as the market catches a nice little bid here the last couple of seconds. And so there's something happening out there. Is Uncle Jay back on the mic? Did he leave and come back? He double dipped it George Costanza style. That would send the market up, another 25 bips or so. But you've got $9,000 buying power on this SPY strangle, where again, there's nothing special. Like this is not a super high risk trade. But when it comes to, buying power, when it comes to capital allocation, I can't do this in my account. This is 30% of my account, right? And so, you would need to be able to do this like correctly. Let me think. 100,000 is not even enough because 100,000 puts you at about 9%. You probably need 150, I would say. So 150, which of course some of you out there have, which is great. And so then you can certainly fit this trade in there. But if you don't have that, you're dealing with less capital, 80, 90, 110, 60, 30, 15, like whatever. Like it's going to be very hard to fit that in there. But this is where the futures options are really, really nice. Where you go into MES, let me clear that trade away. You go into MES, I do the same trade, right? I go to July 18. Now I need to be a little bit careful here just because you can see we've talked about this before on the show too, but the July 18, if I just just kind of squint there, just give me a little Tom Sosnoff squint. Look at that little U that's in the quote. That's telling you that the MES contract in July is tracking to the U futures, not the M futures, which is what we're trading right now. This is the front month at 59.29. So just understand, like if I bring up MESU 5, it's actually trading at 59.82. So just understand that is going to be the at the money mark when we go to pull up this option chain. So if you didn't know that and you looked at it, everything's going to look totally out of whack. It's going to look totally crazy. And you'll be like, hey, like, what am I missing here? It's just a simple tracking thing where you have these options that are in July are going to be tracking to the September futures, which is you, which makes sense because in July, the June futures will be gone. Like they will be done and dusted and just over with. And so just understand that as we look through the strikes that are in here. So if I open up July now, I do the same trade. Again, I'm just going to pick basically the identical trade, right? Sell a 20 delta put on both, or 20 delta option, I should say, on both sides. So I'll sell the 56.50, which is 21 delta on the put side. And then I sell the 62.25, which is a 20 delta on the call side. Now, again, there's sizing differences and there's credit differences, and I don't want to get into all that because we've talked about this before on the show. I'll talk about it again in the near future, but I do want to move on to some other things. I just want to point out, though, that just look at the buying power that you have to put up to get this S&P 500 neutral exposure. It's $1,100. So now all of a sudden, man, a small account is in the mix. Now all of a sudden you've got 15,000. You can do this trade no problem. And by no problem, I mean, you're not going to sleep that great. There can be a few sleepless nights in there, and you're going to have, your knickers twisted up most of the time. But still, from a sizing standpoint, you're going to be totally fine. And so you can't do that with SPY with 15,000. You just, it's just not the way that it works from a sizing standpoint. So anyway, I wanted to bring that up because it felt somewhat relevant in the moment. So, all right, let's go ahead and, let's do one other thing really quick. I'll talk about, man, look at Wolf. Man, I can't. Am I really going to talk about Wolf? No, I can't do it, man. It's bad. I still got Wolf in this portfolio. Wow, I can't believe it. Absolutely can't believe it. Anyway, I want to get to you guys here in a second. So, but let's do NVIDIA. So we actually have a winning trade in NVIDIA. So this was the other piece of our earnings trade. And that was quite an earnings debacle. Like nobody finds a way to lose money on a winning trade better than me. So again, I'll take the losers and I'll turn them into victory laps, but I will also take the victory laps and I'll turn them into losers, but then also take the victory lap nonetheless. And so that's what we did essentially with NVIDIA because we had that butterfly last week and I missed it on the day that it was profitable. And then once we came back, because the power was out, and so there was not a ton I could have done. I guess I could have used my phone. Wow, I didn't even think to do that. Because I do most of my trading on the platform on my laptop, I don't use my phone. I'll use it in a pinch, but it's not my primary go-to. And so that didn't even really kind of occur to me. And I'm like, wow, that's amazing. It was there the whole time. But anyway, NVIDIA, the next day that we came back on Friday or whatever it was, we were only able to, take it off for 28 cents because NVIDIA was crashing along with the rest of the market. And so if I bring up my chains here, you can see it for yourself. Let's see here. If I bring up the chains for NVIDIA, here it is. So we did the butterfly, we bought it for $250. We had a nice winner on Thursday, which I know many of you guys cashed in on that winner. You guys emailed me, you guys tweeted me, some people came by the house, and that's good to hear. But then we were not as fortunate because again on Friday we had to just take what we could get, which was 28 cents. And so I didn't really study the end of the day price action in NVIDIA that closely, and so I don't know if that was a good move or a bad move. But right now, we're actually able to. You can see the short put. We're going to be able to buy this thing back for about 50% of max profit. So we pick up $1.70. We end up with a very small loser, all things considered, with the NVIDIA trade. It's not too bad. Like, again, I mean, we've all got grandiose dreams. We've all got these big visions when it comes to earnings trades. But sometimes the best you can do is a scratch. And sometimes the best you can do is a small to modest loser. And that's exactly what this is going to be. And so that's not too bad. And so we'll be able to kind of pony up next time. So let's go ahead and let me delete all that. Let's get into NVIDIA. Let's close out of this position. And there you go. Looks like about $1.73 on the mid price. And that'll be that. So, all right, no takers at $1.73. All right, let's do $1.74. And then we can just be done with it. Free up a little bit more buying power. All right, so we got filled for $1.74. So there you go. So NVIDIA is over and done. And boom, that's going to be that. All right, let's see where you guys are at. Man, where are you guys at? Let's see. Can I surprise and delete somebody in the middle of the chat before I get to the beginning of the comments? And so let's see. Here we go. Rancher. Here we go. This is an actual trading question too, man. Look at the market. What has just happened to the market? EMA S&P is up 20 now. Risk-free instrument doing more than what you would expect out of a risk-free instrument. Now up 130 on the old NASDAQ. You've even got, you've got metals up 81 still. So metals are kind of selling off a little bit. You got the Hunt Brothers. They're hanging in there up to 73. And so, okay, we got a little something happening out there. So if we go to Rancher, though, Rancher says, Dr. J, I have a sticky trade in my folio. It's a 25-44 put spread in ENPH with 25 days ago. Any help? Much appreciated. Man, I'm happy to help you with that. Let's take a look at it. So I don't know how much you collected, which is kind of an important piece of information. But you've got a 44-25 put spread. Okay, so that's a very wide put spread. I'm assuming that there's not a typo in there. I'll just take it as is. So I'm assuming what you did here was you sold the 44 put and then you bought the 25 put just as kind of a synthetic undefined risk strategy. I would imagine, because whenever I see a super wide spread like this, or even if I do a super wide spread like this myself, that's usually the thinking and the spirit going into it. And so I'm going to treat it as such. Now, if I'm wrong there, then everything I say following is not likely going to apply. And so my apologies if I've misread the situation. But I think that that's probably correct. And this is a good strategy, by the way, like for those of you that are trying to, limit the buying power when it comes to, undefined risk strategies. But hang on a second. So EMPH, did you say what cycle you're in? 25 days ago. Okay, so you're June 27th. This is interesting because it's only a $44 stock. If I sell the 44 put just naked, so I might be misreading the situation. All right, so Rancher, I'm going to give you do me a favor if you're still watching the show. I'll check back in the comments in a second here. Let me know the credit you've collected, and let me know is this the actual size of the spread, or did you mean like 44.35 or something like that? And was this intended to be defined risk or undefined risk? Like, let me know kind of where I'm at. Give me a few more details, and I'll come back to it here in a couple seconds. And the reason why is because the buying power to actually do the naked strategy is so low. It's only $800. Usually, when you do like a synthetic, like what you're kind of doing, or what I thought you were doing here, that's when the buying power is really high and you're trying to limit that buying power. That's not the case here, so I want to make sure I'm giving you a fair I'm representing your question and your situation fairly. So give me a little bit more intel. But let me get to the beginning. I'll come back to you in a second here, Rancher. So Rancher is the first one. Look at this. Look, Rancher, he's everywhere, man. He's everywhere. It's like Jason Bourne. Look at this guy. So here we go, Doctor in the house. Awesome. Good day. Good day to you too, my friend. Thank you so much. And let me know some more about the trade. Sam L, Dr. Jim's in the house. Hope you had a great weekend. I did, my friend. Thank you so much for being here. Doc, the Shifty always bounces back strong. Apparently so, with gold up 81. What are we even doing here? I don't know. I hope we'll figure it out at some point. Should have just been slapping long calls on every gold dip. Might be the 35K to 1 million strat for your boy's account. Yes. And so, yes, that's very, very funny. So I've tweeted about this. I posted about this. And so, if you guys follow me on Twitter, you'll kind of know what I'm talking about here. If you don't, then, you could check it out on Twitter and whatever. So my boy, right, who wants to remain anonymous, and it's his call, and I can totally respect that. So I refer to him as Clark. And so my boy Clark, approached me. This was maybe a few weeks ago. Had a conversation. He's like, "Hey," he's like, "I've been following Tasty and doing these things, right?" He's like, "I want to take a $35,000 account up to $1 million," and he's like, "Do you think I can do it in 18 months?" And I'm like, "That's crazy. That's totally crazy." And so he's gonna take a shot. He's gonna give it a shot, and I asked him if it would be okay for me to document the journey for you all. Like, every week. And he said, yes, as long as I'm anonymous, because this is probably going to go to zero and I don't want to deal with the fallout, which I can respect that. And also number two, he doesn't want me to share specifics behind his strategy because he feels like he might have something. I can respect that totally too. But I just told him, I said, hey, it's got to be real. It's got to be authentic. So I'm going to post it every Friday, Saturday when the week's over. I'll give you guys what he did, and we can all celebrate or commiserate or laugh or poke fun at my mysterious boy. And so, yes, I don't know though. I don't know what he's doing this week specifically. I don't know yet. And so, but I'll let you guys know at the end of the week. And so, yes, but long gold has been an amazing trade. Basically for the last, let's look at some gold. It's been for the last little bit here, right? I mean, yeah, wow, look at that. Man, basically 2025, you could have got in at 2,700 and you'd be sitting at 3,400. That's a nice trade. That's a good looking trade if I've ever seen one. Yeah, that's some good stuff. And so, yeah, long gold's been a great trade. Down 721 in the house. Happy leg day, Dr. J. Man, leg down on Monday. That's a power move. You know that's a power move down 721. Man, that is a statement. You're making a statement to the world right there. You're saying that I mean business, right? That I'm absolutely ready. And it doesn't even matter what you do, really. Like, you could get in there, you could do some squats. They'd be brutal. You could do some sissy squats. Sissy squats are very, very brutal. Like, if you pair them up with something else, man, you could do some tib raises from my knees over toes crowd out that might be watching the show. You could do a whole bunch of stuff. Just the simple fact that you're engaging the quadriceps and the hamstrings muscles is my tip of the cap to you, my friend. But Don says, let's see. My leg exercise as a single leg exercise is to isolate each leg. What are your thoughts on doing each leg separately? Yes, I think it's good. I think it's great for, like, you know, your balance and things like that. I think it's just great for overall health. You know, I don't know that it's going to help you too much. I don't know that it's going to be better necessarily from like a developmental standpoint, because you're just so much stronger with, you know, moving bilaterally. So I would do both. There's no reason not to. You know, leg extensions are obviously a great candidate for like single leg exercises. Even leg presses can be a great candidate for single leg exercises. I wouldn't necessarily be hopping into some pistol squats, you know, if they don't really make sense for you. But yeah, just from an overall fitness standpoint, I would say I'll probably do maybe 2/3 of my leg training bilateral and 1/3 maybe unilateral. I would say would probably be how I do it. And so you could follow that, or you could do your own thing. It doesn't make a difference to me. And so I appreciate you down 720. But let me go to Rancher. So here we go. Rancher just popped it in. Perfect. So Rancher said, yes, Dr. J, it's a 25-44 put spread in EMPH. Not sure what I was thinking. It's down $313 in the hole. I also sold a naked put in the same underlying in a separate trade that I still have on. Okay. Yeah, okay. Yeah, okay. So let's take a look at this. Let me go back to EMPH. Thank you for clarifying. So I was reading it correctly, which that gives me a little bit of, you know, that makes me kind of feel good about myself. And so, all right. So first of all, the 25 put, this thing it's not doing anything. Like, it's almost quite literally not doing anything other than the fact that, you know, normally when you buy a deep out of the money put, it will be limiting your buying power. But the tricky thing, and this is why I kind of wanted to follow up and learn more about exactly where you were. If you do a naked trade, you have a certain amount of buying power, right? If you do a defined risk trade, here, I'll even set it up. Like we saw, if I sell the 44 put, right? Like, look at the buying power. It's only $800, right? If I actually set up, if I set up a 44 25 put spread, so now I sell the 44 and I buy the 25, just like Rancher's got. Now the buying power, it's about the same. Interesting. Okay, so it's possible that the platform has been improved. Okay, it's possible, because normally in the past, and I've seen a lot of other platforms do this too, normally in the past, if you put on a defined risk trade, even if technically it's less risk than the undefined risk trade just by definition, the width of the spread would be the thing that actually controls the buying power on the strategy. So, for example, here you can see we're 19 points wide on the spread. What I was curious to see was, even though I'm collecting $4, I was actually expecting the buying power to be $1,500. The width of the spread at 19, less what I bring in at $4 for a $15 net buying power effect, even though it's less risk than the undefined. So that's good. That's definitely an improvement. So you can basically trade this like it's just an undefined risk strategy at the 44 strike. What I would probably do is, you know, I mean, right now you're basically right there, man. Like, you're basically right there. So you could go ahead and, you know, you got 25 days to go. You could probably, I mean, if this was my trade, what did you collect? Oh, you didn't say what you collected, but you're down a few $100. Okay. So I'm going to say that, yeah, okay, so you're down a few $100. I would probably do nothing right now. I would probably just sit tight, just stay bullish on EMPH. It's not that far in, underwater. It's not that far in the money. You know, I think it's unlikely that you're going to get hurt too badly at this price. You know, obviously if it drops to 31, then that's going to be, you know, a problem. But I would sit tight. I would do nothing. As you guys know, if you've been following the show for a long time, then you know that is our go-to strategy. That is our favorite strategy. I would even go so far as to say, man, 8 times out of 10, 9 times out of 10, maybe 19 times out of 20, that might be pushing it a little bit, but doing nothing is probably the move. Doing nothing is probably the thing that you should do. You should get really good at practicing your ability to do nothing. And I think right now is one of those times. Now, you're at 25 days to go, so the time to do something is fast approaching. I think if you get to Friday and you're still in this trade and you're around the same part, then roll this thing out to the next cycle. If you want to stay in the trade, like if you want to keep battling the trade, this is how I would deal with it. If you just want to be done with it, then just close it. Like it's only a few $100 loss. It's not that big of a loss, even for a small account. Like I don't know how much capital you're working with, and you certainly don't have to share if you don't want to. If you've got 10,000, this is not a huge drop for you. And if you've got more than that, then this is even less of a drop for you. And so I would sit tight and do nothing. And those are kind of my reasons why. And so hopefully that helps you at least a little bit there, Rancher. All right, so let's see. Where was I at here at the very beginning? Let's see. Got Happy Leg Day. We got Scott S. What's up, Dr. Jim? What's going on there, Scott S? I appreciate you, my friend. Sergio's in the house. What's going on there, Sergio? Thank you, my friend. Rob Banks in the house. Good day, Dr. J. I remember the epic debate featuring the artist formerly known as Anton. Yeah, we need more. Yes, that's true. We certainly do need more. I mean, it was bad. You guys were there, right? You guys were there. It was embarrassing for Tom. It was embarrassing for Tom. Obviously, Jacob held his own. Jacob did amazing. But Tom, it was embarrassing. It was embarrassing. And the best part, go into the archives. I mean, Tom probably took it down. But I mean, I would do the same thing if I was him. But if it's still up there, go into the archives, right? And you don't even need to watch the whole debate. You don't even need to watch the whole debate. You can listen to what I have to say, listen to what Anton has to say, and Jake, it doesn't matter. You just need to watch the last 10 or 15 minutes. Because when we're talking about mean reverting price, right? The debate was on mean reverting price. And do prices mean revert or do they not? And of course I said they do because they do, right? I mean, again, it sells itself. It's like a wild animal. It defends itself. It doesn't need me to defend it. But nevertheless, I hopped in and defended it quite well. The last 10 or 12 minutes, though, that's where the haymaker came. Because the only thing I need, if I'm not even going to ruin it for you, just go watch the last 10 minutes. I'll just say this. I let Tom prove my point for me, right? Tom's actions, not his words. His words don't mean a single thing. His actions proved my point for me. So go watch the archives and you'll see exactly what I mean. EME S&P is up 1850. And so Little Peanut in the house. What's going on there, Little Peanut? Jay Powell already spoke. Yes, he did. Oh, that's a question mark. Yes. Apparently at 1 o'clock he said, I don't even know what he said, but he had some kind of announcement related to the state of the economy or the state of something, or, his, tie collection and his lack of diversity in his tie collection, something like that. Let's see. Matt Johnson says, I'm ready to make $1 million. Where do I put my money? Yes, man, go for it. Just start slanging them. That's what I think my boy's going to do. So I would say he'll be at 0 before Labor Day is my prediction. And so Ross is in the house. What's going on there, Ross? I'll see you in Boston. Yes, thank you, Ross. I owe you an email from over the weekend, and so I'll get caught up here maybe later on today or in the morning. And so thank you so much there, Ross, for obviously supporting. I mean, you've been there from the beginning, man. Like I think Ross might be a From Theory to Practice OG. Like I think you might be, and I know a number of you guys are, but I think if I'm not mistaken, you're like 2016 From Theory to Practice. I mean, that's when, it was bad, man. The show was only 14 minutes long, which was good. That was, trust me, the most you could handle of that version of Dr. Jim. Not that you can handle much more now, but it was real bad back then. And so we were standing up for the show. Like we were, obviously using just buckets and buckets of hair wax, which is always a good thing. But thank you there, Ross. I appreciate you, my friend. Brian Doughty, I'll see you in Boston too. Brian Doughty says, would you consider getting long bonds, Dr. J? If so, how would you do it? Yeah, so there's a couple of ways you could do it. You've got ZB at 111. Yeah, I would probably, I saw it at 112, I think, overnight or in the morning or something. I would probably play bonds to the long side here. So you've got ZB at 111. You could go into the futures and you could just play it with ZB. That would just be kind of an outright play, a directional play. If you wanted to take like a scalping type of position or a very directional type of position, if you want to be a bit more strategic and give yourself more ways to win, then going into TLT at 84. Wow, you could go into July TLT at 84. I mean, man, I would give some strong consideration. In fact, I might even do this trade right now. Yeah, in fact, I like this trade a lot. So you've got TLT at 84. We can step in right now and sell the at the money put for $1.55, and the probability of profit here is 66%. And so this is what I meant when I said this relative to like a ZB scalp or a ZB trade or whatever, where that's very directional and you're going to have to get the direction right, just to one degree or another to make money. And so with a short put, though, I mean, now I don't really need TLT to go higher necessarily. I just needed to kind of move around by selling this 84 put with a stock at 84.80. So I really like this trade a lot. The buying power is only $1,600. So for us, that's right at about 5% of the account, which is that's where we typically like to live from a position sizing standpoint. From time to time, we'll go a bit higher than that. From time to time, we'll stretch the boundaries. But that's a good level for us. And this is $1.55, $1.56 on the mid price. This is not a bad way to do it there, Brian. So I would, give it some consideration. And, as far as you and your account sizing, for you to do a trade like this one, I would say, if you've got 30,000 like I've got here, then you're good to go. You're totally good to go. If you've got 25, I think you could probably still do it okay. If you've got 20, that's kind of iffy. It depends on your experience level. If you're just getting started, I probably would not do it. If you do feel comfortable with undefined risk positions and you've been trading for a while, you're getting closer to the 10% mark there. So just understand what you're signing up for. You could probably still do it. But again, I would use experience as my guide there. Whereas if you're a beginner, I wouldn't do it. If you're intermediate to advanced, then I would certainly consider it. And so, but I like this trade a lot. So let's put this on actually there, Brian. We'll do $1.55. That looks good. Sorry, so we got filled at $1.55. Thank you, Brian. I appreciate that trade very much. It gives us a little bit of long bond exposure, which I think, what could possibly go wrong? What could possibly go wrong, right? Bonds at 109, bonds at 107, right? Like China selling all their treasuries, Japan selling all their treasuries? Nah, not going to happen. And by that, I mean it's probably 50-50. And so Stefan says, hey, Dr. Jim, just started watching your newly posted course on YouTube. Nice job. Hope all is well. Yes. Has that been released? Wow, that's amazing. If that's been released, that's absolutely. I didn't even know that had been released. I'll have to check with Ryan. I thought it was still in production. Wow, that's amazing. If that's out there, well, I gotta follow up on that to make sure that's been released. Oh, you know what? Oh, I think what you're referring to. So this is not okay. I don't think that's the new crash course. I don't think that's quite ready yet. It's still in production. It should be soon though, within the next couple of weeks. I know they were shooting for Memorial Day as a possibility, but that was kind of a Hail Mary. And so we didn't quite make it Memorial Day, but I think it should be fairly soon. I think what recently got posted though was my live bash from a few months ago, the beginner trader thing. I think Ryan put that together and put that up on YouTube, which is amazing. And so that's awesome. I really hope that helps you guys out, especially if you're a new trader. And so that's great, though, Stefan. Thank you for checking that out. I think that's what you're referring to. And so obviously, if you have not seen that yet, then go check it out. If you've already seen that or you were there at the event, go check it out anyway because your boy needs that watch time. So I would get out there, watch it a couple times. Just put it on an empty tab and just have it running in the background. I think the YouTube algorithms are actually smart enough to figure out that that's not real watch time. But do it anyway. Like, let's try to beat the machine while we still can. And so 40% says, Dr. Jim, what's the trade for Avgo? Avgo? AVGO. They're still in business? Wow. Avgo up $7.50. All right, Broadcom, $250 stock, up $7 on the day. Let's see here. What is the trade in Avgo? IV rank of 32. And they've got earnings. Is it today? Wait a second. I can't see that. It's like cut off on the top there. Let me go to the overview tab. Okay, so not yet. So June 5th. So come back. Is that Thursday? Yep. So that's so come back on Thursday. We'll do something in there on Thursday there, Stefan. I don't want to do it today because that kind of mucks up the waters. I'd rather do Thursday, probably do an expecting moon butterfly and see if we can't light a stack of cash on fire going into the weekend. And so thank you there. Or 40%. I think I said Stefan there, but I meant 40%. So Rancher, thank you so much again. I hope I was helpful with the EMPH, at least to some degree. Sam L says, by the way, how was leg day? Didn't do legs today. I did chest and back today this morning. Again, I'm on a weird rotation where my days of the week are actually different every week now. Sam L says, I tried throwing in some LinkedIn partial squats on the last set. Man, the burn is so real. Wow. So that's crazy. So obviously I have to imagine you're doing some type of machine squat. You're doing a hack squat or maybe a pendulum squat. Maybe a swing squat. I don't think you're doing a back squat or even a safety squat at this point, because you're asking to just get obviously stapled under the bar. But yeah, I can imagine that burn is going to be like, you're going to remember that burn for a while. Like that's going to be a red letter day in your life, I think. And so, man, my hat's off to you. That's some crazy stuff. You and Down 721 could probably share some war stories, I'm sure. So Emmett Morrison, good afternoon, Dr. Jim. I'm here for today's lesson. Man, thanks for being here, my friend. I appreciate you so much. Hopefully you got a little something from today. And hopefully you were long everything, I guess, market, metals. You could just buy whatever you want. You'd be fine today. And so Matt Trimble says, until the next one is the most important. Maybe. You're assuming we make it through this one. I would not assume that. That is some dangerous, dangerous ground that you are walking on, because I'm going to say, and again, this is not really my opinion. This is on, poly market. The poly market odds that we make it through Friday, it's only like 15%. It's only like a 16 delta at this point. And so I'm just trust the probabilities. Again, this is not my opinion. This is not my personal subjective conjecture. This is on poly market. And so according to poly market, it's not looking good there, Matt Trimble. So I wouldn't really necessarily be too worried about the next print, because we're not going to have a next print. And so let's see. Scramble Everything says, hey, Dr. Jim, Diet Strawberry Day. Yes, sir. We had to mix it in there a little bit. Yep, that MCL Theta Simmer. You're welcome. Oh, that was Scramble. That was your trade. Yes, I didn't write that one down. Sometimes I write down who gives me the trades, but sometimes I forget to. So thank you there, Scramble Everything. Yes, let's let it simmer and hopefully just continue to kind of, deteriorate down to essentially nothing. That would be pretty awesome. So let's see. Colonel's in the townhouse. Man, I appreciate you, Colonel. That's some good stuff. And so let's see. Rancher says, I kind of like the 30 strike short put in DraftKings. Are we just going full degen today? I don't know, man. I don't know if I can do it. DraftKings down $2.40. I think I'm going to pass on DraftKings just for right now, because there's only 30 seconds left in the show, and I can't give it the analysis that it would need. I usually need about 45 seconds worth of analysis, so can't quite get there. But let's see. Scramble says, once again, he's talking to Rancher. Oh, there you go. Andrew Cortado says, let him cook. Sparky Dog fins up. That's what I'm saying. Andrew Cortado, Dr. Jim is the head chef. I'm not sure that I'm the head chef or even the sous chef. I think I'm more of like I'm probably the busboy, I would say. I was a busboy, and then, of course, an expediter. And then, of course, I was a server at the Olive Garden, which those of you who have been to my live show know all of my Olive Garden stories. But yes, Andrew Cortado, thank you for being here. Scramble Everything. Sometimes the ticker wins. That's correct. And that is a great way to end the show today, because I have to go and get you guys to Jamal. But yes, sometimes the ticker wins, and sometimes the stock just beats you. And when it does, the only thing you can do is tip your cap and, of course, double down. That's the best move that you can make. And of course, I'm being sarcastic. Maybe. But anyway, guys, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, Just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hey, what's going on, everybody? Steel and aluminum stocks go absolutely nuts on the discussion of possible more tariffs. We'll talk about what's going on there. Sports betting stocks. There's a new law that might affect their ability to earn more money, really. We'll talk about that as we get a little more into it. And then finally, Tesla, the next thing on the list is robo-taxis, and they're supposed to be doing an unveiling really, really soon. So we'll talk about those three things and more. We'll look around at the market, which is finally up on the day, up 20 points on the ES so far. We'll see if that holds. And take a look at the few earnings that are coming up and talk about what's going on the rest of the week. But first, welcome to the most dangerous show on the tastylive Network. Folks, it's Engineering the Trade, and I'm your host, Jamal Chandler. I told you about my kid in baseball and 5th and 6th grade baseball and its playoffs. It's basically my kid's last year playing. We had our first playoff game on Saturday. Didn't go well. I'm just going to spare you the suspense. It didn't go well, folks. We ended up losing. Wow, what was the score? I think I blacked out on it. No, it was like 13-4 or something like that. It wasn't good. It wasn't good. I know. Hey, look, we weren't the only ones that got blown out this weekend, okay? I mean, I feel like, who was it? The Yankees got blown out by the Dodgers the other night, like 17-2 or 18-3 or something like that. How crazy is that? Yeah, I mean, these barrels of these bats, the ability to connect on balls, if you can do it nowadays, I tell you, you can score a lot of runs, and that's what happened to us. And we talked to our kids, man, told them, look, this is your team. This is your team. You've made it a little hard on yourself. Now we're in the losers bracket, and now you got to win every game. It's tough when you get in the losers bracket. You got to win every game, and we'll see how it plays out. Our next game is coming up on tomorrow, actually. So it's win or go home. Win or go home. We'll see what happens. Let's pull up some slides. Let's talk about what's going on today. Another day, another tariff. You hear more and more about these all the time. By this time of the day, you guys usually know what the deal is. This is probably the biggest story heading in today. Honestly, this is another story that popped up late in the week, right? Last week, and carried over through the weekend. And so, again, stemming from a rally that Trump had in Pennsylvania saying that he was going to double steel tariffs from 25% to 50% to protect American industry. And by that, of course, he's referring to the deal between U.S. Steel and Nippon Steel in Japan. That deal has been talked about for several months now, going back to last year. As a matter of fact, the initial part of the deal started when Biden was in office, and it was actually a deal that Trump opposed on the campaign tour. See, this is the thing. Like, look, guys, I've talked about this a million times. I'm the least political person you know. But yet, when it involves stocks, and this is how it weaves its way in. This deal was started under the Biden administration now, and on the campaign trail, Trump said he was very opposed to the deal because obviously it would take an American company away from being American. And then now it's more of the deal is possible and set to go through. He would have to approve the deal. Of course, certain concessions would be in place, and this is kind of the essence of everything we're seeing nowadays. It's more about a deal, right? These levies are theoretically supposed to go into place in 2 days, on the 4th, and we'll see if it ends up happening or not. I believe the U.S. actually gets about 17% of its steel from Brazil, from Mexico, and Canada, I think. is the deal. I mean, the interesting part, I guess, for a lot of us is the stocks, what it does to a lot of these stocks. Cleveland Cliff, CLF, Alcoa is another, of course, when you're talking about aluminum, which honestly isn't really moving that much today. It feels like it's been more the steel stocks than anything that have taken off as a result of this. And it really has turned into a buy all metals everything today, because you can even see silver and gold going today, which again don't really happen to this magnitude with the market up, unless this is something that has a little bit different tone than some of the other tariff stuff that we've been dealing with. So another day, another tariff, and again, now it's extending to steel and aluminum stocks, and again, more steel than aluminum, if anything. But what does this do eventually to the cost of housing or other things like that, right? These are materials at the end of the day. Materials getting more expensive. Theoretically, materials get a little bit more expensive if levies come up on these. What does that do to the cost of housing and other things like that? I think it's sort of an ancillary thing that you're not necessarily focused on, but could end up changing it. I guess we'll just have to wait and see. Speaking of levies, there was a law that was pushed this weekend, and particularly in Illinois, that affected DraftKings and FanDuel, which is owned by Flutter. That's the parent company. Where let me make sure I get this right. There's a new package that will tax sports books 25 cents per bet for the first 20 million wagers, and then 50 cents per bet beyond that. And so FanDuel and DraftKings, I mean, 75% of they have the 75% of the combined market share in Illinois. That's going to eat into revenue. That's going to eat into earnings. And you can see the immediate effect on DraftKings today. Stock falling down a cliff. What is Flutter's ticker? FLUT. Down, but not as much. That's a big stock, $246. But both of them are affected by that. And I tell you, this is one of those things that, of course, immediately is going to be, it's going to be transferred out. The cost is going to be transferred over to customers. You know this. I have this theory anyway that a lot of the markets that they make nowadays, what I'm seeing, I just don't like them. They're just not as good of bets anymore, trades, i.e., if you will. I just don't like the markets. I mean, look how tight a lot of these markets were. And if you bet, every now and again, I didn't place any bets in these last couple of rounds of the NBA playoffs because I just didn't like any of them. I didn't like the way that the markets looked on them. I mean, sometimes some things were like plus 150 when they probably should have been plus 350, right? Like it felt like to me. But again, I don't make markets in betting instruments and NBA and whatever, but I do look at markets for a living. I've been looking at markets for a very long time, and I know when something has a % chance of having an outcome and when it doesn't. And I just don't like them anymore. And I feel like in general, they're starting to make these markets that are really away from the actual market, and there's really nothing you can do about it, especially if, again, Flutter, well, let's just say FanDuel and DraftKings have 75% of the combined share in Illinois. And maybe they used to be a little bit different, but at some point or another, they're going to be in lockstep. And so it's not like you can arbitrage anything this is a little bit off of the topic of the budget thing, but it's true though. Like I've noticed it, and it becomes a little bit uninteresting to place any, sports bets, if you will. I mean, seriously, it's annoying. But I digress. This new tax thing is definitely going to change things for them if it really continues to hold and stick. And of course, Illinois would do it because Illinois is taxing on everything, particularly Chicago area. I mean, we tax on everything. Theoretically, it's supposed to go into effect July 1, so stay tuned. DraftKings, I don't think has DKNG. I'm not sure when their earnings were, and I'm not sure if they're going to. It doesn't seem as though they're going to have any earnings. Actually, they're going to have earnings. By the time they have earnings again, they will. If this goes into effect, they're going to definitely have to speak on it. So keep an eye out for that. That's something that they're going to have to address. Finally, Tesla is targeting June 12th for their robo-taxi release. Now, they've already done a couple of these in Austin. Of course, that's kind of home base nowadays. And what they've done so far is had an engineer in the passenger seat, excuse me. But of course, I mean, at this point, they're contending with actually Waymo, which is something we're going to talk about in a second. But they are supposed to go forward with a June 12 launch, which by the way, it's my birthday. A lot of things seem to be happening on June 12th this year that is not a Friday or a Monday. It's kind of weird. I keep hearing people say, yeah, this is happening on June 12th. This is happening on June 12th. Weird, kind of interesting. Anyway, they've done a test on Austin, Texas public roads, and like I said, they've had an engineer in the passenger seat. What's it going to be like when they really don't? I guess we'll eventually find out. But they're originally going to roll out 10 robo-taxis in the city, and then from there, they'll see what happens. Staying on this topic, let's move to leftover. Self-driving taxi company Waymo is doing well over 100,000 more rides per month than it did a year ago. Let's move to the next slide. I saw this group this weekend, man. It's called Black Joe Lewis and Honey Bears. Blues band. Fantastic. Let me tell you. I mean, really, they were incredible, man. It was just great. Matter of fact, there was this one point where, so it was basically 3 dudes. One dude on electric guitar, one dude on a bass, and then one dude on drums. When I knew they were dope was when the guy on bass like lost his the power, right, or whatever happened, and the amplifier blew out or whatever, and he's like going like this, and he's like one of these, so you can see something's wrong. And the dude on the electric guitar and the dude on the drums, they never even looked at him. They were starting, as a matter of fact, they were just starting a song too, and the bass was identical, you could tell, and they were just starting a song, and then his thing blows out, and then they just like switch, and they start just the two of them start playing, the electric guitar and the drummer, and they just start doing it, and then he's fixing it. Somebody comes on stage, helps him fix it, boom, 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 and then he starts going, and boom, you can see he's right, boom, and then like they just jump back in unison. It was so cool. It's like you can only have that kind of synchronicity if you've been playing together for a very long time. I thought they were kind of newer. I'd never heard of them, but apparently they've been around for like 15 plus years, maybe longer, actually. I mean, the one guy's been doing something since 2007, and he's been doing stuff with the Honey Bear since 2010. So that is how you get that kind of synchronicity. I mean, it was pretty awesome. But anyway, like I was saying, Waymo, at this point now, look at March of 2024, and then look at, that's supposed to be March 2025. I hate when I do that. Look how much things have changed over time. You can see how this is growing like a weed. I've never personally been in one of these, but I know that they are continuing to become more and more of a big thing when you're talking about like how often people are taking these types of rides. But yeah, I mean, it's pretty amazing when you look at it. Over time, March of 2025 just saw 700,000 rides per month in Waymo versus, again, like much lower a year ago. I mean, way lower a year ago. And even just from a month ago, really, I meant a month ago. Sorry, a month ago, it's 100% more per month, 100,000 more per month than a month ago. And when you look back, I mean, clearly like 600,000 more than a year ago. So this is really increasing at a very fast rate. This is one of the reasons why Tesla's like, we got to get this robo-taxi out here. Otherwise, these guys are going to completely take it over. Sooner or later, you're going to see it. And it's kind of wild. When you see how fast this is taking over the whole gig economy. I mean, imagine like if this ends up becoming the way, it's going to be completely different going forward. And this is not going to be a job. You're starting to realize how many jobs are going to change and are going to be different. I mean, again, if this really becomes a thing where people aren't going to be driving these for a living, do you tip this? Like, do you tip this if you take this? I don't think you do, right? I mean, what are you tipping? I don't see the point. Just give me the flat rate. But another thing like that's going to change. I mean, when you look at some of these fast food stations nowadays, you go to a McDonald's, you go to a Hardee's or whatever. I mean, first of all, they have a station, a little computerized screen where you order from, and then you just pick up and a person like prepares it for you. They don't even really prepare it, but they just bring it to you. Like, why do they even need that? Again, I've talked to you guys about this going back in March when I went to this supply chain conference, and there were these bots that were basically doing ordinary, kind of mundane tasks, right? Things like, you order a Coke or a Diet Coke from them, order some ice cream, they could put it together for you. That's where we're coming down to, right? That's where we're really coming down to. Of course, Tesla is at the forefront of this. Just saw something recently talking about how Musk is one of the main people that talked about how AI can be really detrimental to our society, yet he's invested in like 3 different AI firms, including his own, which now is at, I think, about a 50 billion valuation that they're trying to get to over 100 plus billion valuation. That's doubling really fast. So yeah, this is the new normal. And again, in March of 2025, Waymo had more than 700,000 rides per month. How about it? Let's move to the next slide. This is March performance year to date for S&P 500 sectors. Tech led the way, 8.8%. We saw it. I mean, you saw over the last month how it just once the earnings really started kicking it off, right? And again, none of them really wowed or really just absolutely like had some crazy moves on earnings. I'm talking about Apple, Microsoft, Nvidia, Amazon, the like. I mean, they had some decent moves. Like Meta probably had the biggest move, if I remember correctly. Tesla didn't have this inordinary move, but tech definitely led the way. Speaking of earnings, AVGO has earnings later this week. We'll see what they end up doing. Consumer discretionary, usually when the market is doing well, consumer discretionary is doing well and sure did this month. Let me look at some of the names in the sectors. I always forget. Consumer discretionary. Oh, yeah, that's the one that Amazon is in. I mean, again, even though Amazon is also tech, it's also consumer discretionary. Home Depot, Nike, McDonald's, Lowe's, those names didn't really target. These are the leaders in the list, and they didn't exactly crush it, but yet and still, that was number 2 on the month, closely followed by industrials, 7.13% on the month. What's in industrials? Oh, yeah. UNP, UPS, Honeywell. Honeywell, I thought, had a pretty good month. Some of these defense names, LMT, RTX, et cetera. Then you had communication, which involves Amazon, up 5.5% on the month. S&P itself, of course, was up 5.5%. Financials, 3.8% on the month, strong and productive. Utilities, 3.4%, which is interesting because utilities have been strong in the recent months, right, at times. And usually when they're strong, consumer discretionaries are not. So this was a broad-based rally, as you can obviously tell, especially if we were up 5.5% on the month. Materials, 3.2%. Energy, 2.25%, which was the laggard. And again, you'd be hard-pressed to find many energy names that are doing well right now. But hey, lo and behold. Consumer staples, 1.41%. And then, of course, healthcare was the outlier of the month, down 3.2%. I'm sure we can all point at the bad guy, which is UNH right now. And I say bad guy, meaning they were down this month. Stock has really struggled. Really interesting thing happened today. I'm not short UNH vol, but I don't know if you noticed. UNH vol really came in hard around earlier this morning. Vol dropped felt like 20 points in the near term. It's almost as if some news came out. It was like a vol crush of earnings almost. It was kind of interesting the way that it ended up happening. Yeah, Saj, I went to ProMat. Correct. Yes, ProMat was pretty cool. I'd never been there. It's pretty awesome. We'll see. Scramble everything is right. Yeah, that's one of the fundamental differences I think that they have between LiDAR sensors versus the way that Waymo does their thing. So yeah, something to think about. But yeah, this was the month right here. These stocks, I should say industries. These are your industries of the month, and we'll see what the next months look like. Let's move to the next slide. I thought this was fascinating. It's almost like so goes the market. We had a good month in the market, and you could see that options volume jumped up in 0DTE. This chart is from the SIBO, by the way, the macro volatility newsletter. This is a pretty good one that they have. This shows you that the month of May saw the 0-day SPX volume jump to 61%. It was 52% in April, in a month in April where obviously, things were mostly down and kind of ugly. And it jumped back up this month. And you can see, on average, it's typical that when we have a bad month, 0DTE volume is going to be on the lower end, probably lower than 50%. I mean, you can go back to last year when you look at August, September, you can see those hanging out in that range. But it's been steadily above 50% since October, right? November, December to January, et cetera. And January and February, obviously February is a good month. You can see it was upwards of 56%. March was kind of in the weeds. April was not that great. Surprisingly, April did not have a 0DTE volume below 50%. It shows you the kind of wild month that we had there. And then obviously this month was pretty strong. So 0DTE volume continues to be robust. Talked about this a lot at the OIC conference that I went to a month ago. And I said, I don't know if this is going to always be ruling the roost when it comes to equity markets. I think at some point they could shift. I could see it, but I think it's still kind of a newer thing. I mean, it's been less than 5 years, right, that we have 0DTEs on all across the whole week of 10 years, right, Monday through Friday. So, well, not Monday through Friday. There's no Wednesday, right? What is it? SPX is Monday, Tuesday. Wednesday. Oh, yeah, it is actually. I'm tripping. Yeah, no, I thought it was just for... Yeah, whatever. Let's move to the next slide. Volatility. Here we are. The blue line. If you don't know what the blue line is, well, I get it. Some people are colorblind. This is why I said this. Not to make fun. The blue line is the one where it says you are here. That's us. And that's, again, this is always a day behind. So this is back to last Friday. You can see we're in contango. We're in contango now. You look at 2 weeks ago, similar line, similar vol term structure, just lower. The whole curve was a lot lower. Last week, of course, ending the week of May 23rd, you could see where the whole curve was pretty elevated. That was after the news came out that we were going to do a 50% tariff on the EU, and the market lost it. And then 2 weeks prior, again, it was another tariff situation. So things have started to calm down. You're starting to wonder if maybe markets aren't getting so freaked out by this discussion of tariffs at any given time. As of now, we remain in contango. I will posit that all VIX futures are above the long-term average right now, though. I will say that. Despite the fact that we're having an up day, despite the fact that volatility is in to some degree, all VIX futures are above 19.5. Just keep that in mind. Let's move to the next slide. This is another thing that you need to keep an eye on. When we talk about VIX futures, we talk about the fact that they're above long-term averages. This gold to silver ratio is still hanging out around the 100 level. Now, I don't know what that means. I'm not exactly sure what you do with that information. I know that I haven't been able to get a hold of some gold. I wanted to get long some. I think I've missed out on it at this point. It's up another almost $100 at this point. It's $90 flat as we sit here. And I think gold is just continuing to benefit off of all this tariff talk at given times. I don't know how many times we've seen over the last couple of months, and I would love to know the answer. How many times have we seen, though, that the market is positive, which it is right now? ES is up 24 handles, sharply reversed on the day. That's about a 50, 60 handle range from top to bottom to top, I should say. We haven't seen too many times where the market is positive and gold is up nearly $100. I don't think that's happened too many times in these last couple of months here. The gold has been kind of the opposite of the market more recently, so... This is interesting to me, how this gold-silver ratio remains above 100. I've told you before, this ratio, to me, the biggest thing I pay attention to is when it's above 100, there's usually some type of war going on. And in this case, you could say there's a tariff war going on, if you will. So it's another thing just to keep an eye on, you know what I mean? Let's move to the last slide. Earnings today, we got Dollar General, you got NEO, you got Ollie. I've never been to an Ollie, but Ollies are kind of like real they're like Buc-ee's in a way, from what I understand, except they're not on the roadside. You know what I mean? They're just like, cheap goods. They got this whole thing. They got this whole character, this guy. You just got to see it. We got the job soup this week, as I always call it. Jolt's job openings are coming up on Tuesday. I'm starting to get to a point where I think this is one we don't necessarily pay attention to as much. Remember, for a while there, it was about the amount of openings. And Jolt's has been around forever. But it was really... something you looked at during the pandemic because it was the amount of open jobs available and not being taken right now because people just didn't need to for whatever different reason, mostly because people were getting stimulus, right? So it was something based off of that. And then there was another thing that you followed too when you're seeing people jump from one job to the next and getting paid more. But I think Jolts doesn't have as much meaning in this environment anymore. It's another data point. If the market moves on it, cool, but we'll see. ADP is another one I think, people used to look at it as a precursor to the non-farm payroll, but honestly, they don't really sync up. And so this is another one where, this is what happens. Like after a while, some macro data that you may have been following for whatever reason for a solid 6 months to a year, let's just say, that was important, all of a sudden kind of loses its importance. And I think those two are starting to lose their importance. Inflation reports are similar, but they're still kind of important, right? Because if we're introducing stuff into the system that's going to create inflation, we need to track inflation. So we're still watching it. May non-farm payroll report will never not be important. It's been important as long as I know it was important before I came in the industry. It's going to continue to remain important. That's on Friday, of course. Number of S&P 500 stocks above the 50-day moving average, 326. So we still got 65%, which I think seems about fair. I always think about these in terms of market levels. So for me, market's close to 6,000. Almost 2/3 of stocks are above the 50-day moving average. Sounds about right. If we were back around 5,700, I would guess 30 to 40%. 1/3 or so, right, would be somewhere around there, because that's just such a lower level. Anywhere below that, of course, it's going to be, if we're at 5,700, 5,600, I would guess 10% of stocks would be above the 50-day moving average, and we would be super oversold. If we got back to all-time highs, I would guess that the number of stocks above the 50-day moving average would be more than 3/4, maybe 80%, right? That's kind of how I think about this metric. That's why I love looking at it. Let's move to, real quick, let's move to the website. I just want to look at the month here and some of the things that we've seen. When I look at, this is the S&P 500 stocks that are outperforming. So these are the top 10 performers on the month, I think it is. Yeah, thank you, Ryan. Appreciate that blowing up of this here. This is performance on the month. NRG, again, you talk about utilities, a little surprising, but energy related. STX, for whatever reason, again, tech, microchip, utilities, Constellation, medical devices, which is kind of rare that you see one of these medical names. But anyway, Micron, Rockwell. Oh, this is the machinery division of GE. AVGO and CCL, some of the best performing names on the month. If we flip this thing, we will see overview. Obviously, UNH is the worst performer of the month in S&P 500. Cooper Companies, I don't know who that is, but I have a dog. I'm going to name it Cooper. I think I am. It's one of my favorite names. Regeneron, another bio, pharma, whatever, healthcare company, down. Copart, I think this is definitely related to auto parts, if anything. I believe is that company. I can't remember. Texas, oil and gas name. This was a weird one. I'm sure you saw this throughout the month. It was towards, you could see when it happened, like a week or change ago, almost 2 weeks ago. Fair Isaac Corp tanked one day. It was crazy. Not sure why. Don't really care. Fiserv, Dow, Vertex, and then another medical devices company. So those are your performers and non-performers on the month in the S&P 500. It was kind of a weird month. Let's go to the platform, please. Ajit has an Adobe Iron Condor. You do, huh? For $620. Okay. You got the 320. Okay, so that's pretty far. So I'm going to guess your stuff is in the money at this point. Oh, it's not. You got a pretty good one. 460. 480. Ooh, that's a pretty, you're making money on this thing, huh? 320 and what? 340, huh? Oh, you're short the 340, long 320. Okay. You're just putting out there to brag or what? Or is this something you're doing something with this? I mean, this is a good trade for you, by the way. Why is, it's interesting. This vol is, that vol is pretty jacked. I know earnings are coming up next week. We'll see. So Justin, I am short SPOOs from last week. I still have a position in short SPOOs. I'm short, I sold one at 6,001. I'm holding on to it. There's nothing as of right now that was going to make me close it. I don't care what the situation is. Honestly, it's going to have to be we're down 300 points and then maybe. Oh, you're putting the Adobe on. Okay, good for you, man. Do you. I like it. That's actually a ADB. I like the trade. I do, and I typically don't trade anything prior to earnings, but I like the trade. has earnings next week, right? 3. What am I doing? Sorry. Yeah, it's right there. That's a pretty good trade. $20 wide, huh? Let's see. What kind of... I mean, again, it's hard to gauge what kind of expected move there is right now. 35 handles doesn't necessarily mean anything, but Scramble Everything's talking about IVR and Meta. Yeah, Meta is running wild. This is a big move right here. It's a massive move today. And yeah, I mean, Scramble Everything. I would. Me personally, I'm not interested in chasing it. I mean, I feel like we're in an environment in the market where things eventually come to you anyway. And I wouldn't be surprised if we hear about a tariff on social media at some point in the next month, and this stock drops $40. And guess what? It'll be $40 down, and IVR will be 35, and you'll be able to sell that put that you want. That's kind of how I'm thinking right now. I just am not in a rush to put anything on. I don't want to talk you out of your trade, but that's my thought process. I don't know why I can't get Adobe right these days. Yeah, that's a good trade, man. I mean, I do like it. I don't often, me personally, I'd probably be, that's probably a really good trade. I'm not going to change anything about you. I like it. I wouldn't do anything different. Leonardo, what's up, man? I have a diagonal spread in Pepsi. Okay, what you got? Pepsi, you got a, you want to do a call debit? Again, I can't blame you for doing it. I see why you want to. Me, I'm saving chips for the really good trades, which I think come a lot sooner than they used to more recently. So, but again, I don't blame you. Pepsi, what you got here? You got a June-July diagonal. So I'm guessing you're long the June. You're long the July 115, right? Yep. And then you're short the June 140. I mean, why are you even bother being short this thing? I mean, honestly, you're not really gaining anything out of that. It's not really helping you. Break even 130, 2022. Man, how do you manage this thing? Well, be honest with you. Look, you're not. This short strike is a waste of your time. I mean, it really is. I'll be honest with you. If and so is this 135, and that's the thing, right? Like something like Pepsi really doesn't have much premium. I mean, if the negative 30 IVR is in your suggestion, look, ultimately, it depends on what you want to do. Are you just trying to get long Pepsi? In general, are you, honestly, I would, if I was long this, Tim is out today, by the way, Jeffrey. He's still at Tasty. Yeah, he's been gone for a week. We take time every now and again, right? Tim has been out for the last week and change. I've been filling in his time slot. He'll be back tomorrow, from what I understand. So long this 115. You're short this 140, which really isn't giving you any offset. It really isn't. What does July look like? This July 140. See, personally, I don't like to sell. When I do a diagonal, I don't like to sell anything upwards of, how do I want to say this? I don't like to sell anything for less than $1, first of all. So there's that. And again, you got to think about this from the standpoint of how much risk you have on, let's see, from the chart standpoint. Ooh, the chart's been struggling more recently. I mean, you're long the 115. Essentially, you're just long this in the money call. Honestly, you're not gaining anything from being short this 140 in June is what I'm trying to tell you. So I would say you should, you could, see, this is such a hard name to do this type of trade in because you really don't have any upside premium. You could, you could probably almost be better served in going out to August and getting long that and then selling the July 140. And at that point, again, this is a $25 trade, right? Think about it, because again, the difference between strikes, 115, 140. You're not bearish enough to cover his slot. Yeah, thanks. $25 difference between these two strikes, right? So 25 is your kind of That's the most you can make. Sorry, is $25. You're paying 15 and change. So the most you can make is 10, or in this case, honestly, $9.41 if we're being exact, $941. And you're giving yourself a little bit more time. I tell you, it's going to be some tough sledding, though. When you look at this chart, it's going to need a catalyst to push it back up. And it's been a while since it's had any catalyst. So the best way I would manage that, I would send this further out in time. That's what I would do if you're asking me. I would go out to August and get long because again, that 115, it's about the same price as what you have it for now. I don't know what September looks like. Let's see the 115 in September, and say you wanted to sell August, that's 15 and change as well. You could do it probably a little bit more there, but again, you want obviously similar pricing to what you already have. I would go further out in time at this point. You're not gaining anything by being short that upside in June, if you will. Positions for me, I am contemplating what to do with a couple of trades. I think I'm going to hold on to it. This core weave has been one of my shorts. I rolled it out to July last week, and now the IVR has come in. IV is still elevated. This thing is still in the 80s and 90s, if you will. You can see put call parity is off. What does that mean? It means that the puts are a little more expensive than the calls in this case, from what you can tell further out. And that's how you know put call parity is off. Like even here, look at this. Yes, the stock's trading 117.25. So yes, the puts are in the money, but for whatever reason, it's not necessarily displaying that, right? Like it's displaying that price-wise, but not delta-wise. You can see this is a 44 delta. These are $12 and change, $12 bid. Let's just say that $12.60 bid. This is $9.80 bid. That you can also see it in the implied vol. See how this is 95 and see how this is 124? That's letting you know that the puts trade more expensive. Why? Because it's probably it is hard to borrow. And that tells you put call parity is off. That's just, market awareness, something to be aware of. But as soon as you see that, it also means that sometimes stock, it could be subject to a big short squeeze at some point or another. I mean, obviously it already has at times. So that's where you got to be prudent in a name like this. I think I'm going to close this out now that the vol has come in some. I sold it last week. I'm going to close this out, get a little money back. There's no reason to push the envelope on this name. Oh, God, I hate when they do this. They play hard to get. I sold it for $17.34. I guess I can go a little higher. Is it trading pennies? No, it doesn't. Well, you know what? I'm going to go back down to $17.30. If it doesn't do what I want by the end of the day, I'll push it up and close it. Oh, look at that. Immediate fill. So out of the core weave, it's been one of my shorts for a while there. IonQ is still 33. I'm going to hold on to that. I don't have many other things that I'm really short. I mean, these are my only short. This Palantir, I've been short this since last week. Strangle in there. IonQ, Strangle. Crude oil is one of the higher vol things that we've had for a while. It is. That's one of the higher vol things on the board. I'm going to keep that going for a little bit. Other than that, not much going on. We talk about the rest of the week. We talk about the job soup coming up tomorrow, 16.2 IVX, 16.7 for Wednesday, 17 for Thursday, 18 for Friday for the jobs report. For the rest of the week, you're looking at about an 89, almost 90 handle move in markets. We'll see. I'd be surprised if things are as quiet as they have been today. I tried earlier this week or late last week for an SPX trade that would get us to 6,000. No, I'm not going to try it again. It's a futile exercise to try and guess what this market is going to be on any given day at the end of any given day. So, yep. Not sure on ZB, IVR, but getting along with some in the money, at the money put spread. I don't blame you, man. I'm still short. These bonds have been moving around quite a bit for a while here. I still have my short put spread 111, 108, and then I'm also Short an iron condor in here, 3 points wide, 107 and 117 on my short strikes. I'm not changing that for anybody as of right now. And yeah, like I said, I'm trying to keep a couple of, for Zols on the sideline, some cash basically, because things just get a little crazy in this market. 1 minute it's a mention of a tariff and markets go crazy. And I'm just going to keep that moving for now. I'm not going to change anything. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See you.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. How was Nashville? Did you go hiking? You were going to do a bike, you were going to go fishing, and you were going to visit an apiary.
I spent the most time of anything lying in a mineral pool.
Oh, gross.
There was a guy running the fishing area, whatever. He hands me a
fishing area.
He hands me a fishing pole, and he goes, here, you're all set up. He goes, want me to show you how to use it? I go, I don't need any help. I got this. I get down there. I do this. The whole thing got tangled up.
Mom, phone. I need help. Get the guy over here.
I wave the guy down. I go, hey, need a little help. He goes, let me get you another rod. Now let me show you how to do it. I made the obligatory stop at Buc-ee's.
Oh, how was Buc-ee's?
It's 6 hours away from here. I'm talking it up the whole way down, telling Corinne this is, life-changing.
Did you go into the bathroom?
No.
You didn't go into the bathroom. You can go to the dirty shell down the street, or you can go to this beautiful, clean mecca of a place. Relieve yourself.
I'm not sure what place you were looking at, but I almost got run over in a stampede at that place.
Oh, you gotta move
I like
quickly,
how you're
'cause
clutching
people are
your
getting-
pearls.
It is not a beautiful mecca. Okay.
It's a beautiful mecca. When you're on the road for
it is an absolute up for grabs show with 1,000 people running around grabbing stuff, eating
That
stuff.
is like crack for me.
There's like barbecue sauce flying all over
Yes.
the place. That place is not a beautiful mecca of anything.
Who do you think the best dressed on-air personality is of all the Tasty people?
I probably guess I got to go Ilya.
Ryan Grace, easily.
Oh,
Yeah, Ryan Grace, 100%.
He's very preppy looking. It doesn't do anything for me.
Oh, who's the guy? Who's God on the research team? He's got to be in that top 3 too.
Oh, Gad? Yeah, Gad's up there. Yeah.
He throws on a leather jacket, man. He comes in there looking like Eddie Murphy off Raw or something like that.
Oh, yeah,
He's got incredible confidence, and good on him.
So, Dr. Jim, throw him out. He's horrible.
Jim wears children's clothes. It's easy for him to dress.
This is
Let's
easy.
see.
Like granimals.
Yeah.
You can throw me outside. No, don't worry about it.
Oh, I'm throwing you out because you got
yeah.
old man Italian clothes. Yeah, I don't. That doesn't do it for me.
Tony looks like if you saw him at a bar, he'll offer to pay your cell phone bill.
Get the full scoop by checking out the archives at tastylive.com.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right. With the closing bell, so I don't know if, sorry, I had to swallow there for a moment. Even the S&P is up 27 and change, quiet 27 and change
with almost 1 million E-mini S&Ps trading. NASDAQ up 149, the complete opposite of what we saw this morning when we came on the show. Just a creeper up from its lows that started last night. Russell up 350. That's the weakest of the group, with the Dow up 37. The Dow and the Russell have been the weakest of the group. Even the S&Ps and the NASDAQ have been the strongest. Volatility in by 26 cents to 1981, just a skosh off its lows, almost a full point off its highs. Bonds, well, they didn't get their act together. They started off down 25 ticks, really never caught a bid. 112, just a couple of ticks off of their lows. Bitcoin also was just going sideways at the lower end of its range over the last 5 or 6 day slide here. Oil up 3.5%. Sounds like a lot, and it is a lot, but it was a full dollar higher than that, almost up around 5% at one point, at almost $64, 62.86 right now. Gold up 88. That's been strong all day, staying strong, trading near the high end of its range. Matter of fact, $1 off of its highs, quite high. Silver doing its thing too. I mean, I don't know what else to say, man. I don't have a gold position. I can't stand gold trading it from a short premium standpoint. One thing I'm going to let you do.
Let's just say it hasn't worked.
It has not worked. It has not worked. Sadnov, I'm going to let you take the cat out of the bag. 3 letters today that made you feel better than any other 3 letters that you've heard today for a stock. Go.
Are you talking about UNH?
Yes, I am, Sosnoff. That's right. UNH IV rank of 40 just got decimated today. Talk about it. How did you find this? How did you know it was going to happen?
Oh, when it was trading 150, I was hoping it would trade 40 someday, but that's not the story. The story is that at some point today, at about, I want to say right around 10:15 or 10:30 this morning.
All right. So I closed my position at 10:40, and we did not talk about this. You actually called me after the fact, but I closed mine at 10.
I called you at about 12:30.
That's correct. That's correct.
But I'm sitting there watching my screen, and all of a sudden, I see this huge P&L jump, like huge, because my biggest position was the UNH. So I see this big P&L jump. I'm like, what the hell? So I go take a look and I see it's UNH, and I figure it's just a misprint.
Right.
I really thought it was just a misprint.
Well, because they have wide markets sometimes, and if the stock moves, you might think that something's getting printed lower or higher.
Well, I thought there could be a really bad quote on some option. I have some decent sized positions on. I thought there could be a bad quote or something. So I looked at it and I'm watching it for a few seconds and I'm like, do I really want to go through every single one to see where the bad quote is? So I look at it and I'm like, nothing looks off. Yeah, and I'm like, that's really weird. Nothing looks off. So I go, screw it. I got some strangles on that, I think I sold around $15 or something, or $12, $13, and they're trading for $7. But yesterday they were trading for 11, or 10, and they're trading for 7.5. I'm like, what the hell just happened? Some firm must have come in, some market making firm, and adjusted volatility and brought every other firm must have just copied it immediately. And it was super weird because I've been seeing that happen in probably 5 years, just like that quickly, where every single price got dropped by essentially cut by a third, every single option.
Thomas, I know you probably didn't look at it as diligently as I did because listen, I'm a volatility trader.
Because you're a thinker. You're an analyzer.
I am a thinker. Right. Sure. Right. I think outside the box. Let me see where this is. Blah, blah.
Yeah, of course.
And how sometimes we say you take off, a lot of your risk and blah, blah, blah. Yeah, let me show you something, Sadnov, about being mechanical. I know over the last couple of years, you've come more to my side and you're a lot more mechanical and less of a shooter than you used to be. Let me tell you why, Sadnov, because if I would have told you volatility was going to do what it was going to do, you would tell me June would get decimated. Well, look at this. June 300 straddle is down. It's down $200. I'm just trying to pick the at the money straddle here. Pick any one you want. It's down between $2 and $3. Look at July. July 300 straddle, Sosnoff, is down $9. $9. Again, it was your idea to roll from June to July. Here's where I pick you up a little bit. I knocked you down. and I got to pick you up. This is every knock is a boost. This is what my father used to do to me. I'm going to do it to you now. It made me into the gentleman that I am today.
Oh my God.
And the fine human being that I am today. I'm going to do it to you. I knocked you down. I told you your faults. Now I'm bringing you back up. But you were the one who said roll from June to July, and you were right, Sosnoff. That was a $7 swing.
Yeah, so the crazy thing was I rolled from June to July at 21 days, just like we're supposed to. And usually it doesn't have that big an impact, except it reduces your risk by about 30% across the board. And we were on the road last week, so I didn't get to roll all my June positions, but I rolled some, and UNH was one of them.
Good thing you rolled UNH.
And you're right. UNH position came in by almost what felt like $7 today. And
it's real, Thomas. It's
real.
I
know. I took it off immediately. And
now, why do you think something like that? Like why? Why do you think? I mean, because
there was obviously something. There was something that was keeping premium raised in the back months in there, and whatever that quote something was, came off the table today. So maybe it was a bit of news. Maybe it was, I have no idea what it was. There might have been, maybe it had something to do with the lawsuit that was filed by the government against them. It may have something to do with that, something. But whatever the case was, the stock didn't move. But which is weird because usually in those situations the stock moves. Stock
was actually higher. We had a little bit of longish delta in there.
Yeah, the stock went down a couple dollars. But the crazy thing about that move was the stock was actually going lower and they were just crushing vol. And I've never seen a vol crush like that in a back month of a stock. I guess over the years probably have. I just don't remember a back month vol crush like that.
Of course.
So I took my positions off immediately. It was lucky, and that's it. We live to play another day. We have no positions on now in UNH. I need some positions in general because the rest of today, I trade a lot because I rolled all my positions that I had open still. And also we played today to the upside, which actually kind of worked. But I don't know. I mean, I got to find some stuff to do right now. I got to find some trades. I mean, I'm a little light.
You're a little light in your loafers, and you're a little light on your trades too, Sodnoff. Yeah, you're 100% correct. We need to do something for you. So, what's something you can do to try to find?
Well, there's not a lot of earnings trades, and I've gone through some of the different high option volume stocks. And
high option volume stock. Here's a list. I just clicked
high
on
option volume, high IVR. There's a lot of fringe players on there.
Yes, there are. You got your Nike coming later this month for earnings. FTX. These are not like your stellar.
These are all fringe players.
Yeah.
There's a lot of fringe players out there, and there's no real earnings on not till later this week. So there's not a lot of earnings on the horizon, and there wasn't a hell of a lot of stock movement today. I mean, obviously, the Nasdaq had a nice rally, the S&Ps had a nice rally. Bonds did not rally a tick. Gold had its big move overnight, but it still ground its way higher today. And crude oil, like Tony said, it was higher this morning. It's just kind of stayed sideways. So sure. I searched today. I searched and I felt the best plan of action was rolling. There are some stocks that are getting to levels that, I think we can start to get a little directional, but Meta being one of them, I'm being careful about Netflix, but Meta being one of them. I wish I had a lot more in my toolbox right here, but I don't. What do you think? Anything else that jumps off the screen at you?
I just went through the high option volume list just quickly, and Palantir with the 28 is really the first one of popular names. I know Oxy is higher and AVGO is higher and ENPH, which you probably already have positioned as higher, but Palantir is one of the first ones. And then, believe it or not, your Apple up 70 cents. And these all have IV ranks of 26. Tesla's another one with an IV rank of 26 and earnings looming in July. So I would even throw that one out.
You understand that 26 is a very marginal play. Like
extremely marginal. Yes. Yeah. Totally.
26
agree.
Is a marginal play. And Palantir is at best a 3-star liquidity stock. Apple's about a 3.5. Palantir is about a 3. So these are not, these are not top of the food chain plays. And like I had to give up almost a nickel to get, my Palantir position rolled today. So I did not add to it.
So Sadnov, when the high option volume list doesn't work for me, I go to the Nasdaq 100 after that to see what's next, and I just did it here by Ivy rank again, just so it's in descending order. Adobe's at the top of the list. I know it has earnings on the 12th. Then your beloved Lulu. MU is another one, also very fringe type traders. Type stocks, Mondelez with a 31, and then you're stuck with the same group here, Sadnov, under 30. It's not a good environment right now for high volatility, high premium trades. I mean, we're marching higher, and that is a volatility killer.
MU might be a decent trade of all the stocks that you just mentioned, but when does that earnings? Is it this week? No, 2 weeks.
No, MU has earnings June 25th. It's still in June, but it's at the end of June. Yeah.
Yeah. And so that stock has decent volume. That's probably the best stock on the board of all the stocks you mentioned. But fill wise, markets are okay across the board. Pretty decent markets, pretty liquid stock. Trades a few thousand at each contract, I have no position on in there. I need to sell some premium, so I'll probably do something in MU here to start last call. We'll start at the 16 Delta Strangle, right at the expected move, and we'll work our way to something special. MU's up $4. It's up $4 today, so it had a huge move.
It has had a huge move, but it's been a fairly tight range here, as you can see over the last couple of weeks.
Super tight range. I agree with you. What else do you think about this move today?
We just marched higher on on some weird weekend news, right? I mean, you got the big beautiful bill going to the Senate, like Vanetta said this week. You got drones flying out of the air. I mean, you got hockey games and basketball games going simultaneously. Cats are fighting with dogs. Nobody knows what's going on.
They're not the same. They're not the same night.
What Wednesday is the first game for hockey? What's it for basketball?
Thursday.
I thought it was the same night. Oh, sorry.
No. If they did the same night, that would have been. That
would have been horrible. That would have been horrible.
Yeah, they got nothing else to do, so they got to spread those out over a couple of days.
Sadnov, who are you going to put the kibosh on? I don't really care about basketball, but you can give me basketball first. You got to pick a team. Who are you going with? You already said you're going to go with the underdog.
Well, I assume Florida's the underdog. I'm going to go with Florida.
Oh, you're talking about hockey now here for a moment. You're going with hockey? Please don't take Florida. I like Florida. Please don't take Florida.
I'm going Florida, Indianapolis.
Oh. I mean, Connor McDavid doesn't get his cup again because he touched it?
I don't know. I'm just saying. I don't watch a lot of Edmonton hockey, so I can't really say anything. So I'm going to go with Florida because I've watched a lot of Florida hockey.
Oh, man. Well, that's the kibosh on Florida, man. If you got time. You got time.
I took both underdogs.
Okay. All right. Wow.
So. You can't hurt me this year. I mean, I'm a Cubs fan. You can't hurt me.
The Cubs will disappoint somehow. You'll see.
You can't hurt me.
They'll figure it out.
All right. Let's see what we got here as it's going to be a this is probably, what is this, the first 5-day week I feel like we've had in a while. And with a very low expected move, when we say 99 points this morning, which is probably in the midst of crashing and burning right now. Let me take a quick look.
It's down to 88 now, but I mean, we've moved another day too.
Yeah.
So
yeah, that's fair. That's fair. I think my goal for this week is to get some positions on, and I think we're about to get to some very interesting potential price extremes, which I like. That's something out there. I mean, this morning I traded from the long side. I think tomorrow we'll probably trade from the short side. A stock that's had an unbelievable move since earnings on Friday is Costco. I mean, it was trading Costco was down under
Costco's
$1,000.
up $14 today. It was under 1,000 almost 48 hours ago, Sadnov. I think when we left for on Thursday for Atlanta, it was flirting with 1,000.
Yeah, pre-market was like 996 or something like that, 992, 996 in that range. It's up to 1053. That's a monster move. AVGO's had a monster move this week. So there's some stocks out there that are getting a little bit juicy. And we will definitely take a look. I'm looking around to see if there's anything else that's like crazy.
I got a little something for you. My Taiwanese sources told me. My Taiwanese source, Jason. Okay, I think it's a fake name, but almost like Jack is for our friend Jajun, if you know what I'm talking about. Okay, so listen. Here's what he says. S&P new editions come out this Friday for the June 20th triple witching. Some candidates. Are you ready?
Yeah.
APP.
Not tradable, so it doesn't matter.
MSTR.
Very possible, but a complete fraud.
You're true to your colors, Sadnov. True to your colors. XYZ.
Ooh, I don't even follow it. I can't even tell you.
VRT.
Ooh, another VRT. Is that the automobile company? What is that? Is that Verus? I don't know what that is.
I think that's Virtu, isn't it? Yeah, Virtu. Virtu.
No.
No, Vertev Holdings. Sorry.
Is that the auto? No, I don't know it.
D-Dog. You've traded it.
Yeah, in about 2 years ago. None of those stocks are interesting to me. What else you got?
LNG.
Listen, one of your random monkeys puts together a list of random stocks, which means absolutely nothing to anybody. So I don't even know why anybody would even listen to this.
Tom is calling you a random monkey.
A random helper monkey.
Okay. I told him. Now there'll be a drone coming in your window soon. No worries.
Please. I would like a drone to come in my window. I would like to see drones. I'd rather see drones. I'd rather see drones hit my window than birds.
You get a lot of birds hit your windows lately? Because my back door's been getting hit lately.
I do get a lot of birds. Yeah.
Oh, okay.
I don't know why.
Yeah.
I don't like when birds hit my window because I don't like it. I would rather it be a drone.
I don't know about this.
Yeah.
Sadnov, I know you don't get home deliveries in Chicago, but they're going to put a $1.50 tax on that. How do you feel about that?
I feel great.
You feel great because you don't use it. Now, if they taxed iced tea, then they'd be going way too freaking far, right?
That's a whole different story, but I don't care about home delivery. It's overdone.
Okay.
Yeah. Anyway, so as we I wouldn't call this stumbling into close because the market's been strong all day. But the one thing about this market today,
we got a million mini S&Ps trading. This is, I know. Again, not stumbling, but we're limping.
The one thing I'll say about today was for anybody who was trading, I traded mostly through the whole day. There was never a time
you made 80 trades today. I don't know what you found to trade.
Oh no, I rolled a lot because we were busy on Friday. But
gotcha.
I will tell you that there wasn't a single time today, not a single instance where I thought they were turning down.
They didn't have a single downtick to make you do that, okay?
Yeah, I mean early on, but after the opening they rallied back and then they sold off again down 30, and then they just bounced back the whole day and never sold off again. So there wasn't a single time all day that I felt like the market was going to sell off.
This is
when
true.
You feel that way and it doesn't, and you don't sell off, it's good because you end up not getting chopped to pieces. That's a good thing. I mean, every once in a while you get a move like that. I mean, some stocks, some things you didn't mention today. One thing was silver. It was up almost $2. I haven't seen a $2 move in silver in a long, long time. I mean, we happen to be long silver, but we're short gold, so they offset each other. Gold was actually a bigger loser than silver was a winner on the ratios I have, because we're short 2 gold, long 1 silver. I mean,
these are moves of the magnitude of they had in early April to the downside. I mean, not to the upside. If you look here, there's not a green bar most of this year that's going to match what's happened today. This is probably the biggest move of the year, especially the upside in silver. Man, what can help you in that trade, Sosnoff?
The gold going down. A sharply lower move in gold, but they are killing premium this afternoon, and they are going to take. It looks like they're taking. I wouldn't want to say they're taking the week out right now, but it looks like it. They're coming for it early. And by the way, I tried to get filled in MU. No bueno.
Sorry.
I mean, they're taking premium out of these MU strikes faster than I can adjust my price.
No.
I'm going to try to get something on. No.
Hit the bid. You want to watch me get something on?
No, I know how you do it.
Be so easy to make your head spin.
Yeah.
I can spin your mind like nobody's business.
All right. Well, it's slow, so let's go to our boys, and so mix it up a little bit with Dylan and Chris. I think Ilya's on vacation this week.
Oh, let's do it. Vacation Ilya. Sans vacation Ilya. Who do we have? Oh, there we go. Chris, Dylan, how are you, gentlemen?
Nice to see you.
Hello, Mr. Radigan.
Pleasure.
Yeah,
Elliot will be back tomorrow with his perma bearish takes. Don't worry.
Oh, he will be back.
He's just flying home right now.
Well, they've got him right where you want. The market's right where he's got him right where they want it.
Again, they got him right where they want him. Dylan, did you hear that Vinny Batista, my 15-year-old, got a crew cut, and you were going to kind of one up him or something like that, since you're a big movie star and stuff?
Summer, you need to get your summer haircut. We'll know that all is right in the world when somebody gives Sosnoff a buzz cut.
No, I almost used a curse word for no reason. But you are right, Dylan. You are right. 100%.
But me and the Batista kids, I don't know about you, but the Batista children and I, we line up very nicely.
Very nice.
I'm ready for Little League.
Hey! You could be a Batista kid. You're right in that. You're in the window. Okay.
I have them of all ages, Dylan. You might fall in there.
He's got a long list.
He could
multi-generational.
He could adopt you. I'm not sure if there's a tax advantage.
I got a good 20-point range, Dylan. We could fit you in there somewhere. I'm sure.
Make it happen. Maybe to improve my knowledge of Catholic rituals, would be going around naming things after herbs.
Meet your older brother, Nick. That would be great. So, Dylan, are you guys preparing for the arrival?
We are, yeah. No, we continue. I mean, as you know, we've got Mr. Sosnoff himself booked on CNBC Italy. Who even knew CNBC Italy exists?
I didn't know it did either. Are you my interpreter?
No. We're gonna. You have one of the great athletes in Italian history, Andrea Vettori, at your side the entire time.
So I have to tell you a funny story. So this weekend, my mom calls me. She's like, "Tom, I saw your friend Dylan Radigan on television." She was watching a show. She's like, "I saw Dylan on television." I go, "Really? What were you watching?" So she said, I don't know. Well, I don't know what you're on.
Ari Melber.
Oh, and she said to me, she goes, "He's very articulate."
Yeah.
Wow, see that? She
got
knows talent when she sees it.
I like it. I'm gonna use her as a reference when I come back for my annual review. I'm gonna say what your mom says. I'm very articulate, so
yes,
you gotta keep me around.
He's very articulate. I'm like,
and Dylan, just so you know, she's a little disappointed in me. So you're on the right track.
I don't know. I think if anything, she probably, the fact that you are willing to spend so much time with her son more than she does.
Not by her choice. Not by her choice.
Yeah, you're moving into the number 2 seed, Dylan. It's very good. Yeah.
Good. Excellent. All
right, Chris, what do you make of this? What do you make of today's? I mean, Tony and I just talked about it. There was never really a sell-off all day. And from this morning's tape action, I mean, it was just a slow grind up. I thought pre-market this morning, I liked this market. So I kind of feel like there's no surprises here for me. But what do you think?
It feels like a rubber band is stretching right now. I mean, if you look at gold and the dollar and bonds, you'd think that today was a bad day for stocks, but I'm having trouble deciding whether or not stocks are resilient here or they're just the slow kidding class like usual. I mean, gold has gotten stronger as the day has gone on, and yet equities can continue to rebound. So listen, we've been in a chop for about 2.5 weeks ever since we had that big gap from May 12th with the China-US trade detente. It's been a range between 5,750 and 6,000 in ES. Give us something on either side, and then we can have a bigger conversation. It's chop until then.
Yeah, I mean, it sure looks like that. I think you're right. I think if somebody had said, gold up huge, silver up huge, bonds down big, whatever else.
I think there'd be a little mini implosion in the market.
Yeah, and then if they had turned around and said, to some of the stocks that were up and things like that, it'd be like, okay.
Until you look at volatility, though, right? As soon as you see volatility contracting, although today it's only down 30 cents, which is almost a 1.5% move. Volatility has really gone nowhere. I mean, that's the canary in the coal mine for me. You got to key on volatility.
You think it's relatively high, actually?
I do. Yeah, I do.
I agree with you. I think just under 20 is relatively high, and I think all things considered, if you told me that the S&Ps were back to 6,000 and volatility was still at 20, I'd be like, it's high.
Yep, agreed.
High relative.
Yep.
But I don't think you can take much out. I don't think you can take much away from today's market action, other than there was just never ever a chance to fade them. Unless you bought them early. The fade was to buy them early. There was never a chance to sell them. Tomorrow you might get a chance to sell them. And also, one of the trades that we did on Friday that would have really worked out, that didn't work out Friday, but they came back today, was buying NASDAQ and selling ES. But if you look at the Russell right here, potentially buying Russell and selling anything else against it might be an interesting trade for tomorrow. That's kind of what I'm leaning to, but it's too early to tell.
Because Russell's been the weakest of the group.
It's been a pig. Yep. Yeah. It's been a little bit of a pig.
So you're not looking for it to scream to the upside. You're looking for it to go down less than the rest of the market, or
yeah, I think so.
Or overperform.
I mean, don't you think the Russell and all those small those are the most vulnerable to all of the sort of the uncertainty? Those are the names that suffer the most. I mean,
Dylan,
right.
if you're gonna use logic to win an argument on this show, you're really gonna have a hard time here.
Wrong show. I better save it for Ari Melber and Tom's mom. I'm sorry.
It's a little too articulate, Dylan.
Wrong room.
Too articulate.
Way too articulate, Dylan. Way too articulate. Good play, Chris. Good play.
I do agree. Oh, wow. All right, there you go. But I do agree with you. Closing on the highs, up 32, 33.
America, Sosnoff. I don't know when you three are going to learn it, but America. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the Overtime crew. Peace.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tasty live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
I don't know how to do magic, but I do have a sense of how to use magic to steal money from the taxpayer. First, you need to take off anything that makes you look like a magician. That's key, Alex. The critical thing is to look like you're just a man in a suit trying to make a living. Goldman Sachs pulled off the amazing trick of making $3 billion in 3 months' time while the entire financial system collapses, foreclosures are at a record, and unemployment skyrockets, and the US dollar collapses. Shall we begin?
thefacebook.com. Mark, if somebody was to put the question to you about the magnitude of what you think you've launched, how big do you think your product or your service is?
Well, it's impossible to tell.
You said something interesting, which is not within their economic means. I don't know that their economic means should take precedent over public interest.
Welcome back. Here's a story to add to your bailout rage. It turns out we weren't told the entire truth about the banks. Honestly, you're probably not even hugely surprised by that. That's your plan for financial reform: printing presses and accounting fraud. And it's happening at the expense of you, me, and every future person in this country because of the money machine that the bankers have running to pay off our politicians. As long as you can risk as much money as you want and pay yourself for all the upside and stick the downside with the taxpayer, human nature will just leave them to screw everybody in America for as long as it's legal to do so.
Remember, it got so bad in Egypt that there was a direct correlation between the growth in the GDP and the deterioration in the quality of life of the people, because the people at the top were making their money at the expense of everybody else. It's connected. I'm not here to talk about plans to deal with this till 2017. I'm saying we've got a real problem, and I'm tired of Republicans and Democrats who either want Republicans who want to burn the place to the ground, and Democrats, with all due respect, who want to offer a plan that gets it through their end of their second term of their presidency, and then screws me and my kids when it's over. And until we do that, we have to deal with the extraction that is at foot. It is the reason the financial markets are behaving the way they're behaving. That is a mathematical fact. This is not some opinion. This is a mathematical fact.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Stocks close higher despite the turmoil elsewhere. It's Monday, June 2nd, 2025. This is Overtime. I'm your host, Chris Vecchio in New York. Dylan Radigan in Milan. Sitting in for Ilya Spivak today. Glenn Freiberger here in studio in Chicago. Welcome to the show, Glenn. We're here to take you through the next hour as we wrap up this trading day. Futures market closes at 5 p.m. Eastern. If you're on the platform, on the website, tastylive.com, thanks for joining us. Come over to the YouTube chat. Tell us what you're trading, what you think of today's action. This big move in gold and silver, Dylan, finally, that waiting in the metals has been going on long enough. We've been rewarded. Oil surges, though. There's this huge escalation between Russia and Ukraine. Ukraine taking out perhaps 30 to 40% of Russia's long-range bombing capacity in a single set of strikes over the weekend. We have news out about Israel and Iran. We have news out about U.S. and China with the trade war potentially escalating, steel and aluminum tariffs going to 50%. It's a great start to the week here for stocks, though, which seemingly ignore all the noise. We can turn to the platform there, Paul. S&P 500 closes up by 0.59%, 5947 and a quarter. We have a NASDAQ that's up by 0.82%. Your leader on the day, 21,549. Dylan, I have to admit, the weekend's news lead me to a place where I'm a little shocked by how strong equity markets were over the course of today's session. Is this just the latest sign that stock traders buy every dip, or is the news flow from the weekend just inconsequential?
Yeah, I mean, I think you answered your own question. It is quite obvious that, you know, imagine that the conflict news between Russia and Ukraine that came out over the weekend came out, 18 months ago. And it just goes to show that over time, the market adjusts. The market has basically decided that this is whatever happens, even if it's a more extreme expression of violence, like the one we saw this weekend, and more disruptive, more infrastructure, et cetera, that the Russia-Ukraine war is seen as a economically immaterial and ultimately contained situation, which it was not seen as contained 18 months or 2 years ago. It was seen as, as a profoundly risky for everything from the energy markets to wheat and all the rest of it, and not to mention the sort of unknown barriers of escalation. But now there's not some crazy talk about Putin running nuclear weapons and all the things that sort of would have happened around this in years past. Much like the tariff wars with Trump, the market is very comfortable that these different issues, whether they're conflict issues in the Middle East or in Russia or economic issues in the United States, that they're either contained or, in the case of the American economic policies, limited primarily to rhetorical factors. It's remarkable. I mean, and it does give you an incredible degree of both. I guess you could say you can look at this two ways, but I look at it as a greater degree of confidence in the strength of the stock market and a stronger reason to buy the dip, as it were. Not that there's been so many good reasons to buy the dip, but I mean, this is just an incredible demonstration of strength.
When, this really is a tale of two stories, or two cities, I should say, rather, if we're going to go with the Charles Dickens analogy properly. Stocks are holding up today, but the rest of the market, if it's gold, if it's currencies, there's kind of this fear factor type of environment out there. Even bonds are getting hammered. It reminded me of an environment we saw a few weeks ago when it was kind of like sell America, dollar down, stocks down, bonds down, gold up. But that wasn't necessarily fully true today. You obviously have a different approach to the market than Dylan or I do. So from your vantage point, right, coming into this week, has this market surprised you with how it unfolded today? And it doesn't need to be strictly equities here. Of course, you're more of an FX person.
Yeah, not too surprised. I think, Dylan, I tend to agree with you on most accounts there because, I would have expected this to be crazier if we got a bigger gap on Sunday night. It was very interesting to see the organic price action in the FX space on the London Open. You saw a lot of dollar selling take place there. Thought it was really going to take off with the soft PMI number, but really range traded throughout the day. A little bit of chop. I mean, yeah, dollar weakness here to stay. But yeah, you're seeing, to Dylan's point, I think it also has to do with kind of the ranges we're in. Not surprised that crude oil popped how it did, just because of how beat up it was on some of that geopolitical news. But yeah, market's not getting fooled by the trickling effect of one storyline across asset classes, more contained now to kind of region specific or news specific. I am surprised by the gold move, though. I mean, that was aggressive and stayed. A lot of times we've seen throughout the U.S. session, sellers come in and some more two-way price action, run up in the early morning and then get some of that taken out. But that's stayed pretty strong. Silver as well. Not sure what to make of copper. Pulled back a little bit. Any news there as to why we got a little disconnected move in copper compared to silver and gold?
I can't say why it pulls off the highs here. Our colleague Thomas Westwater is of the mindset that this is, again, like a tariff-related headline pop. And sure, like we saw last week, we had it pull back in immediately thereafter. So I, for what it's worth, Dylan, I've had a short put spread on here in copper for the past few weeks. And while I felt like I was missing the boat last week when it came right back in, it's now back in a good position where I feel comfortable trying to take it off. I'm at 23 days to expiration. We typically roll around 21 in these parts. There's no reason to hang on for another 36 to 48 hours, hoping to squeeze out another few pennies here when the short put spread convexity basically, it's achieved what it's going to achieve given the range up to about $5. And if we're going to go beyond $5, I want to have something with more convexity than a short put spread. But Dylan, I think it's kind of funny, here's this nice guy, Glenn, he comes in here. He's usually doing things behind the scenes for the company. And the first question that we ask him is about Russia, Ukraine. Obviously.
He's like, whatever you think sounds good to me, John.
Let's get in there.
Whatever he said. Yeah.
No, but
let's talk about this metals move today, though. Glenn, I mean, this is the currency traders look at metals a lot. They say the dollar is basically the other side of gold. If gold is soaring, that's got to be really bad for the US dollar here. And metals are just through the roof today. Is gold done consolidating? It really hasn't done much of anything in almost a month and a half, 2 months. Should traders be looking long here?
I mean, this has been a tough one for me personally as well through these all-time highs. I mean, hard to have any conviction. My personal bias was conviction to the downside, as we've seen, kind of just risk off sentiment being taken out in this equity space. But all things considered, gold holding on to a lot where I wouldn't have expected it. So if that's a buy signal, I don't know, but definitely holding in, printing higher highs than lower lows as of late.
Dylan, just gaming this out, it feels like we're heading into a buy the rumor, sell the news type of situation. I can't help but think that we're going to get a response from Russia with respect to Ukraine after this weekend's news. I can't help but think that after last week's shenanigans with the taco trade talk, and then the ensuing reporting this weekend where President Trump himself has said that he's very agitated that people think he's a chicken, which is a real remark from the President of the United States, that he's not going to back down this time, which sets up a dynamic where
they think he's a chicken on tariffs. Is that what that is? Was that tariff related?
Yeah. So you now have the next few days where Trump and Xi are going to talk, but Trump's going to act tough, and Putin probably has to do something to respond to Ukraine. If that all happens, do we just fade the gold move to the upside, like fade the geopolitical risk once we get the crescendo of the event, like has worked with so many other occasions around Israel, Iran the past year plus?
Love it. Yeah, I mean, I do think that that's the case. I mean, this sort of seems like an opportunity for a replay of those oil spikes of yesteryear. And so I like the idea of I don't know what the volatility situation is like, but getting short gold at this point seems awfully appealing to me.
It does seem appealing. I got to say, I'm a lunatic when it comes to gold, though, Dylan, and you know that better than anyone here, in part because I'm still leaning long, and I think that it's been a choppy trade the past few weeks, but staying long throughout it has not hurt. And I'm a loyal guy, Dylan. That's why I cried when the Knicks lost the other night. So gold is up 2.7% today. I think it's worth hanging on to here. I'm a momentum person, Glenn, right? And so from a technical perspective, I really like when stochastics get back into overbought territory. I like when MACD's trending higher above its signal line. And I like the fact that we're seeing this triangle breakout now transpire. So for my salt, for what it's worth, I'm not going to fade any move here in the breakout initially. But once we get some news headlines that make it look like the world's falling apart, that's when I think I'll take my longs off the table and maybe set up a short call spread up against the all-time high near 35.39 in the GCQ5 contract.
Is there any you have any interest in any sort of gold ratio or gold silver ratio at all? Given that now we're actually seeing some more momentum in silver.
I'd like to on paper. Rare is the occasion when the gold silver ratio sits above 100 for a long time. The problem is that is something
welcome to rare.
Right? Yeah, right. Like it's when people were trying to fade. Dylan, remember a few years ago when the yield curve was inverted and everyone said, "I'm gonna fade it. I'm gonna play the steepener." It took years to get back there, right? And so the market can stay rational longer than maybe the typical 45 and 21 day out cycle. So the few times that I've tried to press that trade, where I guess I was long calls in silver and short a call spread in gold, it worked out for a small window of time. But now I flip back on to just being long metals blindly across the board. And on a day like today, it's suiting me well.
Yeah, good day.
The past few weeks have been past few weeks have been a lot of chop though, so it's been frustrating. A lot of false starts where it's like one day up and then the next day you give it all back, and it's like, what are we doing here? Okay, so Dylan, sorry, go ahead, Glenn.
Oh, no, I was just going to say that this metals move hopefully offset your Knicks DraftKings, any action you took there.
I never bet on my teams. I never, ever bet on my teams. I always bet against them. That way,
you're a Jets fan, right?
Oh, you know how easy it's been to bet against my teams? It's the perfect hedge. If they lose like they usually do, I make money. If they win, I'm pleasantly surprised. And it was worth the cost, the $10 I put down for them to lose. So
fair. It's smart, man.
It's how that's how you even out the business cycle. Okay. We don't want any major
Never be too
there.
Happy.
No. Trust me. After game one, I was just devastated. Dylan, silver here. You've never been a gold guy, but you have had a penchant for cornering the silver market.
I do.
5.79% here today. That's the close. This is enormous. We have basically round trip to back where we were pre-Liberation Day. We closed the day before Liberation Day at 34.97.4. We're at 34.94 right now. What's going on here? Is this time to just pour our shekels into the silver market and ride this train to the upside? We've been waiting a long time for this.
Yeah, I'm inspired. I don't know exactly. I wouldn't be able to tell you why this has happened. And, I defer to you on all the technical aspects, but you really have to like a move like that in silver. And I didn't put anything on into this today, but I'm very much inclined to do so tomorrow morning.
Glenn, give me a silver story here.
It's all the way back. I mean, look at it's just interesting to look at all these prices as a referendum on the credibility of the American economic policies. And the fact that whether it's equities or the silver chart, everything has really returned to where it was before the tariff threats even emerged, which is not to say, obviously, there are some tariffs now that didn't exist before the beginning of April, but they're pretty modest. Most of the real significant ones have been delayed, and the market either thinks they're not going to happen or that they're going to happen to a small enough degree that they're not going to matter. And who am I to argue with it?
Glenn, you were talking before about silver, about the gold-silver ratio. It's in the stratosphere right now. It doesn't pull back that big today, even with silver's move to the upside like this.
It's true.
How are you playing gold-silver if you're playing it at all?
No, that's exactly why I broached the topic. Is this almost 6% move caught me off guard. I wasn't expecting that. Can't really make heads or tails of it right now, but yeah, it looks enticing from a tape action perspective. I haven't read too much into it. Is it more speculative? People don't want to be in gold anymore. This one starts to take off, and everyone just hops aboard, or is it somehow enveloped in this tariff storyline? You tell me.
I think this is part of the tariff storyline, like just putting the chips down on a narrative here. Mm-hmm. One of the issues that the Trump administration's raised with respect to the trade talks with China is that China has been slow to approve the release of some of these rare earths. Right. We came to this agreement with China in the middle of May, and while we're in this detente period, everyone's supposed to take down the temperature and kind of let trade resume. And trade has resumed for the most part, except for with these rare earth minerals. And now we see today that there's the steel and aluminum tariffs shooting even higher. So could you paint a picture in your head that there may be some supply issues with base metals, with precious metals, with rare earth metals over the next several months as a result of a slowdown in trade thanks to the complications and the tit-for-tatness of the trade war? Yeah, I think we have two puzzle pieces that emerged over the weekend that make that story a little bit more clear. And then I can't help but think of Russia-Ukraine. Dylan, this has to be a monumental weekend in Europe between the election of the Polish president, who is a Donald Trump guy, and Ukraine's big attack that is almost certain to draw the ire of Vladimir Putin. This feels like a monumental weekend for risk. People are buying protection right now. There's a reach for commodities in a way like something scary could happen soon. That's why I question, are equities missing the story today? Like, what the hell is this?
No, I mean, listen, I think we're all kind of, I'll ask you the same question. I mean, why do you think the market is so comfortable with the obviously elevated levels of risk? I think the market is relatively calm about the Polish election, just because it's not what they wanted, obviously, in terms of the Eurozone. But I do also think the American media makes a bigger deal out of these. I mean, remember when Giorgia Meloni was elected in Italy, they sounded all the alarms, and then it just turned out to be not that big of a deal. Sure. So I think there's some hope that basically either this won't be that big of a deal, or that it was such a tight victory that it won't be as consequential. You do have to look at the moving commodities as a risk-off move, and the dollar weakness for that is sort of also perplexing. But you tell me, how on earth, what are the equities seeing and believing that they're comfortable with this level of escalation in the war between Russia and Ukraine? I mean, that's kind of the big banana question here.
That's a great one. I mean, Glenn, you've only been on with us once before, and we were really just talking platform specifics then. But like my worldview is macro based, and I look at the cross asset flows. And so if I were to work backwards from everything else, ex-US equities, and try to say, like, let me guess how equities did today. Dollars down, bonds are down, gold is through the roof. Silver nosebleeds near 6% performance to the upside. I would think that's something really bad happened.
Agreed.
In the stock market. Right? Like, oh, something that they just announced that there's going to be a new tax bill that's going to blow out the deficit by $10 trillion, Dylan, right? Bonds up, dollar down, gold and silver through the roof. That would make sense. Maybe it's something with the trade war that he decided to wake up, and after being called a chicken repeatedly last week by mainstream media, he decided to put on spite tariffs, which like, did that make sense for today? Yeah, that price action for bonds and gold and the dollar would have made sense for today. So, but then you work backwards to equities. I just
in a funny way, I think that you can kind of attribute some of the storyline to the whole taco narrative, because maybe just the equity space is a little bit more wary of trying to get in front of any of these storylines anymore. I mean, tried time and time again over the past few months to do whatever to the rumor, and then everything's okay by the actual, not the news, but the pullback of tariffs and other news. I mean, just a lot of whipsaw action there, maybe just waiting for everything offshore to actually have pronounced effects onshore. Traders and market participants just not necessarily needing to get in front of anything here, or making plays in other spaces.
Tell me, Dylan, that might be the sickness, right? Where dip buyers in equity markets have said, like, yeah, nothing happens. You're like, you're going to make a big deal of this.
There's no longer a dip. I mean, although sort of the contrarian thing would be to look at the move in commodities, especially silver and gold, or even look at the move in the bond and the dollar and get short equities in a huge way.
That is the contrarian play. And you do have a rally here today. I'm still split in the baby here. I still have some short call exposure on an ES, some long call exposure on an NQ. I think the mega cap tech looks a little better positioned. I'm not intentionally doing an NQ ES pair trade. I really don't like doing those in this particular regard. But we haven't traveled anywhere, right? And I think that's the full story. We closed effectively at this level, last Thursday, Dylan? We erased the move on Friday. We're back to where we were. Thursday was supposed to be good because we had the headline coming out that the U.S. International Court of Trade said that Trump's tariffs were illegal. We immediately poured cold water on that because if you read in the finding, the court said just go to Section 122. And the Trump administration said on Friday, we're going to go to Section 122 instead. We can do a 15% tariff for up to 150 days. We don't need congressional approval or the approval of the courts. Thank you very much. So nothing really changed. Okay. 21,534. It's a 17 IVR. The uptrend is here. I would posit for traders who are trying to figure out the next move, just bracket off the area that we've had over the past week plus. The low that you have from 523 in the NASDAQ, 20,727 the high, 21,858. We're basically dead center, a little bit further in the upper half. But until we get a move above 22K or below 20,500, this is just a chop zone. And it's been a chop zone for the past 2 weeks. And if you think about your typical 45 in, 21 day out cycle, Dylan, a 10 or 15 day period of time where if you're looking directional and you get no directional movement, that hurts. That's a lot of theta burn. So if you're long calls, long out of the money calls here, the setup isn't any worse than it was, but you may need to make a decision about terming out your exposure so that you can still keep that skin in the game. Otherwise, the market may move when you get knocked out and your position rolls off, you get frustrated. So this is a good week to make adjustments. I think this is the right week to make adjustments. While volatility is really low, it's cheaper to have that out of the money exposure if that's the way you like to play the game, through puts, through calls. you can effectuate your, let me get long some premium here because I think that things are a little bit too calm, as it were. Glenn, I'm not a contrarian. Ilya would fill the role here and say to Dylan, that's right. That's exactly right, Dylan. I am short here. I'm comfortably short here because of what happened with bond and gold and the dollar here today. And then we'd all rag on him for being comfortably short. So,
but you think, barring any crazy unforeseen developments across the world, we will see some consolidation, some volatility contract, perhaps gearing up for this non-farm payroll on Friday? Or do you think there's anything that could come before that? I mean, Powell today, nothing really.
Powell today gave us nothing. Yeah. I would point to seasonality, Dylan. We typically review seasonality at the start of the month here. June is not necessarily a good month for the stock market. Over the past 20 years, the S&P 500 has lost 0.07%. It's been up 55% of the time. It's the weakest link in the chain of May through July, where May, June, and July have done exceedingly well. And July actually has been the best month of the year for the equity market over the past 10 and 20 years, up 80% of the time. So this month, if we get a typical month, then we're going to see choppiness, perhaps indecision in equities, maybe a little bit of weakness in notes. And if that's the case, then we go into July we're no longer just like up 20% month over month, right? We're now, we're now up 5% in stocks over the past month. We're clearly out of the whole thing. This is ripping higher. We've cooled off. We've returned to the previously scheduled programming of Dylan, the range that we knew and loved from November up and through March. We are literally back in that range right now. If we were sitting at 21,500 back here on January 10th, you and I would not be singing a bearish note whatsoever. So I can't do that. I can't do that sincerely up here yet. We need a little bit more degradation.
But the balls move into short equities. I mean, just
hell yeah.
Come on. I mean, just on Ilya's behalf, if you can't get short equities tomorrow morning, with the news being what it is, commodities being what they are, all the other price indications being what they are.
All right. Okay.
If you can't get short now and the market's bid, so you have room to fall. I mean, if you can't get short now, I would like to ask very kindly, sir, when can you?
Do something short term here. Should we say that equities are a bunch of liars and that it's really everyone else who knows? Do we want to do this, Dylan? Risk 520 to make 4,680 here. So just 9 to 1 risk to reward on a potential long 21. I don't want 2101. There's no liquidity there. Long 21,000, short 20,750 put spread. It's just to the end of the week. Stocks fall tomorrow. We get some juice here.
I think we got to do it. If you don't do it, what kind of man are you?
It's true. But as you've told me, Dylan, a man without enemies is no man at all. So
exactly.
We turn our attention here to what's going on in the bond market today. Dylan, this is the confounding part. Notes here falling back in after what appeared to be a bottoming attempt in both notes and bonds last week. Surely something eloquent and articulate can come from your mouth about the state of what's happening here on Capitol Hill. Does this have anything to do with the legislation now? We had this freak out 2 weeks ago when the House bill passed. What's up with the Treasury market?
I mean, the Treasury market is, I think, in the same place everybody else is. It's kind of the Treasury market is sort of the apex predator of the global financial markets. And the Treasury market, like every other market, is trying to figure out, it's trying to lay odds on what percentage of what is in the proposed legislation is going to get passed. And I think the reason you see some of this sort of more volatility, like the move you're seeing today, is it sort of that seems to be a vote in favor of, oh my goodness, they may actually get this legislation done, bump the yields up, but I think that laying odds on the political process. On the one hand, it's relatively simple because you do have one party control, but it's not that simple because within that one party, there are many divergent interests, and the sausage making when it comes to a huge piece of legislation like this is obviously, and everybody knows this, a long, arduous, and a process riddled with fake outs and things that are sort of headline worthy, but are never manifest. But I would argue that whether it's the bump in yields, the weakness of the dollar, the strength in gold, the strength in silver, all of that says get short the NASDAQ.
Get short the NASDAQ. Okay, well, we have that going here for us in the short term. We're going to play a little on both ends, right? NASDAQ going to advance over the next few weeks, but this week pulls back in. And in an ideal world, it pulls back in until Thursday, and then we can get out of the position before non-farm payrolls on Friday. Because a good non-farm payrolls report, what have we seen with the economy recently? Good news is good news again. Why? Because it means we're not careening into a recession. It means that consumers are still spending money. It means corporate earnings are going to hold up throughout all of this. Speaking of which, talking of an economy that's still holding up, Dylan, you say this bill going through, there is a potential adjustment to the bill that makes it more likely to pass. Trump and John Thune, the Senate Majority Leader, met today. He says that they're aiming to prevent any Medicaid cuts on the other side of it. So if you're going to get rid of the Medicaid cuts, which are the most unpopular part of the entire plan, like forget an 80-20 issue, Dylan, it's like a 95-5 issue right now in polling. 95% of Americans don't want to see Medicaid cut, right? So if he's able to back away from that, the politically unpopular part of the bill, maybe it does get passed. There are still big deficits. There are still big debts. And when are they arriving? We had an update to the Atlanta Fed GDP Now growth tracker today for the second quarter. The economy apparently is growing at 4.6%.
Is that a lot?
Dylan, that's not recession. That's boom. And we're in the midst of this. And listen, there's obviously wonkiness in the data because of the tariffs, yada yada. But if we're growing at a 4.6% clip, and then we're pouring gasoline of $1 trillion deficits for the next few years moving forward, I mean that's hell for the bond market, right? This is
yes, it is. I mean, but again, you tell me how you could have escalation in Ukraine and Russia, a deficit, a wild deficit-driven legislative agenda, a higher cost of everything by way of tariffs and interest rates, and have an economy that's powering, that's cranking,
and we're fine,
and a stock market that's pumping.
Can you say that again, Glenn?
Question for you, Dylan. When we're unpacking this debt picture, and then you bring in some geopolitical risk. Now it feels like more storylines involved. Can we unpack this bond market across the yield curve? Is there anything interesting short term versus long term, or same picture?
I mean, I think the whole picture is really at the longer end relative to the legislative aspects. Short term, there's obviously nothing to worry about. Economic growth is intact, job market is intact, inflation is under control, the AI super glide is intact.
All right.
I'm talking myself out of my short NASDAQ position, but the only thing that it can exist is an intermediate or longer term problem associated with all these things, because all the short term indications are remarkable resilience, remarkable strength, remarkable durability, and underlying basic prosperity.
It's hard to argue with that right now. I mean, 4.6% growth. Even if it's just a one-off, you're not going to get your technical recession because you're not going to get your 2 consecutive quarters. And, we're going to have to shove all those concerns back into the back pocket. Certainly, if you're looking at bonds, what performs best during recessions? Long end of the curve and gold. And the long end of the curve is not playing its part right now. So growth may be tilting up here, and we see the outperformance of the growth stocks over the last few weeks, particularly since the April low. Mag 7 have led the broader market. NASDAQ has led the Russell. One thing that gets me, though, Glenn, is these interest rate differentials, right? I've talked about this a lot recently, but one of the hallmark signs of a currency crisis is when interest rate differentials are moving theoretically in favor of a currency, and yet the currency is still losing value. For most traders, trading around those themes has been kind of difficult here on the platform recently because you have to had
thank you
to trade currency through either FX futures or you trade it through something like one of the currency ETFs like an FXE or FXJ. They're not great. So you've come with a solution. We now have spot FX on the platform.
You're absolutely right. Through our Tasty Trades partnership with Tasty FX, we now have Forex trading, spot Forex trading, available live in the Tasty Trade platform, available to you if you have an individual margin account at Tasty Trade. All you have to do, if we want to flip over to my screen, all you have to do is select the Tasty Trade logo at the top of your web or desktop platform, navigate over to Tasty FX. It'll prompt you to create a Tasty FX account, but no worries about any sort of login or anything. It'll exist only in the Tasty Trade platform. So just answering a couple additional questions. Once you get through there, you'll have this environment that'll show you over 80 plus currency pairs, spot Forex markets. So the exchange rates at the current time, slightly different to futures. If you're comparing back and forth, you'll see, the futures bakes in some forward points up or down. But here we've got all the granular dollar exposure you could ask for, I think, right, Chris? We've got a ton of movement here. And yeah, you bring up a good point. Look no further than the euro dollar for the story of the week, I think, in terms of macroeconomic events and kind of an interest rate differential story, because we're going to get an European Central Bank meeting later this week. I think it's Thursday. They're expected to cut rates. And if you take some, real calculations, they've been in a cutting cycle. This, I think, will be their 9th consecutive cut. And if you're looking at this currency market, you couldn't tell. I mean, the euro up near, let's look, we've got some cool charting capabilities here in the Tasty FX environment, up from January 1, 10.5% year to date. That is not what any conventional interest rate differential story would tell you, with U.S. rates at 4.5% and euro area interest rates climbing down towards 2% now. Just a huge move today, near 0.7% in currency markets. That's pretty big. All these markets traded on leverage. So that leverage is delineated by currency pair. So this euro dollar market, you're getting 2% margin required. So leverage of 50 to 1. And here we're trading at.
When I started, Glenn?
Yeah.
200 to 1.
That is that's a different.
Here in the U.S.
Yeah, that's
and there's
insane.
Still some overseas brokers who do more than that. But yeah, I've seen this go from 200 to 1 down to 50 to 1. It's been a journey.
Yeah, and has anyone survived? You've survived, I suppose.
I survived. I had a really bad account blow up in, I can tell you the exact date, September 6, 2011, because I was long the Swiss franc, short euro Swiss, short dollar Swiss in size, kept what I call waterfalling into a position in spot markets, which no one should do. Do not do this. This is not a recommendation. In fact, I'm recommending you not to do it. But every time my account would have a little bit more margin freed up, I would add on another position. And so I was just constantly max tilt that summer after the U.S. lost its downgrade. And I ended up running like a 15K account into like 45K in the span of a few weeks. And then the S&B put the floor into the Euro Swiss. And I used to walk to work those days. I lived 10 minutes from my office, and I would get to my desk at 4:30. And from the time I left my house at 4:20 and got to my office desk at 4:30 in the morning, they put in the floor.
Oh, man.
And I was margin called.
Yeah, that'll do it. Because, these markets are 24/5. So they're moving.
September 6, 2011. I'm getting sweaty talking about it.
I was gonna say, I don't want to make you have to keep talking about it. We're okay.
Dylan,
we're okay.
What's your worst? That's actually a good question here. What's your worst loss, Dylan? And then over to you, Glenn.
Flowserve was catastrophic. Flowserve, and then also a Nikkei position in the late 90s, 99. I mean, I had a whole pile of them, not a pile of them, but a number of them in 99 out of the Asian financial crisis. I was young and stupid and believed in larger positions regarding behavior in foreign markets, of which I had limited liquidity and limited knowledge. And you put all that together and you can really lose a pile of money in a hurry.
There feels like there's a lesson in there for me and Glenn, but we're not going to learn it.
Because the thing is, it's so easy to convince yourself that you're right because the instrument exists, and you sort of cherry pick the news that supports your beliefs, and then you do the math, and you're like, well, if I just put this position on bigger,
duh,
look at all that money.
Oh man, yeah.
I made that mistake. I remember reading Yomiuri Shimbun, Japan's largest newspaper, during an episode of Walking Dead to figure out when they were going to intervene in the currency market. My then girlfriend, now wife, was like, "What are you doing?"
Yeah, that's an insane sentence.
You're going to outsmart the guys in Tokyo.
Yes, Dylan, we can do it.
Yeah, we can.
I am.
I just got to get my highlighter.
Yes, I am.
I just watched that Paul Tudor Jones, documentary, The Trader, where he's on the phone with in his house, slinging cable. Yeah, it's like
I was working in a big black glass tower on Park Avenue in the 50s, walking across the park on my StarTAC, which is the original flip phone.
Okay.
All right. I really thought the other thing is, don't work in a big black glass tower on Park Avenue and don't get a flip phone, because it leads you to believe you're more competent than you are.
That is such a toxic combination for a young man in the 80s New York. You're walking around Central Park with your, you say, Star Trek pad?
StarTAC. It was called the StarTAC. Okay. The Motorola StarTAC was like
I heard Star Trek.
Okay. So, yeah, you must felt like you were the king of the world. You're like slinging.
And those big glassy towers on Park Avenue, and it's like, come on, and everybody, wrong. They're like, we'll just take all of your money right now.
It's like that scene in South Park. Put your money in a foreign currency, and it's gone.
And you can go home and have ramen noodles for the rest of the year.
But those ramen noodles build character, one little spoonful at a time. Glenn, we got this off the rails.
1 milligram of sodium at a time.
Before you get back into the platform and the spot effects here, you have to share with us what's your worst trade.
Oh man, me touting some sort of a statistical background was really, just caught up in an intraday. It was a Fed meeting more recently than I'd care to admit, where just thought, we'd have some sort of intraday bounce back, layering in the NQ futures that I thought were, overstretched to the downside. Turns out, one, they don't have to come back the same day.
Right, yeah.
And two, if you layer into them, the intraday margin is much different than the overnight. So they won't even let you get away with it. So even if it does come back, an important risk management lesson in the difference between intraday margin versus overnight. But in spot FX markets, no such thing. So your margin rate is flat. They don't let you get away with intraday over leveraging, but leverage still 50 to 1 I think is pretty good. It's no 200 to 1. I can't even imagine. That sounds frightening. But yeah, you brought up the interest rate differential, and here in the tastyfx watch list, make it pretty clear to see kind of the most applicable use case for interest rate differentials here with this swap bid and swap ask. These are quoted in pips, same as the spread, which is to the 4th decimal place in most of these FX markets, the minimum tick value. And this will tell you if you see any positive values here, that means that the overnight, these are indicative overnight swap rates. So any positive values here tell you that the interest rate differential for that side of the market is large enough to merit a positive overnight funding charge. So going long US dollar versus the Japanese yen, our interest rates at 4.5% versus theirs at just 0.5%, would yield nearly a pip overnight in positive carry, if you will, with positions opened past and held past 4 p.m. Central Time every day. And then on Wednesdays, these figures without holidays, usually Wednesdays, will carry a 3-day roll. And so that's where you have some opportunity. One, to note, your potential cost overnight. Definitely more expensive to short this dollar-yen market, hold that overnight, but where you can possibly get some positive overnight funding charges in some of these markets.
Dylan, that's actually one of the reasons why I'm really glad Spot's here on the platform. I do not like being long the Japanese yen in spot, because if I'm long the yen in spot, it means I'm owning the funding currency. I have to pay out little by little every single day.
Right.
Right. But if I'm long the yen in the futures market vis-a-vis, options, then it's just like any other trade. But if I want to get short the Japanese yen, I want to be paid to short the Japanese yen. And if I'm doing it in spot and I have the positive rate differential in my favor, I actually do get paid for, say, being long dollar yen. There is a roll, there's a carry that comes my direction every single day. So it's not enormous, right, Glenn? It's not going to be substantial, but it's one of those factors where, some traders, they take positions on a longer term basis. There is no expiration. You're not approaching spot FX like you do options, futures options, what have you. They approach it with I'm going to build a position here so that I earn carry over time, and I'm willing to take a drawdown in price in order to earn that carry. You have to approach the market differently, I guess, is my point, than you would simply trading regular stocks or even options.
Absolutely. Yeah, you nailed it. A lot of the key factors to getting into some of these markets are those overnight funding charges. Of course, your spread, just 1.1 pips to get in. And trading, you mentioned having a positive carry would help for longer position trades. But for purposes of intraday scalping, these markets are traded with $0 commissions just because of how TastyFX is compensated through IG Group, able to offer those $0 commissions. So no matter the trade size, you're really only noting your spread to get in and out. And if you're holding this overnight, definitely monitoring that swap bid and swap ask. You called out the differences between Japanese yen futures and interacting in this market from a spot level. I mean, if we're the thing that comes to mind here is if we're just, as an example, picking a side here, the sizing aspect. Here, I've only got $50 in my account, but we can get down to 0.01 lots here, which would be this many yen notional, moving at 10 yen a pip, and only $50 of margin here for getting into this market at all. And it scales at this 0.01 in increments of 0.01. So you can layer into this 0.02. You can layer this all the way up into
that's incredible, by the way.
Your larger sizes here, and it'll tell you exactly calculate your margin here in US dollars and whatever the quoted currency is if it's not US dollars. And so the platform really intuitive, but definitely want to make sure that size is something you're controlling, because that controls your per pip movement and will control how much buying power you're actually using.
And Glenn, to be clear, this isn't when people get this enabled on their platform, it's funded separately than their regular account, which
absolutely
people should, yeah, go ahead.
Yeah, so once you have this TastyFX environment, just popping over to this Manage tab, all money transfers from TastyFX to tastytrade back and forth are done just through this transfers page. And here you can select how much you want to transfer from your individual Tasty Trade account and into your TastyFX account. Just due to the regulatory environment, this can't operate, as smoothly as sweeping funds back and forth, like your crypto or your futures, in which you can place the trade and the funds be swept afterwards. This money has to be in your account beforehand, but this does give you the most control over knowing how much is in you're allocating to your spot FX within your Tasty Trade account. So pretty clear.
Dylan, that's very important. I mean, I'm thinking about my personal blow up that I had in September 2011, and like I got margin called because I didn't have the cash in the account to keep the positions open. But I'm lucky I got margin called where I did.
Seriously,
because I got margin called in Euro Swiss when it was at 113.
That's why they have them, brother. They're just protecting you from yourself.
It was protecting me from myself. If I had to ride that thing to 120, it would have been double the loss, right? So like I want spot FX. I like that's a really smart thing. It's you don't want to take on too big of a position. You want to mind your leverage there. It's we speak fondly of it. It is a double-edged sword, of course. And go down to the smallest lot possible would be my point of advice if you're just getting into trading spot FX and you haven't done it before. It's an easy way to get in and out of the market. It's small, right? You mentioned $50 there to get a position in dollar yen at the smallest exposure. It's a new thing to learn, right? I think
Absolutely.
That's really, I think for my own personal evolution as a trader, I come in the world professionally. Obviously, I have my background in economics, but I come in professionally as a spot FX person. And then I get my CFA charter holder, and I ultimately move forward through into equity index futures and futures in generally speaking. But there's a very different mentality in trading spot FX. The calendar is different. The clock is different because it's basically a 24 5 market, right? That is the also single difference. That's why I like futures so much, because I went from 24/5 in spot to all of a sudden I can only trade 6 hours a day in stocks. Get out of here. That's a joke. So if you're a futures trader, spot FX is something that lines up neatly with your.
I mean, how do you feel about getting long the dollar since we're in this currency world and since the dollar's been shellacked, just been slammed?
Can't do it. Can't do it here.
Can't do it.
Glenn, DXY dollar index, it's the second or third lowest close of the year. And it's the lowest close that we've had since the initial Liberation Day tariffs were announced. I don't know. That doesn't seem like a good thing.
It's not great, but I mean, if you are really looking into this, that's over 50% is that euro dollar, right, of that basket. So
it is.
You can try and pick that apart and see which of those components actually are overbought or oversold. I think would be an interesting trade. I mean, this U.S. dollar Swiss franc here is near its 10-year plus lows. Euro dollar right now at a month high, near the top of its range. Pound dollar here up near its highs since 2022.
I mean, come on, Glenn, you'll do it. Let's get short the euro, long the dollar, and not now win.
Yeah, a lot of unique prices to get in and out of.
Get some chuckles. I get some dismissive chuckling.
Listen, as a momentum guy, you're not going to second or third lowest close of the year. You can't put that gun to my head. Won't allow it.
Yeah, I mean,
allow it.
Yeah, you've got this Australian dollar. If you're a momentum person, you got a lot more. You're bouncing way off the lows here.
This is the one thing that as people go into spot FX, and maybe they learn from this in the future as we wind this down. But if you're trading the Australian dollar rate, 6A as well, you're trading commodities to a certain extent. So from my view, when I want to layer in another correlated asset to oil and to gold, silver, copper, for me personally, no. But there's now rhyme and reason if you want to trade, say, China. It's more specifically, you can go over to the SpotFX platform and you don't need to trade Aussie dollar or 6A futures or copper. You can just simply trade dollar yuan. So this opens up a whole new, cornucopia, Dylan, of ways to express ideas for folks here who are on the platform. I'm excited for it. I can finally get back to trading dollar Turkish lira.
Oh, yeah.
Seriously.
Here, Dylan,
just not my ideas, apparently.
Dylan, here's your chart of the day for you. What do you think of that?
What are we looking at? I can't. I got Vecchio's screen hogging all my screen here. All I see is
I'll describe it to you. It's dollar Turkish lira, and it's straight up and to the right.
I can see it's an line straight up, but I don't know what it is. It's a Turkish lira.
Yeah.
It's a garbage currency. Truth be told, full disclosure, I am angling to get banned from a country somewhere on the planet, and like I've narrowed it down to like North Korea, Turkey, China.
Don't do Turkey. Turkey's got such good food, such nice beaches, beautiful. Istanbul's a great city.
Yeah, come on.
Do not get banned from Turkey.
Erdogan's a lunatic. See, that's how you get banned. That's how you say stuff like that, right?
Don't do it.
I'm trying. The beaches are close enough. I'll go to Greece.
Turkey's a great country. Turkey's incredible.
It's a great country, but I got to be banned from somewhere. Lowest hanging fruit.
North Korea. Get yourself banned from North Korea. I think overtime's out of time, by the way.
Yeah, that's how overtime's out of time. Talking about getting banned from sovereign countries. We'll be back tomorrow, same time, same place. As always, Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call. So for Dylan Radigan in Milan and then Glenn Freiberger in Chicago, thanks for joining us. I've been Chris Vecchio in New York. See you tomorrow. Up next, Ilya's back with a video, Macro Money, here on Tasty Live.
The churn in the financial markets continues. There does seem to be a little bit of an unclenching in risk sentiment. Bonds up, stocks up, the U.S. dollar idling. That follows some perhaps, maybe, possibly moderating rhetoric out of the White House, but the upshot of the situation broadly unchanged, and the key markets still at key decision points from the beginning of this month, and we'll have to figure out what the price action is going to tell us about that. So in the meantime, we are going to take a look at a broader view of what may be going on here and get back to our conversation about the diminishing confidence in the U.S. dollar, or so it would seem. We talked about why the current environment has been so negative for the U.S. dollar, as we've seen a kind of sell everything U.S. related kind of a dynamic since the beginning of this month. We've obviously seen stocks go down in the U.S., bonds go down in the U.S., and the dollar go down all at the same time in what has been a little bit of a change of pace, the dollar seemingly losing its capacity to rally as a haven on risk-off momentum or on higher yields. Those yields, of course, going up for the wrong reasons, but nevertheless. And so it bears asking, well, if not the dollar, then where? And if the currency world is not through its readjustment on the dollar, then where is there more room for this to continue? So we'll start this conversation here with a relationship that really illustrates why the dollar probably has more room to go down, even as we consider a kind of maybe preliminary unclenching of the issues that we've seen sort of hit the headlines and break out into markets. So this is a chart from the American Enterprise Institute, and it nicely distills what is the relationship between the U.S. trade deficit, ostensibly the thing we're trying to defeat with these tariffs, and its actual implications for what happens with the U.S. economy, and consider that actually what this is effectively a benefit and not a cost. And so consider here that what happens when this trade deficit is incurred, and that's the light blue line here, what is essentially occurring here is an outflow of dollars into the hands of foreigners. And that sounds bad, but consider actually what we're saying. Foreigners end up with a bunch of dollars having sold Americans primarily goods. That's generally where most American imports are. We take care of our services demand via domestic firms for the most part. So, and we're net exporters of services, actually. So on the goods side, we're, of course, net importers by a long mile. And what that does, because clearly nobody's getting on a plane to buy their made in China or made in wherever stuff. They're buying it at their local store here in the U.S. So foreigners, and of course they end up paying for it in dollars. So we're simplifying supply chains for the benefit of the conversation. But the upshot here is foreigners then end up with a giant pile of dollars. And the question then becomes, well, do you convert those dollars back into local currency and invest in your own economy, or do you keep it in dollars? And what has been happening, basically going all the way back to the dawn of this system, which follows the untethering of the dollar from gold in the early to mid 70s, is this idea and this understanding on the part of our trading partners that if they were to convert that pile of dollars in size back into their local currency and repatriate that money, what would happen is the dollar would, of course, fall, because that would amount to selling dollars. Well, and then the purchasing power of their consumers in the U.S. would go with the dollar, and they wouldn't be able to buy all those exports anymore, not nearly in the same size or volume. And so what has happened is a recycling of dollars back into U.S. financial assets. That, of course, is a huge benefit for the U.S. because, number one, it is a huge inflow of capital into U.S. equity markets, which helps finance U.S. corporates. Number two, it is a huge inflow into U.S. Treasury securities, which helps keep interest rates low for the government and for all of the consumer lending rates and business lending rates that use treasuries and treasury yields as benchmark, which, surprise, surprise, is nearly all of them. So what you're looking at then is the upshot of the current account deficit being cheaper U.S. borrowing costs, higher U.S. stock markets, better capitalized U.S. corporates. And of course, since most pension money is basically just market tracking the S&P 500, that's a benefit for everybody involved, even for, let's say, public sector pension holders. Indeed, the largest holder of U.S. equities is CalPERS, the California fund that manages the money of public sector pensioners. So you have a situation here where the halving of the trade deficit, that is more open commerce, and the thing that we're attempting ostensibly to fix, as a mechanism for putting dollars in the hands of foreigners that they then reinvest in the U.S., that, of course, makes the U.S. dollar stronger. Now, lest you say, well, this is only through 2015, a decade has elapsed since, surely this situation has changed. Well, not so much. Here is a view that updates at least the trajectory. And of course, these are different magnitude things because we're not dumping all of the sums that are embedded here into this. We're just looking at the direction of travel for the theme. And you can see here U.S. foreign direct investment since the end of the pandemic has surged, which of course has been finding a mirror image in a widening U.S. current account deficit. Not surprisingly, of course, the U.S. economy has been the one that has grown most robustly of the majors. We've seen that time and time again, and you can see that again more recently. More foreign direct investment, even just in the past several years, and a steeper trade deficit. You might take issue and say, well, look, these magnitudes are different. This is some sort of chart art situation. Does this really hold? Well, again, these are not full aggregates. They're meant to show not the perfect relationship, but the trajectory of the theme. But let's take a look at the latest numbers from the U.S. Treasury Department and take a look at the sheer size of foreign holdings of U.S. securities, be it short-term debt or long-term debt or equities. And consider that this is in the trillions of dollars. So we're looking at somewhere in the neighborhood of approaching 30 trillion. Let's be generous and say it's somewhere between 25 and 28, something like this. And you can see that these numbers have steadily grown. And indeed, since the pandemic, they have actually become more dramatic, which of course is exactly what we find right here. So the essence of the relationship very much holds. And so it should not be any kind of a surprise that since the beginning of the year, as we were about to get an administration that very clearly presented itself as minded to close the trade deficit and to become generally more protectionist, that what you would see is a situation where the U.S. dollar would weaken, because if you reduce volumes of trade, be it with tariffs, be it some other way, of course, in this case it is tariffs, if you reduce the volume of trade, then you reduce the amount of dollars that foreigners hold. And then this dynamic starts to cave in on itself. If they have fewer dollars, then they have fewer dollars to reinvest. If you give them a reason to be concerned about reinvesting those dollars, then maybe they will be more inclined, especially if they anticipate that volumes of trade downwind are going to be reduced and there's less of a reason to want to keep the dollar uplifted for purchasing power of your exports, because what the U.S. has done is basically blocked those exports before that's even a consideration. Well, then you might have an exodus out of the U.S. dollar. And indeed, as we see here, this is a chart of the U.S. dollar index, which is an average of the U.S. dollar's value against its major counterparts. And needless to say, I've decried the limitations of this thing because it was constructed before there was a euro. And so all of the legacy currencies that used to make this a diversified basket are now essentially the euro, and this might as well be then the euro-US dollar exchange rate upside down. The basket doesn't include a China proxy like the Australian dollar, which at this point is the fourth most actively traded currency, according to the most recent data from the Bank of International Settlements, which we'll take a look at in just a second. But nevertheless, the thematic implications of what's going on here, those hold. The upshot of saying to the markets that we are going to try to close the U.S. trade deficit, and the way that we're going to do it is we're going to erect trade barriers that make it less attractive to buy from abroad. That's going to weaken the dollar. And the reason it's going to weaken the dollar is because this recycling of dollars from the trade deficit back into the U.S., that sort of process will be fundamentally undermined by trying to close the avenue by which foreigners end up with those dollars in the first place. And then, of course, comes the question, well, okay, so what then is the next step, and which currencies might you then expect to benefit? Because, again, that money has to go somewhere. Things are still going to be sold, but maybe there's not a reason to dump them back into U.S. markets, and maybe the volumes are less U.S. versus rest of world, but rest of world still has its wares to sell. And so capital is going to go, it's just not going to go into the U.S. So then which currencies ought to be the beneficiaries if the dollar is going to lose some of its quote-unquote market share? And as promised, here are the latest numbers from the Bank of International Settlements. They are as of 2022. That's the last update. They're on a triannual schedule, so we should get another update of these numbers this year. But as it stands, this is where we are, and these things are not terribly volatile, so this is still quite an accurate reflection of current reality. And you can see that the next most liquid currencies after the dollar are the euro and the yen. And of course, we can see the drop-off is absolutely staggering. And lest you think that the BRICS, which I've made into a grouping here, lest you think they're in contention, just consider how absolutely minute they are relative to the amount of monetary transactions settled in the dollars, and also consider that they are just a touch above only China by itself. So really this BRICS number minus China is barely a rounding error and barely even visible on this chart. I mean, here's Brazil, here's Russia, India is over here, and China's right there. So we're talking about barely visible amounts of volume. And this is not really a contender. There is no way that you could shove anything like a meaningful amount of U.S. dollar market share in terms of settlement payments into this. Now, when you combine the euro and the yen, you're looking at about 3.5 trillion. That's to the U.S. dollars 6.6. So it's about half. So you might see, let's say, this big share of the dollar diminished down, let's suppose, halfway. Maybe, I mean, that would be catastrophic, of course, but let's say you could have room to reduce this by some measure, where the U.S. would be still overwhelmingly the dominant, because there's nothing even remotely close in terms of market size and liquidity and stock of assets to absorb all of this kind of liquidity. But you might perhaps see the tally here come down a bit and the tally here come up a bit. And of course, the problem with expecting the China tally to come up a bit is they don't have markets that are entirely open or even close to open. There are significant capital controls. Liquidity is non-existent in sort of any kind of practical sense, and it'll take a really long time to start to rival the U.S. in terms of financial heft, even though the economy is the world's second largest, just because of the way that capital is gated onshore. And so you're looking at the liquid alternatives where capital can move freely. And needless to say, the natural kind of alternatives that stand out are the euro and the yen. And with that in mind, it seems hardly surprising that those have been the two currencies that have outperformed against the dollar since the beginning of the year. These are percent change numbers for the benchmark futures for the top four currencies most transacted against the dollar. And you can see here it's euro, yen, pound. China's capital controls taken out of rotation. The next one is the Aussie. And those are the four that you see here. We can see the Aussie has lagged. The pound has lagged. The euro and yen have added north of 10% apiece. You might say, well, why are we talking about this now? There's already been a massive rally in these currencies against the dollar, and if anything, they're starting to pull back a bit. We were looking at gains of as much as 12% only a few days ago. Isn't this move over? Well, in my mind, that's the perfect time to be talking about this, because if there is some sort of a near-term correction in this, then what it offers is an excellent buying opportunity. And the time to think about it isn't when that buying opportunity has already appeared. It's when you anticipate and you can prepare for it to actually show up and have the capital and the key levels in mind to actually make that into an actionable thesis. Because indeed, this is not the kind of thing where the dollar sells off because maybe President Trump is going to attempt an extrajudicial firing of Chair Powell. This is not the kind of thing where you get an episodic response to maybe a trade deal with China, maybe not, depends on who you ask. If you ask Treasury Secretary Scott Bessent, a deal is inevitable. If you ask Chinese officials that commented overnight, nobody is talking to them and there is no substantive discussion and they have no idea what the White House is talking about. Obviously, we take both things with a grain of salt. It's a negotiation between rivals. They're attempting to paint the tape their way. So as we look at all of this, the upshot is, beyond these headlines, is there a structural direction? And I think clearly, as we see from the trajectory of the dollar going all the way to the beginning of the year, there indeed is. And we've gone up and down along the way here, but the trend is the trend. And what it reflects is this structural unwinding of these dynamics. And so while the dollar may be done falling here in the near term, the trend remains and the structural underpinnings for it continue. In the most sort of hands-on practical sense, we still are looking at sizable interest rate cuts for the U.S. this year and next, looking at about 110 basis points at this point. Cumulatively, not surprisingly, that tally has increased significantly since all of this concern around the tariff rollout has hit fever pitch late February, let's say, up through now. The expectations have become increasingly more dovish. But against that backdrop, the situation in Europe is quite different. First off, we're looking at less of a tally, so less by about a rate cut than what we have for the U.S. But more importantly, theme-wise, we are starting to see over the recent months, really since the beginning of the year, the idea percolate that maybe next year is a year for rate hikes out of the Eurozone, which would only make the US dollar weakness argument stronger. Because, of course, then yield differentials in a very classic way would shift against the dollar. And this idea that maybe we're looking at rate hikes next year, this follows Europe's seeming conclusion that the U.S. security blanket is now unreliable and that NATO ex-U.S. needs to arm itself. And so there's been a dramatic push, especially in the Eurozone, to spend a bunch of money to rearm. That, of course, is going to be a boost to both growth and inflation, and the ECB is going to have to approach it as such. And so we've seen a sense show up here that the sort of rate differential that maybe favored the U.S. dollar this year, however ineffectively, will actually invert on it next year. That, of course, is something markets might front run as the dust settles. And, of course, for the Bank of Japan, the story uniquely amongst the major economies has been of rate hikes. We can see on the bottom here the spread between the current implied futures curve, that's in the red here. It was a little bit more hawkish a month ago, but nevertheless, it still points to hikes. We can see the difference going into the back half of this year between the current target rate and what the curve implies is positive. That is to say, we are looking at rate hikes into the back half of this year from the Bank of Japan, and that really should be something that makes quite a bit of sense if you consider that we just got PMI numbers this week out of Japan that, unlike many of the other major economies, were blisteringly strong. And so the argument here still seems to favor a U.S. dollar that weakens as U.S. trade policy gets more protectionist, and the euro and yen as the likely winners from that for months and quarters to come, if not perhaps just right here. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'll be back with Chris for Futures Power Hour tomorrow, back with Victor and Tom for First Call on Sunday, writing for the News and Insights portion of tastylive.com, opining at Ilya Spivak on the platform formerly known as Twitter, and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back next week. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Stephen Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom, Thanks. You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. What do you do with everything in between? Well, in our Options Crash Course Strategy series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, our resident market wizard, Zadie McGarrigus, also known as Katie McGarrigle.
Yeah.
Katie, Zadie, how you doing?
I'm good, but the news I wanted to share with you.
You got news to share?
Well, yeah, you were jumping the gun a little bit while we were off air, but yes, shout out to everybody in the chat that knows that I'm a video game dabbler, for those that are maybe watching for the first time. I picked up another video game this weekend.
Hell yeah.
I'm back in the Jedi world. So
Okay.
now I'm a Jedi again. I'm using the Force to control the markets. Maybe a little bit. I don't know.
I love it.
It's been good.
Yeah. Are you a PlayStation 5, Xbox? I don't know what it is.
PlayStation 5.
Xbox
We're a
720, something like
PS5
that.
household.
Okay.
Family, if you will. On a very, very large TV.
Oh, of course.
And yeah, there's always discussions of like the God rays and the frames per second and all the things that, even though I've worked in the production world for a long time, I understand frames per second. But like all of the other things that have to do with the way that like games render and process and how quickly they can like move on all that, like I get that kind of conversation all the time. And I'm like, yeah, it looks great. Just let me like use the Force now and play with my lightsaber.
I like that though. You've got the visuals cranked up, they're crisp. You got the subwoofer cranked up, the walls are shaking.
Ugh, I do not like that, but yes, we do. Yeah, there is like one small little like subwoofer on the ground that used to be right next to our couch. So when we would play or watch Game of Thrones, when they've got that HBO like boom at the beginning, and it would like rattle my seat, I hated that.
Okay.
But we've moved it. I put a yoga mat under it. Life is improving.
Dampen it a little bit.
Yeah, dampen it a little bit.
Well,
yeah.
I appreciate that story.
It's the big news.
That's a good update.
Yeah, but there's even more like important updates, which is why we're here today. Bitcoin had its best day ever, its highest level ever in the month of May. We are now in June, but let's talk about May.
Yeah, we hit a new all-time high last month. I haven't been on the show in a while. I've been traveling a little bit. Been at the Consensus Conference in Toronto, and then I was just at StableCon, which is Stablecoin Conference in New York last week. So I haven't been here much. I've got a handful of things to update you on. We're going to talk about the markets. We're going to try to pump the coins a little bit as we do. There you are.
Oh my gosh, we need some new pictures. It's so corny. You look great. Look at those guns.
I look younger.
You look like you're riding a roller coaster. Whee!
You look great.
Thank you.
Yeah.
Okay, well, talk to me a little bit about the conferences and stuff before we really dive into like price levels and everything.
Yeah, so
what are the high notes?
I would say, the big takeaway from both of these conferences recently is that while in some capacity the institutions have been here, the tidal wave of institutional flow, institutional participation is about to hit the shore.
Okay.
There's a lot of pent-up demand, but I think that, it likely follows some regulatory progress here in the U.S., some legislation. We currently have the ongoing stablecoin legislation. I haven't seen any details on that, but everyone that I've talked to was very hopeful that we would get something passed by the end of the summer. That would then open the door to a larger crypto market structure bill, which then ultimately would invite the big ass flows from these institutions. So everybody's really, really bullish, as you might expect at these crypto conferences. But I think it still depends on kind of how things shake out here with the regulatory landscape, with the kind of the legislative side of things.
Okay.
But it is fun to go to these and see a lot of people that are, very pro crypto.
Okay. Did you, any cool parties? Did you meet Drake in Toronto?
Didn't meet Drake.
Any celebrity sightings?
Yeah. So Dave Portnoy was there. These are, I don't know.
Internet celebrity.
Yeah. Eric Trump.
Okay.
The Secret Service. Kevin O'Leary, Mr. Wonderful, Shark Tank.
Yeah.
Few other kind of big names within the crypto space. But yeah, it was really interesting to just hear kind of everyone's perspective and really the theme being that this is an accumulation game. There are sovereign wealth funds and different nations, possibly central banks that will be looking to accumulate, but largely, wherever you go around the world, that's been the theme, at least what we've heard from some of these conferences.
All right. Well, I'm looking forward to it. I'm still holding all of my crypto. I haven't really been getting out of anything, so.
Okay. Well, we've had a little bit of weakness in alts outside of Bitcoin, and we just saw momentum kind of pause here. We went from bullish on the daily when we look at our exponential moving averages to neutral for Bitcoin, but ETH has traded a little bit better. Let's jump into our slides and take a look, Katie. Also,
pump it.
Chat's open if you want to pump it in the chat. We always start with a question of the day for the show. I guess let's go with like PlayStation or Xbox. Where are you at if you're assuming you're a gamer?
Yeah, and if so, what
PC maybe?
What are you playing?
Yeah, I like that.
Share what you're playing.
Because you're always looking for a new game.
Always. Yeah. Well, not always. I got kind of tricked into starting up my gamer adventures again, but I'm not mad about it.
It happens.
Yeah.
I love it. Let's take a look at the performance dashboard here. I've got Bitcoin just under 105 at the moment. We put this together, 104.5. You can see some red on the screen for the last week here, but the trend still largely intact for BTC. ETH traded a little bit better, like I mentioned, but starting to see some weakness here. A lot of chop and noise at times when we look at these kind of price momentum signals in the short term, but obviously the daily precedes the weekly and so on, and you are starting to see things slow down a little bit. A couple of weeks ago, obviously traded a lot better, new all-time high throughout the month of May, towards the end there, and now, I like to describe it as taking a little bit of a breather.
Sure.
Outside of Bitcoin. Solana trading a bit weaker as well, but ETH has been better after being left for dead.
Yeah, I've got all three of the top three here in my portfolio, in my personal portfolio, I should say. I know for a while there, we were also talking about kind of the run that Ripple has been having, at least in terms of like more participation as well. Have not started to dabble in that just yet. But anything like surprising to you in any of that movement, or like, as you're saying, just based on kind of the recent run up and upside we've seen, do you feel like it's apropos that we've been taking a little bit of a beat?
No, I'm not really surprised to see the price action that we're observing. I mean, for some time now, and we'll go and look at Bitcoin market cap dominance in just a second, but it's really been this theme of Bitcoin over everything. Going back to the conferences, a lot of the discussion really has been around Bitcoin ETFs, the accumulation game and flows, into those products. And when you look at, if we jump over to this slide here, Bitcoin market cap dominance at 64%, close to 65. If we use those same signals, and you look at momentum there, it's still very bullish. There's no real signs of this rolling over and that it's altcoin season. You would expect to see Bitcoin market cap dominance come down quite a bit there. I will point out that ETH BTC is trading a little bit better. It's been so bearish for so long. It's trading better now. On the other side of that, you look at Solana, a lot weaker versus Bitcoin, a lot weaker versus ETH, but it still has been Bitcoin over everything. So not surprised to see that, yes, you're going to get these big bounces at times. These other smaller market cap tokens are certainly more volatile. So you do get those kind of big rips that happen when everything trades in one direction. But, you're seeing more resilient moves, at least recently, from Bitcoin, from ETH versus, Doge had a nice pop and has come back down a little bit.
That's what I was going to ask you. So when you're saying like altcoin season, like, is it everything that is under like the top 5 in terms of market cap to you? Like, is there a common definition, or is it just more?
It's really everything outside of Bitcoin.
Okay.
Historically, throughout cycles, what we tend to see, and it doesn't necessarily mean that it's going to happen this time, though everybody believes that it will, right? They want it to. But what we typically see is that Bitcoin makes this run, hits new all-time highs, it outperforms, and then at a certain point in the cycle, there's a rotation. You have investors, traders that take profits in that Bitcoin position. A lot of people will still hold, a majority of their investment in Bitcoin, but people look for opportunities elsewhere. If Bitcoin has had this big run, and if we go and we look at, on a relative basis, Bitcoin's up 12% year to date. Here you can see a few of the larger market cap tokens that we're going to track. So this is a year to date performance here. Bitcoin's up 10%. Everything else is down year to date when we look at that way. And I've got Bitcoin up 12% year to date here. So apologies, my numbers are coming from a couple different sources at different points in time. But you just look at year to date versus BTC, everything has underperformed.
Yeah.
It doesn't mean that it hasn't gone up. And in some cases, these tokens have done very well. But versus Bitcoin, they've underperformed. And so the view is at some point in the cycle, that flips. That's altcoin season.
Right.
And that's when crazy shit happens. Straight up valuations that fundamentally, if that's a thing, don't really make any sense.
Yeah, 15-year-olds are making thousands and thousands of dollars.
It's easy, right? There's the FOMO. It's alive and well. It pulls everybody into this. You get this massive bubble. It's reflexive in nature.
Yeah.
ultimately you get a big correction afterwards. And I'm just describing historically what's happened. Doesn't necessarily mean it's going to happen this time. But again, that's what everybody's playing for. And when you look at Bitcoin market cap dominance, that coming down would be an indication of flows into these other assets, because Bitcoin's market cap versus the entire crypto market cap is now a smaller percentage. It's gone from 64 to 60 to 55 to 50.
Yeah.
That might be enough for true blast off mode in some of these other tokens.
And is there a historical, extreme, if you will, of Bitcoin dominance versus these other ones, like percentage-wise?
So that's kind of what we're seeing here today. If we jump over to our browser for just a second, let me pull up Bitcoin.
Yeah, an extreme on the upside for right now, right?
Yeah, so let's look at this over the last 5 years. You'll see what I'm talking about. So if we can just pull up the browser window for a second here. And you'll see that, we're really right now at a multi-year high. So here's Bitcoin market cap dominance on TradingView. And I guess we can look at all time, right? At one point, the only crypto to trade was Bitcoin. ETH pops up, you get XRP, Litecoin, Bitcoin Cash, etc. But you certainly didn't have all of the tokens that you can trade today until, well, still today, but probably starting 2017 ICO bubble, 2018 kind of crash thereafter. But here is Bitcoin market cap dominance in 17. We get this just massive rip, and all these other things pushes it down to 40%. So still a substantial part of the market. Comes back up to about 70 and is trading at close to 65, 64, 65 right now.
So like you're saying, pretty relative extreme based on like how much has kind of happened in the space over the last 7-8 years.
Yeah, I would find it odd. It's not impossible. I would just find it odd. Maybe it's a lower probability that you get Bitcoin market cap dominance back up north of 75%, 80%. So at these levels, arguably you're nearing the top. Now, it doesn't mean that it's going to roll over and all of a sudden these others are going to start to perform. You could stay here for quite some time, and we've been trending higher and higher for the last, really almost the last 2 years, year and a half or so. But we are towards the top end of that range.
Okay. All right.
So maybe alts have a run, right? And I guess the other way to look at it, it's like, okay, Bitcoin has an implied volatility right now of 43%. It's a $100,000 asset.
Yeah.
So let's just make it really simple. Let's say it's 50% vol, $100,000 asset, 1 year, one standard deviation range gives you a trading range then of 150 to 50.
Mm-hmm.
Okay. So a decent return if you own Bitcoin. But if we have altcoin season and some of these other things really run at it, maybe ETH can go to 5. It can double. Maybe Solana goes to 10. Roughly a 10x possibly. Not saying that's going to happen, but that's again what people kind of trade for or look for in these markets at that point in time when maybe all of the gains really have been squeezed out of Bitcoin.
Okay. That's what we call vaporize or multiply.
Yes, I like that. It's gonna be a new technical term here on the show.
Oh, we don't need any more terms at Tasty. We have so many terms, so much jargon, so many strategy names that mean nothing to anybody outside of these walls.
That's a good one, though. What'd you say? Vaporizer multiplier?
Vaporize or multiply.
Yeah, we're hoping at some point that kicks off, and that's full-blown blast-off mode.
Yeah, let's do it.
So that's a quick look at where we are in terms of performance here recently. If we go back to our slides for a second, just cycling through this, you can see the theme across all of the tokens that we track here at Tasty Trade that are available to trade at the brokerage really reflect what I'm talking about. Bitcoin over everything, with the exception of Aave.
Yeah, I was going to say, look at
which I'm back on the follow page, Katie, and I put on an Aave trade today because we did just get this shift from neutral price momentum, moving average crossover on the weekly. Very quickly went from bearish to neutral to bullish within 2 weeks. In my, experience, when you see something that happens like that in sequence very quickly, typically precedes a larger bullish move. So bought one Aave right around 250. You can follow that on the follow page now. So we're going to start to post these trades there on the follow page on Tasty Trade.
Hell yeah.
And it's going to be based on what we see with the signals. So we'll get out of stuff too. And it's quite possible we get chopped up at times. Some things will work, some things won't work. But when they do work, they tend to run. A lot of times these do trend. So hopefully it works out in our favor. But that's the one bright spot here. That's been a bright spot. SUI has been a bright spot, though, has traded a lot weaker recently. What makes this tough is that we can talk about how bearish this is for a couple of weeks, and then boom, it's like up 50% in a couple of days. I guess that's what makes it fun. But just cycling through here, here's a handful of smaller market cap tokens as well. And yeah, it's just been pretty weak performance outside of Bitcoin.
All right. I'm super excited to hear that you're back on the follow page because these are coins that I have not dabbled in yet. I've been doing what we've kind of been talking about since you and I started doing the show together, which is just a couple hundred here, a couple hundred there, Bitcoin, Ethereum, Solana, a handful of like names that we've talked about during like the Battle of the Bags stint. So I'm excited to kind of dig into these other ones. And I like that, when you are posting them, I'm assuming, I'm not, so maybe I'm wrong here, but I like that, you kind of went out and bought like one Aave, but you can also do the thing where you are buying a dollar amount as well.
Absolutely. Yeah.
So it just kind of helps with the flexibility because $255, great, super in line with like my risk tolerance for trading. I was working with one of our writers today and I was showing him, here's how you like short a micro pound future, which is also around $200, $300 in buying power. So this is totally in line, especially for like new to me products. Like something like this would be digestible enough for me to kind of withstand, I guess is what I'm trying to say.
Yeah, absolutely. Because we're not going to come in here and buy a whole Bitcoin for $104,000.
Wouldn't it be nice?
But we'll look at this as trade ideas, I suppose, for educational purposes where they're time stamped. So based on whatever we're seeing in the market, one reason or another, we're going to go long or we're going to sell out of that position. You can't short this. We might short futures at some point to take, a negative view on price. So that's sometimes challenging in crypto. There will be other trades as well. Maybe we'll do something in Coinbase, MicroStrategy, trade some IBIT options at times to express a different view. But keep an eye on the follow page. You're going to start to post more crypto-related trades there. But that said, first trade today in Aave, going long based on the signals. Let's take a look at some additional volatility signals here, Katie. These are the expected moves for the next week based on the current spot price and implied volatility. I will again, not so much caution, but call out Bitcoin vol is low. Mm-hmm. I've been buying IBIT call options with a decent amount of time. Going out into the November expiration, buying the 60, 65, 70 strike call. Anything above that on the tail, it's cheapened up quite a bit here with vol low. So the view is obviously that volatility is going to expand more so than you're going to get a doubling in the price. What we really want to see is just the price start to run a little bit. You get that delta move, but more so volatility in Bitcoin goes from say 40 back to 60. Mm-hmm. That would be ideal. It's currently at a very low IV rank on the 1 year basis, almost zero. And you can see the same thing for the 6 and 3 month periods. Yeah. ETH, a little bit higher, but also still pretty low relative to where we could trade or where we have traded before.
So you said you're buying the 70s and the 65s in November?
Yeah, I've been trading around in there. I've traded the tail a little bit in the past, buying 85, 90 calls in there. Sure. They'll go up $1, go up $2 from where you've bought them. If you do get the pop in volatility, take the profits at that point in time. It's not a trade where I'm trying to buy the right tail or the upside here for IBIT, and I'm thinking that, yes, the price is going to go from 50 to 100.
Right.
Maybe, but that would imply a $200,000 Bitcoin price.
Yeah.
So anything is possible, but that's not the trade. This is a volatility view and a way to express that via these options.
All right. Well, I will definitely take a look at that. Maybe try to put something on the follow feed in the next day or two.
Yeah, the other trade that I've been putting on in there, and I haven't posted any of these yet, but we'll start to do this as well, is just to sell very short-term put options.
Sure.
So if I do get a sign on the position, I'll sell a call option against that every once in a while, depending on how this is trading. You do get some good chop in there. You can kind of leg into a strangle if you want to. And I'm trading stuff that's got 2 days, 3 days until it expires. but selling put options at strikes that have a little bit higher volatility than kind of where we're trading on a 30-day basis. But that's been a trade that has worked pretty well because you can go out and it's not a ton, but you might get 25, 30 cents.
Yeah.
Couple of days, almost $10 worth of theta each day.
Yeah, and I think, if you are predominantly an options trader and you're looking to still like dabble in the space to kind of diversify your assets, if you will, naked puts are probably like a very simple way to do that. So
absolutely
easy management. You can roll out in time for a credit, like always, like as long as you're not trying to manipulate the strikes so much. And like to your point, you can also use it as like a de facto like limit order if you want to take the stock and then sell the calls against it.
Yeah, absolutely. Because we know that this stuff is going to move. The trend has been bullish. I think you still have that kind of secular bull trend in there. I think there's some time ahead of us for this market to play out. But if you want to get in at a lower price, you either have to wait or you can generate a little bit of yield, sell some premium in there and take in that credit. And get paid to wait in a sense. Now, you don't want that monster move back down to 75, but that's the risk that you run, and there's ways to manage that if it does occur. But that's not necessarily my view at this stage. Expected moves for Bitcoin for the 1 week are about $6,000. That's come in a little bit here as the prices come back down off of 110. ETH has really been stuck at about 250. Same with Solana. We've been looking for like a $15 move in there over the last couple of weeks, and realized vol has come in a bit as well, which is typically what you see because the volatilities in here often explode on the upside, and Solana's been a lot weaker recently. SWI's been weaker. XRP's been weaker.
Yeah, I was going to say, I feel like there was like a little bit of a hot streak of SWI talk in the last couple of weeks, and it seems to have fizzled out a little bit.
Yeah, it has fizzled a little bit here. I'm still bullish long term. I mean, this is something that I've owned since it was sub 50 cents. I just lucked out and got in early there. But, it's off of the highs. Highs about $5 in there. And recently, I mean, if you go back to April, this traded almost down to $1.50. $1.50 up to $4. Not surprised to see some profit taking. I do think it goes higher over time, but it's not going to happen overnight.
Yeah. That's a really good question. Do you have anything else to add before I ask you my question?
No, hit me.
So the thing that's interesting, I think, about cryptos, and I was having this conversation with somebody recently, is that, like, obviously there's such a large amount of disparity, I guess you could call it, between the prices of all of these coins. So when you talk about, like, oh, I bought SWI at 50 cents, like, how do you not, like, do people be like, well, isn't that just basically the same thing as like buying a penny stock? Like, do you feel like they're similar?
Yeah, absolutely. These are, micro market cap at times. You can get all the way on that end of the spectrum where you have a market cap of a couple $1 million, and it probably is going to be a couple $1 million or zero.
Right.
But there are those asymmetric opportunities where that couple $1 million market cap that you happen to get into at that time goes to a couple $100 million.
Right.
Now, those are few and far between, but it certainly happens. There's ways that you can just absolutely knock it out of the park here. So is that similar to biotech or penny stocks, really small micro market cap companies? Absolutely.
Yeah.
Yeah, I think there's definitely some similarities there. There's probably more opportunities in crypto to really kind of put on your
and like the
gambler
latest
hat.
drug breakthrough.
Exactly, yeah. So if you can kind of catch that narrative, and sometimes they don't last very long at all, but that's where you can find some alpha, and you ride the bubble really. I don't think for sometimes you're not in the trade to be in it forever, but they can be reflexive in nature, and that's kind of how you make money is in these bubbles at times.
Right, and I think the point is that like you're not just doing that, right? Like, yeah, you are putting some type of capital on the sidelines, almost like dormant, if you will, until those moments happen. But you're also a very active trader in other regards, to your point of how much other positions you have on with Bitcoin, with providing liquidity pools, with staking. Like, you are doing more than just like spraying out and like loading up on
Absolutely.
cheap like coins.
Those trades maybe account for 1 to 2, 3% of my portfolio.
Exactly.
Majority of my portfolio is invested in Bitcoin, in ETH, in Solana. Have some SWI, have some Tau, BitTensor now.
Yeah.
We've talked about that a little bit. But taking a flyer on something that's sub $10 million market cap, I'm not putting a lot of money into
Totally.
it, right?
It's the same thing as buying.
They're lottery tickets at times.
Yeah, it's buying a raffle ticket at the Cubs game.
Yes.
Love it.
So it keeps you. It's a engagement tool, right?
Yeah, I love it. I just figured I'd ask because it was a question that got up. Isn't that the same thing as a penny stock? But I do think you also make an argument to say, well, maybe there's more stuff going on in the crypto space than in some of those other penny stock spaces.
Totally.
Cool.
Well, Katie, that's going to do it for our show. Thank you, as always, for joining me here on the Tasty Crypto Show. It's a pleasure.
Thank you for having me. As always, it's been a nice little reunion.
Yeah, it's good to see you. I've been off for a couple weeks. I feel like we've been out, but we are going to be together on the road here soon down in DC. So if you're in the DMV area, as I hear they call it, maybe you can make your way to the DC show.
Yeah, that'd be great. tastylive.com/events. Go ahead and sign up. We've got a couple of other road shows later this year and other people going out on the road as well. But hopefully we'll see you in DC in a couple weeks.
Beautiful. That's going to do it for our show. I'll be back on Wednesday. Until then, I'm Ryan.
I'm Katie.
Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Oh, yeah, it's Monday, June 2nd, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's eating show, a little podcast, a little podcast called The Price of Truth, a little show where we like to explore the incentives that govern our world. And I'm guessing we're going to keep getting our money's worth here for a little bit, a few weeks, a few months, a few quarters, a few years, at least a decade into the future. More on that in just a bit. For now, let's say what's up to people. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of Bing, this little guy, there's only one place to do it, and that's on Tasty Live's YouTube channel. So head on over there, find it somewhere on the evil Google YouTube. Subscribe to the Tasty Live YouTube channel, and you will see your thoughts, both appropriate and otherwise, streamed live here on screen. So do me a favor, keep it appropriate to the extent possible, but also make it interesting. Do whatever you want to do, honestly, just as long as you're doing something. Smash your phalanges, your metacarpals, even your skull into that keyboard to create random ass characters and spoof the Google algorithm into putting us in front of as many people as possible. Whew. Speaking of the people, let's say what's up to the people. Shout out to all of you already in the chat. What is going on? Chaz, I see you. Tom, Banjo, Albert, Mark, Lone, what's up? Emmett, great to see you. Cato, what's up? Brian Watson, the GOAT of YouTube. Brian Doty, Logan, what is happening? Catan, great to see you. JDD, Grumpy Mike, and so many more. I'd shout out all of you if I could, but I'm contractually obligated to say something that could be interpreted as being substantive. So I must move. The show must move on. What a day, my babies. Oh, this show just keeps getting spicier. And I'm not talking about my show. I'm talking about risk assets, man. It's like I want to be wrong about what's happening in the world right now. I want to be wrong. Jim, give me just a second. Let's see if we can get rid of this little. This is what you call horrible television. Let's see if we can get rid of that green stuff. I'll try to fix that in a bit. I want to be wrong about what's happening in the world. I want to be wrong that we were completely fiscally irresponsible. I want to be wrong that the dollar as a reserve currency, as the ultimate lubricator of trade, is being called into question. I want to be wrong that the world's riskless asset, the U.S. Treasury, is not being thought of as a big piece of toilet paper or a sucker's bet at the table. I want to be wrong that in this world that we're looking at, it's the crash up you have to worry about, not the crash down. I want to be wrong about all those things, but unfortunately, scarce assets, not the ones that you can print as much as you want, but scarce assets are telling me I might be just slightly directionally right, at least for today. Let's start with the S&P 500, up 0.2%. The NASDAQ up 0.75%, a little bit less than 0.75%. The Dow Jones up only 8 basis points after recovering from being negative for I want to say the early part of the session. And the Russell was up 0.1%, which is a decent recovery. It was negative for the early part of the session as well. I'm talking cash, of course, everybody. VIX cash at 1833. VIX futures down at 1966. Absolutely incredible, my friends, because they were not pricing the risk involved. You price the risk in gold and silver. You price the risk and the risk premium that you're going to demand from the U.S. government that you know has to reprice $7 to $9 trillion worth of funny money. That's where the price and the risk. More on that in just a bit. But super low vol, man. I mean, all things considered, I don't want to say it's low vol because obviously it's historically high at 18 and change. That's above the historical average by a slight amount. But just given, if I were to go talk to the average person on FinTwit, or I go talk to the average, I think, trader, they're not going to give me roses and bubblegum, right? They're going to give me all the problems in the world. And that's usually how these things happen. I think so many people are just, they don't believe in this market. And it makes you a chaser. It makes you a chaser. Then everyone starts to go, well, what if there isn't a recession? And if there is a recession, doesn't that mean they'll print more money? What does that mean for the nominal price of an asset? Not the real price. What's that mean for the nominal price of an asset? Well, if we're already at 7% debt to GDP and we go into a recession and they lay people off, doesn't it mean our outlays actually go up? Our spending actually goes up? What does that mean for tax receipts? Will it stay stable? If not, potentially go down? So if tax receipts stay stable to go down or spending goes up, the deficit goes up. And that money goes somewhere. So what does that mean for the nominal price of an asset? Eventually people catch on to the game. I'm not saying that that's what happens. I'm saying that that's what people are going to think. That's the sort of the thought process that people are going to sort of catch up to. It might be wrong, and I know plenty of smart people that think that's the exact wrong way to think. That's the liquidity actually ends up being the problem. It's the liquidity issues that you have an issue with. More on that in a bit. The long end of the curve took another little punch to the chin here today. So after, what was that, 4 out of 5 sessions, something like this, 4 out of 6 sessions to the upside. I look radioactive. I know. Let me see. So what happens is sometimes if you don't have enough, I don't have enough light. Get this weird green fuzz going on around me. Let me see if I can fix it. Can edit this in post, right? We can edit this in post. What? No? This is live? Okay. Maybe that'll help. All right. If it doesn't help, I'm sorry. That's the best I got. But bonds, after what, 4 out of 6 sessions, rising slightly up from that 109 and 20 tick low that we made, what was that, week and a half ago? A nice little, what Tom Sosnoff called it, nice little slog up to 113 and maybe 9 ticks, something of this nature. About a point taken off the long end here today. After they open them back up, another 10 ticks added. I think we did it. I think we got rid of it. I look weird, but there's no more green stuff. Show business, baby. Show business. I'm in a home office with 2 ring lights. Show business. Get a grip. All right. So we're down to 112.08. Let's take a quick look at the yield curve. Again, shorter end has come in. We haven't 90 to 4%. It seems like we want to settle there in the short end, at least for the short term, while people are thinking, we're at what, 2 cuts for the rest of the year, and only 2 cuts, mind you, for next year. So we've gone from, this market's so insane, batshit crazy. We've gone from 4 cuts priced in 2025 with a slew more in 2026 to 2 cuts placed in 2025 and 2 cuts placed in 2026. So that means for the remainder of the next 18 months, you've got a grand total of 4 cuts priced into the marketplace. Don't believe me? Take a look. First one starting in September, second one coming in December, next one in March of 2026, and then June of 2026, and that's effectively all you got. And people are now starting to whisper about the potential. I heard Jim Bianco, many, smart people, many very qualified people, many bond guys specifically, talking about the prospect. There's nothing I hate worse than somebody who doesn't pay attention to the market, the bond market, try to speculate on how many cuts the Fed's going to make. It's one of the most annoying things because they're just it's just a fart in the wind guess. But anyways, about the potential of them not hiking at all for the remainder of the year, or not cutting at all for the remainder of the year, and then potentially even starting to whisper about hikes. I think we're a ways away from there, but that is not out of the cards. And some of there's probably a better risk to reward payout on betting the hike while we're still 2 cuts than waiting until we're much closer. The Fed does a rhetorical pivot. We go through, Jackson Hole, something of this nature, and then you get to a place where now it's possible. That said, I think we've got a long way to go. But why would you start talking about the potential for a Fed to be hiking more than they're going to be cutting? I think it's because you have to, if we look at everything in total, man, you look at what was supposed to be a program to find $1 trillion in cuts. Now, that was a big, hairy-ass goal in Doge. That was never going to happen, in my personal opinion. You can get on the stage in Madison Square Garden and tell the world that you're going to find $2 trillion in cuts. But I know this game. And what's funny is Howard Lutnick told the story on the All In podcast. He told the story of how Elon came to say $2 trillion. Howard Lutnick came up to Elon Musk before he introduced him, and he goes, I'm going to ask you how many cuts you're going to find, and you tell the people $1 trillion, and then you ask me how much revenue are you going to bring in, and I'm going to say $1 trillion. And together with your $1 trillion in cuts and my $1 trillion in revenue, that's $2 trillion, and we're going to basically that's the deficit. We're going to balance the budget. That was what Howard Lutnick's plan was that day that Elon Musk said $2 trillion in Madison Square Garden. That was what his plan was. That was the pregame. So they go up, and I don't know if Elon just was like, I don't get what you're telling me, or I don't know what happened. And he didn't explain it. So Howard Lutnick goes up and he says, how much money are you going to find in the budget? And Elon goes, $2 trillion. And Howard Lutnick goes, okay. Like the rest of his plan's thrown out of the window. So he just walks off awkwardly. Maybe that's true, maybe it's not, but it is the story Howard Lutnick told about how you got $2 trillion promised from Doge. My point is that clearly was never the case. That's why they immediately walked it back to $1 trillion. And anyone that uses $2 trillion as a signpost, one, hasn't seen that interview, and two, it's just trying to make the story unnecessarily uglier than it is. But it's not a good story. They didn't find $1 trillion. I said on this show, when that crazy pair of goofballs said $2 trillion on the stage, I said the realistic number is somewhere between if you understand the budget and what they're allowed to cut, it's probably between $300 billion and $800 billion, because my midpoint was probably 500. So I made a market around it. And they came in at 160. So the point is, whatever money you were trying to find, you didn't find it. You found 160 billion in cuts. Whatever additional revenue we think we're going to find through these trade negotiations, I don't think they're going to find $1 trillion. Again, I think at best that number's like $500 or $6 billion, $500 or $600 billion. So they come anywhere close to the $2 trillion they were supposed to find. And then, but you still get this really big spending bill that's working its way. It worked its way through the House and is now in front of Senate. And I think I saw, what was the guy's name? The Republican from Oklahoma, Senator Republican, the guy with 2 first names, Mark Wayne, I think his first name is. That tickles me every time I hear it, Mark Wayne. No offense to anybody in here if you've got 2 first names, but Mark Wayne, I knew immediately. I go, what southern state is he from? So he gives this guidance today. I think it was today. He said, we're not going to change the structure of the bill. He's effectively saying that, like, they're going to try to get past the holdouts, Ron Johnson, just anyone with a brain and some sense of character, some sense of care for the country. They're going to try to get past those holdouts without significant changes to the bill. He's trying to tell people that whatever the spending is, we're going to land somewhere in that ballpark. I think that's what he's trying to say. And if that's true, bro, like, they've done, it's very easy to look at this and go, they've done a 180. It was like they came in talking about going the cuts route, and that's painful. We all know it's painful. And it doesn't matter how you get there. If you want to increase the revenue side and you want to decrease the spending side, if you want to do either of those 2 things, it is painful in the short run. But I think we all kind of agree that some combination of increasing the revenue side and decreasing the spending side is probably what we need to do. We don't want to do it. We don't want to have to be the group that has to do it. But we kind of all understand that's, it's probably what we have to do in order to not live in a world of just sort of Mad Max chaos outside. At least, again, if you have a functional brain that hasn't rotted out at this point scrolling TikTok. So it seems like they've made this rhetorical and strategic pivot from let's cut, let's endure the pain. The president, the administration is not looking out for Wall Street. They're looking out for Main Street. I don't know about you, man. But I think, exploding the deficit, another $2 to $4 trillion, to me looks like more of the same. A pig in lipstick is what that kind of looks like to me. And it seems like the bond market is sniffing that out. It seems like the long end people don't want to be the suckers at the card table, as we called them a little bit ago. Now, I got to wear this. As a trade, I'm long the long end. I don't want to come in here and try to pretend like I'm currently short the long end, because that's not true. I'm betting. I was betting that we were in a little pocket. I could try to get a little cute. We could get a rally that people don't expect, make them change their narrative. But ultimately, in the midterm, I think we're still going to 6%. I've said that, and I've said maybe I'm getting too cute. But anyways, I'm still long the long end. But I did it through options just in case I'm wrong, to find risk. And if I'm wrong, I come back here and I take my L like a man. And at least for now, that short-term trade, it worked for maybe 3 points or something like that. But that's not how I was playing it. I was trading to get back to 117, which is a super low probability trade over the next couple of 45-day option cycles. So we'll see. It's still on the table. See if it happens. But the bigger bet is that the bigger, more long-term bet is that the long end is still sort of in the midterm. It's a sucker's bet. And so what do you do behind that? You look at stuff like miners, especially when they've been getting cheap. And more importantly, I've been just wearing a boatload of silver. Why? Because if people want to diversify their collateral holdings, their collateral, and treasuries look a little bit more and more like a sucker's bet, you don't bet on duration. So you come in, you start holding your money in short-term paper versus longer term, especially now. And also you look at stuff like Bitcoin, you look at stuff like gold, and you've seen a monetary premium priced into gold. And my bet has been that people are going to come away from, if the market pivots away from its recession calls. So we basically have, man, we've gone from 60 to 70% probability of recession, whatever that means, right? To now like 30% probability of recession. So the market's completely pivoted away. Well, we've pivoted away so much, but you still have a monetary premium attached to gold. So in theory, what should happen if your industrial picture is not as weak as it was before, I'm not going to say in theory, but my belief was silver needs to catch up. It really does. And today we got our high-ho silver move. And I was really worried. I mean, the whole game is to come in here and to talk about something more meaningful and not try to parrot what everybody else is saying. And I told you guys, look, I'm betting the silver thing. I know I could look like a total idiot. This could take me out, but I don't care. That's the name of the game. 32 to 34 is where this range has been forever. It has not paid, but today, a gigantic, I think it was around 5% move in silver. A breakthrough of the 34 level with absolute conviction. And now we're at 35. It was a really good day for the good guys, if I may say so myself. But silver at 34.92. I mean, it was a pretty decent day for all metals, really. I mean, everything. Copper was up, gold was up, natty gas was up, silver was up, gold was up. You name it, man. And let me tell you this: all you had to do in like 2020, 2021, 2022 was just watch commodities. Don't listen to Austin Goolsbee. Don't listen to Jerome Powell. Don't listen to all these people. They're going to get you killed because they're telling you a narrative that they're either lying on purpose or they're saying things that they're not actually going to do. And they're doing that because the only method that they have to control this market is jawboning. That's all they have left, to try to control the forward space. Because that's all they got left. So you just don't have to listen to these people at all. Turn them out. Stop going, what the Fed do? It doesn't matter. It doesn't matter what these people do. They are so caught in a box right now, and it's not even funny. And the only thing, I almost tweeted this out, and I held it back. God damn, how did I get off to a rant already? But I almost wanted to tweet it out today, but I'm like, all right, try to keep some level of your professional reputation intact. But I'm like, these people are idiots. And if you're listening to these people, you're an idiot too. If you care what these people are saying at this part of the cycle, you have not been paying attention. I think I read Austin Goolsbee say, surprisingly, the tariffs have not shown up in the data yet, or has not been as inflationary as we expected or suspected. What? What are you talking about? First of all, it's June 2nd, my guy. Which one of you thought it would be in the inflation data by June 2nd? Surprisingly? First of all, not surprising. Not surprising at all that it's not in the inflation data at this point. Secondly, they're playing a blame game between, if you can't pick up on this, bro, they're playing a blame game, okay? They are stuck in a box. And what they're trying to do, they know what they ultimately have to do, and they want to point at the president. And they want to point all of that blame on the president, okay? The president also knows the risk of his policies, and he's trying to blame it all on too late Jerome Powell. So he wants the voters to go look at the Federal Reserve and say, look, so if any economic weakness comes from these policies, he wants everyone to look over at Jerome Powell and say, look, he was too late. I told you he was too late. He should have listened to me. And Jerome Powell and the Fed, they're going, oh man, inflation might be on the way. We totally see inflation coming. And if so, totally this guy's fault, not us. Not anything we've been doing for the last 30 years in monetary policy, not the box we put ourselves in, not jacking rates to 5.25, not recognizing that was going to have minimal ability to hold back animal spirits in the marketplace. Totally not us. Totally this guy's fault. It's just this giant finger pointing game. It's a scapegoating game to put the blame on the other party. It's kind of funny, man. But I couldn't believe that. Surprisingly inflated. Secondly, and there's still a whole argument about the elasticity of demand argument. There is a price shift when you assess a tariff, okay? But which goods? Okay, and what are we saying when we say inflationary? This is my biggest problem is people's inability or unwillingness to define terms. It drives me insane and people use these terms like they know what they're talking about. So back when the Federal Reserve called inflation transitory, I would watch people confidently parrot that line, and I go, "What's transitory mean? How many months?" And nobody can answer this. That nobody defines the term. So when people say tariffs are inflationary, okay, what do you mean? Do you mean CPI is going up? Do you mean PCE is going up? Because if that's not what you mean, what do you mean? I know the cost of some cheap trinkets are going to go up, but are you saying CPI is going to go up because of tariffs? And I think some people do define it. I know Chris has a number. I think he said it might add something like 1% or 1.5% or something like this. I can't remember the exact. There are models out there where people are spitting numbers. Most people are just bumping gums, though. And I think I don't know. I get this whole thing where I look at housing and that's where I derive the headwind or tailwind to CPI. And I think the existing homes, bro, a lot of the existing home sales are totally cooked. But because of tariffs and increased price of labor, all your new homes to put up a new home, it's expensive. So you get this weird situation where any existing homes sold on your block are going to be sold likely at discount. But any new homes built are going to be built with this premium. So it's like, what do you use as your comp? What do you use as your comparable here? All right, I'll keep going. I'm sorry. I haven't even addressed the chat so far. Let me see what you guys are talking about. I went on 3 different topics here without even talking to you guys. My apologies. I vote we tax Victor at 90%, Howie G says. You're more than welcome to. That's not actually what I'm talking about, Howie G. I don't want taxes on. I think it's the wealth tax, and if I happen to, so Howie G's point here is, whenever people call for more taxes, they're calling for other people's for taxing other people more, not for themselves. I think, Howie G, I pay a lot of money in tax. I'm not one of these guys that has a bunch of tax shelters all over the place, though I should have more. So the year the president, put it this way, the year the president won the first time, I paid more in tax than he did that year. I think by a tenfold or something like that. Okay. So it's hard to come for me. Spend, baby, spend, says absolute beginner. The money's going somewhere. That deficit, that's what I think. I don't just think, oh, there's a deficit. I think, where's that going? Who's getting it? And by reading that bill and seeing where all the money's going, you can kind of get an idea. All-time high on total world stock market. Yeah. default swaps, and easy bet. Yeah. Quit dumping fighter jets in the Red Sea would be a good start to saving money, or leaving billions of dollars worth of equipment in the Middle East. That's another good start. Bro. It's like, look, sometimes I'm careful. If you can believe it, I'm actually careful. I'm actually reserved about the things I say on air. You're only getting you might be getting 30% of it. But is anyone else starting to get the feeling that our treasury is basically held hostage? Anyone starting to get that feeling? Finally, Victor Jones coming around to 6 to 8%. D-Chat, what are you talking about, bro? What are you talking about? I've been on it. Go look at the first week of episodes, my guy. I started talking about this topic. This is all I've been talking about for like a year and a half, is debt and deficits. What are you talking about? The long bond always sees through market shenanigans. I agree. There's this guy, Justin Wolfers, I think. I think that's his name. I believe he's an economist. Maybe he's like a former Michigan alum, something like that. He was trying to make some point. He said, here's the latest ISM survey reporting what actual manufacturers are saying about the tariffs. Most suppliers are passing through tariffs at full value to us. The supplier considers it a tax, and taxes always get passed through. Very few are absorbing any portion. And then it goes on and on. And I thought I'm like, this guy's hilarious. Because he's got this fancy education. He's what I like to call a cable news economist. He's not one of the guys who shows up on like Bloomberg and stuff. He's the guy who shows up on CNN and MSNBC. So he's not saying anything helpful to like a working class person watching one of those shows. He's not saying anything that would be helpful to like a trader or investor watching those shows. He's feeding he's feeding zingers, TV talking points to like basically doom scrolling Karens. That's what I call them. But like he's using all his brain power on his Twitter feed and on these media hits to try to convince people what you already know. You already know a tariff is a consumption tax. You already know who pays that tax in most cases. There are some cases in which the supplier has to eat a portion of that because they are unable to pass it down to their consumer at the price due to elasticity of demand of the good that they're selling. So I'm like, this dude's doing all this work to try to convince people that consumers pay the tariffs, which we already know, and that politicians lie. You know what I'm saying? It's like, yeah, bro, he's lying about that. He doesn't want Amazon to put the cost because he's lying. And anyone with a brain knows this. The only people arguing about this subject are just people on TV. Anyone with a brain doesn't argue this. What you argue, you don't argue who pays the tax. You argue the elasticity of demand at the current price levels. Do you think you can pass on a 10% increase in a cost or 8%, fivefold increase in the tariff? Do you think you can pass it on to the consumer? And in some cases, to some consumers, the answer is no. And in some cases, the answer is yes. And you can't pass it down, demand falls. Demand falls, then perhaps you make an adjustment to price, and so you're eating some part or all of the tariff, and the consumer's paying some part or none of the tariff. And it's totally individual. It's based on the good, the product, the service, and the end customer, the end consumer. And the fact that we don't talk with that level of nuance is just insane to me. It's always got to be all or none. It's always got to be a binary discussion at the aggregate. I remember 8%. Heck, when I was a kid, I remember north of 10%. Are you seeing north of 10% deficits to GDP, Rezo? It's only because BRICS is buying gold. Gold-silver ratio probably around 99. If BRICS doesn't buy silver, then it won't go up. I don't think so. To be clear, you think the only people buying gold right now is BRICS, and that's why it's going up? I think people get caught, man. People get caught in these single factor. Like a single factor analysis will be the death of every trader in the world. If you think gold's going up because BRICS, gold up equals BRICS buying, I think it's probably a bit more nuanced than that. I think there's central bank buying throughout all the world. I think there are large amounts of private institutions that are buying gold. I think there are funds that are adding gold to their portfolio and decreasing their treasury holdings. Bro, this is not just BRICS, man. Victor, I'm definitely with you in buying platinum, as you said on first call last night. I want to be very clear, Bernie. I bought platinum, silver, and gold. I bought, and I think some nickel too. I bought all that physical stuff a long time ago. Here at these prices, I haven't been buying more. I just every once in a while, get out the bars and the coins, and just count them like a greedy Ebenezer Scrooge or something like that, and then put them away. But I haven't been buying them. A few years ago, I saw a world where you either had to try to address the deficit problem we were having throughout the world, through the whole world printed 15 years of debt at no interest, effectively no interest. And it's like, if you ever gave somebody an unlimited credit card, let's say you gave somebody a financially irresponsible person and you gave them an interest-free credit card that had no purchasing limit. What do you think that person's going to do with that credit card? Now, after 15 years, go, okay, now your rate's 6%. Immediately, you have a problem. You either have to take the pain that comes with acknowledging that you are going to have to significantly change your lifestyle in order to afford just the interest payments. Forget the principal, just the interest payments on the debt that you accumulated over 15 years of reckless, financially irresponsible spending because you failed to see a day that you would actually have to pay for this stuff. Or you would do whatever it took to go out there and find new credit cards with cheaper rates with cheaper APRs. And the solution we've always chosen is to go out there and try to find more credit cards. And so when I saw that as the likely conundrum we were going to find ourselves in, and Lynn Alden has this great, she gave a speech over at Bitcoin 2025. I posted it on my Twitter. If you haven't seen it, I think it's worth a watch. I think she did such a great job of hitting all the points. We've talked about all these points on this show. She talked about the unfunded Social Security liabilities. She talked about the fiscal deficits. She talked about how jacking up interest rates from monetary policy hasn't had the desired or the intended effect that the Federal Reserve probably wanted. She talked about a lot of the things that we've talked about here. Basically the inability, the incentive structure of politicians. Nobody wants to come in and create the pain necessary to address any of these problems because you're not going to get reelected. Neither is your party. So the whole incentive structure almost, it makes the Fed, it renders them sort of useless to do anything, and it renders all politicians useless and feckless to do anything. And that's how she comes up with the saying, nothing stops this train. And it was I thought it was a great speech. If you haven't watched it, go watch it. But that's one of the reasons I bought a lot of that physical stuff, those physical metals, and some, Bitcoin as well. So I don't see a way out of this. I don't see a way out of this other than doing what they've always done. And that might be wrong. Ultimately, that may prove wrong. I just don't see how. The problem is if everybody starts to believe that, if everybody starts to internalize the thoughts that I'm talking about right now, bro, this thing's going parabolic to the upside. And that's not good. That's how you get your negative outcomes. If everybody sort of gives up on risk in the market, on actual material downside risk, and they just say, nobody's going to do anything about this. There is no downside risk. You have the ultimate moral hazard. And, that's where you get this, crazy melt up that everybody's been calling for. And that's where things get dangerous. All right, I'll keep cruising. But if you ever wanted to know, why does Victor care about, material so much? Why does he talk about miners so much? It's because I ever since that point, I'm like, all right, well, how do I play this? And I thought to myself, well, on one end, I want to try to own stuff that you can't print more of. And that's materials and energy. Because no matter how much cash dollars you print, you still got to pay for energy. And I included utilities in that because I felt like as soon as AI accelerated, now you have compounded your energy needs. You're going to have to go get that from somewhere. And that's one of the reasons that we've been talking about uranium and nuclear as an eventuality, which ended up more or less being the case. So now it's things you can't print more of, which are, your basic materials, they're your metals, so your energy, critical minerals, those types of things. And the barbell on the other side is the stuff that automates everything. And it's your high beta, high automation instruments. So it's for sure Bitcoin is one of the high Bitcoin assets in the barbell. And then it was other stuff like, I don't know, it wasn't NVIDIA because I just missed it. I thought I missed a lot of it. I ran it up to, I want to say 900 would be the effective price, or 90 split adjusted. But Intuitive Surgical, Rockwell Automation, I want to say was part of it. I don't know. There's a handful. There's a handful of 15 different names. And then in the middle, it was sort of this healthcare component. And the healthcare component was all the things that I saw going wrong about health that I didn't think we were going to have the incentives to try to fix. So, for example, HIMSS was one of these things that I thought, HIMSS and companies like HIMSS, they've run into a little bit of an issue here on their GLP-1s, which I can speak to if you want. But the point is, it was HIMSS, it was Progeny. So those things sort of address lower testosterone levels in males, lower fertility in females, lower ability to procreate. There's what were the other ones? Sorry, I should have a list of these. But so there's a bucket here in healthcare that I saw address. Oh, it was hair loss, lack of testosterone, lack of fertility, and then defense. So that's like your Palantirs, high beta defense. So like Palantir, stuff like this. And watching all this stuff for the last 2 years has been wild. You know what I mean? It's not just watching it play itself out, but it's been crazy to think. It's more crazy to watch people to sort of think about this world a couple of years ago, and then to see some aspects of this. I'm not some Nostradamus, but I just think like you can think on a longer term time frame and see some of this stuff, right? The private prisons, likely. Being more and more of an interesting investment. You can see a lot of this stuff playing itself out, and then to see a lot of people bug out, lose their minds, and they think it's all the president. And it's like, no, bro, it's the incentive structure. It is the setup. It wouldn't have mattered who you put in there. There's a setup here that the incentive, like these people don't do a lot. They don't do as much as you think. They have some power that they can wield, but it is not much when you put it up against tens of trillions of dollars, man, of incentive. It's not as much as you would think. We need a good Operation Twist, Victor. You know it's coming, Catan. You know it's coming. Operation Twist is just a fancy way of saying yield curve control. And Catan, I don't see how. To me, that's the eventuality. You know what I mean? That's where I see us going. And I don't know if it's today or a year from now, 5 years from now. I don't think it matters what president we elect, with the Senate, if you give them the trifecta or not. You gave the Republicans the House, the Senate, the Supreme Court, and the executive branch. And do you know what they did? The traditionally fiscally conservative Republicans, they are blowing out the budget. Not in a post-pandemic world, not in a economic recovery world. We're not directly in war, though we're funding everything across the globe. They're blowing out the deficit. I think what happens is after this presidency, in the same way that the Democrats are kind of like in this just disarray, right? Like politically, they're in a rebuilding year. If this was a sports team, you'd call this year a rebuilding year for the Democrats. They're completely lost. They have no platform. They're trying to do some sort of opposition, but they stand for nothing. So how do you oppose something when you yourself are offering no solutions? Because you're in the pockets of Wall Street billionaire donors who don't allow you to offer economic populism. So you're hamstrung. All you can do is rabble-rouse. That's what ALC's out there doing, just rabble-rousing with no solutions. Cory Booker, Hakeem Jeffries, these people, they have no solutions. They're not saying anything of substance. They're just acting angry. So they're in a rebuilding year. I'm losing everybody. And I think the Republicans are going to be in the exact same position. 2028, the Republicans are going to be in that exact same position, and they're going to have to go back to the constituencies and explain why they were given all branches of government, and all they did was blow out the deficits, and they didn't actually materially increase the living standards of the working class. And I think they're going to be in the exact same disarray. We'll see. Hopefully I'm wrong. All right, I'll do a couple more. It's uranium and AI now. Love the price of truth. I'm not a doomsday. I'm not a doomsdayer, I don't think. Am I? I think I'm realistic. So when I say this stuff, it's just like, what is currently happening has happened before. It's not doomsday, okay? It's not doomsday. We've played these cycles out in the past. The 70s were a similar cycle. The 40s were a similar, the 30s and 40s were a similar cycle. Every once in a while, we run up the tab too high, and then we have to pay it back. And paying it back becomes like this era of economic repression that gets paid for with more debt, not less. So I don't think that's doomsday, man. I just think I'm being realistic. You know, if you believe you're going to wake up one day and yields just go down to, long end yields go to 3.5%, short end rates go to 2.5%, housing prices stay stable, gold eases back down to 2,000, stocks advance, and we stay in a plus 12% equity world. Like, look, that's nice fantasy land, but how'd you get there? And if you can't tell me how you get there, I can tell you exactly how you get to my end conclusions. It's not doomsday, man. It's logical progression of the incentive structure around you. And by the way, when the whole world was screaming with their hair on fire at 48 and 4,900, was this show doomsday? Not at all. Not at all. I'm not being doomsday at all. I'm being realistic about how monetary and fiscal policy is going to respond to the conditions. And I'm trying to figure out what to do to preserve and advance my purchasing power in that environment. Maybe that's doomsday. I wish I could be one of those guys. Here's the truth. I wish I could be one of those guys who reads the New York Times and then goes, oh, wow, that's interesting. And then I just go around parroting what I saw in the New York Times or the Wall Street Journal or on financial television. But at some point I recognize that those models, those mental models, they don't work. If you think about the world through the terms that are delivered in those mediums, you will have a broken mental model that will never produce any positive result. You got to go a little crazy. You got to go a little crazy to have a mental model that actually proves to be successful. Because it's not the one they're going to feed. You think you're going to read the newspaper and then have any edge trading against trillions of dollars? Good luck. Bitcoin 105.7. It looked a little weak. They backed them off to 103. They got him back another. Did anyone know Victor could read? Howie, you got about one more of those, my friend, and I'm going to look you up. We'll figure out what's what in person, my friend. We can get some furniture moving if you want to, my guy. I'm the wrong one. I'm telling you, my guy, and I'm stopping my show to look you dead in the eyes and tell you I'm the wrong one. And I'm doing that so I don't have to block you. So you either heed the message, my friend, or you get locked out of having any conversation on this channel. I don't make threats. I make promises, my guy. I'm the wrong one. Crude oil, 63.11, up 1%. This thing just exploded off the bottom at 55. We're up $8 off the lows. And energy, a thing that nobody has exposure to, all of a sudden is performing. Top performer so far today. Kind of knew that after yesterday's open when natty gas was up like 4% and crude oil was up a couple of percent instantly. But geez, I keep getting stuck. But these things are still cheap. Energy's still cheap. If you look at XLE, man, relative to a lot of stuff in the marketplace, I'm not saying it could go lower, sure. It's not the bottom of its range down to 75. But my issue though with XLE, is it's 50% two names. And you guys know when I'm not even a fan of the SPYs because 30% of it is in 7 names. So I think so if 50% of an ETF is in 2 names, I go, well, why would I trade the ETF? It's not diversifying my risk in any way, shape, or form. So why don't I it's only going to create drag on the upside. So let me just pick a few names myself. So I don't really trade XLE because, again, it's ExxonMobil, by the way, and Chevron are the 2 names that make up nearly 50% of this ETF. So if to me, I'm like, well, why wouldn't I just buy those individual instruments? But I like things that have a little bit higher beta. So I'm in higher beta energy names and higher beta energy utilities. So yeah, up 1.3%. We're still, I would say, just shy of mid-range in the short run. The interesting thing, though, is if energy stocks run, I wonder to myself what that will mean, because, advancing in crude oil from 55 to 63, that's not a huge deal when it comes to inflation. There's some base effects problems over a longer term period of time, but just like your cost at the pump is not going to be problematic. But if you put a little bit more to this crude oil rally, and you can get energy outperforming as a sector, I wonder what implications that has to technology stocks, to sort of the perception around inflation, and then what that will mean to growthier stocks, longer duration stocks. I think that becomes problematic, but that's why I do the barbell. It's kind of like a 60-40 of equity exposure. I still like them here. Nobody liked them for a long time, and I think that's when you buy this stuff, when nobody likes them. I gave up on UNG. Plastics rule, says Brian Watson. Oh, man. I don't like any of these. Like these not XLEs, but USOs, the UNGs, the GLDs, the SLVs, TLTs. I don't like any of them. I like, if that's all you got, then use them as proxies. But if you're me personally, as long as there were, as long as there's no issues with using futures options, to me, I much prefer getting direct exposure versus the ETF proxies that add this whole element of drag. Natty gas just exploded. I have nothing. Maybe a few natty gas companies. Maybe one, actually. Nothing other than that. All right, let's take a quick look at the economic data expectation for this week. So far, you got the PMIs and the ISM manufacturing construction spending this week. You got it today. Tomorrow, you're going to get some motor vehicle sales, JOLTS. Austin Goolsby's going to speak for the second time this week. Lisa Cook, Lori Logan. again, I just don't see the value anymore. Just control what goes in. They're not going to say anything of substance. And if anything, they're just downloading propaganda and anyone who listens. Mortgage applications on Wednesday, ADP on Wednesday. I'm skipping Bostic, PMI, ISM services. Those PMI ISM days are like Ilya's Christmas, or his Easter, I should say. Jobless claims on Thursday, productivity numbers. This one leaves out, I don't know. Oh, no, it doesn't. It has the EIA. And then Friday, the employment situation. So the labor report, along with the Baker Hughes rig count. Maybe we stop losing rigs now with crude going up. Consensus is 129,000 jobs added to the economy. Last month was 177,000. Consensus range, 100,000 to 190,000, with the unemployment rate somewhere between 4.1 and 4.3%. Consensus at 4.2. Average hourly earnings, which will be the big one, month over month. Consensus to tick up 0.3% versus 0.2% last month. How many jobs you got? Do you guys want to do an over-under? I don't think this really matters, to be honest. What's more interesting is to try to figure out if we did an over-under on 129,000, which, if you had 30,000 more jobs or 30,000 less jobs, which one of those takes the 30-year yield higher? Maybe say 50. I don't know if 30 will really matter. 50,000 more or 50,000 less? Which one of those takes the 30-year yield higher? I don't think it's as easy as a question as you think. Mark saying, markets are uncomfortably numb to news. Yeah, man. Knowledge is fall dampening. You can't come to the marketplace and threaten 60% global tariffs, ratchet them up to 145, and then think that the market's going to flinch because their employment report was 10,000 jobs light. I totally agree. It's hard to get there now. Hear my daughter in the background, sorry. I'm convinced the economic reports mean nothing in the current market. For whatever reason, this market is moving like a meme stock. All hail taco. Yeah. You know, what's really sad too, in my personal opinion, by giving up on any sense of fiscal responsibility, this is the same outcome that you would have had with the other party. You know what I mean? You might feel different. You might have got a couple of culture war wins, but without the sort of the change in trajectory of debt, this is the exact same outcome. That's what's tough. You know, I might be wrong, but I genuinely felt that people were ready to tolerate a little bit of an upset stomach. And the more you just keep lighting these deficits, it's like any hope. It's like the buoy in the water just going over the horizon. There's like no hope of getting there. Let's keep going. VIX term structure. Normal, man. A little bit of a kink in the back end, but for all intents and purposes, it is a normal, beautiful, big, beautiful VIX term structure. I don't know. Some part of me feels like it's fair. It's locked up at 20. I think in 2022, when we were seeing a lot of that market volatility, we were basically flatlined at a very flat VIX term structure between 20 and 22, if I'm not mistaken. We're not that far away from that. Maybe you can make an argument that the market is pricing sort of a normal volatility regime until July, and then sort of we get a little spooky from there. But at least for now, man, release those animal spirits, baby. Release them. The hardest thing to do right now. What's the hardest thing to do, actually? Do you think it's to buy them or to sell them right now? I don't know that that's an easy answer. I don't know that it's an easy answer. And maybe that means that the right answer is the tasty answer. That there's a split number of participants that feel strongly directionally, but because it's going to be really tough to resolve that tension, that really the people that benefit over the next cycle are just the ones who are selling premium to both sides of that argument. You know, it has been sort of the case for the last couple of weeks. We've really just kind of traded sideways between 5,800 and 6,000. And I don't see any reason why that has to break here anytime soon. You know, I suppose the three big trade deals could be material enough to move us in a certain direction. I would honestly say that none of the trade deals that have been announced up until this point, I don't think they've been substantive to the market as a whole. I think they've been helpful to a few individual industries, selling ags to the Europeans, or to the UK anyway. Maybe Boeing getting preferred pricing on parts. But other than that, I don't know if anything material from a macro standpoint, other than removed risk, removed uncertainty from the market, has actually happened. Black Diamond says, it feels like we're walking to the end of a cliff with blind optimism. Maybe we find out we can walk in thin air. I actually think we're over. If this was a Wile E. Coyote episode or a Roadrunner episode, we're off the cliff. We're holding up the sign. It says like whoops or whatever. But I don't. The problem is the economic gravity. People have a tendency to believe that economic gravity is down, but economic gravity is up. If you use history as a guide, that's the problem. Nice, Brian. All right, I'll do a couple of the bigger movers on the day. See if we can spot any fades or follows here for a quick second, and we'll close it up. Price change here. Yeah, look at the steel. That's why I forgot to talk about that one, the steel tariffs. This has less to do with the steel tariffs and more to do with the administration sort of allowing the M&A between, I forget how to pronounce it, Nippon Steel, Nucor up a cool 10% here today. All materials, man. All this stuff is materials. Steel Dynamics was up a cool 10%, though it kind of blew its brains out to the high side. I said this yesterday, given the move that we had in copper, that likely Freeport was going to have a decent day. It did, up 4.3%. I still think, again, unless we're about to roll off a cliff into a deep global recession and none of these central banks or governments are going to do anything about it, I just really like betting these stocks, Freeport included. I think Freeport is now sort of priced in the same way that Newmont Mining was priced not long ago. We got the Newmont catch-up trade. Some part of me wants to, I am betting, but not betting big yet, that Freeport needs to do some catch-up with copper, and maybe that's the next bet here. It's another one, Devon Energy, that I own, up 3%. I wouldn't fade any of these things. All these things look, on a relative value basis, they look pretty decent. All of the, you know what's funny? A lot of the, what's that theme? The clean energy. A lot of the clean energy stuff is, I didn't see that little recovery it had over the last month or so. Well, strike that from the record. Does anyone know the cheapest, I'll say this, then I'll get out of here. The cheapest EV in the world that you can buy brand new. What is it? Where can you buy it? And what does it cost? See if you know this. And don't use any chat GPT either. I'm not going to give you much time to respond because I can't have a bunch of dead air. Give you a little time. All right. The cheapest EV in the world, if I'm not mistaken, is the BYD. It's a Chinese brand. It's the BYD Seagull. And it is sold in other countries like the Philippines, across countries in Europe, Uruguay, handful of Mexico, handful of others under different names, like a different model name. But it's the BYD Seagull in China. And given the discounts that they're running right now, you can buy them for the equivalent of about $7,800 USD, $7,800. And so when I saw that, I got really curious. I'm like, what's the cheapest EV that you could buy in the U.S.? Just across the board, not from an American company, but just the cheapest one you can buy. And it is the Nissan Leaf, and it trades at around $29,000, and they're made in Tennessee. I thought, okay, well, what's the cheapest EV that you can buy from an American-made company? This is all around trying to understand what protectionism has done to the cost of a car, and the difference between saving manufacturing jobs and the collective benefit to the public. This is what I'm trying to outline here. The cheapest EV sold by an American company in 2025, that's the big caveat, it is the Tesla Model 3, and it costs just right around $43,000. And for all these, I'm not factoring in government incentives, right, or tax credits. I think, with those tax credits, you probably can deduct about $7,500 off the Model 3, but we'll go. You can do that in some places in China. So that $7,800 is actually $7,200 in some places in China, depending on if you have access to credits. But let's not do that. So it's 43 grand is the cheapest EV made by an American company in the U.S. Those are made in California, those Model 3s. And interestingly enough, none of those 3 cars use unionized labor. So the BYD Seagull doesn't use unionized labor to create or manufacture those in China. The Nissan Leaf in Tennessee does not use unionized labor. And the Tesla Model 3 in California does not use unionized labor. Now, there's a big caveat to this. The Chevy Bolt was on the market in 2023. It traded at, I think, around 23 or 25,000. No, it's $25,600. And GM is going to reintroduce that in 2025. I don't think they have so far, and they haven't announced official pricing. But when they do, it will likely be somewhere around that $25,000 price point. It would likely be the cheapest EV and also be made by an American manufacturer. They make those in Michigan, or they did make those in Michigan, and they do use unionized labor. But my eyes just bugged out of my head, man. $7,800 for a brand new EV. Crazy. That's what, just to be super clear, like, I'm all down, man. I'm down for finding new economic opportunities, or economic opportunities for those that have sort of been left behind. And what was supposed to happen is we were supposed to move up the value chain. And unfortunately, where we are right now, so the 62% labor force participation, I'm down for finding more economic opportunities for more people, especially given AI on the horizon. But you should all know that the give up is the difference between $7,800 and like $26,000 for a car, brand new one. Just saying. All right, everybody, that's going to do it for me today. If you want to follow me or argue with me on X, you're more than welcome to do that. Sorry about that. At Victor Jones, the Owen Jones is here because I like to be difficult. If you'd like to send me an email for a more private audience, you can reach me, victor.jones@tastylive.com. I'd be happy to respond to all of your inquiries or grievances, one way or the other. I'll see you back here tomorrow with a conversation with Ilya Spivak, I believe. Same time, same place, same great network, only on Tasty Live. Until then, peace.